Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning. Welcome to Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick with you on this Thursday morning. We've got earnings. We've got movers. Sava is a beast. We're going to talk about that. I want to talk about Alibaba. I want to talk about the semis. I want to talk about PayPal and eBay and Penn National and DraftKings. We'll get to your questions from our chat. Two guests on our radar today. First up is Mark Chaikin. He will join the show at 8:15. And then Buck Andrews from Inform will join the show at 8:35. Today's show is also sponsored by Inform. Their enterprise news productivity tool is designed to enable you to perform more thorough stock research by isolating the articles that are most impactful to your portfolio. To learn more, go to inform.info. There's the link on the screen, in4m.info. Hit that like button, hit subscribe, hit share, do what you got to do to help us out on the internet. Let's bring Joel Elconin on now. Joel, how are we doing in the overnight trading session?
Nice range overnight. Inside day so far. Your pre-market high 35.50. That's ahead of yesterday's high at 38.40. Pre-market low 11.25. That's above the low from yesterday at 07.75. Crude trying to find a home here in the $56 handle, trading up 43 cents at 56.12. Gold inching towards that major support at 1800, down 1740 at 1870.70. Silver, that's down 3 cents here, 26.60. And Bitcoin working its way up to that major resistance at 40K. That's trading up $495 at 37,885. We got a lot of movers to discuss today. We got some earnings.
Yep.
Triple D, what are you looking at?
Doggy coin. I'm looking at doggy coin. Can we get doggy coin up there, please? Can we get doggy coin, Dogecoin, whatever the heck it's called?
Yeah, I'll pull up
Why
a
did they
chart.
not call it doggy coin though? Like it's got a dog meme or whatever. You know, you see this dog all everywhere, and they call it Doge. Why did they not call it? It's you can say DOGE. You could pronounce it doggy coin. I like doggy coin. I'm changing the name of Doge to Doggy Coin.
I wasn't there when they named it, so I don't know.
I'm calling it Doggy Coin forever. Anyways, Apparently Elon Musk likes Doggy Coin. There was like 25 texts or tweets in the middle of the night about Doggy Coin, and he's got. Can we show them one meme with him holding it up, or it doesn't matter?
What the
one from Lion King?
The Lion King.
Yeah. Are we allowed to show that, or do we get like a copyright?
No. We could show that.
Public.
No, we could show that. Here, 1 second.
Or is Twitter going to fine us? Is Jack Dorsey going to fine us for showing his tweets live on Benzinga's Pre-Market Prep?
What, like that?
Yeah, look at that. Now that is the richest man in the world, right there. Right there. There he is, the richest man in the world. Ladies and gentlemen, Doggy Coin. We give you Doggy Coin. This world is messed up.
And the best thing is he tweeted it was this week. It was a couple of days ago. He said, I'm taking he said I'm off Twitter for a while, right? Yeah, off Twitter for a while. February 2nd at 3:45 a.m. Eastern time. Off Twitter for a while. He couldn't even go 48 hours.
He couldn't. I think he was into a little bit of the fun stuff last night because these tweets, there was something going on. What Mitch say? That was like a brainstorming session he had there.
Creative sessions.
Creativity session.
Creative sessions. Yeah.
Remember the Wolf of Wall Street? That's where they all go party and then they come up with the great ideas. Anyways, holy mackerel. I don't know what to even say about any of this, but it's kind of humorous. That's all. Are you in any Doggy Coin?
No, I'm not in that.
Is anyone in any Doggy Coin? Chat, you guys got Doggy Coin? People long Doggy Coin?
It's Doge. Come on.
Doggy. I've renamed it. It's Doggy Coin. That's a dog. It's not a Doge. That's a dog. I've seen a dog before. That meme, that's a dog. It's now Doggy Coin. Well, we got somebody. Each one NE is in. Oh yeah, no, Clinton's in too. Oh yeah, Wilkins in. We got some Doggy Coin lovers out there. Tom's in. Lowell's in.
Yeah,
Paul's in.
This is a 1
I can't even
month.
keep up with the military's in.
Yeah, this is a 1 month.
Laura's in.
Yeah, I'm bringing up a 1 month chart
Carlton.
of Dogecoin.
Just D'Angelo's in. Andrew's in. Melody's in. We got some dog coin lovers. We got to start doing technicals. Can we do a technical on Doggy Coin?
This is a 1 month chart. It's gone from 1 cent to 50 cents.
Holy mackerel. There's some return. Is it 50 cents?
Yeah.
No, it's 5 cents.
Oh, I'm sorry. I
5 cents.
can't read. It's 5 cents.
So it's went from 1 cent to 5 cents.
Yeah. Yep.
It's like a nickel. So I can trade in my nickels and get doggy coins. Maybe I should do that. Trade in a few nickels for some doggy coins. Joel, what do you think? Should we go trade in a roll of nickels for a roll of doggy coins?
Go right ahead.
All right.
Trade your little heart's content, Joel. Dennis.
Joel's not even not even engaging in this
Joel
conversation.
doesn't want any part of it.
There's no engaging in this conversation. Anyways, Mara says I'm ruining the show, so we got to go on to some stocks.
All right.
Let's go.
Well, let's stick with crypto and talk about crypto stocks because PayPal and Square are both moving this morning. PayPal had earnings, and that's obviously like the headline here. But within that earnings report, which was good, there was some good stuff said about their engagement in terms of cryptocurrencies. Right, their crypto engagement. You can trade, buy and sell crypto through PayPal, and it's working and it's going great. I want to quote an analyst here this morning. If I can, the Dan Dolev, who's from Mizuho, sees PayPal becoming the ultimate financial super app, transcending across payments, commerce, and financial services. So it was a good quarter for PayPal. EPS beat, sales beat, total payments volume up about 40% year over year. They gave good guidance, good numbers across the board for PayPal. Square moving up in sympathy on the payments cryptocurrency trade.
Yeah, I mean, the company is unbelievable. It fires on all cylinders all the time. It's in the right space. I kind of agree with everything you just said. It's the only thing that turns me off is valuation, but you got to pay up for the good companies. I don't chase on pullbacks here. I think you still got to be a buyer of PayPal. I see a $300 in the future, and I think it's coming sooner than later. So maybe you get a pullback here or there to get yourself in, but I think PayPal is eventually a $300 stock.
Buyers ahead of the report for sure. We were under 230 6 sessions ago, and we just briefly touched 270, and that was in the after hours trading. So there's a potential target for you if you're looking for something a little bit ahead of that. Just over the last half hour, 45 minutes, seem to have a little bit of a seller there at 268, but we'll have to see what happens in the regular session. Of course, you want to see that 268 taken out. You want to see 270 taken out and keep on going. But right now, can't really give you much support, maybe 264.
Square obviously trading up in sympathy here. Pairs traders trade those two together. It's up $5, 233. Every dip has been a buying opportunity for this monster too. Again, valuation's insane, but market doesn't care about valuations. So I guess, guys, the limit on Square too. I don't own either of these. I wish I did. I'd be a buyer of pullbacks.
Had to break the rebound. Not quite at the all-time high. 234 is where it stopped again in the that was in the after hours. So not up, but not as much. Still trading only $1 off that. So you get above 234. What else do you got to look at in the 230 handle? Let me try and give you a level here. If 234 is not good enough for you, maybe take a look at 236.43. There you go. There's your next target in 38.78. But first things first, take out that pre-market high.
It's hard to not think new all-time highs coming for Square too.
Yeah.
Next.
Okay. Let's keep on the earnings parade here. Let's go to eBay. This was a big winner from the after-hours session.
Wow.
eBay reported basically that they did everything right. They gave an earnings beat, they gave a guidance beat, and they raised their dividend by 2 cents a share. So the earnings beat 86 cents versus an 83-cent estimate. Sales beat 2.9 versus $2.7 billion. Guidance, that's for the current quarter. EPS well above estimates. Sales guidance well above estimates. And they're raising the dividend, quarterly dividend, from 16 cents a share to 18 cents a share. Beat, divvy raise, all translates to a pop.
I've got to say, we talk about Amazon, you talk about the growth of companies, but when you consider the PayPal eBay combo from 10 years ago, is there a better combo? I bought eBay at $11 a share during the financial crisis, and that was when it had PayPal. I actually held it for a long time. I spun me off PayPal, so I got all the shares of PayPal too. But in order to figure out where we are now from $11, you have to add eBay and PayPal shares together, because for every 100 shares you had of eBay, they gave you 100 shares of PayPal. So that $11 purchase of eBay back in 2010, 11 years later, is now worth, what, 63 plus the price of PayPal, which is 267. So you're talking about $330. You're talking about up 3,000% the eBay PayPal combo from back to 2010. I sold my eBay around 30 and I sold my PayPal at 40. Big mistake.
Wowzer. New all-time high by a wide margin. They got really excited on that print. And how many times do you see that? In the first reaction to earnings or news, 64.86, but hey, you're only at 63.70 right now. So we got a very good shot at taking that out, and then just use your half and whole numbers until you satisfy all the buyers in this. Really, the lowest you've been since you made that high was only $63. So 63 to 60, just under 65 potential range for eBay.
You guys know who used to work at PayPal, right?
No.
Elon Musk.
Oh, is that where he came from? Yeah, I did know that, actually.
Yeah.
I remember reading that somewhere.
Yeah, I think they bought his company and he became an executive at PayPal. And then he exited.
And then he became Dogecoin.
And then the rest is history. Sorry to bring it back to Elon, Joel. I know.
I can't stop thinking about Doggy Coin.
I know, Joel's over
Let's
it.
go Qualcomm.
Yeah, okay. So this is interesting here. We'll do Qualcomm and then we'll bring on Mark Chaikin. So Qualcomm reported earnings last night, and it's very interesting because there appears to be a massive chip shortage across the entire semiconductor space. So Qualcomm's numbers were good. Their EPS beat, their sales missed. So it was a mixed report, and they gave guidance for the current quarter, and that was in line. They didn't blow it away or anything, but the more I read about this space, everyone's saying that there is just a massive shortage of chips right now because they're being used for EVs. They need them, of course, for PCs, for phones, for the Apple car, right? So there is just a massive shortage. Demand is outpacing supply right now of chips.
And the other thing is, this is a 5G play. So you got to think of Qualcomm as a big 5G play. And I think on pullbacks, I'm long Qualcomm. I bought it back during the March. It was one of the only stocks I bought during actual March because I wanted it for a long time. I bought it at 61, and obviously it was a good buy. I've sold half of it. I just sold half of it last week, and I wish I wouldn't have. I was getting spooked on the market. I thought, that we might get a rollover. We did for a few days, and then it's gone. I might just rebuy it. The half that I sold. That's going to raise my cost basis, unfortunately, though. But down $11. I think it's a buy on the dip. Honestly, I do.
Yeah, you've already had that. Just like the initial plunge on the print. Once again, you get that spike down 146.85, and now it's just not aggressive buyers, but just kind of hit my bid kind of buyers, and that's what you have. So look at that pre-market low. See if we had that coincides with anything. I see some daily lows at 145, 146. So I think if you're short and it goes through that area, don't get too excited. Actually, I see a pair of lows just under 145. So that area is holding up well. If you're looking for more continuation on the upside, you need to clear 154. That was the initial bounce area. That was your shorter term resistance for everyone that scooped it up here. So quieted down quite a bit here over the last couple hours, but those are some early parameters. The bottom of yesterday's range, that's going to take some time to get there. That's all the way up at 161.80.
Somebody's asking, is Verizon a buy? I haven't really looked at the daily on Verizon in a couple of weeks. Wow, they have beat that up. Again, the reason we know a lot of these stocks with the higher dividends have been beat up because nobody wants higher dividends right now. They want to be making 10% a day. They don't want to sit there 4.58% for a year. I mean, Verizon is a dividend play. I think in a diversified portfolio, Verizon has a place in it. It's not in my portfolio. I'd rather own Verizon than AT&T, though. I know AT&T has a nicer dividend, but I think Verizon's a better company. So I don't mind it down here at 54. What are your thoughts? Would you buy some Verizon?
I mean, it's there. It's giving you an area. You know, the big boys are stepping up at 54.
It's got your dividend support too.
Yeah. Yep.
So
and I think it just went X. So, you know, it had the X fluff.
Did it just go X?
Yeah, I think it did. I think it did. Him and that.
I don't remember going X, but I'm not going to challenge you
on it.
Look when it went X.
Go ahead, look it up.
Because what we talk about on Verizon, AT&T, there's such X-dividend plays that they actually tend to be strong ahead of the X-dividend date and a week afterwards. And obviously the price adjusts for the amount of the dividend. So you got to kind of, not consider that part of it. But, what we see is, the dividend capture players like to be in there ahead of the dividend. And they know there's usually a run up a couple of weeks before it. So when it just goes X, usually you can see weakness for, sometimes a month or two after it goes X. And you are absolutely correct, Joel. It just went X January the 7th. So it's a month ago. So I would say another few weeks, maybe you want to see it stop going down. But if you're just a value guy, there's some value in Verizon. I won't argue with you.
Let's bring on Mark Chaikin, the founder of Chaikin Analytics, joins us every other week here on Pre-Market Prep. Mark, good morning.
Good morning. How are you guys?
We are hanging in there, Mark, hanging in there. I want to ask you, before we get to stocks that the chat wants to ask you about, we want to ask you about, you've been in this game for more than 40 years, right? Have you ever seen anything like what happened last week in your 40-plus year career?
A little bit, but not driven by social media, obviously.
Right.
But there have been short squeezes. There have been incredible run-ups, and there have been hedge funds that have been hurt. But last week was unique. I mean, they've gone back to 1923 and found Piggly Wiggly, so that's being written up everywhere. It was a big company. It was the first supermarket where you could walk around and pick your own stuff. Prior to that, you told people what you wanted, they went and got it. And it was a big company, but the founder ended up buying up all the shares to beat up the shorts. And then there was nobody to sell them to, and he went bankrupt. So cautionary tale there.
All right. First thing that someone in the chat mentioned when I said you'd be on today, they said, ask Mark about FedEx. So I'm going to do that right now. Mark, we know you look at that as sort of your bellwether, your indicator for the overall economy. What do you think of FedEx here?
Well, the power gauge has turned bearish on FedEx. It's rolled over, not acting well. It's part of the reason I'm a little bit cautious on the market. We follow a methodology that when the money flow and the relative strength break down, we want to be, it's neutral. It's not bearish, but it's underperforming the market. And Chaikin money flow has been weak since October, which was a puzzle to me when it was making new highs at 300. My take is that it's one of those backdrop indicators that makes you a little bit cautious. If things are so good, why isn't FedEx reflecting that? And it's not a stock I would own here.
I mean, I think, and I do own FedEx. I've had it for a while in the long-term portfolio. I think it's like, is this as good as it gets, to take it from that movie, that line. And I think the market thinks that we had the perfect environment for FedEx and UPS where everybody's staying home and they're locked down. And when we come out of this, which, hopefully we are going to come out towards the second half of 2021, that everybody wants to get out there and they're going to go into stores and they're not going to do as much shopping online. So maybe this is a pre-pricing of that, Mark?
It could be. I mean, I've always viewed the stock as both old economy and new economy. If the economy picks up, people are drop shipping, parts and supplies, and FedEx is part of the logistics chain. But I lean more in your camp that if the market's looking ahead 6 months, then FedEx has had its sort of jolt in terms of the shop at home delivery cycle. But I don't like to question it too much. When the relative strength broke down about a month ago, I said to Sandy, who owns it, my wife, I said, I think the game in FedEx is over here. It makes me a little cautious on the market, not bearish, and she got out of it. So,
do you think, and I don't know their entire business model, but do you think rising fuel prices maybe are hurting them a little bit? I mean, if you think about it, the crude oil, the way the crude oil is moved, translated into higher gas prices. I don't know what a percentage that is of their operating expenses, but that could be one possible reason.
That's a good point, Joel. Both in the air and on the ground, they're burning up fuel every day. And you got a rough winter here in New England, so I don't know how that translates across the country. We've had some more typical winter weather. The last 5 winters have been mild in the East and the Midwest. So maybe that has an impact too on their ability to deliver packages. They're piling up. I know we've had backed up deliveries. So in general, I think there are more exciting names to talk about. And one of them is Pinterest, which reports after the close tonight.
You know what? And look at the run up it's having into the earnings report. We talk about, I talk about extracting the alpha from the pre-run ups. I was long Pinterest overnight, and then it popped up $2 last night. I was like, okay, and I sold it. But being long these stocks ahead of the reports has always been a good play. And look, in 6 days, obviously we had the washout there from the GameStop low, 62.15, but then $79. I mean, it's up 17 points. So now you look at it, okay, there's some, that's a pretty big move ahead of the report.
Right.
I mean, likely they beat it, but do they beat it by enough?
Well, two big forces in the market have been pounding the table on Pinterest. Motley Fool reiterated it as one of the 3 stocks to buy yesterday. And Cathie Wood bought a big position about 8 days ago. It happened to coincide with that first top in the stock. I'm now foolish enough to be getting her email every night. So I can see
she was late last night.
It came at about 6:30, I think. I saw your tweet.
You got the early email then.
I saw your tweet.
Did you have it when I tweeted that out?
Yes, I had it for over an hour at that point.
How'd you get it at 6? Cathie Wood, who got it at 6:30 last night? My email didn't come till 8:31, and everybody was complaining on Twitter that didn't come till 8:31. So Mark's on the early list.
Apparently, this is
He's in tier 1. I'm in tier 2, apparently.
Wait, Dennis, I got it when you got it.
8:31.
8:31.
Can you verify? Because if you got it at 6:30, I want to be on your list.
Wait, what time zone though? Hold on a second.
Usually it is 6:30.
Yeah, I got
the same time
it.
zone.
Yeah, I got it in time to see the madness. Another stock she's buying is PACCAR, and someone else is also talking about that. She's been buying it for the last week or so. It's got a bullish rating in Chaikin. It's in the machinery sector. They make light trucks. It plays into the not the reflation, but the re-energizing of the economy. PCAR.
But that's what I thought. Okay.
It's a sort of infrastructure play, and that's okay. And then my real excitement today, because Sandy owns it, is Digital Turbine. They reported blowout numbers.
Big beat yesterday. Big beat.
17% up here. Big short, relatively big short position. Not like the crazies.
Joel, APPS is the ticker on that.
Oh yeah.
Yeah, we've been talking about it. We've been talking about it on the show. It's been a wild ride. It was 1250 in July when the power gauge turned bullish, and look at this run.
Any target on it, or just going to let it ride?
No, it's going to. This is blue sky territory when the stock has no overhead resistance because it's at new all-time highs. You can't pick a target. I was talking about that at the dinner table last night. Depends whether there's a mini short squeeze. It depends whether a couple of brokerage firms pick it up or upgrade. What I'm finding, and Dennis, you probably have been talking about this on the show, is the market is crazy enough that if someone raises their price target to 60 on a stock that's trading at 50, it instantly goes to 60. It's it's like people actually believe these targets.
They don't know their 12-month price targets. They think they're 12-minute price targets.
Exactly.
It's true. The analysts, everybody has more influence than they ever have before, because nobody wants to think for themselves. All they want to do is they want to be told what to buy, and they want to go buy it. And that's why, somebody on CNBC comes up with a new idea, an analyst comes on. The craziest thing is you see these analysts, and they, bump the price target and the stock goes up a bit. Then they go on CNBC and they mention it on CNBC and the stock goes up again and even more. So, I mean, and obviously, we know on Twitter, people are, the analysts are even talking about, the ratings on Twitter even. It's unbelievable how influential some of these analysts are, but it's unbelievable how much, some of these other people are too.
Well, it's magnified with Reddit and StockTwits because one person posts and 4 million people know about it. It's pretty amazing.
Yeah.
We've never had, call it the democratization of information, but we've always had access to this information. Starting in the 90s, it became available to everybody, but now it's instantly available. And people are magnifying it by, emphasizing what's basically talking their book.
So, and just to give an example, there was 2 headlines yesterday that, quote unquote, breaking news that I saw on CNBC that not CNBC, that I saw just in general that weren't even breaking news. It was all news. One of them was the CEO of Kodak, who tweeted at like 2:00 about their partnership with Microsoft that was announced 2 months ago. And the other was Phil LeBeau came on CNBC at like 5:00 talking about how Apple is close to a deal with Hyundai about the Apple car. Kia, Kia about the Apple car. That was out there.
That was out the day before.
Right. That was out 2 days ago. So Kodak and Apple.
This is a phrase that really rankles me. I've started watching CNN occasionally to get a quote unquote more balanced view. And Wolf Blitzer's show, every headline is breaking news. That's part of the script.
Oh my God. If I can't tell you how much that bugs me, Mark, that is like my number one pet peeve in life. I went to journalism school and it kills me, man. It kills me. I wish I could reach into the TV and yell, "This is not breaking news," if it broke 4 hours ago, but I can't.
It's part of the script. I mean, it's like, introducing someone. But Dennis, I want to get back to something you said, because I'm in the same boat. I was looking for a correction in late January into sort of mid to 21st of February. It all got compressed on Thursday, Friday last week. In theory, because people were banging on the stocks that the short sellers were long, which helped accelerate the whole thing, and people were maybe concerned about a spillover. But I still think there's some downside left. We got intraday better than a 5% correction if you look at the futures. I think they traded Joel, they traded down around 36.50, 36.70.
56.50 Sunday night.
Yeah, so that was sort of my minimum target. But I feel that once these, good earnings reports come out, there may be some late reports that aren't as good, because we really had some good reports from Google, and even the Qualcomm report was pretty bullish on the guidance. I think we got another more gentle test of that 3650, 3700 area.
You're absolutely correct, Mark, and we talked about this. It really started with JP Morgan. JP Morgan had a good report. They're one of the first ones out of the gate, and it made a new all-time high the day before, and then really gave a lot back, and now it's starting to rebound. But it started with JP Morgan. We saw what Apple had the big run into the report. You see that, made the new all-time high, pulled back. Microsoft has been a little bit different. Microsoft is back up in that area, strong stock. A lot of that was market related, but your most recent example is Amazon. And Amazon, I mean, how are you going to get a better report than that? That actually got $7 above the high from yesterday, or the 2-day high, and then came in quite a bit. So that's what you're seeing. You're seeing the earnings on these good companies being sold. Hasn't affected the overall market yet, but that's what you're seeing.
Yeah, it's been a sell the news earnings season. We identified that really early on. It hasn't pushed the market down, but it's, as you point out, it's providing some overhead resistance. Important to note that the smaller stocks in the S&P 500 are really carrying the water, which is bullish overall for continuation after earnings season. It's not the big cap names. So if the S&P is holding up, it's not because of Apple, Microsoft, and Amazon.
Great point.
So interesting times here. I am a little cautious. I think there'll be some buying opportunities as we get deeper into February. Historically, February, first year of a president's term, a little bit weak for obvious reasons. You get the enthusiasm after the election, and I guess there's going to be a State of the Union address at some point, or maybe there has been, and we don't. It was drowned out by the crazies.
by GameStop, maybe.
Yeah,
Mark Chaikin is the founder of Chaikin Analytics. Joins us every other week. We always appreciate his insights. Mark, thanks a lot.
Yeah, give me a call, please.
Okay, I'll give you a call after we're done.
I've been leaving you messages.
All right. I haven't gotten them. I swear.
I probably have a bad number. Enjoy, guys. Have a fun.
Hey, Mark, thanks.
I swear, I don't know.
Spencer,
I don't know what he's
Dustin Chaikin.
I don't know what he's talking
you?
about. I have no idea what he's talking about. All right, I swear. Although I did get an email from him, but I thought it was like one of those like spam, like someone who was like trying to like phishing.
Because they pretending to be Mark Chaikin.
Yeah, that's what I thought. So I didn't respond. So maybe that's what he's talking about. I have no idea. All right, can we talk Clover Health here? CLOV. Sure. I don't think I've ever seen this before. So Hindenburg Research, who's a short seller, came out with a short report, but they said like 10 minutes ago.
Oh, okay.
But they said we have no position, long or short.
Because they're scared to say short.
We have
Andrew left, and they're scared.
We have no, but we think this company is a fraud, but we have no position. I don't think I've ever seen that before.
Well, yeah.
Then why do the report?
Usually they want that to make the money from their influence there. So they're spooked.
I guess so.
I don't know. What you do that? Do you think they're lying? Do you think they do have a position? No, I don't think they can lie.
I don't even do that.
I don't know. I
think if they don't they don't have a position, they can't lie. So that's crazy. I mean, anyway, so they obviously are scared because we watched what happened to Andrew left. Oh, I'm short this thing, and then they ripped it higher on him. What was the symbol on this before Clover Health? Because I was in it. Was it like IP?
Mitch, help us out here. Someone chat, help us out.
Mitch, what was the SPAC that this
oh my god.
Before?
Was it damn it? I don't know.
IP.
Was it IPOE? Or was it IPO?
I thought it was one of those. I had this.
Oh god.
And I sold it.
IPOC. Eric's saying IPOC. Yeah.
IPOC.
All right.
So I had this as a SPAC.
Thank you, Chris.
And obviously, I had the big run. I think I had this back when it was like 10 or 11 bucks. Like I had it early, and I had the big run. I got obviously the deal, and I don't know. I just decided that it was time to ring the register on it. So actually, it seems like it was a good sale. I don't know much about this company though. Like I don't know much about them.
Do you want me to tell you what Hindenburg?
Yeah, like I know
is alleging.
I know, but but what exactly? How are they different? How is Clover Health like the next big thing? Do you know that?
I don't know. No, I don't know.
Anyways, maybe it doesn't matter.
Anyway, the crux of the report, though, Hindenburg is saying that there's actually an undisclosed DOJ investigation against the company, investigating at least 12 issues ranging from kickbacks to marketing practices to undisclosed third-party deals. They said they talked to a bunch of employees. Going after Chamath, going after SPACs. I'm wondering if other SPACs will trade down on this. I don't know. I haven't looked, but interesting. You see a short report that says we have no position. I don't think I've ever seen that before.
Because the way they've done it in the past is they short the stock, they issue the report, the stock tanks on their report, and then they can collect.
Yeah.
So it's all been a lot of market manipulation, a lot of this stuff. But they're entitled to their opinion. It's a gray area. Yeah, so you're entitled to your opinion. You're entitled to voice your opinion.
Yeah.
So it's a difficult thing to ever come at. So and obviously a lot of people have taken advantage of that. But I don't know. Like if there's obviously we know which one is this? A Hindenburg?
Yep.
They've come out with reports before, and some of them have been correct. And Andrew Left. I've always respected Andrew Left's research more than anyone because I feel like he's made some very good calls in the past. But these other guys have too. Sometimes they're right, sometimes they're wrong.
Yep.
In this case, we don't know, but it's down.
Did he said that he's not going to publish? Right.
No. He said he's not shorting. That's what he said. He said,
he said he's going to publish long trades, but not short trades. He's spooked. They're all spooked that they don't want to disclose that they're short of stock and then have Reddit run it on them.
They're
So
afraid.
they
They're afraid
issue a
of.
short
They're
report,
afraid of
scared
Reddit. They're afraid of Reddit.
That's a scared of Reddit right there. They're
Yeah.
scared of Reddit.
I think you might be right. You
Yeah.
might be right. Yeah. All right. 8:35. Let's bring on our second guest here, Buck Andrews. He is the co-founder of Inform. We had a great chat last week amidst the chaos. Buck, good morning. Oh wait, you're on mute here. Let's unmute your mic if we can. Can you there we
There
go.
we go.
Good morning.
Good morning.
Buck, I remember you saying, first of all, last week you somehow managed to go fishing while the market was letting itself on fire. So did you go fishing again this week or what?
No, I did not go fishing
All
this
right.
week. And I got to sell my Nokia out at
So let's talk about that.
Instead of $950 because I went fishing.
Let's talk about that. So you bought Nokia when 2 weeks
No,
ago?
I own Nokia from about $350, so I've owned it for several months.
Okay. And it ran up to almost $10 last week.
Yes, $975. It was almost a double in one day.
And so what happened? So walk us through that trade.
Well, what happened is that I think you had the brokerage companies discontinue the ability to buy stock, along with GameStop. So it was thrown into that group. And when you dry up the buying, of course, what's going to happen? So it's my understanding that the DTC that they came in and started requiring big margin deposits from Robinhood and the others, and that forced these companies to discontinue buying because they couldn't, they didn't want to put up that kind of margin.
Wait, okay, so Buck, walk us through your headspace though, because you were up big for one day. You were up huge in
a couple hours.
A couple hours.
Yeah.
Europe was closed.
So walk us through your mindset and sort of how you got yourself out of this thing.
I got out because once they stopped, the next day it was obvious that they were going to stop the buying. And once you stop the buying, you've got an imbalance on the stock, right? And so what's going to happen? They're going to, stock's going to collapse. So there was no way for it to rebound for a second day. So I didn't know exactly how far it would go down. I'd owned it for a while, so I went ahead and bailed on the stock. Took my profits and wait for another day to potentially.
Were you able to get out of some into that pop, into that ridiculous? I'm going to call it a ridiculous.
No,
pop.
you know what? I saw it trading at 7. Then I looked at it at 8. I had my phone with me, and I could have traded off the phone. And I did not sell. That was a big mistake. I did not see it hit 975. That was a double. I would have sold some there for sure had I seen it. But I saw it hitting those lower prices. A double in a day, I better be taking some profits.
Yeah, I think so. Especially when it's Nokia. And the other thing that we mentioned yesterday, Buck, was that got jacked. They jacked that price, and Reddit took over, and this was a Reddit pop. But they jacked it after Europe was closed because this is, remember, trade over in Europe. It's a very thick stock in Europe. But Europe closes at 11 o'clock. And if you look at when that price got jacked, it was after 11 o'clock because the liquidity would have dropped substantially. And that's when the Reddit influence, the Reddit buying would have really been able to push the price. And so then it got all the way up there. And then Europe opens the next day. And the stock, you're talking about, a widely owned company to the tune of this is AT&T widely owned over there. That it's very difficult for a Nokia stock to double in a day. And I think if Europe would have been open during that time, I don't think it would have traded up that high.
Yeah, there's no doubt. You're right about that. The liquidity would not have. There's too many outstanding shares.
Yes.
I think some of the big boys participated in that too.
They might have timed it, Joel.
Yeah.
They might have timed it and know when the liquidity, when we can jack it. That could be, Joel. But we don't know. We keep saying Reddit, Reddit pops these things, but we know just from stats that are coming out now that there was a lot of hedge funds involved here as well. So this wasn't all just Reddit.
Yeah, I'm sure there were momentum players jumping into the fray, right?
Oh, for sure.
Yeah, and the high frequency guys are probably right in there. It's a good trade for them. I did, Spencer, I heard you guys mention PACCAR. Just one thing on that. That's actually something I've studied at business school. And PACCAR, and I actually visited the company in Washington. They make the long haul trailers or tractors. So It's a trucking company. And the reason that people watch that company is because it's generally an indication of a improving economy. So it would make sense that you'd buy that, coming out of COVID.
There we go. Thanks for that. All right, what else is on your radar here? You mentioned to me yesterday you were watching the TLT. We haven't discussed the TLT on our show for quite a while.
What's that?
Yeah, well,
we
we talked about treasuries, right? And so,
Yeah.
I kind of watch these commodities a bit. And as I said, my first day of the treasury pit was limit down, limit up. And by the way, the guy with the pencil was Tommy Baldwin. He's actually in Turtle Trader. This guy used to trade. I was looking him up. He's on Wikipedia. You can look him up, Tommy Baldwin.
The
but
Baldwin leap. He had the Baldwin leap. When
Right,
he would,
right.
Yeah, he would just jump.
Yeah,
when he went to-
exactly. And that's when he hit, threw up like that. And that's when the pen struck the guy, the pencil. But he would take on single trades of $200 million by himself, and in a day he could trade up to 20,000 contracts, which is $2 billion for a single person. So it was he traded like an institution. All right. So the reason I'm watching TLT, it's kind of similar to the oils, and I'm also I'm actually short the bond futures, is because the way that this economy and the way that this market comes to a halt is through inflation. And so I like keeping just an eye on that. It will take a while for that to develop. But who knows? I mean, with the next stimulus package and the amount of debt that we've got, could we be looking at potentially the top of a bond market?
That's a big question. I don't know if I don't know if any of us have the answer or the insight.
Well, I mean, look at the chart.
Oh, I know, it's straight down.
Lower
it's
highs.
again-
Look at that. Lower highs. 1, 2, 3, 4, 5, 6, 7th month of lower highs.
Yeah, it's been
So
good.
that's why I'm watching the treasuries, just as bonds always lead the stock market, 90% of the time. So if you keep an eye on the bonds, it's just a good indication of what's to come potentially in the stock.
So that makes you nervous.
Well, it takes a while, as I said, for these things to develop. A long while.
Well, how long is a long while?
We want to know.
Well, yeah. Well,
long is-
it really,
Today, tomorrow, next
We want
Wednesday.
you to
Come
call
on,
the
Bob.
top here, Buck.
Well,
We want to know
well,
when the top is so that I can sell before the top hits.
That's
Well, just,
why you make the big bucks, Buck.
Well, let's just say we're watching it, and depending upon how quickly, it could accelerate faster than people think. Or it could be a bit slower. But with some of the action that's been taken, with oil, and oil is certainly a inflation. Maybe not as much as it used to be, but it still has a big input into inflation, right? If you look at that chart, that's since actually take a look at that chart since November 3rd. It's quite interesting.
There you go. There's your crude chart.
Yeah, look at November 3rd.
That was election day.
Yep.
Yeah. All right.
Which is amazing. That's a great. That's a great point you're bringing up, though, here, because everybody, you look at this, and actually, I think Goldman got this call right. But a lot of people think, okay, well, Biden's coming in here. We're going to go to cleaner energy. This can't be good for oil. And it's been the exact opposite so far. It's been very good for oil. So It's a little counterintuitive.
Yeah. And on top of that, you also have coordination with OPEC, so they're coordinating to cut back and drive prices higher. So that's also, that creates inflation. And so that brings me to some of the stocks that I'm watching on the oil side.
Yeah.
I've been watching Marathon Oil. I've got a position in that one. Apache and Phillips. Those are the three that I own on the oil side.
So at APA, MRO, and PSX.
Yes, or not Marathon. Excuse me. It's Marathon. Yep.
Okay. MRO, PSX, APA. Those are the three that Buck just mentioned.
Yeah. And if you look at the daily charts on those, they all look pretty good. If we continue seeing, upward movement in oil prices, I think these stocks have got some room to run.
Probably just got so oversold last year. I'm still not a fan of oil stocks whatsoever, just because I think there's secular decline here. But I mean, we were at a point where, ExxonMobil, which had never cut their dividend, was over 10%. I think it actually approached 11% the dividend at one time, which is just incredible. It's still got a 7.28% yield. So maybe it was just a matter of like this was just an oversold industry.
It could be, but look at the movement in the oil prices.
So you think there's still more upside here? Well,
and Marathon's a refiner, right? So they're running right now at about 82% capacity. You get the economy increasing. They could go to close to, who knows? Might be up in the high 90% capacity. So,
and that's the thing with oil, right? Is like demand's not going away anytime soon.
Not immediately, no.
Right.
We're not all going to be EVs tomorrow.
Right.
What's the one that Warren's into? Got beat up real bad. It did the acquisition. Oxy, yeah.
Wasn't he at Oxy?
Yeah.
I don't know if he's still in there. I don't know.
Yeah, I think he is.
And I agree with you, Dennis. I'm not a huge oil trader, but I'm a technology trader. But throwing something on the other side of the barbell just so that got a little bit of exposure.
Well, that's not a bad idea, too. I mean, if you're all just tech stocks and then tech decides to take the fall, I mean, we've seen this rotation from value to tech happen in the past, and it can be ugly for, we saw it back in September where, NASDAQ fell 10% in just a few days. And, some of the value stocks, we started to see rotation into those stocks. What do you think, with consumer staples, you were talking with the bonds, but the consumer staples have just been, beat up massively here as well, probably along with, with the TLT. What are your thoughts here just, on like a Coca-Cola or a Verizon? Because these stocks are significantly, they've had some pretty significant sells here in 2021. Is there value here in some of these stocks?
I don't follow them that closely. I find them pretty boring.
Too boring. Too boring. That's everyone. That's why they're selling these things. That's actually why these stocks are getting sold, because they're too boring. That's the truth. They're getting sold because they're too boring and nobody cares about a 4% dividend.
Yeah, but I'll tell you another stock I took a position in yesterday, which is a boring stock, was Chubb. And it's because they had a blowout.
Didn't they just report earnings like last week or something?
They did. So I pulled that up on
Tuesday, 2 days ago.
Right.
What's Chubb? CHB? I'm having
CB.
CB.
You go back to the 90s, CB. It's been CB for a while.
CB, and take a look at the chart there. Chart's looking pretty good too on a breakout.
Yeah, you get above that 160. What's the all-time high on this? I guess there's a little bit up there, 167. You're starting to just get back up in that area we were back last year. So
167.74.
Right. So, but there's an awful lot of these stocks that are trading way above their January, February highs, right? Some 200-300% when you start talking about technology stocks. So, what I'm looking at is some of these stocks that have not gone above those highs, so they may have more room.
You're looking for a catch-up trade. You're looking for a catch-up trade.
Yeah, and something to offset, my heavily exposed ARC funds.
You're in all the ARC funds, aren't you?
Hey,
you're long Kathy.
Diversification is key.
Yeah,
we're all long Kathy. We're all mad at her because her email was late last night, although apparently not to Mark Chaikin. So
no, some people in the chat were saying they got it at 7 o'clock. I don't know what time zone they're in.
I thought they just send it out bulk. Why is some people on the preferred list? How do me and Spencer need to get on the preferred list?
I don't know.
Usually it is always 6:30, but last night was 8:30 anyway. So you on the Kathy list, Buck? Do you get the Kathy?
I am not. How do you get on this list? I should be on it.
All right. You go to arkinvest.com. This is what you do. You Google ARK Invest trade notifications. That's what you do. And then
there you go. We gave out a huge
we're like
how many people
infomercial.
Tier 2
we're like an infomercial.
Because we have gotten so many people on that list.
That list has got to be like Motley Fool making a suggestion.
It might be.
I think it might be bigger.
It may be. All right. Buck Andrews is the co-founder of Inform. Check it out. Go to inform.info or market.inform.info. There's the link. It's in4m.info. Sign up for free. Check it out. Buck, we always appreciate your time. Thanks a lot. Have a good one.
Yeah, thank you, guys. Have a good rest of your week and a good weekend.
All right, we should go back to this Clover Health thing because they brought it up on CNBC while we had Buck on. So we
so then it tanked more.
So then it tanked more. That's what
you get the news. the stock tanks, and then CNBC mentions it and you get the second tank.
Yep.
But what I love about CNBC is sometimes, it'll get you out of a bad trade where you think the news breaks and you think it's good and you buy it. And then it's like, oh no, they're selling it on it. But I'm like, okay, well, in 3 minutes, CNBC will say breaking news, and then it'll get another pop and allow me to get out of my bad trade. There's a strategy for getting out of when you're on the wrong side of the news. If it's obvious, because then you got the whole CNBC, it'll come in 5 minutes. So I was like, oh, we'll get out of the CNBC pop in 2 minutes here. So
hey, that's it.
That's one of your less reliable indicators. That's right.
They're all the indicators aren't always reliable, Joel. You're always, that's why you use a whole bunch of them. You hope a couple of them work.
All right, 8:51. I want to talk Sava here for a second. So this is a small healthcare biotech low float company, about 22 million share float. They have an Alzheimer's drug, and they announced some data on that, some like interim data a couple of days ago. It was like February 2nd, I want to say. They announced results of an interim analysis of an open label study of their Alzheimer's drug. They said that cognition and behavior scores both improved following 6 months of treatment with no safety issues. Again, this was 2 days ago, and the stock has been in just rocket ship mode.
I was trading this actively back in September because it kept having insider buys.
Ooh.
So, and I can remember, it was like $9 and $10, and it kept having insider buys. Anyways, that was back in September. It took a long time for those insiders to get paid, but holy cow, are they getting paid right now? So sometimes it does pay to follow the insider buys on the SEC release.
I'll tell you exactly, because I'll just pull it up in Benzinga Pro here.
Yeah,
if I can make it, maybe I'll zoom in a little bit.
I remember trading it actively back. It was like September or October.
All I did was scroll down.
It was like insider buys every day, and I'm like. And when you see that many, you think, okay, well, you play it along with them. You think they might know something.
You see a couple on the 17th. You see this is September 17th. You see no, that's really it. September 17th and late.
No, there's more. Keep going. There's more in there.
There's more.
I remember like 3-4 days in a row. I'm going to look too now. You got me looking.
All right.
Maybe went too far.
I hope
I'm
pretty sure. Oh, there was one above that. I remember like a few days in a row. It's like there's more.
Yeah. So September 24th. There was one on.
Weren't huge.
I'm just scrolling up here. Yeah, I'm done with that.
But consistent. Sometimes. Yeah. That.
Anyways, I just remember that trading it back then, and then I was looking at it yesterday. I was like, this is $100 stock. I look last night. I was like, when did this become $100 stock? And I look, it was like 3 days ago. Like, so what happened? Why the explosion in price now? Do we know why?
I said part of it.
Grab a hold of this thing.
Part of it is the low float. So when a stock has a low float, that means there's not that many shares available for trading in the public market. It is easier to move in one direction, right? It's easier to control the trade. And so there's a 22 million share float of Sava. It's not a lot of shares. It's easy to move. It's not super thick, although the volume yesterday I think was like 50 million. So every share traded twice yesterday.
Did somebody somewhere in some YouTube channel or deep value guy come in here and do a video on it or something? I mean, I don't know why all of a sudden though they grab a hold of this one. Was this was it Reddit? Because I don't see a headline that we know they've got a drug and that they've been cooking is Alzheimer's, right?
That's it. That's the one.
I mean, that's a great story in itself, like anything, that because we know we've never had a successful drug. So we know these can be big movers, but I don't see like a trial. Was there a trial or something? Results?
No, I said they announced it 2 days ago. So
okay, well, there was a catalyst then 2 days ago. I didn't.
Yeah, 2 days. 2 days ago. Yeah.
So I just decided to start going now.
Yeah. Okay. Question from the chat: what is considered a low float? Good question. It's subjective. My arbitrary definition is anything below 100 million. That's my arbitrary line. But it's really subjective. I don't know. What I think it's been to you ask.
It's totally subjective.
Yeah, I would say.
I consider anything under $1 billion because I trade mega caps. So
yeah,
I stay away from the smaller stuff.
Yeah.
138.60, 138.50 that got to. I hope
This has been like
you-
the penny stock. Maybe this is a good 2-minute educational point, but this has been like the penny stock market where people are back to like looking through penny stocks. I mean, we had these years where the penny stocks, this is where you make the money, and they get, and it's rotation. And right now people are interested in making the money fast. They sell Amazon earnings off because they don't care. They want to go make money fast. And this is a market that's spoiling a lot of people here right now. I will tell you, there's a lot of times during, my 24-year trading career where there's years that go by and nobody's talking about penny stocks, because usually when the dust settles, 90% of these things continue to go down. It's like finding the needle in the haystack, the one that's going to go. And there was people ripping through everything that had a short interest, last week. And, we were talking about on the show too. And a lot of them were going, but a lot of them didn't go too. So you're still trying to find what's the next Reddit stock. Oh, we'll try this one and this one and this one. And then what happened is all the stocks that had a high short interest, the ones that didn't even go, some of those got hit too because they were crowded with people hoping that this was going to be the next one. So you've got to be careful, when you're trading these smaller stocks. And, Sava's one of them. You think, okay, yeah, it's 94, it's going to 1,000. And then all of a sudden you got a situation on your hands like another GameStop where, it starts to give it back. Who knows where this thing tops out? And it does have a story, and it does have the Alzheimer's, and maybe it goes higher. Maybe this is the one. Maybe it is going to 1,000. It could happen. But in all likelihood, when the dust settles, these things often do give their gains back. So it's hard to just come in here and be a buyer 94. As long as you can buy anything, as long as you got your out. Remember, you have to have your out. Discipline. Say, okay, I'm going to stop myself out at yesterday's high or something, or yesterday's close if you're buying it here. If it takes that out, I'm going to eat my 7-point loss and I'm going to get out. But too many people just buy chasing the stock and then have no plan to get out of the losing position, no contingency plan to get out if the trade moves against them. And that's the biggest difference between a seasoned traders and a newer trader, because a lot of newer traders just think about the profit that they can make, where a seasoned trader will think about how much money I can lose.
That's why I asked Buck about Nokia, because I had a feeling he didn't sell at $9, but I wanted to know when he sold and how he got himself out of that trade mentally, right? As well as because that's that a lot of people are in these high flyers now, and maybe they're stuck. If you bought GameStop last week, you're probably stuck.
You won't hear anything. And the other thing is there's this, everybody thinks the other person's getting rich. And you read on Twitter and like, so many people made so much money on GameStop. And you'll hear a few things, some horror stories on, some people who bought, $300 and they're down money. But again, everybody's going to say, oh, I sold. Because people want to brag about themselves to make them feel better about their lives. I mean, and the bottom line here is...
That's harsh.
Well, it's true. It's true. People have to, what really, when you're on Twitter and you're bragging about yourself, it's telling me that you're not confident about yourself. It's telling me that you're not confident, that you need that affirmation that I'm a good trader. I need somebody else to tell me I'm a good trader because I'm not confident enough in me. I think that's what it is. And that's everybody's on there because they're not confident enough in themselves. They have to brag about themselves on Twitter. So, I like talking about my losers, to be honest, more because I think I learn more from talking about my losers. I think it's fun to talk about your loser, and like misery likes company a little bit. I have a bad trade. I like talking about it because, one, you learn from it, and two, people say, oh, you'll get them next time, and they cheer you up a little bit. But that's not the way Twitter works. It's like 99% of people on Twitter just want to talk about their winners. What do you learn from that? You don't learn anything from winning trades. You learn from losing trades. You learn what not to do.
Maybe we should start our own social media platform where all we do is talk about our losing trades. You're not allowed to talk about your winners. I want to tell everyone how I bought. I called the bottom in GE at 15.
The journal. You made the journal is what we used to call it. When
right.
If you sell the bottom of the day or buy the top of the day, you made the journal.
Yeah, I bought Kraft Heinz at 65. Oops. We should only talk.
The truth is, though, that a lot of traders do lose money. And you're looking out there and you're reading Twitter and you think, what am I doing wrong?
Yeah.
And it's because you're getting this skewed vision that every single person is getting rich on GameStop, or every single person is getting rich. And you know what? And then it makes you make mistakes because it makes you want to hit for the home run. I got to put more money in this. I got to go after this one. I got to chase this Sava today because my neighbor's getting rich and they're going to get a better car and a bigger house than I am. Just, base hits. base hits. Don't worry about your neighbor. Worry about yourself. If your neighbor is making $2,000 a day and you're making $500 a day, you know what? You can still live and pay the bills on $500 a day. And at the end of the day, we're all dead anyways, so the money's meaningless. So
man,
so
this got deep. This got deep fast.
No, but it's true. I mean, it's like, oh, I'm so depressed because I didn't sell it here, or you're getting down on yourself. You know what? Just base hits. Do what you can. If you're losing money trading, don't worry. There's a lot of other people losing money trading too. And it takes time to learn this game. Right now, people have been spoiled. Market's been going straight up. Everybody thinks they've got it all figured out. I mean, that works in a bull market very well. But we'll see what happens when the market goes to turn.
You know what? Dennis is right. We're all going to die. What is the point of this? We're all going to die eventually.
Well, okay, I'm not trying to be morbid here and just say, okay, well, why do we even try? It's still fun. You got to have fun, though. That's the whole thing. Have fun with what you're doing. And again, give yourself a pat on the back. One thing I learned from Jeremy Newsom, who is an excellent trader, and he would say, because I'm negative half the time too. And, he'd say, you good trade, give yourself a pat on the back. Don't look for the pat on the back from somebody else. Give it to yourself. Tell yourself you had a good trade there, and don't worry about getting the affirmation. You had a good trade. You had a good trade. Tell yourself that. Get your confidence up, because if you're sitting there reading Twitter, it's going to hurt your confidence. And when my confidence is down, it's going to affect my performance.
That's a great point. That's a great point.
I'm sitting there and worrying about everybody else, getting rich on GameStop, and I'm sitting here base hits, oh, here's somebody that made $13 million on GameStop. Hey, folks, I didn't make $13 million on a game. I didn't make a penny on GameStop. I never traded it. So I watched it. It was awesome to watch. And I used it as an indicator.
Sure.
But I mean, you think, oh, everybody, and I'm looking at it, even thinking, I get in my head, I'm like, holy cow, I should have bought some GameStop. I wouldn't have had to make 200 other trades and base hits last night. You hit that one home run and you make your year. But I mean, the people who are going for that home run usually strike out.
Yeah. And speaking of that indicator, what do you do when GameStop's flat? Because it's flat overnight here, so it's not up, it's not down. And I don't know what that means for your overall market here, Dennis. But
yeah, I think the indicator is starting to not. We know this indicator is short-lived. It's like the Inspector Gadget. This note will self-destruct in 5 minutes. I mean, this indicator will self-destruct by next week because nobody will care about GameStop. It was working very well for like 5 or 6 days. Though, like GameStop starts tanking and the SPY starts going up. I mean, you can totally. People were making fun of me for that indicator, but I tell you, I made a lot of money trading in the last week using the GameStop indicator, just because you can see the perfect inverse correlation between GME. Not now. I think it's kind of almost done, this indicator. But last week it was working because it was going up 100 points and the market was puking because they're worried that this is affecting, liquidity. This is affecting hedge funds. Hedge funds are blowing out. They got to sell their good positions. And there was a little bit of that, but it was more the fear of that, that was really driving that trade. And, and it did. And so, now I think, the GameStop story has cooled off substantially. Does it get hot again? If GameStop stock starts ripping up to 150, 200, I think the SPY will start showing some weakness. I just don't think, even yesterday with the Amazon news, they sold that. There's so many bag holders in here now that it makes me think that all rallies are going to be just met with resistance. Hard for it to go back to 200, 300 now because there's a lot of bag holders in there. So, I mean, Reddit would love to rip that stock again. I just don't think they got the oomph to do it. And I don't think the hedge funds are on that side of the trade anymore. And it was really the hedge funds that were probably driving it. We can say it was Reddit. And we can say, oh, yeah, because they shut Reddit down. But again, we looked at the stats from Citadel. And Monday, Tuesday, Wednesday, Thursday of last week, retail was a net seller of GameStop, and they could still, in those days, I think Monday or Tuesday, when did they put the short sell, or when they put when did Robinhood cut it back? What day?
Thursday, I think. I don't.
Monday, Tuesday, Wednesday, despite being able to buy as much GameStop as you want, they were net sellers those days, according to Citadel stats. So that's telling me that this was driven by hedge funds and not retail.
Just to put a bow on
just
to put a bow on that conversation about trading, I'm pasting a link to a tweet that Spinner had posted in our Benzinga.com chat. John Carter, who's been on our show before, did a really good blog post just about his trading journal from last year and taking the wins with the losses. So I recommend everyone check that out. I just pasted it in.
Who's our guest tomorrow?
Well, tomorrow is Friday.
Jason.
Tomorrow's Friday, so we've got Marcus Heitcotter and Jason Raznick. And that's on the slate for tomorrow. So we're doing what we did yesterday, and looks like this may be the plan going forward. So for everybody, messaging us concerned that pre-market prep didn't get uploaded yesterday. It got uploaded. It was very late. Yesterday was our first day kind of doing this live all day thing. So we're working through the kinks, but don't worry. I will make sure that pre-market prep gets uploaded live or gets uploaded as a separate video and also as a podcast. I know that a lot of people listen to it via the podcast, so it's a priority to get that up. So don't worry.
Is there any way just to cut it out, like you stop it and then
Yep. That's
it?
exactly what we're having someone do. Actually,
Okay.
as we speak, they should be doing it. So don't worry.
Okay.
I heard your feedback, and we're going to make sure that happens. For everyone who listens to our show via podcast, I just want to add this disclaimer that all information from our show is meant to be used as informational purposes, not for investing or trading advice. Once again, today's pre-market prep was sponsored by Inform. Their enterprise news productivity tool is designed to enable you to perform more thorough stock research by isolating the specific headlines that are most impactful to your portfolio. Go to inform.info to learn more. Dennis and Joel just dipped out, leaving me by myself, which is totally fine, I guess. So I'll bring Mitch Hodge here on now. Oh, also, forgot to mention, hit that like button. Everyone hit like, hit subscribe, hit share. Help us out on the interwebs. Mitch, good morning.
Good morning. Good morning. How we doing out there?
We're doing. How you doing?
Hey, taking another sip of my coffee and getting ready for the market open. Let's get ready. Let's start.
All right. Well, all right. So let's get ready. What are you watching here?
All right. So let's start bringing up the gappers. I mean, at the end of the day, I'm gonna attack this how everybody attacks it. They just pull up the movers list, right, and start seeing what's moving on the day.
There we go. Whoa, wait. You just have up movers, not down movers? What just gainers? You're not looking at losers?
Who looks at losers anymore?
I do. Wait, actually, after you're done, I want to show you what I use every morning. So
Hey, I used to do the gainers and losers, but I got to the point where all I see is gainers, baby.
Okay, wait. Can I share my screen too? I just want to compare.
Yeah.
So this is the first screen that I look at every single morning. This is Benzinga Pro. I've got a news feed up on the right, and I've got my movers tool up on the left. I separate gainers out and losers out, and this is the first thing, literally the first thing I check before my email, before anything. I see, okay, what's up, what's down, and I have some price filters. I don't look at like anything below $3, I think, for example, or $5. But so I kind of weed out that stuff. But this is what I use every day. What's up? What's down?
Yep.
Anyway,
I mean, hey, I can't blame you for that. I also filter out anything above. First filter. Anything that's above 300 million market cap, because I don't want to look at anything that's below that, just because one of the things is that a lot of times you're going to get these low flow, high manipulated stocks there, and I'm looking for more of swing trades. So to me, necessarily I'm not looking for that intraday movement, but more along setups that look good on the daily that could have intraday spark. I'm looking for that spark to happen, and I'm basing that off of a kind of a daily look.
Yeah.
So I'll let you go ahead and get on out of here, Spencer. We'll see you in a little bit.
Yeah, wait, I don't want to add one more thing. So all I do, so for example, today, I wake up, I go here, I see AVXL. I don't know what the hell AVXL is, so that's why I have a newsfeed. AVXL, boom, headlines, why is it up? That's it. I'm going to stop my screen share now, and Mitch, let you run with this. But I just wanted to show everyone that's the first thing that I check when I sit down at my desk every day is that screen. Okay, Mitch, do your thing. I'll be back with Neil Hamilton in like 20 minutes.
Let's do it.
All right.
All right, guys. So really quickly, guys, if you guys have a ticker you guys want me to take a look at, go ahead and put it up in the chat. I'll take a look in the chat, but I want to run through the gappers list and just see what's gapping on the day, see if we got some news, see if we've seen some technicals that we can go off of. So definitely go ahead and hit that like button for me and put those tickers in the chat for me. And let's go ahead and run through this. All right, so I'm going to pull up the list here. And one of the things that I do always, guys, is just start running through. I just want to see some daily charts, want to see what's moving, why is it moving. You know, a lot of the times I use Benzinga Pro to look at this, why is it moving, and it makes it really easy for you. You're just pulling up the ticker. Here we got AVXL, and it says that it's trading higher, not seeing any company-specific news to justify the price action. So this shows that it's moving on that momentum. Look, and so I'm sure day traders are going to be looking at this one. And if you could see this kind of pre-market setup, one thing I can quickly point out on this chart is that you have this resistance across, right? And so can we hold that resistance and it become a new support there? So right now we're literally right on those levels, guys. So we had that 1 up, 1 down, 2 up, 2 down, 3 up. We got volume again at support. So now let's just see if it can hold above here and really start pushing to that 20. And then maybe it can make that run up towards the high of the pre-market, which was at 725, which got up there to 2278. And that's on AVXL, guys. AVXL. All right, guys. So I'm seeing a bunch of people mention Sava. I know that Sava's doing kind of a sympathy move. You could call that. There's really no news here, but just look at this play here. Sava looks actually a little bit more interesting for me, just because you have these higher levels that it could try to get to than that other chart, and I see this kind of swing of momentum, so it at least gives you a bottom, but it's a higher price stock, so a little bit harder to judge when you're getting your entries, and maybe you want to attack it with a lower share size first. All right, guys, seeing some mention of XL, seeing VGAC. Genius. So I'm going to start going through some of these, and I'll try to run through these as quick as possible. I know we got Neil waiting up at 9:30, so you guys, we got a big show for you guys coming up into the open. If you haven't seen it, Neil's going to be breaking down the technicals, and not only the technicals, but we're going to be bringing on some really big guests for you guys to start seeing kind of the trading morning. I think we got Ricky this morning, so super excited about that. Let's get into another one here. I'm seeing APPS here. Digital Turbine shares trading higher after the company reported better than expected Q3 earnings. I think we went over this one with Mark Chaikin, but definitely is looking strong there. 1 drive, 2 drive, pull back, and now you're getting that drive up. See if you get this pullback closer towards 74, maybe like a red to green open. So I'll definitely be keeping an eye on this one. All right, guys, looking at this one, POW. This was actually mentioned by Chris yesterday, guys. This one is one to keep an eye out. Chris Kachi has mentioned this one before, so I'm going to take a look at this one. Definitely POWW. All right, guys, so BGAC, I know that was mentioned in the chat. That one has a full announcement with 23andMe. And one thing that I can tell you guys about this one is that you sometimes are going to get attempts to get in these cheap. This one pulled back all the way towards the 1250, and now it's back up there to 15. This is one that I actually liked right out the gates, guys. If we look at it on a yearly, this was at $10 at one point, guys. This had a low of $9.65. So this is where I really like to get in these SPACs, so that you can wake up one day, it get up there to that 15, and then the next thing you notice, hey, I got a 50% winner. I'll take that for a little, maybe 5% risk or 10% risk. All right, guys, so we're getting up there towards 913. This is when you want to start getting that full trading plan going. What's on the watch list? What are you looking for? What's the expected move? And so a lot of the times what I want to see is I want to kind of understand my complete trading plan before the market opens. Before anything happens, I want to have that plan so that if anything goes heads and goes away from that plan, I can see that and adapt. So I'm definitely going to be looking at a couple of these. One that I'll take a look at, guys, is still going up. One of my story stocks of the year, GAN. GAN's still looking great. Full disclosure, I sold this one up at 24. A little part of me is like, man, I still want to hold this one. This chart's looking great. Great turnaround. This is exactly when I bought it, guys, down here at this little spot right here. But then look where it's gone now. It's definitely getting up there towards the resistance. Has a good overall fundamentals for the year. And hey, if we're going to make more revenue than we did back at this time, and we can get above that 28, it's going to be looking good. You saw those volume bars, those big volume bars after you seen this dip. That's how you notice a lot of the times that the bulls are getting right back in this one. And that's GAN, G-A-N, guys. All right, so seeing PayPal mentioned here. So let's go ahead and let's run through some PayPal there, which is a ticker associated with 23andMe. That was VGAC. VGAC. I know someone put it up a little bit a while ago, so I'll try to find the ticker there, but not putting up the banners this morning. But let's keep rolling through here. There you go. Eno's helping us out. VJAC putting it in the chat. All right, let's keep rolling through here. Let's see if there's any other SPACs moving or anything else we got. I know we got the Clover kind of the health with the Chamath. I think we're going to be talking about that on SPAC Attack, so don't worry about that, guys. Here's another one, guys. This one was mentioned by Chris yesterday, guys. Yesterday, we mentioned Hydro Farms Holdings. And look where it's at today, guys. Already up there to 89, guys. So definitely this one went and did a nice gap up there from 84s all the way up there to 89.60s. So definitely keep your eyes on that one. That's HYFM. I think that one's getting a lift still from the cannabis lift there. Let's see how cannabis is doing this morning. How's CGC? So I'm going to take a look here. One of the things that I've definitely seen is that, hey, this is starting to look like it's going back towards this 2018 year. I started mentioning this on the pre-show with Spencer that hey, I mean, if we haven't seen these kind of big candles since the last big cannabis run. We had essentially this from this January in 2019 time all the way until about March. You could say March time, where it just went straight down. It was a dog, and it got to the bottom. But really, this bar is what changed everything, guys. When we went right back through this 1990, this $20 price point, we got a huge amount of volume there. And really what it is that you get this third multiple bottom look. We talk about this all the time. I talk about this on my technicals look. I'm always looking for that three bottom look. And so here you got that three bottom look, and then a reversal above that, trending back upwards. And so that's exactly what you wanted to see if you were getting in and loading the boat down there. And so now, I mean, you see these strong candles. We're looking like we're heading towards this resistance up here towards 52. And if it can get past this 52, I mean, we're essentially saying that it's stronger than it was ever in that 2018 to 2019 period. So definitely some big candles on cannabis. So keep your eyes out on some other plays. I saw PayPal. I know this one had earnings this morning, so definitely let's pull this up. Why is it moving here? It states PayPal's shares are trading higher after company reported better than expected Q4 earnings per shares, and sales resulted and issued future guidance. So essentially for the 2021 increased the guidance above the estimates here. So let's take a look on the daily and see what we see on PayPal. Of course, we're doing this with Benzinga Pro. You can do all this with Benzinga Pro, and that's what it's really all about, guys, is that when you got that one-stop shop where you can go ahead and do your technicals, set up your trades, that's what it's all about. I mean, now we're seeing PayPal up there, though. It's a huge gap up, guys. This is a gap up. And it had this gap down, and one of the things is you see how it gapped down and then it closed the gap. The only thing I'd be concerned about is if this one wants to close the gap to 250s, 255s before it wants to come right back up there. So you got to be careful with this one. I can tell you right now, at least from pre-market and from what I see on the chart, I can't tell you which way PayPal is heading today. All right, guys. So seeing in the chat XL being mentioned. Let's go ahead and get into XL right quick here. So XL Fleet, this is one that we mentioned really early on pre-market prep. The reason why we liked it was just because at the end of the day, we saw so many of these plays coming out. It wasn't just one, and we were looking for the transition. And really, when the transition happened, that's when you got this spike up on the 21st, and now you're starting to get this multiple bottom action. So I really do like how you got this multiple bottom on the weeklies. And now I'm really going to be paying attention to this one. Now that we have that bottom, we can start measuring our risks there. So we got a bottom here at 1860, a bottom here at 1851, and a bottom here at 1852. So what that does, that gives you an ability to measure your risk. Once you have that measured risk, then you can also establish what your measured reward is going to be. And if your measured reward, let's say if you're risking down this little bar, but your measured reward is up to here, those are the kinds of trades that I'm looking for, guys. I'm trying to get maybe a 1 to 4 look, and if I can get risk 1 to 4 on the reward side, that definitely is going to make me feel a lot better about my probability and staying in the green with my account. All right, guys, so let's keep running through here, seeing a couple of names mentioned. One of the things that I want to tell you guys is every single morning, I would suggest you definitely start opening up a watch list with Benzinga Pro and start like adding to the watch list. Sometimes I do this weekly. I'll just set it for a week. Certain stocks that I want to keep an eye out for the week. This was way back when, but one of the ones that I was looking at here, and we could take a look here. It was USFD. This is a food supplier one, and this was the one I was looking at in March time, and then now it's all the way up there towards 35. This was actually on the list here for August weeks. And you can see where it was in August. It was in this consolidation period, and now where it is. And so this is why it's important to have these watch lists set up. I have one for SPAC Attacks that I check every single day also, and it shows me all my SPACs. Like, to this morning, we could look at VJAC, we could look at QuantumScape. QuantumScape is one that's really getting interesting, guys, because this is a big mover, guys. So one thing I'll definitely point out is that we have those multiple bottom looks on QuantumScape. So 1, 2, 3 bottom with an inverse candle here and a Harmy candle showing that potential reversal of trend. And so now I want to see this one get above kind of this line up here and really start getting some volume, because if we can get some volume to really start spiking up and maybe get a volume bar that shows up here, that could really start giving that drive to get it through 60, and then you got the 60 level, you got the 80 level, and then the next level up from that would be that 100 kind of look. And so this is how you start approaching these trades. And so one of the things that I would do here is I'd approach this like this, guys. So let me go ahead and erase this for you guys so that you guys can see exactly what I would do here. And so one of the things that Benzinga Pro does have is this long position. And this long position, I really do like it, because what you can do is you can start establishing your whole trade and how you're going to take it. And so one of the biggest things that I think is important is establishing the complete trade and understanding what P&L, guys. P&L is so important to me, and I focus on this all the time, guys. So if you can focus on your P&L and understand your profit to loss ratio, then this is how you really attack these kind of bigger trades, and this is how I attack it, guys. So I'm gonna zoom in here a little bit so that you guys can see kind of how we would attack this. Okay, so one of the things that you can do here is you can raise your stop up. I normally do about a 5% stop. So let's leave it somewhere around this 250. So we're gonna risk 250 on the position, but we're gonna look for a target to get us up there closer towards this gap area, which is these $80. And so that is essentially a target of 33 points and risking about $2.50 there. And so this is how you want to go ahead and approach these kind of trades: is set up the complete trade. Set up the area where you're going to go ahead and see your risk. Set up the area where you're going to see the target so that you know your plan and you stick to it. All right, guys, so definitely want to go ahead and get back a little bit here. So if you guys have a ticker that you guys want to take a look at, put it in the chat. I know that Neil's coming on next, so he'll take a look at those, and then we'll start getting closer towards the bell here. I'm actually... I know Neil probably can hear me. I'm actually probably bring on Neil around 9:29 so that he can open up with you guys. I think this is important, is for him to be ready while the bell rings for you guys so that you guys can see the moves while they happen. All right, so definitely running through here. Another one that I like, guys, long term, that I'm looking to maybe get into today is Romeo Power. I've talked about this one multiple times. Let's see if it bottoms out today and we get some movement in that one. Another one that you can take a look at, guys, and we can do this just based off of the volume today. One of the things that I like to look at is the volume for SPACs. So let's see what is trading at the highest volume today and then see why it's trading there. So one of the things you can clearly see what's standing out, guys, is Clover. Clover got hit hard and it's still getting hit. Let's take a look at this on the 5-minute chart and see how bad of a hit it's really taken, guys. So I'm going to pull it up on the 5-minute. As you guys can see right here, this chart, and I'm pulling it up right here. Clover, look at this downturn, guys. This was a Hindenburg research report that came out this morning. I'm doing some more research on it, guys. I was reading it this morning, so I'm not going to try to comment specifically about it right now, but I'm definitely going to point out the move. As you see that big pullback here, if you looked at the 1 yearly chart, where could it go to? Where could it stop? So one thing I would definitely look at to see if it's going to go ahead and get somewhere near this area. So let's see how it goes ahead and reacts when it gets somewhere near that area, that 1150, is seeing if it could hold that prior resistance as a support. But definitely look at this turnaround, guys. And this is why you got to be careful with SPACs. And I always talk about how you got to know your reward target. Don't be greedy. Don't be up here in the $17, be up maybe about 30, 40%, and your plan was to take 30 to 40%, and then you're looking for 50 to 60 just because it's at those levels. All right, guys, let's go ahead and take a look here at the chat. I want to catch up, see if anyone's mentioning anything great to take a look at. All right, so it looks like people are talking about the Hindenburg research report. I also see trading off of the Benzinga chart is getting there. It's getting there. I know it's in the pipe. I know they're working on that feature, so we'll definitely work our way there. I'm seeing Snap be mentioned here. Let's take a look at Snap. This was one stock that to tell you the truth, when it IPO'd. I remember when it IPO'd around 30, and I really thought, like, hey, was this priced correctly? I mean, look where Snap is now, guys. I mean, Snap has definitely changed their business model. A lot of that was with their advertisement and how they found a way to really bring in kind of these new contents and shows that you see on Snap. And the daily chart is looking strong. It had this moment of consolidation where it was sideways through this period, and really one thing you don't want to see is kind of a high volume bar showing up near the bottom, and really you got just multiple actions here. So bottoming action, bottoming action, bottoming action, 3 bottoming actions. And what do we need? A push towards resistance and then some volume to continue it. I don't see like these big volume bars that like we saw back here. So that definitely worries me. So I'll definitely keep an eye on it. I would want to see some volume like this, maybe 70 million shares traded today as it approaches that high. You don't want it to turn around on you this way. So definitely it needs some volume to keep driving. So definitely keep that one on watch. I'll keep that one. That's a Snap. All right, guys. Looks like I got one more last one here. The FUBU. Hey, so FUBU. This is one that I actually called out, guys, at $11. I can't really be a pro and always be able to find these, but one thing I did see was you can't see it here, guys, because it's of the daily, but this turnaround right here, this is when I started really getting excited here, guys, and there's a reason why. So I'll pull up the weekly so that you guys can see the weekly, and then that's where you'll go ahead and be able to see what I was looking at. All right, so one of the things that I was looking at, guys, was this kind of downward action and sideways period of time for FUBU that it was working its way towards. And so, we actually kind of IPO'd in this, well, it wasn't an IPO, but it came from the OTC market right in this period of time, right in this October time. And I started seeing this drive here and the volume increase, right? And so all this volume was only about 84,000 shares that it was trading in this whole sideways period. But when it came to the market and it came to the New York Stock Exchange, the volume started increasing. And then we got a kind of an offering that was down here, nice at the bottom. And so what that gave me was undersupply. And then I saw the director buying here. And that's how I attacked this one. And I thought the story could get hot. Like always, sometimes I try to get into these positions before I think the story could get hot so that I can measure my risk down towards this level and then look for an attempted move up. Now, did I think that it was going to get towards $60? I mean, this candle shows it, but really I was looking more towards a $30 price point. And so it's looking good that it turned back around at that price point. So we got that price point to break out from there, but when it came back, it actually held that level, and it's pushing right back up there, now up there to the 51s. So that's FUBU, guys. All right, guys, so it's 9:29. The time is here for my man, my man Neil to come on and take over, take the reins, and lead you into the open. This is so important, guys. You guys need somebody to trade with. If you guys need someone in your ear to keep you calm, keep you sane, I think no better man than to bring on my man Neil. How you doing, Neil?
I'm doing very well. I'm feeling very calm this morning. How about you, Mitch?
Hey, you can hear from my excitement. I'm going to go focus on my portfolio, see if I can handle my portfolio right here at the open, see if I can maybe nail a trade and bring it back to the team a little bit later. But hey, Neil, take the reign. Take over.
All right, Zinger Nation, welcome into the open where we get technical. If you don't know me already, my name is Neil Hamilton. I started at Benzinga about 4 years ago. And back then I was just sweeping floors and returning Luke Jacoby's energy drink cans. But I was surrounded by a lot of really good traders, a lot of veteran investors who taught me a lot about technical analysis. And just through osmosis, some self-learning, and being around some really smart people, I've been able to become pretty competent in my technical analysis, and I'm here to share that with you. I don't know everything. In fact, the only thing that I know is that I get lucky sometimes. I know enough to get lucky sometimes, and I'm here to share that knowledge with you. And during this show, half an hour in, every day during the week, we're going to bring in a guest who is a fantastic, world-renowned technician to teach us something. We're going to learn it together so that we can take it to the bank and make some trades based on that. But to get things started, producer Spencer, was there any news that we should cover today? If not, I just want to get right into the charts.
Well, first I want to say, can you just bring your charts up so we have something to look at besides our beautiful faces? You're asking if there's any news at the open or just in general throughout the morning?
Just in general, what's the big move that's the big news that's moving markets?
On a macro level, really not much. On a macro level, where they're just posturing about stimulus, but on an individual micro level, earnings, man, earnings. We talked PayPal today, eBay. We didn't get to all of them. We didn't get to Penn National. We didn't get to United Wholesale Mortgage. Those are some other big ones, but we got some big earnings movers overnight, and so that's kind of the lead of the day. That and this short report that is a new one for me. A short seller came out negative on his stock, and in that report they said, by the way, we're not actually short the stock, we just hate it, but we're not actually short. We hate it, and we think you should hate it too, but we're not short, nor are we long. We're neither. Go figure. I don't know.
Okay, so we live in a crazy world right now. People's opinions matter more than fundamentals, but that's great. I'm a technical trader, so I don't really care about what the fundies have to say.
No, you don't.
I mean, I do a little bit. I care about what you have to say, Spencer.
Thank you.
Love you.
Let's see what we got on this chart here. What is that?
I don't want to get to this yet. Don't look at the chart yet. Don't look at the chart yet.
All right.
All right, so I want to announce that we've got something special going on today. Guys, remember, this show, if you're a person that considers yourself a serious trader, if you're like, oh, I don't look at that because I'm a serious trader, you're taking yourself too seriously. All right? We're here for levity, to have fun, and to find great opportunities and to trade together. I know that I don't know everything. I hope that you know that too. We should always be learning together. So just keep that in mind. But today is really special, Spencer. I don't know if you know, but
no,
I got an email from the Benzinga board last night.
We have a board?
We do. We have a board. Yeah, I mean, so if you didn't know about the board, on our board, Warren Buffett, Kathy Wood,
okay,
and our new addition, Mia Khalifa.
Jesus.
So I got a board address from those three.
And they addressed you by name. They said, Neil, we're emailing you.
Yes, they said Neil, and they said for your eyes only on the bottom. And we're doing something special today.
Yeah, what?
For today only, star trader Ricky Gutierrez. Check him out on YouTube if you don't know him already. Star trader Ricky Gutierrez is going to be CEO of Benzinga until we cut him off, until he does something wrong. But we're going to introduce him to you as the new CEO of Benzinga today on Into the Markets Getting Technical with me and Spencer. So stay tuned for Ricky Gutierrez. He's going to teach you something really good about technical analysis, a lot more deep dive, a lot more short term than you'll get from me. I'm looking for safe, known patterns with a lot of volume that I can really rely on for big swings. All right. So without further ado, let's get into some charts. All right, guys. Yesterday we talked about NIO, everyone's favorite Chinese electronic vehicle company, competitor with Tesla, question mark. At any rate, I don't know too much about the company. I do know that they've had decent sales quarter over quarter in their reports, their earnings reports. But what I like about them is they're just so damn technical, and you can rely on it. And yesterday, what I thought was a descending bullish triangle now has formed into something more like a descending wedge. All right, guys. So what I have here for you, I've drawn on it already, but I'm going to walk you through it. And if you guys already know this pattern, great. You get ready for a trade because I think there's something good here. So zooming in, let me know in chat. Let me know in chat if you need me to zoom in more. If you can't see anything, I'm going to give this one more zoom. I tried to make the numbers as big as possible for you guys. At any rate, let me delete everything I've drawn here. So when we're talking about big breakouts, big old swings in the price of a stock during a bullish market, which we're in right now, so we're taking full advantage of that. The first thing that we want to find is an uptrend. That's what we look for. So I can show you how to do that in Benzinga Pro. Maybe I'll do that if we have some time. But the first thing that you need is an uptrend. We've got that. Requirement number one met, ladies and gentlemen. We went from a low to a high in a short period of time with a big surge in volume, looking really good. All right. People were trading volume. The bulls drove it up to this high around $67. But wait, it started to go down a little bit. It started to trade down. Does that mean the hype train is over? Did the hype train crash? Not necessarily. This pattern is actually counterintuitive. Usually when you're looking for a pattern, you hear things like higher highs, lower lows, or higher lows rather. In this case, we actually have lower highs and lower lows, which looks like something that you would have in a traditional downtrend. But don't let that make you think, don't get off board the hype train just yet. So what we're looking at right now is a formation of a falling wedge. The reason it's a falling wedge is because when we draw these lines for these swings high, these high swings and these low swings, these two lines are starting to converge. All right. So what they will eventually do is converge together if we draw them. So we're just drawing on charts here, guys. This is not something super crazy. It's as easy as it looks. They're going to converge. Where they converge, that point is called the apex. All right. Now, charts are, of course, not perfect because they obey the natural law of human behavior, which is often erratic. So we always try to kind of sketch on them, you know? This isn't like, doesn't have to be perfection, doesn't have to be the Mona Lisa. We're looking for price approximations, but it still gives us a good idea of where to enter, where to set our stop loss, and where it might top out. So that gives us our sell target. So we're looking at this nice descending wedge. Now, to set a conservative price target, let me back up actually. What we want this stock to do is break out above this line. This line right here, this sloping line that I've drawn, this is resistance, guys. The buyers and the sellers are going to battle. It's getting bloodier and bloodier because the buyers are saying, I want to buy at a higher price now. And then the sellers are saying, I want to sell it at an even lower price. And they're going after each other, and it's squeezing this price action together. By the way, I'm on a 4-hour. Let me check okay, you guys seem good with the charts. So they're going to battle, and someone's going to win that battle, and that's what causes breakouts. So what we want to see is a cross over this resistance line, and we're going to try to time that. We're trying to measure what that might result in. So what we have is potential for it to break out here, And then also potential for, a lot of times when you have these patterns, you're going to get the swing high to touch that resistance line 3 times. So this might just touch this a 3rd time, come back down, and then that might be when we get in. But we'll see. It has full potential to do that today. So let's get to it. If I can just delete this stupid thing. Wait, what am I doing? I'm still brushing. Okay, that's why. Sorry, guys, bear with me. All right. So, how do we measure our entry? How do we measure our potential profit? You heard me talking about swing highs and you heard me talking about swing lows. Well, the swing high in a falling wedge pattern is this move from the base up to the top where we hit resistance. And then the swing low is from that point down to the bottom where we start to draw that support line. All right, so we want to measure the height of that. So I'm just going to use a simple line tool. I mean, back in the day, they used to do this with a pen on paper or a pencil. So let's go ahead and use this line tool. Bop, bop. All right, and then I'm going to add that to the potential breakout point. So if we get some volume today, if we get a surge in volume, which doesn't quite look like it's happening right now, we actually see the volume coming down. But if we get that surge in volume, your breakout profit potential or your sell target price is going to be this resistance line plus the line that we just drew, plus that measured move. So we're setting a target price of $70. All right, so to break that down in terms of returns, we're talking about 17.5% returns over a relatively short period of time. Now, if you want to go a little bit longer and a little bit more aggressive, you can use this first line that we drew. This is a flagpole, all right? This comes in when this trade successfully reaches the top and then keeps going over time. At this point, you're raising your stop loss, all right? So we're adding a line here from the apex. When we're talking about the pole, always draw the pole at the apex. So actually, let me delete that. I'm going to draw a new one that goes straight up. Whoops. To the swing high on our formation, and then draw this on the apex. Secondary price target, $75. I know it's a little bit overlapped by that USD, but that's $75. So what we're doing here, setting a stop loss conservatively around support at the breakout. So I would say if we were to break out here, you would set your stop loss around $56, and then you would get ready to sell once we hit around $71. These things don't go straight up, they tend to go over time. That's how the stock market works. And then if you get there and you want to stay in, you can happily take profit. What I normally do is take 50% off the table because it's a short-term trade. I want the money. I want it back in my portfolio so I can spend it on other things. Take 50% off the table. Raise your stop loss. I usually raise my stop loss to this previous high. So wherever this is, in this case, it would be $71. That's my stop loss. And then my price target is an additional few bucks to get us up to 75. Up to you if you want to pile in at that point. When you have a stock like this that's reaching all-time highs, people don't bet against all-time highs in this market. So what I just gave you is the conservative approach. But with NEO, I'll be honest with you, I will pile in. If we hit this price target, I'm putting more in. And it might go down a little bit. It might go down. But I'm going to buy more because I do believe that we'll hit this price target. All right, that's NEO, folks. All right, so I found another one for you guys today. MARA. It's interesting. There's this coffee mug here. That's really weird. I don't know. Producers must have put that there. What does it say? Subscribe. That's, that reminds me. Did you know that only 50% of you viewing this show right now are subscribed to Benzinga's YouTube channel? Isn't that weird? If you're not subscribed, maybe just hit the subscribe button. We'd really appreciate it. Sorry about calling you weird. It's worth it though. Just consider it. Just think about it. Okay, but the real reason I got a cup and handle, guys, the real reason I've drawn a coffee cup here is that we have a cup and handle formation. So this is a great pattern. We're looking at Marathon Patent Group, MARA. Todd, shout out to you. You've been saying MARA, my man. Actually, I think we might share a brain cell, Todd, because I've seen you mentioning the same stocks as me a couple times. And guys, I see AMD. I see all the other ones. We'll get to that like right away. So let's take a look at this pattern, really break it down for you, and stop me if you have any questions or you need more explanation. But again, rule number one, when we're looking at a bullish continuation pattern, we are in a bullish regime, we're in a bullish market. The first thing that we want to look for is a nice, strong pull. All right. That's what drives this stuff up. All right. That's what gives us confidence that the bulls are ready to take control because they already have in the recent past. All right. So we've got a flag pull right here looking good. I'm going to make that actually a little bit bigger so you can see it more clearly. Yeah, this one's there we go. We've got a pull. All right. The next thing that you want is sort of like a rounding bottom. Now, typically when you think about a rounding bottom pattern, that's actually a reversal. That's a reversal pattern. But in this case, when we're coming up from an uptrend and then we're getting this sort of round bottom here, and then we're testing this resistance, we're forming what looks sort of like a cup. So let's go ahead and do that. I'll use this guy right here. We'll go to the top, which I think really is about here. Yeah. And then we'll go right here. All right. It's a very, very thin cup. So let me stretch this out. All right. So we got our cup there. And then we've also got the formation of a handle, which is usually a descending rectangular pattern. It's usually a descending flag, if you will. But this is the formation of it's like kind of like a combination of some very bullish patterns. The point here, though, is that we've got this line of resistance that we need to break through. All right. And we're testing it. We came down into this rounding bottom. We had some consolidation, some negotiations from the bulls and bears trying to decide what is the fair value for the stock. Then we had some big buying action coming in, driving us up to the point, even gapping up to the point where we're testing this resistance level. And then we cooled off. Some people took some profit and we cooled off. But the bull said, no, we're not going back down to the base that we had previously. We're not going back down to $14. We like this stock. So we're staying in. And then what you're going to get after that is you're going to test that resistance level. And guys, with these patterns, it doesn't mean just immediate breakout. In fact, it's so often good if it doesn't. So I'm going to get my little paintbrush and give you an idea. We want to boing, boing. We want to test this a little bit because the more times that a resistance level is tested, the more likely that a breakout will occur. And we love breakouts because they can be measured by the previous low. All right. So let's talk about this breakout. Let's talk about this potential with Mara. Shout out Todd. I'm going to delete some of these if it'll let me. Boom. Boom. Get that shit out of here. All right. So we're at this resistance level. What is our profit potential with this? Our profit potential, I've already got this written down. So we'll say the entry point, I'll be completely honest with you. If we're probably going to see some bouncing action here. So I would say look for support around here on where we're descending right now, but we want to test this. And if we get back to the point where we're testing this resistance and you see a close on like the 4-hour or the day chart, and by a close, I mean a candle. So, you've all seen these candles. We want to see one that's very healthily above it. Once you've got that, you're in a breakout. You also want to see a large surge of volume. So this is something I'm timing. This is something that's on my watch list. This is something that I'm setting a limit order on, because when it does close above this, I will buy it. I will trade this stock, and I will expect profits from the base of the handle to this resistance. So a very conservative way of looking at this is something like this for short term. All right. This is a $28 price target. This is something that if I see a breakout, I'm buying call options. All right. Call options mean that I'm paying a certain amount of money to bet that this is going to hit a certain price. And if it hits that certain price, my bet is going to increase in a ton of value. It's going to increase in more percentage than simply buying the stock outright. That's how I play it. I mean, your mileage may vary based on your risk tolerance. This is not financial advice, but this is how I like to play these. I like to supplement my investment portfolio with these patterns where I'm buying call options on bullish breakouts. So doing this, I'm going to buy that call option, shooting for that 28 with a high degree of confidence that it will get there. The next level is going to be even bigger. So if we take all the way, if we go down to the base, the lowest point on this cup, and we draw a line up to this resistance level, and go ahead and add that to the breakout level, almost double the short-term price target. So if you want to stay in, if you want to take profits and stay in with 50% of what you're in there with, go for it. Raise your stop loss to something around this previous high here. Actually, a lot of folks will tell you to put it 7 to 8% below this, so you don't get stopped out. This is looking like a choppy one, so I might do that myself. I would do it trailing though, because I don't have all day to pay attention to this stuff. I work. I got a full-time job. But we're looking to get up to $31. So let's just take a look at the profit potential here. I'm buying in 23.88-ish. Whoops, wrong tool. I'm going to use this ruler tool. The ruler tool is sweet. Getting in 23.80-ish. Looking at 18% profit potential. And then I'm exploiting that by using call options, hoping that I can get them at a cheap price because the whole market's not watching this thing. Actually, I mean, the call option, I mean, it depends on the volume of the stock, actually. This one might not be big enough or good for options. I haven't looked at the options chain, so we'll take a look at that if we have time after Ricky comes on. But for the long haul trade, 33.56%, and that's a target that you can hang your hat on. That's something that within a reasonable degree of confidence you can expect to happen, to transpire. So guys, that is the trade with Mara. Thoughts? Checking the chat.
No, we're all good there, Neil.
All right,
I'm writing down tickers. Don't worry. So I'm writing down tickers that you're all adding in there. We will hit those with Ricky or afterwards.
Okay, so we'll do this like a trust exercise, Spencer. I'm not going to look at chat.
Okay.
I'm not going to look at it, and I'm going to count on you to let me know.
I got you.
All right. Love you. All right, guys. Sorry that you guys had to see that public display of affection. All right, next up, this one's really similar. So I pulled up this ticker this morning because it was on my. I have a screener set up. I have like my settings all perfect in Benzinga Pro for finding stocks that are accruing momentum and essentially trending, because I love to find those, because those form the great polls, and then like the flag polls, so they form the great polls, and then I'm just waiting for a period of consolidation that creates a pattern so that I can get in on that action. So I found this using that screener. This is very similar to what we just saw, right? Like, look. Bop, 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 resistance, bop, cup and handle, ladies and gentlemen, cup and handle. And we know that this stock wants to return that previous all-time highs to the previous all-time high, which I believe it is. Oh, no, it's not. Okay, never mind. Remember, this is not financial advice. It wants to get back to that previous all-time high. And as I zoom out, look at this shit, guys. Look at this. Look at this. All right. Remember, the longer the time frame that a pattern is occurring over, the more powerful the breakout. That's why we're looking at these longer time frames. We got a nice big old, as JC Peretz would say, I don't say this at all, but this is what JC Peretz says. This is quote unquote from JC Peretz, a nice big old Kim Kardashian bottom. All right. So we can probably say something like this because it looks like it was testing that. Maybe go a little bit lower and we can see that it might be testing closer to the body of this previous candle. And this is a day chart. So maybe I'll bring that up to a week to make things a little bit more clear. Yeah, not bad. So day actually makes more sense here, so we can see more clarity on where, yeah, this level is. All right, guys, we're seeing something big here. We're seeing a big rounding bottom, and we're seeing a level tested. This is ticker YRCW. I don't know who they are, what they do, what they produce. I don't know anything about these guys. All I know is that they're worldwide. We tested this level on this rounding bottom. Rounding bottoms fucking rule. Rounding bottoms are what made Bitcoin go crazy recently. Yes, there was a ton of traction from influencers and celebrities talking about Bitcoin that drove it, but that coincided with a huge rounding bottom that catapulted it as close to the moon as it can get for the time being. All right, so we got a nice rounding bottom, guys. We're going to draw this thing. Ooh. All right, so we're going to retest this. Again, remember, guys, the more times we test resistance, the more likely we're going to get a breakout. So if we hit this level, we're watching YRCW. This isn't even what I noticed when I was doing this chart this morning. I just kind of quickly looked at the short term. Looking at this thing longer term, I think we have potential for something like, because this is a trend reversal, folks. This is our first trend reversal of the show. The show's only been on for 2 days, but it's the first one. We've got a downward trend. Reversals are the best. Reversals are powerful. And we got a downward trend turning into a rounding bottom. This stock is rounding the corner. The bulls are saying that's as low as we're really willing to go. It's time to start buying this thing up. All right. So if you're smart, you get in with the bulls eventually here. So let's time out that eventually. Yeah, nice looking rounding bottom on YRCW. So we're going to set our price target for a close above $6.25. So again, we're looking for a nice candle, maybe a day candle. I mean, look, this thing is going, this is a rounding bottom coming from May 19 to like today, actually from December of the past year to about today. All right, so we're testing this thing. So if we get a close above that resistance line, our potential is from the absolute low to that resistance line plus the resistance line, okay? That's how we set our price target, giving us a price target of a cool 11.25. Let's calculate the percentage returns on such a breakout trade. If you guys can't see that, that is 78.64%. I will buy this stock when it crosses resistance. It's as simple as that. That's big. I just got notification that our new interim CEO is in the lobby, so we'll be getting there in a moment. I'm actually going to close the charts really quick. Let's go to just a cam. Just me, guys. Just me and you. So if you weren't with us at the top of the show, I got a letter from the Benzinga board last night. A lot of folks didn't know we had a board. As some of you know, our board consists of Warren Buffett, Charlie Munger, and Mia Khalifa. She's a new member. And in their letter, they said, Neil, we don't think you're doing a great job. You need leadership. You need direction. You're a mess. We want this guy from YouTube, this trader from YouTube, to take things over. He's been doing a great job. He needs to come on and turn things around. All right. So I said, all right, I guess we'll have him on the show. I don't know how happy Jason's going to be about this, but I don't know how much power he has here. We got Mia Khalifa here, and she's really laying the hammer down on us. So without further ado, I would like to bring on our interim CEO of the day, Ricky Gutierrez, to talk about some technical trading. Ricky, how's it going, man?
Dude, that introduction I was like, wait, really? And I was like, oh man. Then when I heard one of the last names, I was like, no way.
maybe one day. I would say.
No, I like it. That'd be a very unique executive board. So
good choice of words, Ricky. Yeah, I do think that would be super unique. How's it going, man?
It's going good, man. I just finished with our LPP team, so really excited to be here. I appreciate you guys welcoming me, and it's been so cool to spend the past couple of months with you guys. So I'm excited to talk about, one of my favorite things to trade are reversals. And I have a couple different examples, and as well as not just a perfect picture example, but some real life examples of ones that go according to plan, and of course ones that don't, and how I would think it to be pretty effective to trade them.
That sounds fantastic. And before you get started, could you tell folks, you mentioned TPP. What is that for folks?
Oh, LPP. So that's the group that I trade live with every day. So it's very similar to these great live streams that you guys host. I go live and I trade live with our LPP team every day at market open for about 30 minutes to an hour. So it's just, market's always changing. So we're just trying to be there for them every day.
Awesome. All right. So, since you're my boss now,
oh yeah, sure.
I guess I'm going to get out of your way. I'd love if you could just share what you're looking at and hopefully teach these guys something.
Let's do it. So I can click share screen right here, and let's see. I click on this one, share. How am I looking? Are you able to see my screen?
I have to stop my screen share. Now I can see yours. Yes.
Perfect. All right. So what's going on, guys? My name is Ricky. And one of the things that I want to talk about is kind of like, especially based off of the last event that I spoke at, there were so many, there's two other traders and they both have very unique, different trading styles, even including myself. I don't trade penny stocks. I don't trade pump and dumps. I don't trade momentum stocks. And not that there's anything wrong with that. It's just with the dollar amount that I trade with and what I try to focus on. I trade a lot of blue chip stocks, and I trade two sets of inverse ETFs, the ones that follow the NASDAQ market. So those are SQQQ and TQQQ. I like to keep it pretty simple. Or one of the things that I want to talk to you guys about is, I don't know if you guys watch me on YouTube, but one of the stocks that I just bought 2 days ago, and it was because of earnings. It was one of my better trading days. This week has been just an amazing week altogether. I think a lot of it has to be attributed to Tesla's performance. But one of the things that I personally like to trade are reversals. And if we go on the 5-day, 5-minute chart, one of the things that Alibaba announced, and this is one of my favorite times or times at the quarter to trade, is when companies report earnings. And you might be like, why? Like, what does that even do? Well, one of the things that happens is when a company reports earnings, if they don't meet expectation, even if they do meet expectation, but their guidance might be a little bit off, it's crazy. Like, I don't like holding stocks as they're reporting earnings, and it's because I like to buy the dip if they sell off. But you are correct. If they do push up, I do miss out on that. But that's okay, right? Because I'm not here to try to make the most money on every single trade. I'm just trying to make money off of the trades that make sense to me. And when Baba reported earnings, it sold off, and it didn't sell off a crazy amount. It was about 4 or 5%, but it began to find a support level right around 256. I bought a couple of shares. It began to indicate signs of reversal, and right at market open the following day, I woke up being up, I think, like 3,700. I added more to my position size, and then I ended up being up like $4,300 on the day on Baba. Now, Baba, one of the things that I always like to remind people is on the 180-day chart, we're approaching a previous resistance level. This doesn't mean that Baba has to get rejected there. It just means that it has before. So one of the things that I'm doing now is, as we're overbought, if you look at my overall position size, I only have 70 shares. And trust me, 70 shares is a lot of money. I get that. But I normally have 400 shares when something is indicating, signs of an uptrend, and it's still a good deal. One of the things that I really like to focus on is position size and making sure that the overall direction is in my favor. And I actually have a PDF, and Neil, this is actually something that I was going to ask you. I have this PDF where I can share it with them as well. So we can talk about that later. If they want this PDF, I can send it on over to you, and maybe you can blast it out all to them. But one of the things that I like to really focus on is, if you guys have ever tried this out, it's just reversals. And if you are paper trading or simulation trading, I think that's the best way to practice. A lot of the people that watch our videos, one of the things that you have to understand is, the market is a difficult market to be successful in consistently. Anyone can get lucky, but it's making sure that you practice everything that you learn until it actually makes sense to you. It's not asking people where to buy or where to sell, because at the end of the day, right, you don't want to be told what to do. You want to understand what to do. Just like anyone that's successful in anything, they're not being told what to do. They understand. They're problem solvers, right? So 3 stages of reversal, and I'm going to show you guys some real life examples. This is a perfect example. If every trade looked like this, we'd be pretty dialed in, but it just doesn't work out that way. But this is 3 stages of reversal. There's the rejection phase when it hits a resistance level and it begins to sell off. There's the consolidation phase where it begins to flatline and no longer make lower lows. And then the confirmation stage where it actually begins to increase in value. And if we go to position size, you guys might be like, well, what does that mean? I have, $1,000 or $5,000 in my trading account, and all I do is as soon as it sells off, I buy $5,000 worth of that stock. Well, the way that I do this is, again, I'm not here to, did I stop sharing? Am I still sharing my screen?
Yeah, you have to share the program and not the screen that.
Are we good now?
Yeah, we're good now. Yep.
Sorry about that. But one of the things that I really like to focus on is position size. And as something is selling off, we like to keep it super simple. It's as close to 0 as you can be invested, right? Position in something that is selling off, probably not, right? But normally when something, when people say the idea of like buy the dip, people think that as soon as something dips that it has to pick right back up. And that's definitely not the case. And I'll show you examples of that. But when it comes down to something is now testing a support level, again, this is a very conservative approach and you guys can just take it as you please. But once something begins to consolidate and it begins to, test a support level, then this is where I probably out of, let's say you have $1,000, right, to work with. This is where I would still maybe wait for confirmation, especially if you're under the PDT rule, or take a very small position size at this time. And then when it actually begins to indicate signs of an uptrend, like we know, it's not easy to make money in the market, but it's a lot easier when that overall direction is in your favor. And I think you guys can all speak from experience where if you've taken a trade when you buy the dip, and it continues to sell off, it's a pretty horrible feeling, right? But if you buy something as it's increasing in value and it continues to rally, it's like the best feeling because you're like, this is so easy. But again, it's the idea of understanding not just what to buy, but when to buy it. And one of the examples that I want to give you when it comes down to these 3 stages of reversal is Twitter. Twitter is actually one that I'm sure you guys all heard the news when Trump got banned from Twitter. That acted as a negative catalyst. It was already at 180-day highs. It was already pulling on back. But once that news came out, it was just aggressively dropping, and it really pulled back the stock. We talked about it right away. This is one of the things that I really like to focus on is Twitter itself is a stock that's previously bullish. On the 180-day chart, the bigger charts, it's been previously bullish. So I like that. I like putting my money in something that has been increasing in value, not something that has been consistently selling off. That's just my 2 cents, right? And then as it's bullish, it just sold off because of negative news. Negative news, as long as it's not detrimental to the company, it's just something that acts as a negative catalyst for a short period of time. As it becomes less relevant, it can find a support level. It can then break above the EMA line and then begin to indicate signs of an uptrend. This is a perfect example of a reversal. Let me tell you, it does not always work out this way. And I want to give you another example. So I was able to trade Twitter. I have a tendency to lock in profits too soon. And we talked about Twitter today in the LPP live stream, and I ended up selling most of my position at $50. And it's just a habit of mine where I'm just like, whatever, I'll just lock in my profits here. If it pulls on back, I'll buy more. If it continues to uptrend, I guess I'll just leave it at that. My focus more is trying to be consistent rather than obsess about how much more money I can make. I just learned from my experience that more often than not, if I try to maximize my profits and be greedy, I tend to lose more money than I tend to make. So just my 2 cents. An example of a stock that did not or has not gone according to plan is VZ. VZ, which is Verizon Wireless, has been selling off. It's been making lower lows. It showed signs of a potential reversal. Did it recover all the way back to $61? No, it pushed up, got rejected by the SMA line, and then sold right back off. And now we're at the same point, right? We're at a critical point where it's now indicating signs of an uptrend. We're now going to see if it begins to make some higher highs and higher lows. And if it does, I can add more to my position size. But as it's selling off, I don't want to add, who wants to add money to something that's making them lose money? Like, how does that make sense? Like, when you actually think about that, how does that make sense? But guess what? It's a very common mistake that a lot of people make. I've made that mistake so many times because you want to average down on your, average purchase price. So if it just tends to pick up, then maybe you can break even. And that's kind of the goal for a lot of people, right? Especially when the trade is not going according to plan. The reason that I talk about position size is because we know that risk management is difficult. It was one of the biggest struggles that I personally experienced. And I'm not here to say that you guys are having the same struggles, but how many of you find it difficult if you have your entire account invested in one trade and it doesn't go according to plan because it's still selling off? It's difficult to manage your risk. It's difficult to cut losses. But let me tell you this, instead of you having $1,000 because your account's $1,000 invested in a stock that's selling off, you might hesitate to cut losses. But if you have $50 or if you have $100 out of your $1,000 account, it's still not easy, but it's a lot easier than being able to manage your risk. And this is why, essentially, if you want to choose to take advantage of an opportunity early before confirmation, then one of the things that I like to do is I really like to watch my position size. I take a small position size just so I feel like I have some skin in the game, so I feel motivated to follow up with the stock, but not that I add so much to my position size that if it begins to sell off, that I become an emotional mess. A perfect real life example right now is all the people, unfortunately, with GME and AMC. How many of them bought at those super overbought levels? They were so certain, they were so confident when it was in their favor. Anyone can make money in the market when the direction's in your favor. That's not the question, right? But it's when things don't go according to plan. How do you do your part in managing that? I can reassure you that if they only had one share of AMC and AMC began to pull back, or GME began to pull back, they wouldn't hesitate to cut losses because it doesn't matter. It's insignificant. And you need to understand, you need to learn how to walk before you run. So if you're learning how to trade, but you're taking aggressive position sizes, I'm not saying that it's impossible. I'm just saying that you're making it much more difficult for yourself because you're not controlling and balancing out your position size to be both effective and efficient and more of an emotional mess and heavily invested. But you are correct. If you do have a heavy position size, you can make a lot of money just like you can lose it. So that's kind of my 2 cents on, and I wanted to talk about a recent stock that reported earnings. This one's not one that has to go according to plan. I actually talked about this one yesterday, and it's actually because of it reporting earnings yesterday. I'm like repeating myself, but it reported earnings yesterday. It acted as a negative catalyst, and 3 things I like to focus on. 3 things for my criteria. Everyone should have their own criteria. Mine does not have to be like yours, and you do not have to agree with mine, right? We're all entitled to our own opinion as we all see value in different ways. I like fried chicken tenders. You might not, but guess what? I eat them pretty often and I feel okay. So QCOM has been consistently bullish for the past 180 days. I like that. It's been showing consistent growth. That's my first criteria. Not something that has been consistently selling off. Why? Because it's a lot easier to make money in the market when the overall direction is in your favor. This is consistently bullish, so I like that. The second thing is it consistent? Does it have a consistent pattern, or is it just pushing up and pulling back and pushing up and pulling back, or is it all over the place? Is it breaking below the SMA line? No, it validates the SMA line pretty often, not perfect, but pretty often. I mean, it's the real world, right? Pretty often it validates it as a support level, and as it becomes overbought, pulls on back, it corrects itself, becomes overbought, corrects itself, pushes up, becomes overbought, and corrects itself. So now the last thing is, who likes to overpay? Who likes to buy things at higher levels? I don't know about you guys, right? But if it's my Chipotle, if it's my Raising Cane's, if I can get a discount, if it's my Chick-fil-A, I will get a discount, right? It's like we're deal hunters. And especially when you're in the market to try to make money, it makes sense on why you want to buy things only when they're good deals, when they meet your criteria. And this is what I mean by this. This earnings acted as a negative catalyst. It pulled it on back. You would have to not only look into it on the technical aspect, but on the fundamental aspect of why did it sell off? And if you then determine this to be something that is not detrimental to the company, and then you take the very simple approach of Okay, well, I'm not going to buy right now because it's still selling off, right? It's free falling. And the more patient that you are and you stay, the more it can sell off and the better deal that you can get. So think about that, right? Now, as it finds a support level, so let's say as it sells off, it finds a support level and then it begins to indicate signs of reversal, then you can calculate, okay, well, my support is right around 150. Let's say I buy in and I begin to average up. My upside based off of 180-day highs is about 10%. My downside is less than 1%. So my risk does not outweigh my reward, right? My reward is much greater than my risk. So with that, it meets my criteria. It's a good deal. It's been previously bullish and it's consistent. So it's something that I can pick up on. And those are the three main focuses that I have that align with my 3 stages of a reversal. So I do, Neil. Did I do okay?
You did fantastic. Okay, so I actually want to ask chat, guys. You know, you guys are probably familiar with Jason. He's kind of the founder of Benzinga. How does Ricky compare? Do you think long-term potential for CEO at Benzinga? Let us know in the chat. Give me a 1 if you want Ricky to be the new CEO at Benzinga forever, or if you want Jason, give me a 2. All right, that's in the chat.
That is too funny. I just spoke to Jason a couple days ago, I think over DM on Instagram.
That's his favorite mode of communication.
Right.
Rumor has it he actually communicates with his whole family through DMs. But at any rate, Ricky, I think you're a little.
How do you come up with these jokes?
Knowing people a long time, and then just the rib. Ricky, it's been great to have you on, man. I think Chad has loved you. Would you come on again if we ask you? If we are in dire need of leadership, can you join us again to take over?
I would be more than happy to. So anytime that you guys need a filler spot, I'll be your filler.
All right, Ricky, that's all the time we have today. Thank you so much for coming on, and we will see you very soon.
All right, appreciate it, Neil. Take it easy.
You too, bud. All right, guys, this is an opportunity for me to remind you that you can catch folks like Ricky Gutierrez at the Benzinga Boot Camp. That's a full day of education across the board, but this time we're doing something special. I got the Luke Jacoby hands up for this, all right? We're doing something special this month for at the Benzinga Boot Camp. We're focusing on SPACs. SPACs, baby, and options. All right. So if you want to learn how to trade options like a master, like a wizard, like a conqueror, like a warlord, come to the boot camp. All right. SPACs and options. We're going to have your guys from SPAC Attack, which is coming up right after this segment at 10:30. We're going to have Mitch. We're going to have Chris there to walk you through their portfolios or watch list. They're going to be there. Wait, Spencer, what are you doing? Are you giving me the boot?
No, SPAC Attack is at 11, man. We got the happy hour, the Benzinga Pro.
All right. Get
hour.
Get out of here. Get out of here.
Get out of here. All right, bye.
Yeah, go. All right, so SPAC Attack, 11 a.m. after the happy hour, where we're going to go through Benzinga Pro with Ryan Faluna. Ryan Faluna is a fantastic technical trader. In fact, we will have him on this show later, but make sure you stick around for that Benzinga Pro happy hour at 10:30 because he will be talking about real-life trades using Benzinga Pro, combining the fundamentals with technicals. Yes, he's a little more reserved and collected than I am, but the man knows how to make money on the markets. Some might say I'm a little bit crazy, but hey, I'm here to have fun, guys. All right. Once again, this is not financial advice. This is about fun, community, and looking for opportunities. So guys, let me get, how to get to the boot camp. It is free. The boot camp is 100% free to get to. You just have to register for it. So we've got a link. That's not, I don't think that's clickable for you. You can see it on the screen, but we should have it in the chat. Get on over there. Check out our roster. The full speaker list isn't even on there yet, but we have some great folks lined up for you. SPACs, options, intro to trading, short-term trading, long-term trading, and some picks. You can also sign up for an optional power hour, not like our show power hour. This is more like a stock pick intense with Chris Camillo from Dumb Money, talking about trades that are happening right now, stock opportunities right now. So definitely something that you want to get into if you're ready in your brokerage, you're cooking and looking for picks. Definitely something you want to get. That's completely optional. So guys, that's the boot camp. Check that out. Also, I mentioned something. I mentioned something weird. I had this bizarre dream. I'm like JC Peretz. I was having dreams. And in my dream, only half of the folks watching the show were subscribed. And I woke up from my dream. I had to have a cup of water. I drank it like this. And after I had that cup of water, I checked the stats and it turned out it was true. That's right, guys. My dreams turned into reality. Let's change that. Guys, if you're watching the show right now and you're not subscribed, just hit the subscribe button. It's a little red button. Just give it a click. Hit the little bell next to it so you get notified every time we're on. We do all kinds of special stuff that we're not going to let you know about. We're Benzinga. We like surprises. We will surprise you more than any media network on the planet. If you've known us long enough, you know I'm not kidding. So, on to the next thing. Guys, let's dream up some gains. I like the way you said that. 13 or whatever you like to go by. So, guys, give me some tickers if you want to look at them. One thing I wanted to point out that I didn't point out earlier is that Microsoft is looking like a snack right now. I'm going to get my chart for Microsoft. Yes, there is a little selling off going on, but Microsoft is looking like a snack. So let me get this screen share going. Share screen. Blah, 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 blah. All right. So I got my chart open. Everyone should be able to see Microsoft. Let me move this other application over. All right, so Microsoft, ascending wedge or ascending triangle. Boom. Boom. We like this. We had that pull. We got our pull that we'd like to see. We saw some powerful bullish action, okay? And yes, there's a lot of stuff going on with companies, but the truth about patterns when you see them in the market is that when they form and they are confirmed by volume, I know you're going to think I'm crazy. Maybe I am. But a lot of times, most of the time, a lot of the time, it doesn't really matter what the company is or what they do. You can do this across any asset class. These patterns hold true. I'm not going to, it's not magic or anything like that. It's just based on the way that human behavior works and how that shows up when we aggregate it with price over time. This has been going on, we observed for hundreds, if not more years. So at any rate, what is the next Tesla? That's what I need to know. Okay, we'll find the next Tesla together. We'll find it here. So at any rate, we've got a poll. We've got an ascending triangle on Microsoft. I love Microsoft right now. My goal with Microsoft is to get a candle above this resistance that looks like this. Whoops. Like that. Like that. I just want to see one of these. If I see one of these, ladies and gentlemen, I'm buying calls. I'm buying calls. I know there's risk involved with buying options, guys. This is not financial advice. There's risk involved with buying options. You stand to lose 100% of the money that you put into buying them. But I have conviction based on what I see here on this chart and the fact that it's Microsoft and the fact that they're doing a lot of great stuff, both in gaming, with their hardware, with Office software, that this company is going to continue to go up. All right? So I'm going to set my conservative price target to be the height of this measured move. This measured move is this first swing high to resistance down to the swing low at support. So let's go ahead and draw our little line. Boom. Boom. Nice and simple. And let's add that to the potential breakout. Let's say it could happen here. That's a price target of 254. And then if you want to get more aggressive, we're adding our pull to our resistance for a secondary price target of about 270. Look at that, on the dollar. On the dollar. All right. So that initial stop loss, it's going to be about, I don't want to get stopped out, maybe 5 to 8% below the resistance line. And then once I get here, I'm taking profit. But guys, it's Microsoft. I want the profit now. I want it back in my portfolio so I can buy stock in the next Tesla that I'm going to find for the gentleman that dropped that in chat, man, woman, or person. but I'm still going to stay in because I have conviction based on this pattern, based on this market, that we're going to see a resolution getting it higher. All right, guys, what do we got next? Do you set sells at those prices? Yes, I often do. Yes, I often do. If I'm buying shares of the stock and it's based on a pattern, I will set an automatic sell at this level. Yes. But if I'm in something that's short term, even if it's a swing, say something I expect to resolve over a week, 2 weeks, that's kind of where I live, that time range, I am checking that every day. Why? Because it's my money, and that matters. We live in a society where money is very important, so we pay attention every day. This stuff doesn't, run itself. But also, hey guys, like a lot of you, I have a full-time job. I'm a busy guy, so I check it as much as I can. ACTG, I'm going to look at. I got that from the chat. Holy shit. What do I think about it? I think it's on a huge run on huge volume, and it definitely followed what we call bull pennant here. So boom. Let's go ahead and just test out our little bull pennant theory. Something kind of like this. All right. So we've got the measured move, which was initially. Let's go ahead and bring that down. I'll be aggressive here, and I'll use those wicks on the candles. The wicks on the candles, guys, are these lines outside of the chunky part of the candle. All right. I'm going to draw a line from the top of the swing high to the bottom of the swing low. And we're going to add that to where it broke out, which is right here. Holy shit, guys. Look at that. If you look at how pretty that is. It broke out right here. Yes, it's like within like a couple bucks, but look at this. Look at this. It very safely hit the price target on that breakout. Let's go look at it more aggressively. Yeah. If we look at this more aggressively, we got this pull. Bring this to the top there of the high of that measured move. Add this to this apex. Look at that. Does it have room to run? Yes. Will it for sure get there? I don't know. Should you watch it? Yeah. All right. So let's look at this over a 4-hour time period. Yes, it sold off. Should you panic run? No, don't be a baby. Definitely be safe. Keep a tight stop loss. Like I said before, you can pretty reasonably set your stop loss at or a few percentage points below the previous conservative price target, which we just about hit. So a lot of you might have gotten stopped out, and it looks like it's selling down today. And it's a decent amount of sales volume, not super duper high, but getting close to where the second highest previous volume. So what I would say is watch it today. Look for something on a shorter term. We're on 4 hours. Let's look at it shorter term. All right, the bulls are safe. Come on, this is a pretty aggressive candle, sellers. We think we're going to come back. So potential here to get up to this target. But the reality is, guys, if you weren't already in this, you missed a breakout, and that's just how it works. There's always more. There's always more to get. So don't chase. Don't chase. All right. Sometimes you can get in a breakout that's already broken out, like, if it has like a long potential, and you can get profit from that. But don't chase. Don't chase, guys, unless you're already in. The ticker on this is ACTG. Alpha Charlie Tango Gorilla. DraftKings, DKNG. Let's take a look. I've only got 3 minutes left with you guys, so we're gonna look at this really quick, and then I've gotta play the sad music because I have to leave you for the day. I don't want to. Okay, so I'm trying to find something interesting with this. All right, so let's look at 4 hours. This might be, in technical analysis, what we refer to as a hot mess. But let's zoom out a bit more. Let's look at the weeklies and see if there's something on the longer term. Context matters with these. Yes, here it is. Here's that context, ladies and gentlemen. Look at this. Previous all-time highs. This looks a lot like Palantir. DraftKings looks a lot like PLTR right now. This chart is giving me flashbacks. So previous all-time highs. Don't bet against all-time highs in this bull market. When stocks hit all-time highs and surpass them, they like to keep going a little bit. All right. So what I'm thinking with this bad boy with DKNG is, I don't know if I'll get into this one. I will add it to the Get Technical watch list, DKNG, so we can come back to this one. I mean, it's DraftKings. It's super popular. People have made a lot of money with the stock. What I will say is that this is a meaningful level right here. So the buyers might come in here, but the most meaningful level right here is this previous all-time high. This is a resistance line. If we break through this resistance following a period of consolidation, actually not even consolidation. I mean, we hit the bottom here. This is, guys, I got a term for you. This is called a double tweezer. This is pretty damn textbook double tweezer. When you get a stock that's trending downward and you get two candles right next to each other that look almost identical, that's a reversal. Okay, that's a reversal. So was I watching DraftKings in the past, I would have gotten in. When I saw this bad boy open down here on the bottom left of this green candle and then close on the top right of this, I see tweezer. I get in. I'm gonna hold that baby with a tight stop loss, maybe 1 to 5% trailing stop loss, and ride it to profit. But yeah, here's what I got to say about DraftKings. Let's get this thing to break through resistance. Let's get a candle to actually stick above it. And I'm sure Spencer is telling me I'm out of time to stick above it. And then if you like the stock, I would grab some and keep a tight stop loss. With something like this, depending on how quick it's moving, I even do a 1% stop loss, guys. This is a very popular stock. It could really run depending on the volume that's coming into it. You know, I might get into this with a 1% stop loss. All right. Again, this is not financial advice. This is just fun times with Neil on Getting Technical in the morning with Benzinga. Just a reminder to everyone, hit the subscribe button so we can keep doing this for you. If we don't get enough subscribers by the end of the week, Ricky Gutierrez, our new CEO, is going to cancel the program, and we're not going to be able to do this anymore. Don't take that away from me. I love this. All right? I love spending the mornings with Spencer and you guys and all our awesome guests. And I want to keep doing it. And I hope that you guys too, so do too. So hit that subscribe button. Let us know what you think. Let us know if you like it. Also, Benzinga Bootcamp. Go to benzingabootcamp.com for a full day of education, options, SPACs. Mitch is going to be there. Chris is going to be there. That's it. Up next, we've got the Benzinga Pro Happy Hour with Ryan Faluna. Thanks so much, everyone.
Last month, Investor Place ran a little thing about this being a 23andMe acquisition rumor. And, you know, so that's what I was playing it based on. I figured if that's going to happen, the fact that Investor Place is talking about it, you know, it's worth watching because a lot of people like to chase those.
I think this is what you're talking about, right? VG acquisition shares halted on circuit breaker, hearing chatter of M&A target.
Exactly.
Okay, so first of all, this is awesome. You literally made my morning. Jonathan and I, in a lot of our presentations, we talk about the power of this rumors category, this rumors category tag that you can filter your news feed for. We have
Ryan, real quick, we are live on YouTube. Let's give a quick intro to the people.
Welcome, YouTube. You're here with the Benzinga Pro community. We are discussing successes, trades, potential trades, analyzing charts, talking about news. Good times. We're all here to make money. So thank you for joining us. Welcome. I hope you are able to take away something from this presentation today. We do this every day. Now, what I was saying here real quick about the rumor tag is that this is actually one of the things I really love about Benzinga Pro. This is one of the category tags that I use in all of my news feeds. At one of our presentations, we had a gentleman that was saying, so do I buy all of these things that I hear on rumors? The answer is no, of course not. What we're trying to do is we're trying to report rumors so that you have an opportunity ahead of time to position yourself. So Chris, the fact that you just laid out that you heard this happen near the end of the month, then you saw some volume that kind of confirmed that, and now look where we are today. That is a perfect trade plan. You are literally showing exactly why we love this category tag. So that you made my morning with that right now. So you made my morning.
Free swag.
Free swag. Andrew, hook him up with something, man.
Absolutely. I'll get
Jonathan and I talked
about. I bought all the new stuff that you guys put up. I bought a whole bunch of that GME attendee stuff.
Oh, nice.
I couldn't hold off. I was like, oh man, it's pretty great.
So Christopher was asking, can you explain a little bit more about how you find potential targets? That's kind of what we just covered. So we had a rumor here. We watched this, and then Chris was able to identify this. Let me show you again real quick because I kind of glossed over that. Chris was able to identify that, hey, maybe something material is going on here, because yesterday in the afternoon, after a bit of the sell-off, that was met with some buyers late in the day, and then lo and behold, we gapped up today on the news. So that is exactly how you play rumors. They're absolutely not guaranteed. If you want to give yourself a shot, you may have to do that. Let me get Kitty out of here.
Just to point out the risk here. So going into this, the price was 13.5 or so, right? So you're sitting about 20% above net asset value there. So worst case scenario, this is a SPAC, right? The worst it's going to go down to is like 10.5. So worst case, I was going to lose $2 a share. Best case, it's going up, and obviously I made about $2 a share, and I prefer that.
So here you go. So that's an excellent use of examining your risk, right? You're trying to figure out what's going to happen if the stock goes in your direction or in the other direction against you. And you had a perfect plan for that. Absolutely love that.
And SPACs generally kind of follow this same trajectory too. It's not true across the board for SPACs. And if you kind of check out some of the SPAC Attack videos Benzinga's done recently. There's some really great info in there, but basically you can see this same kind of trajectory across the board. Like they get, the rumor mill starts churning, they start rolling up, you'll see a big run up of volume. All of a sudden the price is high. That's what CCIV did. And then eventually the rumor bubble usually pops, the price dips back down, you get a new reentry.
Yep. Perfect. So one of the other tickers that has been thrown out here was HOL, ticker HOL, Hotel Oscar Lima, Holicity. I'm actually not familiar with this. This again looks like a SPAC here. Looks like we did have quite a bit of interest here by looking at the volume. Andrew, do you know who brought this ticker up? Is there any more context we can add to this? Looks like we kind of are doing a pretty big gap here. I wouldn't actually call this a floating island because it doesn't look like it's going to come back in and try and test the bottom of this island. This is just kind of a runner here. I would actually scalp this if I was trading this. I'm not sure though what the angle is here. So if you have that.
This was someone on YouTube. I just figured we'd go through it. I don't know too much about it either, but I like that chart.
Astra Space SPAC merger. So this might be one of the space plays then. This might be one of the space plays. Yep. So I wonder then if this is going to have any type of movement based on some of like the space ETF headlines that we've been getting. Anyone know if Kathy Wood bought this for ARK? Because that would probably explain this huge move here.
It hasn't been in any of the trade reports that I've received. So as of yesterday, end of day, I would say still no.
Yeah. Okay. So just then, given the limited information that we have here, let's go ahead and take a look at some of the previous days here. We're obviously right now currently in a battle with that level that we made in the pre-market back on Monday, on the 2nd of February. Again, looks like that dip has really been bought. Took a couple of days. Looks powerful today. Buying interest looks like it's there. I would say that this level here, we want to see a close above this level. We see a close above this level. This might be swing long potential here. We'll see. As far as a stop goes, what I would do, I think this is to me, this is something that I would play a slightly tighter stop on. So I would probably look for a breakdown of the 18 level here on my downside. Otherwise, this thing could really rip. And any of those space names, man, all of those space names have shown a propensity to really, really take off, no pun intended, if there's some type of good news or some type of fund is buying them or something is going on out there. The space names really seem to move around a lot. Even some of the other names like Intellisat, which are not one of the hot names, often have some pretty violent swings in both directions. So interesting here. I'm actually going to watch this one too. I'm going to throw that on my main watch list.
It actually looks like the YouTube community helped us out here. I just put a couple messages in the chat if you want to run through those for helping us out.
thank you very much. Andrew Hall is a SPAC that owns Astroset, a space company going public. That's what we kind of just figured out there. Current news: Brodsky and Smith LLC announced an investigation of Velocity. Okay, so we'll see what ends up happening from that. Obviously, that hasn't really scared people away, judging by the candle today, but we'll see how that shakes out. So again, define your risk early on. Have a plan for both directions. So thank you very much, Andrew. Much appreciated. There was another one here. Let me see. So we briefly talked about CCIV. Let me pull that back up here. I'd like to see this. Would like for this to close in kind of a hammer. I think that would really send us back up towards the top of this range here. Let's take a look. Let's zoom in a little bit and take a look here. So yeah, so this sell-off here to be met with buyers and to kind of continue forming that hammer or some other type of bullish pattern, that would be really awesome. So yeah, interesting. CCIV again. This is one I missed. I want to stock an entry for this, but we'll see how it goes. Let me see. When we go through some of the other tickers, we're getting a ton of participation today. Thank you everyone for doing that. We've got EHTH, eHealth. Let's take a look at this. Let me see if there's any context on eHealth. So right away, looks like we're definitely at some support here. We want to close above this. You close below this, there's probably more downside to go. This is down from 150 from last March. So interesting. I think that eHealth, this sounds almost like a Teladoc comp without me doing any research. I probably should do that first, as one of our viewers mentioned. Private health insurance exchange where individuals and small businesses can compare health insurance products from leading insurers. Okay, so it's not like Teladoc. It's more like competitive health insurance. So not all the same, we definitely want to have a close above this support level. This was resistance before, now acting as support. We definitely want to close above this. If you're long this now and this is a break to the downside, that's probably going to be my exit from that. Let's go ahead. ONTX, Uncova Therapeutics. Here's another really small cap. This I believe has been one of the day traders that we've seen recently. I recognize this ticker from callouts in our chat room, and it was probably on some of these recent spikes. Let's take a zoom in here and see what we got.
Let's sell it.
Huge volume these past couple of days. Definitely something going on here. Chris, do you have any insight to this one? You're normally all over these. Let me see if I can.
This one I haven't actually been playing. I don't usually like to touch the sub $1 biotech companies. And this one, just broke above $1. So this is just now entering my realm of awareness.
Yeah, okay. And then it looks like we actually had a block trade at the ask today at 112. That's definitely a good sign. That might have been right up here at the top. Looks like we're coming in from that. Interesting. So technical perspective here, I'd say if I was trading this, I'd probably be a short term. I like you, Chris, I'm not a huge believer in some of these low price biotechs. I do miss some of the ones that go from $1 to 20, but I'm okay with that. I'll try to play more of the
just follow Elena if you're interested in those.
I do. Elena is awesome. She is what a helpful community member too. I've actually followed several of the plays she's talked about. I did miss Sava though, but I'm happy for her.
She got me into Sava.
Nice. Yeah. Elena knows her stuff. That's where it's at. As far as an intraday trade goes here, this is the level that I'm trading this against. We'll trade this against 94 cents. If I'm long, a breakdown under 94, I'm going to be out here. If this pulls back to 94 and then holds it or thereabouts in that range, I would either consider adding or taking a new day trade here. I would I wouldn't be buying it up here personally. And again, I don't have any idea on the long-term potential here. Let me go through some of the other tickers that we got listed here. CTRM and Tesla. Oh, there's always people that love to talk about Tesla. We'll get to that. So here's another sub $1 stock, Castor Maritime. Was this one of the shippers? Seaborne Transportation Services for dry bulk cargo. This is a shipper. So for me, the shippers are generally no touch. These do kind of move around and can be headline driven. We've had some crazy movements in some of the shippers. I've never really been successful playing this. I would only play this as a day trade. Don't really like the chart for today. As far as a level to enter on here, maybe yesterday's lows, if they hold, it's only 2 cents away, 2, 3, 4 cents away. To me, I would pass on this. I personally would pass on this. It looks like several people in the chat are excited about this. I'm sorry to let you down. They just acquired a new ship, but they were on the Robinhood no trade list. Okay, so there's another Robinhood aspect there. Boy, I guess I'm glad I don't use that broker. In any case, this is not.
I gotta say, Robinhood, while I don't like their model, it's really great for options traders like myself. I spend a lot of money on commissions on options on other platforms, and Robinhood gives me free options at pretty solid fills. So I only really use my Robinhood account for options.
Let me ask you: is on the other brokers, is your commissions tiered based on how many options you buy? Is that kind of how it works?
It depends. Different brokers do it differently. For mostly yes, you will see slightly decreased commissions, but honestly, like IB charges a flat rate, TDA charges a flat rate.
Yep. Yeah, I was going to say that the TD options, they're like, I don't pay for trades of equity. I do pay for options, but it's very, very small. I mean, it's like
65 cents,
minuscule.
65 cents per contract is the thing. So I tend to do large lots. So I'll do like 100 lots on a spread, right? So 200 times 69 cents. It starts to add up.
Yeah, no, for sure that does. I actually don't trade lots that big, but yeah, that makes complete sense. So there you go, some inside information. Robinhood free commissions on option trading, that can definitely help. If you're trading smaller lots, that's always something that you can ask with your broker too. Your broker can very, very clearly identify that. They might even have deals for you. I know some of these.
Yeah, you can negotiate for sure. If your volume and your account size is sufficiently high, for sure they're willing to work with you.
All right, so Tesla was one of the other stocks mentioned along with Castor Maritime. Let's take a look at Tesla. Oy vey. Okay, so we got a couple of down days here. Let me take a look at the daily chart. Let's look to the left here. God, this is so crazy. Let's do let's take a look here. Run a fib on this real quick from this most recent. All right, so it looks like that on the most recent pullback, we did pull back to this level that was right about 784. Looks like we're trying to do that here again. Let's draw a trend line here from the top of this candle. All right, so it looks like we're definitely in a short downtrend. We definitely want to have a higher high, right? So we want this level of 880 to get broken to the upside. The one caveat that I will say about Tesla is that, first of all, I've had very little success trading this particular name personally. It's just not one that I've been successful with. The other thing is that this being a cold stock, this thing does wild moves. I don't know that there's a stock that I can remember that goes up on offerings like Tesla does. So that just gives you a little bit an idea of how crazy this stock can behave. So I would say that this is absolutely possible. I mean, we could get a headline later today that turns this thing around. So I don't want to speak in absolutes, but I will say that from a near-term trend here, we definitely want to break the top of this candle here. 880 looks to be a trigger. We're printing 837 right now. Yeah, so we're looking for a move up here. These options, in fact, I wonder what the IV is like on Tesla options. It's normally pretty high. What are we looking at here? 68%. Actually, not bad. Not bad IV wise, especially for Tesla. So interesting. Anyway, again, we're in a recent downtrend. We want to have a break at 880 to the upside. Let me move on to one of the other stocks here. I will get to OTRK in a sec. There was one. HOFV was mentioned by one of the guests. Hall of Fame Resort and Entertainment. I do like the name of this. I'm not familiar with what this is. This looks like another kind of low price stock, rounding bottom here. So it looks like we want to continue this momentum here. Let's zoom in and see if we can figure anything out here. Okay, so we did have some of that late buying later in the day. Let's check out the news and see what we got here. Spiking higher amid circulation. The company is offering Super Bowl, Pro Bowl ticket packages. So unsure Interesting. That was from a tweet. Interesting. So this looks like a kind of, I would say that this is probably a day trader stock. I'm not really sure of this company, who this company is. Does anyone else know about this company? Sports, entertainment, and media company. No, not familiar with it. Interesting though. This one I'm actually going to watch too. Don't I have a? That's esports. That's not what I want. I guess I really have to make, I'm going to put it in casinos for right now, because that's probably where my other gambling stocks are. Okay. So for this one here, to me, this is actually bullish, right? This behavior right off the open this morning, holding this low here, which was about the bottom of the retrace on the huge spike yesterday. That's definitely a good sign. And it looks like even more buyers piled in here. A little bit later in the day. So this is interesting. Looks like buyers are still in control here. If you're going to trade this, not sure that I would enter right here. I would wait for a pullback. I don't think it's going to pull back to 281 today, although who knows. I would say maybe try to trade this against the 295 spot here. A breakdown of 295 is probably going to send you to 281. Interesting. No, I do like the Super Bowl plays. I do like that. That's definitely some stuff that you can find some real quick moves, and you can actually play both sides if you're nimble enough. Ryan, any thoughts on OTRK? Let's pull that up here real quick. Joe, good morning. Nice to see you. I see you in the chat there. Welcome. OTRK on track. Let me get a little background here. AI telehealth enabled virtualized outpatient healthcare treatment company. Okay, all of that sounds good for the whole coronavirus setting that we find ourselves in. Let's look to the left. Actually, really nice looking chart here. I definitely like seeing stuff like this. Definitely on an uptrend here. Let's see what we can do with your extension, right? So we had a move right off the bottom here, and then we had the reactionary move down to the base. Let me actually draw this chart out so we can see it a little bit more. I do like my fibs. Looks like these fib levels are holding up pretty good here, right? So we had this big initial run, and then we had this other corrective move, excuse me. Looks like we bounced right off that. We bounced off the 0.236 level, and it looks like we had battles at the 0.5 level and the 0.618 golden ratio level. So as far as this here, I'd actually be comfortable trading this against these different fib levels here. It looks like this chart has held up since the end of last year, maybe even going back to the middle of the summer last year. As far as a bullish setting here, you definitely want to see this 86 level fall, and then you want to see 97 fall. You will probably have a battle around 100. You normally have price discovery battles around even numbers like that. I wouldn't be surprised to see that happen here as well. Like this, going to add this to my main one too. This is a new one that I had not been watching. Thank you very much. Andrew, did these come from YouTube as well? And our YouTube viewers are hooking it up today.
I think so. Anything I'm posting in, I'm bringing in through YouTube. So they're happy to see you go over their stocks.
You are the man. This is Lazard. I hope I'm pronouncing your name right. I apologize if I'm not. Thank you for the tip. Great job bringing this to the table here. Joseph, didn't Benzinga have the CEO on recently? What CEO for what company? And I think that
the one you were just referring to, HOFV.
That I would actually have to look that up. Hall of Fame Resort. Which show was it on?
I think it was on earlier this week on Zinger Nation or
okay.
Or you guys had a CEO on, I believe, and that may have given some interest in it.
Okay, yeah, no, I mean, it seems timely, right, with the Super Bowl this weekend and then March Madness right around the corner. Definitely seems timely. Those interviews are always a riot. Definitely check those out. The last couple have been awesome. Yesterday was amazing. All of the interviews all day were amazing.
Yeah, just to do a little plug on that, we do have our Benzinga Pro happy hour today at 4:15 for our pro users. So everyone that's in our Zoom right now, make sure to attend that. I'll make sure there's a lot of trivia questions today to make up for the last couple of weeks. On the YouTube side, Zinger Nation, we got 3 guests today. Ryan Ribanzi, he's a trader that trades a lot of penny stocks, SPACs, blue chip stocks. Joe Tigray, the chief trading strategist at Equity Armor Investments. And then Alex Lidenmeyer, co-founder and executive at a cryptocurrency platform, which should be very interesting. So Make sure to stay on the YouTube, and we're going all day. So those are at 12:30, 1, and 1:30, and then I think shows just continue till the Benzinga Pro Happy Hour at 4:15.
And so, and I also wanted to address that. Thank you, Andrew, for the lineup. I did get a couple of pieces of feedback that this is not the most opportune time for this show, since this is still kind of a hot trading time. Totally understand. Definitely get that. We are open to suggestions. We're still trying to finalize and figure out a schedule. The one thing that I will say is, if the show stays in this time slot at minimum for the near future, but also the long term as well, we are going to continue doing the happy hour on Thursdays at the end of the trading day. It's definitely great to do it after the trading day so that people aren't involved or in the middle of trades and can actually pay attention and participate more often. I totally get that. But at the same time, we also wanted to bring you a show when the market is open so that you can act on some of this if you find something that you really, really like, or if you are able to procure some insight from some of the speakers that are on this program. So we're open to suggestions. If you have feedback, please let us know. We definitely want this to work for everyone. Again, we're just trying to stress the whole communal feel. We want the community to be involved, and we want that two-way communication, right? I see a couple of comments here about CNBC. Yeah, you don't get to talk to them, right? They talk to you and you just kind of listen. We want to have a little bit of a different feel around this show, and I'm hoping that that's coming across here. Joe says, it was SPAC Attack 2 days ago, HOFV CEO. Thank you very much for looking that up for me. Yeah, so maybe that is why it popped. I think that the proximity to the Super Bowl also plays a factor in that. We'll see how that goes. And that's definitely one to keep watching here. So let me
Majid has called out QS a couple times. Can we pull that?
Yep, let's do it. QuantumScape. All right, what are we looking at here? Let's look to the left
so
here.
SPAC,
Okay.
Battery play.
Okay, so this is another one of these battery plays. Now, I really do like these battery plays. That's my whole thesis behind TPGY. That's also a battery play. We saw what Blink did. Blink went from single digits to 50 in very short order. So the battery plays are hot. I do think that this obviously coincides with the move to EV that's going to continue, especially this year. One of the things I like about battery plays is that you're not the batteries go to a bunch of different car makers or vehicle makers. So you're not necessarily limiting yourself to one company like Tesla, NIO, or Ford. You're actually playing the sector by playing the batteries. Very, very interesting. Now, this huge pop and this huge trade back down or this huge retracement, this is definitely concerning in terms of just its actual volatility. I'm sure we could draw a nice little pretty Fibonacci chart on this. I'm not sure how well that's going to hold up because it seems like this was kind of a Momo trade. I think QS
this was like post.
This
was right after they did their SPAC merger. They flew up like that and got super high IV. It was like one of the almost like pre-meme memes, like before GME was a meme.
The pre-meme memes. That's tough to say 3 times fast. Yeah. So here's what I will say about that. So this was trading up in the SPAC craze. One of the good things about that is that obviously it did come back down. I mean, up near 130. We're back down here at 47. So I don't want to draw necessarily a big rosy picture, but it's great that we're able to actually find some support and keep buying interest in this. I mean, it looks like this first opened at about 25, and here we are at 47. So if we see a breakdown of this recent low here around the 40 handle, 41 handle, that's going to be a real concern. I do like that we held this. It'll be interesting to see how this continues to trade. I do like the angle here, right? I do like the battery angles. Looks like we gapped up and we gave that back. But again, we're not breaking down past these other lows here. That's definitely a good sign. In fact, let me mark that off in the chart in case.
Yeah, it's like most of these days have been higher lows, which is nice.
Yeah. Yep. So, all right. So this one, as for a short term, I definitely think you can swing this. I would trade this against its recent lows. If you want to tighten if you're going to use options and you want to tighten those stops up, you can. I personally, does this even have options? Yeah, you were saying.
Yeah, it has options.
Yeah.
I do cash secured puts on this one. That they're fantastic. Free money, basically.
So the way I would play this is I would absolutely use options, define my risk ahead of time, and then I would also probably play this with the expectation that those options could go to zero, right? So IV now is still kind of high at 152%. Premiums are a little bit elevated, but if you're going to buy this, maybe, give yourself a little bit of a leash. Again, I think of a breakdown of the 40 handle. That's probably it there. I think QS had rumors of a deal with Apple. Christopher, yeah, that would definitely send it. That probably played into this big run up. Boy, we had a huge gap here too. And so this here was a floating island that failed, and it most likely failed because it was just hype at that point. There was part of that, the SPAC hype, or maybe even the deal with Apple rumors. So we'll see. I'm talking selling covered. What is that? CSP?
Cash secured put. So it's putting up basically the full purchase value at the strike price. So if you want, for one contract, you're going to be putting up $5,000.
Okay, yeah, that's expensive.
And now the IV on that makes the return like something like 12% a week, though.
Yeah, interesting. Okay, well,
so it's definitely a risk play.
Definitely one to watch, but I agree. Definitely has some risky there. Deshaun, I love Benzinga's personal touch and intimate community. That's what I like to hear, man. Thank you very much. Really, really appreciate that. Hope to have you around. Pins isn't going anywhere anytime soon, says Sebastian. Welcome back, Sebastian. Good to see you again. I agree. We talked about this recently. I don't understand the business model with Pinterest. It does seem to be very, very popular. This chart is awesome. What a great trend here. The trend is absolutely your friend, and it is definitely your friend in this stock as well.
Can I say something real quick?
Yeah, go ahead.
Oh, sorry. Yeah, well, so the thing with Pin is, it's one of the only social media platforms where they're really pushing, positivity, inspiration, and a lot of people who are just sick of all the noise, Twitter and Facebook and some of these others, they're kind of just sick of all the noise, so they're kind of going towards Pinterest because that's what they're really pushing. So that's why I said I see Pinterest being here for a while.
Yeah. Okay, cool. Yeah, that makes a lot of sense too. And when you cut off some of that political noise, that's definitely going to help.
Distributor in Colorado, Michael Valpapa.
All right, well, everyone, it's time to move on. Everyone that joined the Benzinga Power Hour, make sure to come back 4:15, Benzinga Pro weekly happy hour. We're bringing on trivia all day. Everyone on the YouTube, stay in. We got Mitch Hotch, Chris Kaji, SPAC Attack. Let's go. We're running all day. We got Power Zinger Nation after that. We're not stopping. We're going till 2 in the morning, maybe 3 in the morning, maybe 4 in the morning. All right, Mitch Hodge, take it away. Let's keep it going. Everyone have a great trip.
All right, guys. As you guys see, the power hour, or the happy hour leaving the power hour. Look at me. All right, guys, the happy hour is done, and it's time for the SPAC Attack. If you guys don't know who we are, I'm gonna let you guys know right now, right off the back, exactly who we are. All right, traders, let's get the SPAC Attack started where we go over everything SPAC. So do me a favor, guys, before we begin the show, go ahead, write down that button. You see that share button? Click that share button. Let everyone know the best SPAC show in the world is on right now. All right, traders. Hey, I'm really happy to be back with you guys. Like always, guys, on SPAC Attack, we go over everything SPACs and even some IPOs at sometimes. I know we got a ton of headlines to go through, a lot of things going on. As you guys can see in the chat, we got a lot of loyal listeners out there that watch us every single day. And I think the big reason why they do it is because we built a community here. And so what better way than to bring my man Chris Ketchy on here? How do you like the community that we built, Chris? And what do you think about it?
I love it. I love interacting with our raving fans here in the chat while we do the live show. I know a lot of them follow us on Twitter. I'm always happy, to share thoughts with them out there. Again, just, my personal opinions, not investment advice, but always willing to, get that news and information out to people so they can do the research and, the investment themselves.
All right, guys, I can see in the chat already everyone's buzzing. What's up with that CLOV? We'll get to it, Sue. I can guarantee you guys, so definitely smash the like button if you want to get to it faster. If I see for some reason, there's over let me check right now. So we got over 700 people watching on YouTube right now. If we get to 500 likes, I'll go ahead and I'll skip right to it. But let's go ahead and let's get to some headlines. Chris, take us back, my friend.
All right, guys. Yeah, so try to get through some headlines today. And then we've got some exciting topics to talk about. I know everyone is itching to hear our thoughts on that Clover Health short report that is out. But up first, so headlines today. THCB, this is the company merging with Microvast. Oshkosh, which is a leading truck company, announced a $25 million investment in Microvast. So, keep an eye on that one. Again, that was a deal that was waited on for a long time. A leading battery company. So now getting, an investment there from Oshkosh that's being brought to the attention of traders. And then we have XL Fleet, symbol XL. So XL Fleet announced a new deal. They're partnering with Curb Tender to develop an all-electric and plug-in hybrid garbage truck. So they're going to jointly develop electric, and those plug-in hybrid vehicles for the Class 3 to Class 8 waste management vehicle options. That'll start this year in 2021. So XL Fleet is one we've covered a lot, that electrification of those, higher class models, part of the new Biden administration, electrification of existing vehicles. I think this is a great partnership for them. We've talked garbage trucks before. Of course, Romeo Power has that deal with Republic Services, and then also Lion Electric working on garbage trucks as well. So huge opportunity to get all those garbage trucks on the road, turn to electric, and XL looks to capitalize on that. Two of our deals yesterday were big movers on the day. So VCVC, those shares were up 49%. They, of course, announced that deal with REE Automotive. That's an electric vehicle company creating the almost skateboard design, that these companies can build off of. Huge opportunity. They have over $5.1 billion in existing deals and up to $19 billion in their pipeline. No surprise that this was a hot flyer yesterday. So keep an eye out, VCVC, for, buying opportunities on that dip, as I believe this is a strong play in the electric vehicle market, with those existing deals, that huge pipeline of opportunity. And the fact that they focus on 3 different platforms where their competitors do 1 or 2. And they also power, more classes of vehicles, and their cost structure is better than their competitors. Those are all things that set them apart. So as we talk about the story, look for those catalysts, look for those differentiating factors from one company to the next, with so many SPAC deals being done and so many electric vehicle companies out there. Another big gainer yesterday was FTOC. Shares ended the day up 13% on that SPAC deal with Payoneer. Full disclosure, I'm still long shares of FTOC. I love the Payoneer story. This is a global digital payment company. They have deals in place all over the world. I've also seen chatter that they're working, with eBay to replace PayPal in certain countries as the default option. But they work with 9 of the top 20 most valuable companies in the world. That's a huge, opportunity for them. They're also focusing and growing small businesses. They're expanding to new countries. They're in over 190 countries worldwide. So again, we talked that one yesterday, but pay attention to FTOC. Then one of the deals yesterday was actually down. So DGNR, this is Dragoneer, shares closed the day yesterday down 5% on that deal announcement. for that software as a service company, CCC Intelligent Solutions. Guys, this is a good reminder. DGNR was one of the popular SPACs out there, a good management team, but was trading at a decent size premium right before that deal was announced. So that's why it's important sometimes pay attention to these SPACs trading under $11. You limit your downside and you really have more opportunity to capitalize on a big gain on a deal announcement. Whereas a SPAC trading, between 13 and 15, on that deal announcement, it's a mixed bag. Some investors may like it, some may not. And those shares could, sell off as we saw yesterday. So, keep an eye out for opportunities between 10 and 11. This one just was not well received by investors. And, as a result now, people that were trading based on that premium, are now in the red on that deal. APXT, so this is one of our favorites on the show. We, of course, had AvePoint CEO TJ Page on the program. So AvePoint filed their S4. No vote date set yet, but they did update their guidance. So they see full year revenue of $148 to $151 million for the current fiscal year. Again, this is a company that works with Microsoft, and Microsoft just reported earnings, and those cloud earnings were extremely strong. Again, it's the continued trend for Microsoft that cloud division and services is growing. And, AvePoint is the company that bridges small to medium-sized businesses with Microsoft. Shares were up this morning. They're actually down 2% now. Pay attention to this one because, again, they filed that S4. They didn't release a date, but that's the next step is they're going to say when that merger vote date is. And I think this one could get some more love when they announce that deal, as everyone's been waiting, for that merger vote date. Our deal announcement this morning was VGAC. This was one we talked about on the show. We broke it live when that rumor was announced. So this is the Virgin Group SPAC with Richard Branson. They announced an agreement to acquire 23andMe, which is a consumer genetics and research company. So fiscal 2020 revenue was $305 million, but they actually see revenue declining. Fiscal 2021, $218 million. Fiscal 2022, $256 million. $3.5 billion valuation here. This is one where when that rumor was announced, people were not impressed and sold off. And then today we actually have a positive reaction. So we have shares up 10% right now. The CEO of 23andMe was on CNBC along with Richard Branson this morning. They talked about that. One of the stories for me here is going to be, maybe how ARC plays this. And if Kathy Wood makes any comments, I think that's what some people are waiting for. So ARC, of course, has a genomics ETF, which adds some of the leading companies in the field. Genomics is one of the areas she's talked about the most for future growth. So she came out in 2015 with a tweet talking about how much data and information 23andMe had and sounded very positive on it. But over the years, she's also talked about their testing methods, and it seems like maybe she doesn't love the accuracy compared to some of those competitors that are already in the genomics ETF. So I think there's a lot of interest built up in whether or not Kathy Wood will include VGAC or the deal after that. In there. And I think we're going to have to wait and see. And at this point, I think it's a 50-50 shot and not a guarantee. So keep an eye out on VGAC, but we do have that declining revenue with the 23andMe business. And I will say the pair trade here for me, I own shares of Ajax, AJAX. So Ann Wojcicki, the CEO and founder of 23andMe, she was on CNBC this morning, and of course now getting that deal done for 23andMe. She's one of the people behind the Ajax SPAC, and maybe now her attention shifts to putting more focus on what company they're going to acquire. So again, I own shares of AJAX, and I think that one is worth taking a look at. And then another headline that we'll touch more here in the middle segment when we talk a little bit about some sports betting is Skills, SKLZ. So shares are up big today. They announced a partnership with the National League. This shouldn't come as a surprise. Anyone who's watched the show, we had Will Hershey on from Round Hill He talked about Skills. Skills is included in both the gaming ETF from Roundhill, symbol NERD, and also the sports betting one, BETZ. So huge interest there. They have a huge opportunity to allow people to bet on video games and, different competitions. Looks like the NFL is going to expand more into esports and utilize Skills to do that. And I'll also note another, this shouldn't be a surprise, as the NFL invested in Skills prior to the SPAC deal. So they, of course, own equity in Skills. So not only is this a partnership, but they own part of the company and they're invested in the future success of the brand. So definitely keep an eye on SKLZ, because I think this is only the start of those deals. But again, we'll touch on that more later. So that is it for headlines, Mitch. I know we want to get to Clover later on. So what's going on?
What's going on is that we got some movement. Hey, I remember a lot of people were worried, with the whole kind of GME situation. We started seeing a lot of SPACs being sold off. And what this kind of was, and what Chris and I kind of related it to, was, when you see certain stocks making, let's say, an 80% move, but then you're holding your SPAC that was, let's say, at 1020 and it goes up to 1040 for the day and back to 1020 at the end of the day. A lot of the times what you'll see is that investors pull that money that they feel they have tied up, and they go and they rotate it into something like a high flyer, like you saw in GME, AMC, and in that movement. I think that's why you saw these big pullbacks. That's why Chris and I did a show immediately that day, and we said, SPACs on sale, baby. SPACs on sale. Because at the end of the day, when you get these discounted looks, is how you can really get a good entry on a stock that had rocketed up, and we got to look for those opportunities so that we can measure our risk down towards the support and it not be so far. Like your distance should be smaller than that reward. You always want to be looking for at least a 1-to-1 look, and then bigger than that. I mean, no one wants to be risking more than the probability of them coming into the green. So you got to balance that out. Create those trading plans the same way you can create those trading plans for when things go wrong, like in CLOV. And we'll get into that in our middle segment here. But one of the things that we want to talk about, and I'm going to go ahead and let Chris go first and talk about what he saw in the short report about the company and why Chris was also a little bit skeptic on this company, and he was looking into it. And really what we think is, at the end of the day, it did get extended. So this could just be an opportunity to get in at a cheap price. But if we look at the weekly chart, and I just want to show that first, we're definitely seeing this big pullback. I mentioned it in kind of the morning hours that I'd be watching for this one to pull back closer towards this 1150 price point, because you can see this resistance prior in June and July right here at this 1150. So let's see if it can hold that level and find some really kind of bottoming action there. All right, Chris, so what happened today and why did this one get hit?
Yeah, so, Hindenburg Research yesterday said that they would have a new report out in the morning. So that report, was rumored actually to be targeting a SPAC. And it turns out Clover Health was the target. So that short report came out today. And in the report from Hindenburg, they call Chamath Palihapitiya, it says how the king of SPACs lured retail investors into a broken business facing an active, undisclosed Department of Justice investigation. So this long report, it really dives into that possible Department of Justice investigation, talks about the company being fined for misleading marketing practices. So we talked about Clover on the show when it was trading between 10 and 11. And then it had this huge run up to like $15, $16. And a lot of that run up was fueled by some retail traders from different investment groups, really pumping the stock up, right? And talking about, a Walmart deal, a CVS deal, a Walgreens deal. All these deals were, existing and known. That wasn't new information, but I kept seeing the same stories, shared around. And so my thoughts on Clover were, in that $10 to $11 range, it was great value. once we started hitting 15, I said I would be a seller up there. So the short report, to me, there's some major concerns there. And Clover Health has not issued a statement yet. They said they would in the next couple of hours, which could be any time now. And also Chamath has been quiet about it, obviously trying to figure out what to say here. And I will note, guys, I'm working on an article for Benzinga, and I reached out to the company personally, and they have yet to respond to that email as well. So really curious to hear what they have to say, about the allegations against the company. And I know that when this deal was announced and, was on CNBC, Chamath and the CEO of Clover, I know Andrew Sorkin really dug into the terms of the deal, how many shares Chamath owned. So, this one was attacked from the very start. And, so for me, from the business side of things, I want to hear how they respond to the allegations. And if there is an ongoing Department of Justice investigation, or if that was a past event that has been settled, or if that is completely false. But to me, that they have not issued a statement, I've got to at least be a little skeptical that there is some sort of investigation. Now, turning aside from the company and the attack, Mitch, I know that this report, got you upset today for a different reason. So if you want to go into, your thoughts on this short report from Hindenburg.
Yeah, definitely. So one of the things that we want to state is that right off the bat, guys, I'm not so much against short reports in general. I'm more against personal attacks here, guys. And this is where I really think, it starts separating itself off here. And what I'm going to do is I'm going to actually show you the report so that I don't misquote things. And that's why I'm going to be pulling it on the screen here, guys. And this is really my opinion. This doesn't really have to do with Chris. If anyone wants to go ahead and hit me up on Twitter about it, go ahead and hit me up. You guys see my tag right here, Story Investors. So I'm going to highlight exactly what I didn't like and what I did like. And so one of the things that I definitely don't want to see is personal attacks be included. Because in my eyes, guys, and you guys can all think of the way that, to me, Chamath is a mover of the generation and a leader. Why? Because he's willing to speak up for the unspoken, the retail investor that can't go on these networks and really speak up. So I'm going to take my second here to go ahead and point out some things, but you guys can speak in the chat about it. See how you guys feel about this. That's what I really want to see, is more about the feedback that you guys out there, the retail investor, has on what's stated in this report. Okay, guys, so let's start here. They state a whole bunch of points on why their report, but at the end of their points, they state this, guys. So, and let me know if you guys can see this on the screen. If you want, I can zoom in a little bit more. Let me see if I can zoom in a little bit more where you guys can read this. So it states here, short sellers have exposed almost every major market flawed in the past several decades. Yet there has been recent questions about whether short sellers and critical researchers play an important role in that healthy, functioning market. We hope our research today serves as a timely reminder that they do. Okay, I'm not even going to make a comment about that. That's strictly for you guys to see it there. And then so where I really start getting a little bit upset on is where we get into the introduction part of this report. In the introduction part, we start getting into more personal attacks straight towards Chamath. And then so you guys can see here, they try to do this kind of wishy-washy language here where they say, Chamath has expressed views we wholeheartedly agree with, right? And so they state right there that they wholeheartedly agree with this, but then strictly right underneath it, they go and they state this. But while we agree with the ideals supported by Chamath, we are also skeptics by nature, and we are intrigued to see a billionaire taking media calls from his mansion, making hundreds of millions of dollars, selling SPACs to retail investors. And so all while positioning himself as the de facto leader of the average Joe. And so what is this really stating? This is stating more along that Chamath is representing that retail investor. And what I really take an offense is referring to us as the average Joe. And the retail investor is no longer held back by information. This is the generation of information, and we have everything out there. And so if you guys are holding information, the hedge funds, the research companies, then what you're doing is you're holding us to a disadvantage. And that's when I really speak up, guys. If there's one thing I've always stood by is disrespect and seeing other people held at a disadvantage. So if you're going to go ahead and then start personally attacking Chamath, you definitely need to go ahead and do a little bit better in describing why you want to go ahead and attack somebody that's trying to stand up for how they state the average Joe out there. So I know I'm getting a little bit emotional here, but at the end of the day, this is when I feel that we should stand up and fight, guys, because at the end of the day, I'm with you guys. I do not feel that we are the average Joe anymore. I'm an informed trader. I make decisions based on information, not just based on momentum. And this is why Chris and I do every single day what we do on SPAC Attack is get you guys the information that you guys need to be informed in your trade so that these guys don't refer to you as average Joes. And that's really where we could stand up and start fighting back. What do you think about this, Chris?
You know, Mitch, I want to break in here. I just looked at my email. So I did get an email back from Clover Health, the company. Not a big surprise with the statement I received. So this is from someone who works directly at Clover Health. The statement I have is, we'll be issuing a statement to address the claims presented by Hindenburg that I'll provide to you in the next few hours. Thanks for your patience. So again, you know, the company is working on issuing a statement. The other thing I'll say again, and especially with that personal attack on Chamath that you called out, Mitch, and anyone who's watched this show knows that we're big fans of Chamath, right? And you know, even if I question the valuation on Clover Health, it has nothing to do with him as a person, right? It's the valuation of the company. And again, that SPAC deal, when it's announced, is based on a $10 price. It's not based on shares going up to $20. So the personal attack, to me, you know, Chamath could end up being on CNBC today, right? So they love him on there. He gets to go on whenever he has deal announcements. And the fact that CNBC covered this morning, you know, from the opposite side, right? They covered it from the Hindenburg side, and they didn't have a rebuttal from Chamath. I think he needs to get on there, you know, and really talk about the allegations, and also maybe he needs to call out Hindenburg, right, for that attack that they put on him. And again, I'm with Mitch. I'm not against short selling. I'm not against short selling reports. I'm not against calling out red flags and, you know, allegations. But this attack did seem very personal, and it comes at a very bad time too, right? When Chamath is, you know, creating value for retail investors with these SPAC deals, he's taking the side of the people, right? So the report can call him a billionaire and can call him all these other things, but you know, Chamath is very, you know, easy to get along with and see his side of things right now. And, you know, he's very good at what he does. You know, I know Social Capital, his company, just hired a bunch of people, you know, that are retail investors that had to pitch their ideas to him. And now they're going to manage money, you know, for the company and invest in these, you know, growing companies and publicly traded ideas that they see. So again, sharing the wealth and the knowledge with the everyday investor. You know, I really want to hear what Chamath has to say about this deal. And then
before we get a little bit further away from that, you know, I completely agree with you. I definitely want to hear what Chamath has to say. So I'm going to put it out to you, Chamath. Out there, if you want to go ahead and speak to the retail investor, I got nothing against CNBC, but we will represent you in the best way possible, which is the way that you want to be represented, which is to the retail trader out there so that they can have the information that they need to be informed traders. So if you're out there listening to this, Chamath, we need you to come on to Benzinga today so that we can get the correct answer and the message across that you want to get across to the retail trader.
And, you know, so Mitch, I was going to say, you know, from a SPAC perspective, from an investment perspective, again, if you like Chamath and if you believe in his ideas, you know, I will say that this short report now is hitting his other stocks, right? So IPOD, which I own, IPOE and IPOF are all down today. And, you know, part of that, it looks like just across the board that people now are going to question some of his SPAC deals, right? Because one of the things that called out was, how much equity, how many shares Chamath got in that Clover Health deal. And guys, this is where this short report scares me a little, because when we talk about this disclosures and all that, the SEC and the DOJ could be coming after SPACs. And, the thing we try to do, again, is give you information. So I read through the press release and I read through the presentation. And the thing I've said that I think is going to change is when you hear a deal announcement, if you pull up the press release, it doesn't break down the percents. If you pull up the presentation, it lays out in a pie chart, right? And it says, existing shareholders, 80%, pipe shareholders, 10%, Clover Healthcare shareholders, as an example, 10%. It breaks down who owns what after the deal goes through. I think that information needs to be in the press release, and I think that's one change that happens, to kind of soothe over this deal here. So, to me, if you believe in Chamath, if you believe in those existing deals, which take a look, I mean, SPCE, OPEN, MP, DM, these ones that he did the pipe on, his SPACs are on sale today from where they traded yesterday. So, and then the other thing I'll say is, again, he hasn't issued a statement on this. He actually tweeted yesterday, and this one you can really dive into a little bit. He said, SPACs may be easy to raise, but they are hard to execute and success isn't guaranteed. Good luck to all the players. So is he taking a dig at the number of SPACs that are out there and saying what I've been saying? Maybe we need to see those numbers come down? Or is he taking a shot at, someone who may be competing for a deal with him right now, saying good luck to all players? So is there a bidding war going on behind the scenes that we don't know about with IPOD or IPOF? IPOF shares actually were up double digits last night. And I don't know if it was based off that tweet or based off of rumors, but SPACs are on sale in Chamath World today, thanks to this Hindenburg report. So, we'll let you know again if any breaking news comes across or if I get an email response again. But that's my thoughts on the Clover report today.
Yeah, just to leave off, I definitely want to go ahead and we definitely need that answer from Chamath. So I'll give a shout out right here, guys. I don't give too many. Hey, guys, everybody, let's go ahead. Let's tweet at Chamath. Let's let him know that Benzinga is here to give the honest answer for the retail investor, the one that they're referring to in this report as the average Joe that Chamath is representing. So if you guys can help Benzinga, hit that tweet button. Let's get at him. Let's get him to hear us out there watching right now that want him to answer. And we don't need him to be going on kind of these, and I'll say it, these old media sites. We are the new method here at Benzinga. We try our best to engage with our viewers, and that's why you guys have a chat right now that you guys can let us know what you guys want to talk about. You guys can hit the comment after and let us know what you want to see on the next show, and you guys make the call here, not us. And that's what the important part is here. So I'm going to move on here because I you guys can see I'm a little bit emotional on this. And the big reason why is at the end of the day, SPACs have led to wealth to the retail investor. It usually has not led to just these hedge funds and institutionals making money. I can see it, and I have seen it on Twitter and just from our viewers, that it has gave wealth to the retail investor. And the reason why we do this every single day, guys, is so they cannot refer to you as the average Joe, because you are informed. Because Chris, my man here, works hard every single night, hours, to get you guys the information that we pull for SPAC Attack. So I'll go ahead and I'll pull the banner down. We'll pull the arms down. The shields can come up, because the shield wall was up there for a little bit. So let's pull it back. Let's do some ticker time. Let's calm it down a little bit and take it back here. All right, guys. So what I want to do is I'm going to pull up the watch list here, and then you guys start putting those tickers in the chat that you guys want to see. Chris and I will take a look there. If you guys have any questions, we can address also. But let's go ahead and let's keep moving here. Let's get some tickers rolling here. Of course, CCIV. Rocket, why wouldn't you want to see CCIV? I'm going to skip that one today because I feel like we've been doing too much coverage towards that one. And sometimes you need to cover the smaller ones, the ones that aren't moving right now so that people can find them. So let's go ahead and let's keep moving here. I'm seeing one mentioned here, FTNT by John. So do you know anything about this one, Chris?
Did you say FTNT? I don't think that's a SPAC.
Whoa, they got me. You got me there, John. Hey, John.
That is a Jason Raznick pick that they probably heard. I believe when he talked.
Look at these guys trying to get that power hour stock because it's ripping through. You're trying to pull a fast one on me there, John, and you got me. But hey, I'm pulling back here. All right, so let's keep rolling through here. So when does Romeo start gas? So let's see the Romeo chart. All right, so full disclosure, I was looking at this one this morning. This morning, guys, I'm looking at this one trying to time my entry. We've talked about this plenty of times. We're at the support, but are we going to be able to hold this $18? It's not looking like we're getting that drive. But one thing we have to keep an eye out for is the earnings that are coming up, right, Chris?
Yeah, it looks like earnings are coming up in a couple days, and I guess the question when Romeo start gas, maybe again, because if you look at that chart. I mean, I see some gas back in the day on this one. So when I'm still looking at getting in long term, that $18 level I'll play with today. I might even set a limit order below 18. It looks like we did hit below 18 earlier. Great battery company. And, I can't say again enough about, my thoughts on this one being a great long-term play on electrification.
All right, so the next one I'm seeing mentioned was one that had earnings yesterday, which was the United one, it's a UW. What's the ticker name again? It's
UWMC.
When they change over, man, I start losing them. I don't know how Chris does it, guys.
Those clever names, like we talked about with tickers yesterday. I mean, that butterfly, BFLY. You're not gonna forget that now.
So if I can remember clearly, I think the merger vote was it in the 19th or was it over here on this kind of 14 level?
I think it was in the 14 level.
Okay, so just to describe the wave, guys, the common wave, guys, after the merger for it to come and come back into the what we call the evaluation period, when it's doing a pullback, because once the merger hits, a lot of people are trying to figure out the fundamentals of the stock, and the fundamentals, well, that's how you start breaking through technicals, guys, because people are looking at fundamentals and thinking about revenues versus where the stock is and trying to evaluate, hey, look how this one pulled back here. It went all the way past this low. I haven't seen one that can go this low, guys. So right here, we got towards a low of 920. Look at the first tick on this one. The first tick on this one was 930. That's one thing I have not seen. And I want to point that out because that's very uncommon, right, Chris?
Yeah, this one dipped, below 10 there. And, I don't have a lot to say about earnings from yesterday. It was no surprise, right, that their numbers were strong, with strong numbers for mortgages and housing. They also announced a dividend of 10 cents a quarter. That was known from the start too, guys. So not a lot of new information. I think everyone, expected blowout earnings and this stock to skyrocket. This was the largest SPAC deal done in history at a $16 billion valuation. That $16 billion valuation was based on that $10 price. As you keep going up from $10, this company is worth over $20 billion. And I don't see it right now. And again, this is one that got too many retail traders, too many, trading groups pumping this stock up saying it was going to hit $30, $40 and have this insane valuation. And as we talk about those disclosures with the percentages, shareholders of the SPAC only came out with less than 5% of the company post-merger. So, this was very small. The company is still widely owned by the existing investors. So, this is one I have not been in. And, based on it not getting that action yesterday from earnings, I just don't know if it's going to get, the up movement again in the short term.
Hey guys, I'm in some competition stocks with this one, so you could look at replay. I'm in this one, and it started to get a pop today, so really excited about seeing that lift. Based on the thought that it could be moving off on that move based off of the earnings that came out there. Another one that I'm in, guys, is Rocket, but just want to tell everyone because that's also a competitor, and it's actually up today, so I'm going to be paying attention towards that one, up about 4%. Let's see if we can start getting some drive in the mortgage, and then what you can do is you can start timing that UWMC and then start trying to maybe find the bottom on this one, so that you can get in maybe when the whole mortgage companies all make a rip. Maybe this one lags and then follows after. I do this often, guys, which is called the laggard play, and so you guys can look into what a laggard play it consists of, and it's a lot about relationships between the industries. So let's go ahead and keep running through here. I'm seeing mention of LCY. So what's up with number 3 here?
Yeah, so Landcadia, this is the one that was done for Hillman Group. This is a fastener, a materials SPAC deal. They get over 50% of their revenue from Home Depot and Lowe's, but they're in a ton of stores, right, for home improvement. So not a, quote unquote sexy deal or sexy brand here, but they've been around for years and they've actually experienced growth. I think when I did my article, it was growth in, every year but one of the last 15 years or something for revenue. So steady growth. This is one again that just did not get the attention because it's not that huge, total addressable market or, electric vehicle play down the road. But guys, this is one where steady growth and, maybe steady wins the race in the long run.
Right. So seeing in the chat here, a couple more mentioned here. Let's go ahead and keep running through here. Let's go to Snack Crackle Pop, SVAC. Starboard, the star. What's up with the Starboard?
Yeah, so Starboard, this is a huge SPAC, right? And it got lots of attention based on that large name. I like this one, but again, it's trading at a decent size premium, but really I'm actually surprised it's not trading higher than, $11.50, $12 with that strong brand name, those huge names in the management team. So this is one I know I've taken a look at because I think they land a great long-term deal.
All right, getting mentioned here by my man Danny. Danny asking about HEC.
Yeah, so HEC I own shares of. This is the company acquiring Talkspace. So Talkspace is a leader in online mental health, right? So telemedicine was a huge story in 2020 with the pandemic. And, when the pandemic, hopefully goes away, people will return to doctor office visits. But is that going to be 100% again? No, a lot of this, as we've learned, can be done, over a computer, over a phone. So Talkspace is the mental health side of that. And the pandemic has also grown, people suffering from depression and, those thoughts to where they need a company like Talkspace where you can get out your phone or get on your computer and you can talk to a licensed psychiatrist and get those thoughts out there. So to me, this one didn't get enough attention, and they have, marketing deals with Michael Phelps and Demi Lovato. So they already have brand awareness. They already have commercials on TV. I think after this deal is done and with having some more of that cash, I think they're going to tackle marketing, grow their app. They're going to put more commercials out with Michael Phelps and Demi Lovato. And, I still own shares. I think this is a great long-term play on the digitalization of the healthcare market.
Yeah, guys. So I'm gonna keep rolling through here. Gonna go to GNPK. I had a question I mean, I wish I kind of had this one, but I really don't have it, Johan. They think that I'm in this one, but I'm not in this one, GNPK. But we could take a look at it. So what's up with GNPK, Chris?
Yeah, so GNPK was one we talked about yesterday as possibly being connected to space. So they're targeting aviation. They have the former CEO of Delta and Amtrak, and then the former CEO of Frontier Airlines. So again, are they going to go after an airline when airlines aren't a growing business? I don't see it. I see them going after urban air mobility, right, or space, because those are the growth markets. So this one has a great management team. And again, as we talk about SPACs trading between 10 and 11, here's a perfect example right here.
Yep, perfect example. Sideways action near that level, so giving you an ability to go ahead and measure risk down towards this level, which is right at the 10-15 level. And then what I would like to see on this one is I would like to see a strong pullback come and test this kind of 1040, 1035 area. If I would like to get in as close as towards that uptrending support line, I want to get close towards that support line to give me a potential for this one to come back up and get right back towards the resistance and maybe get back up towards this level, this $11. So what I would look for is I would actually look for pullback days to get in this. One of the things that I can recommend that has worked for me on SPACs, guys, is trying to get in on the day that, so what I do is, and this is normal, I try to get in on the day that it's actually weak. Buy into weakness versus buying into strength. This is a very important thing for SPACs, because when you buy into strength, a lot of times you get caught at the resistance. But when you buy into weakness, you can measure that support and try to get in there, and then give yourself that multiple layer support approach where you can set the risk right underneath it. And that's the approach that I would take here for a stock like GNPK, is trying to get in as low as possible, giving myself a tight risk and a good window for that return. All right, guys, let's keep going through here. We got a couple more for the day. We got about 15 minutes left, so definitely let us know what you want to see. I want to keep running through here and knock down some more stocks here. So let's go into an IPO. We haven't taken a look at IPOs in a little while, Chris. And that's something that we try to do here, is not only be about SPACs, guys, is be about maybe some IPOs. So I haven't taken a look in a little while. How's the Wolf doing? Let's find out.
Either. How are we doing?
Oh, this chart looks good to me, baby. I'm getting excited. I love when I see charts like this, guys. So look how the trend line is starting to stick. And what do you get here, guys? So you get a bottoming action here. And then a quick turnaround. Like it looked like this is a Harmy candle. It looked like it was trying to break down and come back towards this support, but immediate reversal here. So that get me excited there. We're approaching towards this kind of trend line. But one thing you notice is these high wicks. High wicks means selling pressure when it gets towards the resistance. So see if you see a big time seller showing up at, let's say 27.50, just trying to get out. And so how do you do that, guys? Is you look at the market depth. And this is so important, guys. And shout out to my man, Dennis Dick out there. He talks about this all the time, guys. If you don't know the market depth, you can't find the big buyers, the big sellers. So you don't know truly where the support is and truly where the resistance is. But if you can get that full access, that full market depth, that's when you can start finding these big boys. And what I do, I try to beat the big boys. If I see them hanging out there at, let's say they had an order out this morning at 26, I'm putting my order out at 25.90. And I'm going to try to be 10 cents below them and then measure my risk to give me an advantage to feel that I beat their price. I beat the big boy. Now I know my risk. Let's see if the big boy can bring the stock back up for me, because it's usually not my shares that bring the stock back up. My 100 shares, my 50 shares isn't going to really be driving up stocks. But when there's someone hanging out there and they put an order out for, let's say, 1 million shares or 100,000 shares, 500,000 shares, that's what I'm looking for, that block. that block, that big boy, and then I'll take advantage on that guy, and I'll try to take my money away from the basket, because at the end of the day, that's what we do, guys. We put all our money into a pot, and that's how kind of you got to view stocks. Everybody throws their money in the pot. The question is, who's taking their money out? Is it going to be you out there because you had the plan attacked, or is it going to be the other guys because they're taking that planned attack and then they just sweep it underneath you? And that's truly the market, guys. You know, a lot of people talk about these short sellers and kind of the battle. Chris, I know that you probably kind of seen this, is that there's always a battle. Someone's making money and someone's losing.
Yeah, and you know, as you pull up that chart, I can't help but think back to when we did the Benzinga boot camp, right? And we talked about chart patterns for SPACs and for IPOs, and this chart right here looks very close to what we did for IPOs, right?
Mm-hmm.
A huge volume on that first day and a huge rip up, and then everyone, you know, it started trading down and volume got lower, the share price came down. So now we're looking, you know, for volume to increase and for those shares to go back up. Unless if you can get in at the actual pricing on an IPO, buying an IPO on day one is usually not the best bet, right? Because normally we see shares trade off over the next couple days. So that's something I'd caution again with these IPOs, you know. And for me, I own STIC, which is the SPAC taking BarkBox public. And, you know, again, nothing against Petco. I think there's great opportunity here for several players. The pet market is huge, right?
What was that ticker again? Just so I can put it up. Repeat. You were breaking up there.
STIC, stick.
STIC, the stick life, the Northern Star.
So again, the pandemic, more people went and got pets, right? So the pet market actually grew. So long term, the outlook on the pet industry is very, very bullish and a huge total addressable market. So again, it's about knowing your entry prices, your risk reward, and the timing. So, you know, I couldn't have said it better myself, Mitch, you know, talking about setting those limits below and everything. So again, you know, pay attention to these charts. So the story and the technicals. And, you know, as I said, we talked about this at the last boot camp we did. I'm going to drop the link in the chat. Again, we do have a SPAC event coming up where we're going to get into more of those technicals, more of that basic investing knowledge, you know, for some people out there to really learn, you know, the ideas for these SPACs. So, you know, and go ahead, Mitch. I see you got another IPO up there that we've talked about before.
Yeah, so this one's Pub M, guys, and this is one that I mentioned for a while, guys, because I like the industry that it's in. It's in programmatic advertising, and I've said that wrong plenty of times, so that's why you guys saw me focus there. So one of the things is that you're starting to see, guys, and this is streaming service talk. And we'll have some streaming service show coming up on Pre-Market Prep soon. So definitely tune in that day because we'll talk all streaming. But one of the things that I've seen in streaming, and Chris, is that how are they going to get the advertisement to us, and how can they personalize advertisement to us? Because to tell you the truth, when like, you know, I see an advertisement of, let's say, Etsy, doesn't really get me excited. Might get someone else excited, but doesn't really get me excited. So personalization of ad targeting is going to be a big focus of media companies, because what you want to do is give the ad towards the person watching, not give the ad towards, you know, just anybody, you know, just oh, I'm gonna try to push Chris on ballet classes. It probably wasn't gonna work, right? But if I go and I tell Chris and I show him investment research ads, if I show Chris maybe some SPAC services ad or maybe some like Benzinga Pro ads, next thing you know, Chris is clicking on those ads. And so that's where we come into this story of programmatic. And one of the things that happens is this undercut and rally. This is the one thing that we're seeing often. The cut underneath the low of the opening day, and then the stock comes back. Then the IPO comes back. So let's go back to Wolf so you guys don't think I'm crazy here. Look at Wolf. What did it do here, guys? It broke this line right here. When it broke this line, that's really when I would have started paying attention to it. because the undercut and rally comes into play. And that's what I'd be looking for. Let's look at Airbnb. That's what's the ticker for Airbnb? I don't even watch this one that much, but ABNB. All right, there you go, guys. So let's take a look at one of the bigger ones. What did it do, guys? Opening day, cut the low. It cut the low right here, and then what happens, guys? Hold, rally. This common pattern that we're seeing, and so I just wanted to point that out so that people can start seeing that. What's the other one? Dash. Let's take a look.
Dash.
What happened, guys? Cut of the low. This whole area undercut in the low. When it reclaims that low, you get that push. You get the driver set. This is what I look for, guys. And to find patterns, you got to be looking at those charts. Charts. And one of the things that I like to do is start like telling myself like, okay, so now I see this pattern. Let's see if the next IPO repeats it. And so that's called like identifying the pattern and then testing the pattern out. Not testing it by money, because you don't need money to test these patterns out. All you need is the charts. New chart to start, a new IPO, see if it undercuts, see if it comes back, see if it holds that level clearly, and then you can start looking back at all the data and see like, hey, so Wolf did it, Airbnb did it, Dash did it, boom. And next thing you know, you notice, hey, 9 out of 10 of these stocks are doing it. So this pattern happens 90% of the time. Now I can start attacking this. And so that definitely can start leaning you towards finding patterns. And we do this for SPACs, guys. We look for the first wave before, like at the announcement, and then we look for that merger, that definitive agreement to come out, or some rumor to really drive it. And that's where we really seen a lot of the value in. So to kind of give touch to that, that's why Chris and I say to get close to that $10 price point, right, Chris?
Yeah, exactly. It's about finding those entry points. That's what we're trying to do here with the knowledge. And, I got to remind people. So we have an interview tomorrow, right? Another CEO interview. So we have Patty Cook coming on from Finance of America, going public with RPLA. And, if you look at that chart, this is one that's trading below 1050, and they have an announced merger deal. And it's actually trading below or close to net asset value right now, because you get the $10 plus interest. So this is one where, you gain if this deal goes through, because I think it's a great company in the long term. Or, if you don't agree with it, or those shares, the deal doesn't go through, you actually make your money back. So you have very low risk right now. So instead of chasing these SPACs up in the $15 range with no deal, you have SPACs trading under 11 with no deal, or in this case, you have one with a deal trading under 1050. So know your risk, know your reward. So are you going to make as much money off of RPLA as maybe you do off of an electric vehicle company? Probably not. But is your risk lower? Absolutely. So risk reward, guys. And, that's why I know Mitch owns RPLA. I'm looking at getting into this one, but I don't want to buy shares until after our interview tomorrow. Just because I'm talking about it right now. But, this is a great long-term one, again, to play that mortgage market with the Rocket and the United Wholesale. And as we'll find out from her tomorrow, they're in several areas, away from mortgage as well. So I think there's some growth there. So risk reward, guys, that's what it's all about.
Yeah, definitely. We actually got mentioned of a question there by Siggy. He said, where do you start with SPACs? A lot of it is like kind of this led up to its movement. And so one of the things that we've noticed is before we kind of noticed that you could have got into these on the rips and kind of measured your risk and maybe been quick to the media, maybe faster than the news coming out. But one thing that I've definitely noticed, I don't know if you noticed this, Chris, is that I've seen lately, I can't catch those rockets, but one thing I can do is get in near that $10 price point and just sit and be patient. Because when you're patient, at least you understand your risk. I was talking about this, and shout out to my man Carl in the chat. I was talking about this yesterday with him on the phone. I said, one thing that I do in RPLA is not stress. I don't stress about this position. I really don't. And there's not many positions in life that you're going to be able to look at in your account and not stress about it. Why do I not stress about it, guys? Because I'm so close to that $10 price point. And because of that, I understand my risk. And when you understand your risk truly understand your risk, that's when you feel comfortable. And so a clear definition also, when you're super uncomfortable in a position, maybe you have too much in that position and you need to reassess the emotions in there and why you feel that emotion, that high increase of emotion in that position of focus that I need to watch this position like a hawk. I can't let this go down. I can't let it go down. And the truth is, my SPAC portfolio, guys, I don't know about you, Chris. I just look at it at the end of the day. I don't have to look at it intraday. I can relax because I know where my entries are. I know my plan of attack, and that's what we do, Siggy. That's what Chris and I like to do so that we can get in at the best pricing. I mean, and just sit back, relax, and enjoy the SPAC show because that's what it's all about. Get on the SPAC train. Where's my man Choo Choo in the chat?
Yeah, he was in here. Mitch, if you pull up HOL, so if we want to talk entry points, maybe on a deal, right?
All right, let's touch this one as our last stock. Let's get to this one before we get to news desk update.
So HOL announced that space deal, right, with Astra. So the other thing we're seeing now is with these new brokers, you can get trading done at 4 a.m. in the morning on some of them, right? Mm-hmm. So these deals get announced. And some people can buy before, everyone knows about the deal. So if you look at like HOL over the last 5 days, this thing rocketed, right? It's a space stock, rocketed up on that deal announcement. And then by the time the market opened, it was, trading down from those levels. And then we talked about it on the show. I said, that I set a limit order for $14. It didn't get filled. But really, if you bought in, you could have bought a couple dips there on that first day before this thing rocketed higher. So don't buy, right on that news announcement. It more than likely will come down again. We're seeing that over and over, right? It rockets up on the deal announcement or the rumor, but then some people are comfortable, selling and taking profits. If you bought HOL at $10 and it rocketed up to, 18 or 16 on that announcement, maybe you take some off the table or maybe you sell out of your position and move elsewhere. So then shares start going down and people can catch this on the dip. So watch your levels and know your good entry points. And that's what we try to teach here on the show.
Yeah, definitely. One thing you can clearly see is a clearly defined support after that washout. So it washes out, right? And then reclaims the low here at 15. Once it reclaims that low, you're starting to see it back into this kind of trend here, back into this zone. And so once you get that, you're looking to see volume. And what did you get here? You got in this one candle, you got 2 million shares traded there on that 15 minutes. And then that really gave it that kind of drive up that you start seeing. One thing you want to see is can it hold support and create support after that? That's really when you start seeing kind of this line across. One of the things that you start seeing is can it get above that line where it closed this kind of wick out and really start getting some volume. So today you can clearly see right out the open, 9:30, what happened? It broke that level and got volume to really push it towards the next spot. And that's a lot of times what you're going to see. To get through the resistance is needed this kind of volume bar, like 2 million shares traded on both of these pretty much. So definitely keep an eye out on the space trade. Astria is definitely one of the ones that I was looking at. I even had this company as one of the companies I was following on Twitter. So definitely super excited about this deal. Too bad I'm not in HOL, because if I did get into this one, where would I have gotten in, guys? I would have gotten in back when it was at $10. Because if you could have got in there at $10 and been sitting there, let's say 10.18, even if you got in on this spike and you got it like a 10.40s, 10.30s, at least you have a way to measure your risk down and then wake up one day with the stock up here at $16, $18. And that's why we keep telling you guys of this approach, because this is a managed risk approach that you wake up and sometimes into the green. So definitely, guys, that's why we do what we do, guys. We want to keep bringing you guys the information, and that's really what it's all about, guys, because if we're not bringing you guys the information, then you guys can't make informed trades. So definitely, guys, if you guys want to give us some love, let us know, you know, in the chat. If you guys look up or the description below, you guys can find our Twitter and hit us up after. And one of the things that Chris and I like to do is definitely talk to people after the show. You know, we look at SPACs all day long. So you guys let us know, hit us up. We'll let you know what we're looking at, let you know what we think. At the end of the day, we let you guys make your own investment decisions out there, but we try our best to get you the most information so that once again, and I'll say it, there's no average Joes here, guys. No average Joes. So definitely smash the like if you're getting value from the SPAC Attack. Let everyone know where the show is to get all this SPAC knowledge so that, hey, everybody else can be informed. Chris, anything else?
No, that's it. Again, remember, interview tomorrow, RPLA, Finance of America, CEO Patty Cook joins us on the show. We'll be on at 11 a.m. Eastern time tomorrow. So, and stay tuned. Great lineup of shows again today on Benzinga's YouTube channel. So don't go anywhere. Smash the like, hit subscribe, and stay listening all day, you know, and learn more from some of our great team members here.
All right. Now, it looks like we're going to be bringing on the news desk team. So I'll go ahead and I'll give my goodbye here with our lovely show outro. And we'll see you guys next time on the SPACs Attack.
Bye, everyone.
All right. So my man Steve's going to take over here. You guys seen him yesterday. I know he probably has a lot to tell. So, hey, get to those lovely headlines. And there's no better way than what?
Benzinga Pro.
You got it, bro. Why do I keep doing that? I gotta
steal my
step up
thunder.
my game here, yo.
Steal my thunder here.
You know what? Remove me.
Hey guys, how's it going? All right, can you guys see my screen? There we go. All right, so I got some headlines here for you, especially in the last few minutes here. So the first one I want to highlight is Google is discussing a new Android app privacy policy. In a dispute with Apple, they're exploring alternatives because Apple has updated their privacy policy, and they have basically, you know, we're going to start seeing a Goog and AAPL, you know, privacy battle coming up here. So that just came across the wires recently. Also, Eastman Kodak. So here's a type of news item I really want to highlight with you guys. Patents move stocks. Plain and simple. And Benzinga Pro is amazing at getting them as quickly as possible. So let's pull up this ticker. AODK, Kodak, Eastman Kodak. And look at this here. Look at this spike right here. This is when this patent news was announced. Eastman Kodak granted an Australian patent titled Foamed Opacity Elements and Methods of Making. You know, I have this search up here in Benzinga Pro. And you can see Eastman Kodak got a patent. Let's see here. What else we got? Adamas Pharmaceuticals issued a patent. Look, there's a move. Oh, where is that? Was at 9 a.m. Yep, you can see a little spike here when that patent was issued. We got those two for today. It looks like we got Sologenics. Sologenics had a patent as well. Yep, 1022. So definitely a search to keep going all day. Is patents. Patents. They move stocks. And if you want to hear it in real time, you should turn on your Squawk and get Charles, Brent, or I reading you the news out loud. Charles and I have a competition about who can get patents out faster. It's an internal competition, but we beat everyone else. So make sure to get that Squawk and search for those patents. We had some earnings this morning. Yum Brands had a beat of $1.01, beating those estimates. Sorry, EPS of 115 and beating that $1 estimate. Penn National Gaming, and I wanted to highlight this one because, again, the stock is up 5.7%. It missed the estimate and it missed the sales. But you know what? Sometimes the fundamentals don't matter, and you just buy it. That's been happening a lot this market, where stocks have been ripping on bad earnings. Can't really explain it, but Penn National Gaming is one of those. And then another one that just came through the wire, Nordstrom. I know, what an old company. JWN. So Nordstrom was halted on news. And they put out a statement with a ton of guidance. And it was, usually you don't see big moves like this in an older company like Nordstrom. But look at that, at 1148, moved right here on it. So let's see what we can get through for some of these numbers. So there says they're seeing their sales up 25% year over year. That's good news. They said they're seeing long-term sales growing in low single digits annually from 2019 levels. So maybe not good news. Again, a series of headlines here from our team putting out the guidance on Nordstrom. What else are we seeing here? Patent, you like the patent? Yeah, the patent news is the best. Let's see what else we got in the chat here. I'm going to see what other headlines we've had recently. So Microsoft identified a drop in availability for service. So they're working on the issue. Again, things that can affect a company. I don't think Microsoft would probably move on that. Nope. Looks like no volume there in Microsoft. But still an important news to cover. Yes, GM. GM had news recently. They're investing $75 million in a Toledo, Ohio transmission plant. That off the news yesterday. Let's see if I can find it. That off the news yesterday that they were tooling down some production because of a semiconductor shortage. Here we go. This from noon yesterday. They're expecting strong. Oh nope, that's from Nigerian right there. Here we go. GM fell 2% yesterday because they're going to have a semiconductor shortage this year. So GM's out with some positive news today off that negative news yesterday, and Ford also, ticker F, had similar news today. Ford is curtailing its F-150 production. Again, chip shortages hitting the auto industry across the board. What else do we have? Let's check our contracts for the day. You know what? Actually, here's a way you can filter your newsfeed. I'll show you this. This is a good BZ Pro tip. So under sources, you can uncheck Benzinga Wire and you go to categories. Sorry, sectors. Yeah, categories. Where's my news? News. And then you got this whole host of things right here. You can select earnings, contracts. Let's go to contracts right here. So we got some contracts right here. MGPI reported a partnership with RNDC. Let's see here. When was that? 11 a.m. Do we see a little move here from that? This is not a high volume stock, but SKZL. Oh yeah, look at that ripping on the open here. That must have been out earlier. Let's see here. Dollar Tree. Here we go. Dollar Tree contract. Dollar Tree is partnering with Instacart with Family Dollar. Look at that. Look at that 10 o'clock news spike. Classic news move here on that contract. We got Twilio at 9:32 right off the open. What else are we seeing? RSI was at 8 this morning. Oh yeah, there's some movement there. You can definitely see that. Look at that big green candle right there. Some news movement. What other categories should we search today? How's everyone doing in the chat today? You guys excited for Luke? You guys excited for the halftime show? The midday show? The Power Hour? Let's see here. So if you want to look solely for patents, we file them under legal. And so we got that Kodak one. We got, Rhinebeck receives regulatory approval. This was at 11, and look at that, green candle, 11. Looks like the stock's been fairly quiet since then. Yeah, we SNGX, Sologenics, 1022. Yep, we got that right there. That legal news. Who am I, Aaron Bry? I'm Steve Krause from the news desk. All right, so we're getting into some patent news from yesterday, but again, I want to highlight some of those moves. So 8:30 yesterday, Enzo, let's see. Enzo right here. And Enzo had some big volume yesterday, right as that patent news hit. Look at that, all that volatility right there in the patent. Let's zoom in on that. This volatility right here. Again, shares trading flat, but up 4% for the day, likely on that yesterday patent news. Oh yeah, let's take a look at SHIP. It's a good one. C Energy. These guys, let's see. Yes, they had a tweet out today on China's steel output. Let us see here. CHFS submits patent application 8:03 yesterday. Let's see here. Whoop. CHFS. Look at that. Classic news move. Look at this. 8 o'clock. Look at that. That's when the patent hit. Look at that volatility. And it's back trading essentially flat here. Hey, Luke. You here? I see you in the chat. Where you at? What's going on for
Yo, what's up?
What's going on for the show today?
All right, guys. We are, is this the handoff or
this is the handoff? No, well, okay. It's both.
All right, this is the handoff and the tease. What's up, guys? We are back at it for another Power Hour.
Well, is there music? Do we have an intro? Like, what do we got here? I mean,
I know. I want to get hyped up. I know.
Where's the music?
Quietly by myself. Let's play something.
There it goes. All right, we're gonna do some soundboard.
There we go. Yeah, Epic Sex, man. All right, guys, have a great show.
Wait, what did you just say, Steve Krause?
What did I say? I said have a great show.
No, you said epic what?
Epic Sex, man.
Oh, I thought you said epic sex. I was like, what the heck?
No, Epic Sex, man. That's the song. It's like from in the mid 2000s. No, it's not Bill Clinton.
All right. I honestly thought you said
it's Eurovision. One of the like.
Oh,
the guys.
I know that. I literally thought you said epic. I literally thought you said epic sex, man. And I'm like, he said that so. He said that so naturally. Maybe I'm like, maybe I'm such a prude, and I'm like, I should be so like a little more, whatever. And then as you're talking, this guy Tiny Pie Media said he'll make an intro for us. We would love for you to make an intro for us.
Yeah, let's hear it.
Power Hour at benzinga.com, and just make sure it starts out with epic sex. Okay.
Epic Sex, man. Yep, Epic Sex, man. All right, guys. All right. Have a great show.
Start with that. Doesn't need to start with that. I got over that yesterday. All right. Peace.
Bye.
Bye.
All right. Yo. What's up? Should I hit the agenda?
Yeah. Get your thing going, and
all right, guys.
And then we'll tell them who we saw last night in a minute.
There we go. All right. I am starting today off the way that I start every single day, which is remind you guys what the point of this show is, why we are spending this time on the Power Hour together. We want this to be the best trade idea resource out there. If you guys are not getting trade ideas from this show, tell us, shout it out in the chat, throw your ideas out there. We don't want ideas to just come from myself, not just from Jason. But most importantly, out of all of you in the chat, the main chat that we use for this show is YouTube. So if you're watching on Twitter or Facebook or somewhere else and you want to join the party, just come over to the Benzinga YouTube channel. All right, guys, stocks that we are going to talk today. We're going to do PayPal, Nokia, and Ford right at the top. We're then going to bring on 3 guests. First, we're going to be talking trading penny stocks and SPACs. Next, we're going to be doing a deep dive into options, getting into some more advanced option strategies. And then we're going to be talking crypto. So we're pretty jam-packed for the day today. And of course, we do our chat challenge on this show every single week, guys. This is Zinger Nation going head to head to head to head to head. We're trying to figure out who is the best trader in the chat. Who should we be listening to? Who should we be fielding ideas from? This week, we asked the question. We asked everybody to guess on Monday at noon. We said, what is the price of Bitcoin going to be at this time on Friday? Or oh, God, I'm a week off. What's the price of GME going to be at this time on Friday? And it's not looking good. I think maybe the the lowest guess might be below where it is right now. I don't know. We'll have to check that. So we'll do that towards the end, guys. If you missed it, if you didn't get in on the action, then come back Monday. We'll be doing it again. And we'll be, of course, throwing out some prizes. But all right, guys, without further ado, let's hop in and talk some stocks. And give me a sec here to just scroll, see what other names you all threw out. All right, so we got CLOV, United Wholesale. Let me jot those down. Any other tickers we should talk about today? I think we'll have time. But any other tickers that we should be talking about, drop them in there. And we'll try to get to them, guys. But first things first, starting it off. Let me share my screen here. All right, I'm starting it off with PayPal, ticker PYPL. And I got to ask you guys, if you guys followed me into this PayPal trade, we've been talking about this thing for 2 months. Throw me the 1 in the chat. If you didn't, throw me the 2. I'm curious out there if Zinger Nation got into this PayPal trade with me. And so far, we are looking pretty damn good. Here's the chart up on the screen. This is a 2-day chart. By default, I'm always throwing up 2-day charts because I like to see all of the extended hours action, both from the night before and from the morning. But PayPal, we had earnings out last night. Our thesis for getting into the stock was that they would drive some additional revenue and net income based on the crypto surge, crypto mania that took place in Q4. I'm just scrolling back to the numbers here. So, all right, here are the numbers. They reported EPS of $1.08 versus a $1 estimate. We had a revenue of $6.12 billion versus a $6.09 billion estimate. So more or less in line, but they guided really strong. They had really strong guidance, confirming our case, our thesis that this is still a growth stock. We got up to highs of 275 earlier today. Now sitting around 264 in the stock. Our average price from when we first pitched this thing was $219. So let's do the quick math. 219. So I think we're up about 20% or so. So look at that. Yeah, we're up 21% on the PayPal trade. Again, the thesis that we were waiting on was, I think that they're going to blow out this next earnings report because the stock is not moving as crypto is rising. That's why we initially pitched it and bought it in the live portfolio. Now that the thesis has played out, I'm going to go ahead and put a stop order on. So let's see this here. So I'm going to go press my trade button. Ticker PYPL, sell order, the right account. All right, so we're gonna put this sell order down on PayPal here. We're gonna make it a stop, and our stop price. Let's go ahead and set that. So we're gonna stop out at the low of the day. So if the stock gets to 261, that's when we're going to go ahead and stop out of this PayPal trade. Otherwise, we're going to sit in it and let the momentum ride, right? We are in a hot market now. I mean, S&P has been up these past several days. So PayPal, I'm going to go ahead and throw that stop order in there. Let's submit it. Quantity, let's move that back. 261 is the price. and then we'll just continue to watch it. So there's the sell order. It's sent out there. Again, a round of applause, everybody who got into that PayPal trade with us. We're 1 for 1 so far in earnings season. And again, if the momentum rides, if the momentum carries the stock, the trend is your friend. Let's let it keep riding. If we look at a 1 month chart of this thing, you can see it's been a nice little climb. So I'm not just going to go ahead and sell right away. I never just go ahead and sell right away. I always put those stop orders on there. And so that's the move with PayPal. The other one that we have to talk about today, I said we would do Ford and Nokia right at the top. So Ford, looking strong, nearing those 2-year highs that we saw right around the $12 level. The stock is reporting earnings tonight. This is our long-term pick, our pick of the year. So I am sitting in this one through earnings. I own both the stock and I own the calls. The calls that I own are way out. They're January 2022, so I don't necessarily need to see action right away. But what we're looking for in this Ford report is, of course, we want to see strong sales. Like you do an INI report. But I want to see some highlights in the company talking about their EV platform. If they talk about spending more money on pushing their EV platform this year, I'm going to get longer in Ford. But again, I'm hanging out through earnings, and we're going to see how that one goes. And then the other one that we had to talk about that reported today, Nokia. I was cautiously optimistic that Nokia. This one, of course, this is a 1 month chart on Nokia, right? I was cautiously optimistic that Nokia would see a pop off of their earnings results. I was also hopeful that they would take advantage of some of this momentum that the stock has had. Address it head on, talk about, hey, how are we using this momentum? I don't know exactly what it is, but the stock's selling off after earnings. I think that if you guys are still in this one, I think, it might be time to walk away from the trade, especially if you've been holding the bag from way up there. But again, sorry guys, anybody who's in Nokia. Oh, my soundboard isn't working. Dang it. But anybody who's been hanging out in Nokia, I think it's a tough time for that one. And Jason, what's up? I see you.
What's up? Your soundboard's not working because Aaron tied some wires together. We have a camera that in the ceiling that's going to be shining on us and zooming in, but I'm trying to download the software so I can control it and zoom, and it's not done yet. So that's the issue. We have some new technology being unveiled today, and then a lot more technology being unveiled tomorrow. But Luke, that's why your soundboard is not working. So I basically disabled your soundboard in essence. Okay.
Yep. Okay.
Are you mad at me?
I'm a little pissed. I do the show for the soundboard, guys. Come on now. And a question in the chat, does Luke chug energy drinks? Yes, he does. I wouldn't be able to talk this fast without him. But all right. I want to take another
Luke, it's my turn for just a second, okay?
Okay.
Just for a second, okay? So there was a trade a lot of people made. There's some trade in their chat room people were making yesterday, and I really want to talk about it. It was at the UMC. It's a wholesale mortgage technology company or wholesale mortgage company, and UWMC. I said UMC, it's UWMC. And there was a lot of energy to buy before earnings. I talked about buying before earnings. And when a trade gets really crowded and everyone's expecting something, then sometimes the expectations make it difficult to see a rise immediately. It happened with Apple's earnings, okay? So UWMC had blowout earnings, but the stock sold off. So yesterday it rose ahead of earnings, so it went to like 11:30. Today we're down 9.3%. I was in the chat room last night at 4 o'clock, and I said, guys, or 3:30. I'm like, guys, there's so many people that are talking about it. You got to be careful when so many people are getting into this because they all have the same expectation. Sometimes it will not play out the way you envisioned. It's not to say that UMWC doesn't go up over time or what have you, but look at the trade, look where it was at, and look what it traded up ahead of the market, ahead of the earnings. And they had great earnings.
This is a 1 month chart that I've got up here, guys. I'll switch it. Here's 5 days, so you can really zone in on some of this pre-earnings trading.
So as much as it made sense for them to really destroy earnings because the mortgage rates are low and all that, sometimes the market is not going to follow that thesis as quick as you would like it to. When Apple had blowout earnings, it sold off. So when I was making a trade and I saw people get into it, and then I saw it head pre-market, not pre-market, head before the earnings, I sold some off. played a little bit of earnings. And if it went against me, if my catalyst doesn't work, guys, I get out of it. Or I don't, I get out of my reason I'm in the position. You guys know I bought some other stocks yesterday. I mean, I bought, Luke, I really think it's really important for the Power Hour where we bring trade ideas, or the we have the Biotech show. Yesterday in the Biotech show that we have at 2:30, so it's 2 hours from now. Her name is Viv, and she gave a symbol KMPH. Luke, can you pull that up? K is in Kentucky, M is in Mary, P is in Peter, H is in Henry. That stock is up 11% today. I bought a large position in it. I bought a large position in it yesterday on the show live. She was talking about it like crazy, and she said, I still didn't miss the rally. So I bought a large, it's one of my medium-sized to large positions, okay? That's one. Yeah. The other stock.
And for any of you technical people out there, the chart still looks amazing. I love that it's rallied off of these lows.
Okay, and so Luke, she gave that the 2:30 Biotech hour, but and then so that I mean, how you can't be any happier than that. Okay, another stock, Luke, that I've been pounding the freaking table on, and Luke and I saw him last night at dinner. We saw El Prez, Dave Portnoy, at dinner last night. His stock, Dave Portnoy's, is at 117. I don't know if the soundboard's working because I screwed you up, Luke, but maybe we'll be ready for later. 117. 117. I mean, we bought that at 10, then 30, then 60, then 90. I mean, my buy average is like $64, but I've been buying it all the way up until $94. Right. And then wait, well, I'm done in two. I'm done in two. The other stock that we've been talking about a lot in the chat is XERI. Now, this is a penny stock, kind of. It's at 49 cents. We bought it at 43 cents. Jack gave it to us. XERI. I don't understand the whole story on it, guys. I own it as a medium-sized position, and it is rocking. And for my final stock is Upwork, UPWK. You could have picked up some more. Billy Big D at 31, 16, 18, 20. We're at 48. This thing is going to get 50. It's going to get to 55. And Luke, do you want to debate Upwork right now?
All right. So I'm gonna give you one, and then I'm gonna take one away from you. The thing I'm gonna give you is you always told me I need to use Waze in the morning. I don't. This morning it took me 90 minutes to drive to work. It was a long drive. So you're right about that one. But I'm coming after you on Upwork. I am officially a bear in the stock. And here's why, right? Upwork is like a contracting platform. It's a tech platform to connect contractors to businesses. The companies had 24% year-over-year revenue growth, right? Which is fine. That's not a crazy growth story by any means, but it's got 24% revenue growth over the course of the year. And the world is going back to normal, right? The vaccines are rolling out. Companies are starting to reopen. I mean, half the U.S. is fully reopened. I was talking to somebody in Arizona today. I said traffic is 100% back to what it was pre-COVID. And so that's where I'm at. I think Upwork is a dog. I'm officially a bear on the position.
Okay, I was trying to switch to the new camera and go live and stand up and fight you on this, Luke, but Rohan has not seen my messages. Is the mic on? Can I stand up, Rohan? Do it. Okay, I see the camera on Luke, not me, dude. Okay, well, Rohan, how can I do it? That's on the wrong person. All right. Still not on me. It's on my stomach. I mean, come on, Rohan. You're making me look fatter than I already am. Jesus. Rohan. Guys, I don't know what to do with this, guys.
People are saying, where do you live that you have to drive that far? This is where the Waze comes in. And I'm giving him credit on the Waze. I live, it's normally an 18-minute drive. Today, they closed the highway, like all 4 lanes. I don't know why. I wonder if it was like a bridge problem. Because when they do construction, they don't close all 4 lanes. I mean, shit's ridiculous. So yeah, they closed it all. And there it is. It's Ruel. Ruel was the one who tipped me off, said Arizona is 100% back to it. But yeah. All right. And I'm not gonna let Jason get credit, be the only one who gets credit for all the picks. I mean, we were talking PayPal for a month and just ripped that one today up 20% since we opened the position, closing that one out. And then yesterday, guys, I pitched a new stock, HIMS, ticker HIMS. We got 5% on HIMS today. Basically, this one, it's a sexy telemedicine brand, right? There's like a lot of these companies are like, we're a telemedicine company and we're making this push into telemedicine. But like they're not tech companies that are doing this. HIMS is a tech first. It's a marketing first brand. They let you get prescriptions with the online consultations and that sort of thing. So HIMS, that's a position that we added yesterday. There we go. Jim Lee in the chat saying he got into that Hims gang with us. All right, we're riding Hims out. I did sort of small position because it is a small stock. But there's the deal there.
All right, Luke, can you hear me?
I hear you.
Okay, I'm echoing though. Rohan? All right, so Luke, I'll tell you on Upwork. My feeling is this. My feeling is contractors, remote work, people around the world, we're more connected than ever. Well, how do you connect? What is that bridge? There's a company called eBay. Pierre Audemars founded it many years ago, Luke, and he put people together on this network, and people bought and sold goods. eBay became one of the most valuable companies in the world because it connected people. What does Upwork do? It connects people for work. eBay connected for products. Upwork connects for work, for doing design, for helping around the house. I mean, just a million things. Upwork is here to stay with us. It's undervalued. It's going to be at $60. I will buy your shares that you're going to sell to me short today. Are you selling to me, Luke?
I'll tell them to you, because here's the thing, right? The Upwork just had the best catalyst in the world it could possibly have. I mean, it might even be behind the whole thing. Okay, that's conspiracy. I don't actually think that. But COVID is the best catalyst that Upwork could possibly have, right? Where everything shuts down, people have to go to remote, etc. As people get back into the offices, they're going to want to hire locally. They're going to want some of that human interaction. It's not going to be this mass contracting world anymore. If they can only put up 24% revenue growth with literally the best catalyst that they could ever have as a company, I don't know how it gets better.
Okay, so I hear you on the revenue growth. I think the barriers to entry and getting people on the platform is not as easy as you would think. But once people start using the platform, Upwork becomes one of these sticky things that when you need something done, you can go to it. They're going to come out with easier tools to get things done. For example, I would pay more on Upwork if they had a feature where they had certified designers. So you want that certified designer for Benzinga to create that analyst ratings page and improve it. They have that thing there. There's a lot of innovation that I think is there. One of the reasons I bought Express Spa, Luke, is because of that. Express Spa is very expensive when you go into the airport and you want to get a massage. They should create a monthly membership plan for $19 a month, just like you wouldn't use it all the time. They would have a lot higher margins. I told the audience when Express Spa was at 60 cents, I said to the audience that I want to buy the company entirely and change the whole pricing model. I think we could redo it and make it amazing. So that's my take. Agree to disagree with you, Luke. Upwork, the jury's out, but we are up 100%. Wait, Spencer, something's wrong with Spencer Israel. What's wrong? Get Spencer on. He's crying over there. What happened? Put the camera on Spencer. Something's wrong. Should we put him on? Spencer's crying over here.
Spencer, go on with Jason.
Spencer,
we need to get your take on this Upwork thing.
We got to see what's going on. We got to know. Come on. You're helping him. No, he doesn't need a mic. He'll use my mic.
We're in Detroit.
Come on, hurry up, Spencer.
And I want to throw this one out to Zinger Nation, guys. If you're Jason, mute your mic when I'm talking because we're hearing it twice. But I'm throwing this one out to Zinger Nation. If you guys like Upwork, if you're long this stock, you're with Jason, throw me the one. If you're with me, you think that they had the best catalyst in the world, the jig is up, there's no more growth to come, throw me the two. I want to see where everybody's at on this one. And now let Spencer cry into the microphone.
This is Spencer Israel. You would call him like the serious one, the guy that cuts the show early. You can't mess around with him. He's like a rule follower. So when you see speed limits in your neighborhood and it says 45 miles per hour, you're not going to see him going 47. That is Spencer Israel. If he goes to the movie theater, he's going to look around the arena, make sure everything's good. He's going to be separated. That's Spencer because there's a bad ozone, right, Spencer? Okay, so what? Hear me. So what? Well, I'm going to get you on. So tell me what were you laughing at or crying about?
No, I'm just trying to help Rohan use this new camera. That is amazing new camera we got. It's super fancy, and I'm just trying to get the best picture. So, for example, not zoomed in on your torso. We don't want that.
It was zoomed on my torso again?
Not anymore.
But it was?
Yeah. Yeah.
Okay.
And it was a little bit lower than your torso. He was laughing at
it was
other
lower
parts
than my torso. All right.
So getting the door out of the shot, for example, the bathroom side.
Yeah. Well, see, Rohan was here till like midnight working the camera. So he was here like till midnight, So I thought he had this under control, but it's okay. It's okay. It's a second day, and I know we're getting smacked, but this is Spencer Israel.
Right.
Spencer, to say one more thing.
What's up?
Where are you from?
New Jersey.
Okay.
The armpit of America and my favorite place in the world.
And who do you think's gonna win the Super Bowl?
So this is my hot take. The Chiefs are going to win, and at the post-game press conference, Tom Brady's going to retire. That's my hot take.
My hot take is Tom Brady's going to win because Tom Brady cried to me once, and that's a true story. I'll tell it later. And I think Tom Brady will win, and Mahomes won't. Then again, my flag football team is the Chiefs, so I think the Chiefs are going to win. What's wrong, Spencer? Now what's wrong?
I don't even care about either of them. I care about hitting Upwork. Let's take this ride from 48 to 30, and then the stock will be valued.
Luke, what are the rankings?
It's a pretty mixed bag. We got a lot of 1.5s, but otherwise it's a pretty mixed bag. We need to get better with our surveying, right? So producer Rohan, let's get this set up where we can be dropping in these questions. Then as users vote, it tallies on the screen. That's when we're getting somewhere, and that's when Zinger Nation is really going head to head. And are we putting in bets? Yes, we put in bets every day. That's trading. How's that? All right, and Jason. All right, let me. All right, I'm going to make an ask to the community. I'm going to make an ask to Zinger Nation out there, guys. We are trying to bring this thing all day. I just made a survey. While you're watching, fill out this survey. It's got one question. It says, what programming are we missing? I want to hear the number one thing that you want to see from our all-day video programming, right? We're trying to run from 8 a.m. to 6 p.m. right now. Within a month, we want to be 8 a.m. to 8 a.m. That's right. We're going 24 hours. Drop in just one line what you want to see. Is it an option show? Is it stock picks?
Can I spill the beans on some of the shows, or you don't want me to do that?
I don't want you to buy Upwork, but you just do what you want.
Well, here's the thing. We're at 909 likes. If you get us to 1,000, I will tell you 2 of the new shows that yours truly and a special guest that you guys like a lot that we're starting. 2 of the new shows, but we have to get to 1,000 likes for that. Oh, you want the story on seeing Portnoy last night and me going up to his table and sitting at the chair when he probably was like, what am I doing there for? But anyways. Okay, so Jim Match, you wanted to leave a review, but you couldn't find a place in the option newsletters. Go to Google. There's probably a local review thing. You can. Okay, Luke, I'm ready to tell one of the shows. I'm ready to tell one of the shows.
Wait, did we get to 1,000?
Oh, sorry, you're right.
You get to 1,000, baby. And
right,
shout out to Warren in the chat saying Ford commercials talking big game. Ford earnings tonight. And guys, I think I just fixed the form. Click on that forum, see if it works. Again, I want to know what's the one piece of programming you want to see every day. And Jason, I've got another stock to go head to head on you with. I didn't give you a heads up on this one.
Go for it.
PTON Peloton. I believe earnings are after the close today. Let me get a quick confirm. PTON. All right, Peloton up 5% today into earnings. Stock over the course of the past year, it's gone from $33 to $155. It's pretty much at an all-time high right now. I don't like this stock. Might they have a good quarter? I think it's possible. But for the long run, I think that fitness fads are exactly that. They are fads. They are not here to stay. I'm bearish on Peloton too. What happens tomorrow? I don't know. If the stock pops tomorrow, I promise you on this show, we're hitting it with puts. Jason, where are you at with Peloton?
I'm so angry at you. I don't even know what to tell you. Honestly,
bring it on,
guys. I am so angry. I want to switch to the other camera. I need to stand up for this. This is terrible.
Go on. We're going to the other camera.
Hold on. I got an idea. This computer goes up in the air. Hold on. Let me try that. 1 second. Hold on. Just guys, don't hang up on me.
Yeah, Zippity in the chat. I need my effing soundboard. Zippity's with me. He does not like Peloton. Because again, fitness fads are exactly that. They are fads. They're trying to do this SaaS fitness model. I'm not buying it.
You guys, I tried to go higher. I will try to go high. Luke went low. I don't know what's up with that. Yeah, I am rocking the old logo because there's a swag store, swag.benzinga.com, and it's almost stuff is sold out. I can barely get anything, and I can't get the new stuff. So I have the old logo on, and that's it. Polo. And here we go. But let's get to the debate. Let's get to the debate and stop the bullshit.
And I'm going to drop both of our Twitters on the in the chat here, because as soon as those Peloton earnings come out, we are going to be duking this one out.
And Luke, we don't have 1,000 likes yet, so I can't get to the other shows that I have in the works. But I know I look bad staying up this way, but let's just get to it. Peloton is a winner. Peloton is a winner. It's been a winner, and it's still going to be a winner for a long time. Why is that? Because why is that? Because it's a social community now. When you talk about the one thing going to the gym, they bought Precor. It's a social community. I guarantee they're gonna put the social elements to the muscle stuff. Luke, you can lift some weights, okay? You for sure can lift some weights. I need to work on my weights. But really, you don't compare how much you're lifting to Andrew Labos. You don't compare it, Luke. You know why? Because there's no system in place for it. I will personally guarantee you, when Precor and all that stuff gets integrated, it's gonna become a social component. Peloton is going to do what they did to cycling and the treadmill to the weight industry. Peloton is not over yet. The biggest mistake that Apple has made in its career, or not in its career, there's several, but one of them, I mean, they're a great company, obviously, but one of them is they should have bought Peloton when it was at $25. They want people to come to the Apple store. Peloton's an experience. It's a software unit, basically. They should have bought Apple. Jason Calacanis, who's early investor in Uber. He did screw up with Mahalo. He did screw up with Inside Newsletter, but he's Uber and several other companies, one of the most sought after venture capitalists, Chamath Boy. He came up with this idea about Apple buying by Apple buying Peloton. And yes, Luke, the stock has risen gigantically. I've owned it since 40, and I sold a lot of it. I still have it. I don't think we're seeing a sell-off from 160 to 120. Am I telling the guys in the room right now to go buy Peloton right now? If I don't own Peloton, I like to dollar cost average. If I'm going to buy $10,000 worth, I'm going to buy $3,300 worth today, $3,300 tomorrow, or a week from now, and that's what I'm going to do. So I disagree with you. Peloton is here to stay. Luke, you're a dud.
All right, I'm throwing this one out to Zinger Nation too, guys. This chat is so freaking mixed right now. If you guys like Peloton, hit the 1. If you don't like it, hit the 2. And again, I'm not shorting this thing into earnings. Do I think they could beat earnings? The stock could pop? Yes, absolutely. If it does, I'm smashing this thing with puts. I don't short any stocks that rise 400% in a year. I've done it. It's a bad place to be in. Everybody who did it with GameStop, bad place to be in. We learned that lesson over the past 2 weeks. But again, I think any fitness trend is a fad. I mean, even look at Nike's connectivity app. Does anybody use that shit? I mean, they spend so much money marketing it. And oh my God, this chat is so mixed.
Morton Wine, are you still in the room? You want the
Edward's
sports?
saying we just need to go outside and settle this thing.
Do you want to fight it outside in Detroit right now?
Yeah.
Morton wants a sports and stock show, by the way. He was there for Mia yesterday. John D wants to know where Mia is. By the way, the biotech show, her name is Viv. She literally is the one who got me in like 3 stocks, and she got me to keep my conviction for Peloton. So like, Luke, I'm gonna get a Peloton so I can, like, Patrick Lane, we'll be on the Peloton together. We'll talk. Well, instead of it's always being work, like, it's a great networking tool, you know?
Yep.
Dude, can I read you some feedback though?
Yeah, read it.
Okay, 2 feedback items.
Okay.
From Jim, I'll do a positive and a negative.
Okay.
Jason, I signed the options newsletters. The guy on the phone was very helpful. Wanted to leave a review, but could not find a place to. Keep up the great work. Okay? So don't get too excited. Chris D, KRISD. I love all the Benzinga crew, but when Jason gets involved, the show goes to shit.
Yep. I mean, we all think it.
I won't deny it.
You know, Chris is the only one who had the gall to say it.
Yep.
I
agree.
But all right, shout out to the. I'm gonna address them both. So the options newsletter, guys. If any of you trade options now, or you want to trade options, this is. I just dropped a link in the chat. This is from Nick Shaheen. He's the person that I learned to trade options from 5 or 6 years ago now. I mean, he is literally the best. What the newsletter is that Jason was just referred to, and we never talk about our products. We probably should to actually make some money off of this instead of just having fun. But
breaking news. Tiny Pie Media said, or someone said, Jason, you're the best, and that guy's a nut job. And they, you know what they make fun of me the most about, Luke? I basically only read the negative stuff. Like I only read when someone rips on me, and then like look at how many comments they're are nice to me. But I guess I do read the negative stuff.
Wait, but all right,
Chris,
I said I would address both.
Chris D goes, you make great calls, but I feel the circus at times. Yeah, I mean, so Jim Cramer's show, Chris D, this is what I'm telling you. When it started Mad Money, everyone ripped on Mad Money, ripped on it. They said it's like a circus. He's hitting buttons, all that stuff. But Chris D fails to recognize this. Finance can be a boring thing, the stock market. So you have to make it fun. You have to make it interesting. Honestly, I wish when I was sitting here right now that if I made a mistake, someone poured like orange lava or juice on me, because then you would be looking to see what's going to happen to him next. There'd be excitement. Me just talking and stocks and boring and not off the wall doesn't provide excitement. Chris, to you it may, but there's a reason why it's CNBC's Mad Money, Jim Cramer, that started 15 years ago, and they wouldn't even start the show, and he had to fight for many years. There's a reason why it's successful. You need entertainment. Maybe I'm not entertaining. Maybe I'm not funny. I won't deny that. I won't deny that. But I'm trying. Chris, if you can do it better, I'm not saying that you said you could, but we'd love to have you host a show. Because what we were trying to do at this show, and why we brought me on, we want to educate people on investing. We don't want people to lose all their money in an account. We want people to be smart and safe and take high probability bets. That's what Luke and I do. We take high probability bets. When Luke is buying New York Times stock or buying other stocks that he talks about, like PayPal or Bill, everyone ripped on Bill when the BIL trade that Luke gave is up 12% now. When we make these trades, they're high probability bets. We're not going to get all of them right. But Chris, if we just talk and just go up there and do it, we're going to lose entertainment value. So that's the story. All right, Luke, I'll shut up. So I know you have a birthday.
Yeah, I mean, I'll go into that one too. I mean, I probably, you say you get ripped sometimes. I probably get ripped the most just because I spaz out a little bit, but this is what gets me excited. But if we were trying to do the exact same thing that CNBC was doing all day, there would be no point in us doing it. There's already a solution out there, right? We want this to be equal parts fun as it is educational. We actually want it to be actionable. Right, we just don't want to be talking heads that are just sitting there and talking about news that's already happened. Right? Yes, of course we need to get the news that's already happened. But I mean, check this out. This is my live portfolio. That we show literally every single day on the show because we're actually making these moves together. So yeah, will we get criticism? Of course we will, right? I mean, if we're not, then we're not changing things up enough. We're just creating some boring ass content, and that's what we're going for.
In fact, I would love to bring Chris D on to debate this because there's times when I do shows very boring on purpose to see the reaction, and it's not good, man. It's not. So I can do it that way. I can. And you guys haven't seen anything yet in terms of shows. I will go check real quick, Luke. I know we have a guest coming up, a really smart guest. We have a very smart guest, a couple, but we're at 982 likes, so I can't give you the new shows yet. Okay.
All right, Jason, we've got a guest to bring on. I'm going to pull him onto the stream, and I'm going to ask him for opinions on our two stocks. Ready?
Go ahead. Yep.
All right. Ryan, what's up, man? Welcome to the Power Hour. Jason and I have been duking it out for like the past 30 minutes. First, we fought about Upwork. Then we fought about Peloton. Do you have opinions on either of these names?
I do, and thank you so much for having me. I'm really excited to be here. I actually come from a unique space, especially for Upwork. I was actually in the startup space with these whole the gig economy and stuff. So I got to go with Jason. I like Upwork a lot. I think it's got a lot of potential, even with COVID going out right now. They've got a lot of room to grow in the whole gig space because I think now that we've all gotten used to what's going on with COVID and staying home, I think they're going to keep bringing more and more people through it because it's cheaper. You save money on, you don't have to keep them on staff full time. You don't have to give them all the perks and stuff. And it's accessible to you. It's a lot quicker. Like Jason said, you could just reach out to them. They could fix your web page and boom, you're good to go. So I'm bullish on Upwork. I don't have a position currently. I have been watching it for a while. I do agree. I think they need to fix their margins. They do have a big issue there in terms of margins and cash flow and stuff like that. But I think in the grand scheme of things, they could be able to iron it out. They've got a lot of smart people on that team, and I'm really excited for their future.
Yeah. So, and can I jump in on what you just said about that?
Sure.
So we right now, Ryan, okay, we need a couple salespeople. So we need some people to help the phones, like for Benzinga Pro. It's sales / concierge, like helping people understand it. And so what's our typical way of doing that, Ryan? We maybe post an ad on like Craigslist or Monster or whatever the career is, a ZipRecruiter, sorry, ZipRecruiter. And then you get a bunch of resumes in that just automatically spam the resume thing. They have no, exact experience to it. Whereas if I go on Upwork, I post an ad and say, we want someone that follows the trading market that can answer the phone and explain Benzinga Pro. It is so much easier. Yesterday, there was a guy listening to the show. He's like, oh, I can do the sales thing. So I'm like, you got to look at Benzinga Pro. And then his response is like, well, I don't have the integrity to sell Benzinga Pro because I don't know it yet. Well, what's the easy thing to do? The guy should just go join it. It's free 2-week trial. And so like that person I wouldn't hire. But Upwork, you see reviews and ratings. It creates that network effect. It's like that Peloton trade, Ryan, that Luke is short and I'm long. The same thing. It's you have that reviews, ratings, and the social network. Now, me saying I'm long Peloton, I don't work out like you and Luke probably do. So maybe I'm not the best judge. And if you're listening to the show, guys, me and Luke, we're debating Peloton. We're not making a new buy or selling it today. I just want you guys to know that. We're not making that. We're debating the long-term longevity of the company. Okay, Ryan, go take over with Luke because Luke was very excited to ask you some stuff. So I'm gonna mute myself for a little bit. Okay, thanks, man. Yep,
of course.
All right, so those are the opinions on this one. And Ryan, I was excited for you to come on because when I was, my nickname, Hot Stocks Luke, right? That's what they call me around the office. I was digging into your trading a little bit. You definitely trade the hot stocks. I want to hear some of the names that you're looking at, some of the trades you're putting on right now, etc.
Sure. Yeah, I really love the big stock stuff. I got onto the whole Twitter sphere around like March. Before that I was really offline passively, but when I started working from home, it gave me a lot more time to get interactive with the community. Right now, one big stock that I got on and I put my followers onto is Hims. I really like Hims, like you were mentioning earlier.
There we go. I bought Hims yesterday. We're up 5%. Put that on. There's some air horns, first air horns of the day. But all right, keep going with your Hims.
My big daily thing is I love when ARK sends out that email at night, like around 6-7 p.m. and like I saw Hims on there, so I just jumped on Webull and I just bought a nice position into there, like really early. I got in at around like 1540, 1550, and that thing just skyrocketed. It's that whole ARK effect. It happened with Skills too. The second they bought, I've been in Skills before, back when they were FCAC with the whole SPAC. I just like the business model with the gaming and the gambling sector because that's going to be huge. So when Skills jumped on with the whole ARK Invest stuff, I was like, these guys are going to rock it. So I just added more to my position, and today they're up like a lot. It's huge. It's like blowing my mind.
Okay. And somebody in the chat is asking for the ticker. That's HIMS. Hims. Again, it's I think about this as a telemedicine play. It's like a sexy telemedicine brand. I think, right now they do like, I don't know. They do like ED treatments and stuff. Let's just jump to the point, and stuff like that. But it's a scalable platform. It's got awesome brand recognition, 91% recurring revenue, 16% account expansion over the course of a year. So yeah, I love the stock. I didn't get in it in $14 like you did. I'm somewhere in that 21 range. But again, I'm hanging out in this one.
Yeah, I agree. I see Hims going up. I see Hims just like Skills. ARK is just going to keep adding over time, and then eventually we could see the $40-$50 barrier. Genomics is hot. ARK has been pushing the whole genomic stocks with what they're doing. They're adding more and more. So I think that's going to be a really good space. I know 23andMe, I think, is doing a SPAC, if I'm not mistaken. I see them as an even easier target because they're directly with the whole genomics and data sequencing. So I think with the that one would also be a hot pick if you're in it. I'm blanking on the ticker right now, but I think that's a good one too.
Okay, so wait, so 23. All right, let's find that.
Do you want me to come in for that? You said you're blanking on the ticker of genomics play. Do you mean bingo, BNGO?
We're talking.
No, actually, I'm big on that one too. 23andMe SPAC. I can Google it real quick.
Oh, the SPAC today with Virgin. Okay, sorry.
Yeah, we need that one. But all right, you want to talk BNGO?
Yeah, Virgin. Yeah, I love BNGO. So BNGO, I was late to the game. I got in around $8 when they first started putting out some data about their whole sequencing. I think those folks, so I spent like one night, I just did like 3-4 hours of research straight on them, just watching as many videos as I can, reading up on their stock, reading about their data. They are a prime target for ARK as well. I think that what they're doing is brilliant. The biggest and most powerful thing that they've been able to do is the whole detection of variations within the whole COVID virus. So with the system they have, if I'm not mistaken, they're able to detect the variations, which is the new hot thing. You've got the Africa strain of it. You've got the English strain of it. You've got the original strain of it. So there's multiple strains, and you need to be able to differentiate these. And BNGO, they've got the targeting software for this. Of course, it's a little bit it's expensive in the grand scheme of things, but it's cheaper compared to their competitors right now. So I think that's a hot stock play too. It's been having a little bit of a rough few days. It's pulling back and kind of consolidating. But I think once we get a little bit more news or anything comes out of it, I think it should easily go up to like the 15 to 20 mark.
Yep. Okay. And let's loop back to this 23andMe just for a second. We got the power of Zinger Nation here. I want to give a shout out to Internet Enforcers, Sarah, Blue Doves, David Holmes, Kevin Imaja, Webcoin, and Franz K, who gave us the ticker on that one that we didn't know. The 23andMe SPAC ticker is VGAC, Victor Golf Alpha Charlie is that one.
Perfect.
So shout out to Zinger Nation for covering that one. So
yeah, and Virgin's smart.
Yep, there we go. I mean, all right, let's stay on that one then for a second. Let's pull up the chart, VGAC. I haven't looked at this one before, so it's not that crazy. It's at $15.
Yeah.
I might take a crack at this one.
Yeah, they're going to take a little bit to heat up because with the whole SPAC model, it's like initially in the beginning when there's nothing, it's like around the 10s. And then when you get like a letter of intent or some rumor starts breaking out, you get between like the 12 to 14, 13, 14 range. And when you get a definite target, it's between the 15 to 17 range. I think right now the hot SPAC is CCIV. So a lot of the money from SPACs is just flowing directly into CCIV. And of course, you got the new Rocket SPAC HOL. So those two SPACs are so hot that they're getting a lot of the volume and attention, and rightfully so. But I think eventually the money will start spreading out elsewhere as well. So I think that VGAC will have some good bones to it. Plus, that you've got the Virgin team behind it, and they're brilliant. They did SPCE, which is now like almost like a $50-$60 stock last I checked. And ARK Invest's ARK X Space SPAC is eventually going to pick that up as well, because I know Kathy Wood owns a lot of that stock as well in their ARK and one of our ARK ETFs. So I'm very excited for that one as well.
All right, so I'm going to throw this one out to Zinger Nation, guys. This 23andMe I think is really interesting, sitting here at $15 again. Ticker VGAC. If you guys like this one at $15, throw me the one. If you don't like it at $15, throw me the two. I want to see where everyone's at this thing. I might take a small little crack at it. I don't know. All right, but before I sign off today, I'm either going to take a position in this stock or I'm going to tell you guys that I'm not. I'm sort of mixed. I don't know. I'm making a decision today. We'll see.
I currently personally don't have a position in it yet. I have been watching it very closely. I just have been putting a lot of my buying power into HIMS recently. So I just need to kind of reorganize and then maybe put some back into VGAC. But I'm fine getting it at a higher average because I like to invest long term in some of these and like come back to it in like 4 or 5 months when it's up a lot. So I'm completely fine with that.
All right, and let's talk about two more SPACs. We got requests from the crowd on these ones. The first one that I'm going to throw up there, you mentioned it, so let's just stick on it. CCIV. This is a 1 month chart that I have up on the screen here. Charlie, India, Victor. I mean, the chart is hot, right? The thing's been on fire. We made that move from 35 to 27. I'm not touching it right here. I didn't get in this one. I got in this other shitty one that we'll talk about in a second, CLOV. But CCIV, you're the same opinion. You're not touching it up here at $30.
Yeah, no, I added it a long time ago. I added CCIV around the 1550, 1560 mark, and that's after I'd averaged up on it when I originally added in the 12s. Look, it's at this point you're gambling with it because it's a coin flip. So if it gets great news, it bumps up. If it gets bad news, we're crashing back down to 10. So you're the risk level is way too high if you want to add up here. One thing I say to everyone is if you like something and you have a high conviction for it, you can always scale into it. So you can add a position, a small position that you don't mind losing it, treat it like an options play, consider it going to zero. But if it goes back, if it rises up, now you have a core, nice little base position that you can average up on later on without like destroying you. So in case the stock does go to 50, 60, like a lot of people are saying, you'll have a small core position in the 30s. But again, it's a coin flip. It's risky. Like yesterday, we saw like a small headline came out and it was like the deal isn't imminent or whatever. And the stock came like crashing down to the point where it got halted downward. So with stocks like this, when they become like this, I hate to say this, but like a cult mentality, a family-based stock like Tesla and all that, which I love Tesla as well. It becomes really dangerous because the community controls it and then like you have it halting up and down. So it's risky. So you just got to play at your own risk level and tolerance.
All right. I'm jumping in here on that CCIV. So, so Ryan, yeah, 100%. So I actually sold my I had a bunch of call options CCIV. I sold half of them today, and I have this common because I see it rocking, and I'm confused why there hasn't been more like progress on this. Like, for example, we had this is not like inside baseball. We had a SPAC reach out to us, and we were negotiating with them for Benzinga and another company part of it. It went on for like a week and a half, and then it came to an end. I'm just a little, I'm a little nervous on it. I'm not saying it's not happening. I don't know anything. I don't. Sure. And so I just covered half my calls because I sometimes are too, well, both ways. I'm too greedy on calls, and then I don't hold them long enough, right? So, sure. And I agree with you on your take. So either we're going to look like heroes, because if the deal happens, that's going to rock it because it's an exciting car. I don't know if it's really going to compete with Tesla, but it's an exciting car.
Yeah, I agree. I think the reason it's just taking a little bit longer is we are dealing with a foreign entity here. It's Saudi Arabia is funding this, so there's a lot of paperwork that goes into stuff like that. Plus, we have to realize what happened from the time that news came out. We had the whole Wall Street bet stocks stuff occur, so for like 2 weeks, the whole news cycle was taken up with that. These folks want to capitalize on press and PR, so the stock does go up. One thing that Lucid has been doing is running a ton of ads on CNBC for some reason, which is ironic since this SPAC happened, so they're trying to get attention there. I think that we just got to wait for it to cool off a little bit and let the deal come out. It would be nice if Churchill came out, Michael Klein came out and said, hey, what's actually going on, just so that the stock doesn't flux so hard and shareholders can get like a little bit of insight on what's going on. You don't have to say like it's not happening, it is happening. You can just say we're working on something. Just give some insight to the people, because like you said, these SPACs, especially when a rumor comes out real quickly, like within like 20, 30 days, we do get news on it. This one's just taking a lot longer.
Okay, and then, I mean, Aaron Bry, you could reach out to Churchill. I mean, we broke stories the day of the whole, GameStop trading. Why don't we try to break this one, Aaron Bry? Go for it. Don't be a wimp. Look, why don't we try it? So, all right, that's a good place. So, by the way, are you on Twitter, Ryan?
Yeah, I'm on Twitter. It's at Ryan Rosbiani. It's just my full name. I think you have it down there somewhere on the
We do? Okay, yeah. Guys, make sure you have his Twitter in here. And I don't see his name under the name, so make sure you have his Twitter. I like Ryan. He has a smart. Luke, thank you. Luke, if I'm ever out, you're out, I would think Ryan would be a good co-host.
I mean, even with this on here, maybe Ryan's a good co-host.
Or maybe Ryan.
We're going 24 hours, baby.
Ryan, I don't know what time you go to bed at, but would you be interested in hosting a half an hour show?
Oh, I would love that. That'd be awesome. I'm up late. I'm in New York. I'm up late. I'm a night owl, so I'm cool with that. That'd be awesome.
So, what would be a good time for you? 9 o'clock, 8 o'clock? It could be a half an hour, and
8 o'clock. It sounds perfect.
We'll help you with the production.
Sure.
Internet Explorers is going to tease us that our production. He gets mad. We don't put the title, the thing, and he's right. We're improving it, but we'll help you with getting guests. We just need more. We're trying to change the way information is delivered, and we do that in the news market right now for the brokerages, but we don't do it in the video market. It's not a game of us just like let's just put out crap. We want people. We want to be for the people, by the people, and you give logical explanations of stuff. And so, and not a lot of people do that. You give both scenarios. So that's my take. Okay, Aaron,
I'd love that.
Yeah,
I'd love that.
Put him in the thing, Aaron. I'm sold.
All right, and I'm going to follow that up, guys, and I'm going back to what we were saying earlier, which is we want this to be the best stock market programming out there. We wouldn't be spending our time, all of our energy on this if that weren't the case. So I'm making an ask to Zinger Nation, guys. I'm dropping a link in the chat. Luke Jacoby, it's got a forum. We want to know what content you want. Do you want to talk options all day? Do you want to talk education? Do you want us to talk swing trades? Whatever it is, tell us what you want. Only 10 people filled this out, so Zinger Nation is letting me down right now. We did get to the 1,000 likes. But again, we're trying to build this for you. We want to build this together. That's what Zinger Nation is about. That's how we're different than CNBC and Bloomberg. We're not just sitting up in an office and making all these decisions on what content you consume. We want you to be a part of the decision. So click on that survey. I'm spamming the link in the chat. Write one word. Write 2 words. It does not take long.
Luke, I have an application for Power Hour hosts or for show hosts that I'm going to put the link in there, and I'm just trying to find it because it's in my drive here, but I can't find it yet. It's really annoying. I'm going to find it. So if you want to be a show host, I have an application for you to fill out. All right. One second.
Do I got to fill out an application too, or is this the interview?
No, you bypass that by being just good, and we'll just try it.
I mean, drug test.
You got to pass the drug
I
test,
can pass that. I'm good.
Oh, Luke.
I just buy the
Luke,
cannabis stocks, not the actual stuff.
yeah, no, drugs can be bad. You can't, you gotta focus, get shit done, right?
Yeah, I mean, I think they have stuff for that too.
Oh yeah,
Hims.com, baby. HIMS.
There you go.
Let's go.
No,
I'm playing Hims all week.
Vivian yesterday, Luke, gave an ADHD stock that I bought.
Okay.
And that's the one that's up 7% today, I believe. And we'll double check. Vivian's on at 2:30.
All right, there we go. 2:30, guys. We're hitting more biotech plays. Vivian, she gave us a stock yesterday. It's up 12% today. I missed it. Wah, wah, wah. But she's back at 2:30. But all right, I got to go in for Zinger Nation for a minute.
Funware.
I got to go in.
Luke, I missed Funware, so don't feel bad. I missed Funware. We had a guy on, the CEO of Funware at PHUNWARE. The stock was at 140. The next day after our show, it was at $3. I missed that.
All right, guys. Everybody out there in Zinger Nation who's long this stock with me, ticker CLOV, share this segment. I'm going in on this one. It's a name that I'm very bullish on. Clover Health. We got this one from Rippity and some of the Atlas guys. I bought the stock initially because it's a telemedicine play. I think there is so much money to be made in healthcare, especially transitioning healthcare to technology. I mean, if we think finance is backwards and behind on getting in the tech space, I mean, healthcare is like decades behind. I mean, it might be 2 centuries behind. Like they still use carrier pigeons to deliver medical files. But Clover Health, we got freaking hammered today. Carisdale Capital came out. So here's my 2 catalysts on Clover Health, right? CLOV, or actually 3. I'm putting out 3. I'm going in on this one. All right. So what happened is Carisdale Capital, it's a short seller. They came out with a bearish report on the stock. It moved the thing down 10%. Okay. F them, right? So seriously, F them. Here's the 3 things that we have for this one. 1, there's a lot of people who love this stock like me and are going to use this as a buying opportunity. There's a catalyst. 2, right? Not a popular time to be a short seller right now. If I was a short seller, I wouldn't be putting out these reports. They're going to get effing hammered, right? I mean, the community is going to go after them. The world hates them. We had Mia Khalifa on the show yesterday talking shit about short sellers, right? She didn't know what they were before, 2 weeks ago. So short sellers are going to get hammered, right? And then number 3, we got the company sticking up for itself. It's not just hot stocks. Luke going in for this one. We got the company sticking up for itself. Clover Health spokesperson tells Benzinga. So this is a Benzinga exclusive. The company will be issuing a statement to rebuke this within the next few hours. Again, guys, this is a Benzinga exclusive. I'm using my Benzinga Pro here to get these headlines. They told us that they're going to be issuing a statement to fight back against this thing. And so when they issue that statement, they rebuke it. They say, F you, Carisdale. That's the 3rd catalyst on the stock. Boom. There you go. There's the air horns.
Can I give you my take on Clove real quick?
Give it to me, baby.
So Clove, I was in when it was IPOC. Unfortunately, Chamath had a shaky interview with CNBC. The stock came back down to the 10s, and then we had the Atlas crew, and everyone was rallying for it, and the stock came back up. Look, I agree 100% with you. Healthcare is hot. Healthcare is powerful. We need to get it out there. We need to update. We saw that evident here with what happened with COVID and everything. I think what a lot of people are waiting on is they have one partner right now that they announced. There's a secret second partner they haven't announced yet. The second they announce that, I think it's going to pop. I think it's a big partner. I think the first people that they partnered with was Walmart. So my first initial thought was Target, but that would be too close. But I think if they partnered with someone like CVS or Rite Aid, they would pop real quick so they can get to the rural, smaller based communities. They've got a brilliant guy behind it. Chamath is behind this one, so I stand behind it. I'm unbiased. I don't have a position. I think my philosophy with stocks like this, especially if something is down 10% and you fundamentally know it's a good stock and you know it believes in it, I like to buy the fears. So I would go out and open a position in this if I were you. Again, not a financial advisor, not stock advice, but I think with stuff like this, I love doing that. So like whenever Citron or Heisenberg or any of them puts out a short report, I like to go ahead and I just buy the stock and add to that position. It's worked for me with a lot of different stocks, with NNMD, with PLTR. Whenever they put out a short report, it works, especially with Lemonade. Lemonade, I added that when they were doing their short report, and it's up like a ton. So with your own discretion, look at the company, look at the slide deck with companies that were SPACs originally. They make it really easy for you. They compact everything into a slide deck, take a look at the financials, and see if it makes sense. I personally, I like this one. I don't have a position yet because I am actually kind of bigger in another SPAC in the healthcare space right now. But at levels like this, I would definitely consider adding it because right now you've got fear sell-off, but like in 4 or 5 days, this thing could easily go back to 13, 14. Even if you're a scalp trader and you want to just swing this stock real quick, you can make decent money off of it. But I think long-term, this has a lot of potential. And Chamath's a smart guy. He doesn't put his money into stuff that's a stinker. So I think this one could get good. Initially, I wasn't bullish on this one, but now at these price levels, I think it's great.
There we go. There we have it. I'm hitting the air horns. And I'm going to do my ka-ching. The soundboard is back, baby. That's the only reason why I do this. You know, if Spencer Israel, he said, you know, I got the pre-market prep thing, but, you know, we need some Luke energy. I said, I'll do it if you give me a soundboard. You know, and now,
I want a
Spencer
soundboard too. If I'm doing an 8 p.m. show, we're going to need a soundboard so I can wake everyone up, especially in New York.
Yep. And if any of you guys watch pre-market prep, will you please do me a favor? Tell Spencer Israel not to heckle me all day, every day. I mean, it's like the guy wakes up. I mean, he gets up before me for sure, but it's like I wake up, I walk into work, and it's like, fuck, Spencer's pissed about something. So, you know, just give him a shout. You know, hey, cool it off on Luke. But all right, guys, we got two very special guests that are here to join us. One virtually, one actually in the office. I think this is our first in-office guest since we've been doing this. But let's start with Joe Tigay. Let's talk some options. Ryan, you want to hang out or no?
Sure. I'm down to hang out.
This is turning into an all-day thing. You're booked till 8.
Perfect.
All right. There we go. Joe, what's up, man? Welcome to the Power Hour. It is good to have you here.
How's it going?
Yeah, it's good to be here. Finally, we're getting to chat.
Exactly. And I know you are the man for options. We've got a lot of options folks out there in the chat. So why don't you just start by giving us a little bit of your background and how you approach things?
Yeah, my name's Joe Tigay. My company is Equity Armor Investments. I am a former options market maker. Started in 2005. Started trading equity options, moved into index options. We grew, my group, Equity Armor, went into the VIX pit right when it started trading. So we saw the VIX like mature and turn into the beast that it is today. It's the second largest options pit in the world. So that led me to trade more indexes. I went to the SPAC, which at the time was the largest options pit in the world. That was one trader in that pit. Now there's 500 traders in the pit, and I was just one against 500. All those 500 are a big group. I would say 8 or 9 groups. So everyone has 8 or 9 buddies trading with them. I was by myself fighting through all those crowds. And of course, trading in the VIX pit throughout the Great Recession, the flash crash, European debt crisis, all those fun times is my background. Now, today, I am the portfolio manager on 2 mutual funds, portfolio manager on the Equity Armor Fund, and also on the EA Vault NASDAQ 100 volatility hedged overlay fund. That's a mouthful, but both strategies use my volatility trade, which is a long VIX future strategy to give protection, target, and volatility to our advantage.
All right, and Joey, we're having a really hard time hearing you. The mic is a little bit choppy. I don't know if there's something that you can do to adjust it. You know, so
hold on.
I'm not sure. Okay. All right, we're standing by. In that meantime,
I like his monitor setup that he's got back there, though. That's a sick
hell
setup.
Yeah, it's better than my background. I don't know. My background's okay. Look at this, Detroit, downtown
You
Detroit.
got a window view. That's a nice view of that.
You can't really see anything though. It's like a blurry window.
Are there soda cans behind you? I don't know what I can't see it. You're blocking the windowsill behind you. No, I was talking to Luke.
Yeah. Yep, I got the windows back here. Where are you at, Ryan? Where's everybody in Zinger Nation at? Guys, tell. Oh wow. Okay. All right. Put in the chat where you're from. I'm here in Detroit, Michigan. I'm about to duck down. I'm blurry now, and now the background's clear, so y'all can see what Detroit looks like. and producer Rohan, make it the widescreen so everybody can get a sense. We would love to get some people to take out to dinner. We just reopened. But again, drop in the chat where you guys are from.
Yeah, you got the nice view right there, man.
Yeah, look at this. You see on my, all right, I can't be a weatherman. I won't get this right. No, come on, Aaron. I was about to do a shtick. Can you switch it back? Okay, whatever. All right. Check Aaron Rohan. Check this out. We have an ice rink behind us, right? Like that's what I look at all day.
Oh.
And it is a hoot in the winter, especially when they first put it up and people haven't skated in a year. You know, you just watch people like slip and slide, and then you get some people who are crazy ice skaters out there who are doing spins and jumps and tricks. I mean, it's
it's
awesome.
the Olympics out there?
Yep, exactly. So all right, there it is. Y'all got to see what Detroit looks like. And it looks like Joe is working on a new setup for us. We're also going to have a very special guest in office. So it's a heck of a day.
Are you guys watching Sundial with everything going on with the whole cannabis stock sector? I think that's a hot stock.
Not really, but let's look at it. All right, I'm pulling it up. Sundial Growers, ticker SNDL. I'm throwing it onto the screen here. Hold on. There we go.
She's having a rough day today. Yesterday she was doing pretty good. It's been barcoding for like the past 2 days.
Yeah.
I think this
is
one's
a
just
5-day
really
chart, guys, just for context. I know that it's sort of tough to see, but here's 5 days. But keep going.
Yeah. This is essentially like the cheapest direct cannabis stock that's out there, with the whole legislation coming down from the federal government talking about legalization. And I think Chuck Schumer said that that's like their number one priority to get it done as fast as possible. I think this one will pop on news, essentially with the way that the Senate is broken down now. Essentially, it's a done deal. But I think that this is a good one. We just need more news on it from the federal government, which really likes to take their time on things. And I think this is a hot swing play. I'm in it. I know a lot of smart folks are in it as well. I know the Atlas guys like it too. A lot of
They
folks
like it to $2. That's their price target. And somebody's saying check the short interest. If you guys know the short interest, drop it in the chat. Zinger Nation. She shouted out to us. But yeah,
for a lot of folks, I think there's a website, nakedshort.com. They've got really, really great data on shorts. So you can actually like see the live data day by day. Because I know sometimes FinViz is a little bit delayed, but Naked Short does really good with putting out that data.
Yeah. All right. I might have to bite my tongue here. I was talking shit about Upwork all the show. Look at this. All right. FVRR. Somebody in the chat dropped this one. Oh my God. Man.
Oh, buddy, it's up 10%.
All right,
What
Luke,
the hell just happened?
what's up 16%?
Damn it.
No, 10%. It's up 10%. Fiverr's up 10%.
I've owned that since 177.
All right, so
dinner's on Jason then, essentially.
Fiverr's up 12%. It got mentioned as a recommendation by the Motley Fool. That's why the stock is up. Here's the 5-day chart, so you guys can have some context for what the move is.
Oh my God, it's up because Luke, you don't recall, man. You forget. Don't you remember when Fiverr got killed that one day when there was a downgrade? It was on like $60, and you're like, this downgrade is way too low. Went to 160, so you're like, I'm buying the stock, and you were right, Luke. Did you keep it?
No, it was a swing trade. I did buy it on the downgrade and ripped out of it. Whenever a stock moves more than 5% on a downgrade, BTFD, buy the dip on that one.
Okay, so that's one thing. Second thing, Luke, I need to talk about something right now with either you, Ryan can chime in. Lyft. Can you guys check out Lyft for a second?
Yep, and I'm gonna hop off for a sec, guys. Okay.
Right. So I invested in Lyft in the private offering, guys, before it went public, and I haven't sold any of my Lyft shares, and it's come back. The question is, do I wait till it goes to 60, or do I sell today? I invested before it went public, and I'm just trying to decide what to do with it. What do you think?
So I'm looking directly at the chart right now, looking at the MACD on the daily. It's reversing right now. So it looks like it's got a lot of room up. I like Lyft a lot. I like them more than Uber. They're a lot more customer friendly from what I've seen. They're a lot more affordable from the way that I've used it. No shade on Uber. And they've got a lot of smart partnerships and a lot of smart people that they're working with, especially in the whole EV space and the charging space. I like them. I mean, if you got in really early, it might be a great time to take some profits, but I wouldn't close out the whole position because just purely based on the chart, it's got a lot of room up.
Yeah.
All
right, my audio went out. Sorry. You there still?
No worries.
Yeah.
Yep, I'm still here. Can you hear me?
So, yep, I can hear you. It was just my Bluetooth. So yeah, so that's your take on Lyft. Okay, what about Uber?
Uber, let me pull up the chart real quick on that one. Uber, they've got parallel charts from what I'm seeing here. Their MACD just reversed as well. They've got a lot of up room. Uber, I think the biggest thing Uber has is they've had a lot of bad PR that's hurt them over the years, over and over and over again, which is essentially pushed them. What's weird for me is, for example, there's the company DoorDash is like $150 stock, whereas Uber is like a $57 stock. I guess I get the whole float and all that stuff is separated, but I think Uber should be a much bigger company than DoorDash. They've got their own food delivery service. They've got the car delivery service. Uber's got a lot of tech behind the scenes that a lot of people don't talk about, like the Tesla of this whole of the driving service. They've got people. I think one time I heard they've got like nuclear engineers on board to help them like figure out and do like crazy calculations. I like the company. I like the new CEO. He's really, really smart. I'm bullish on it. The chart looks really good if you wanted to add now for a quick swing play. I think you've got resistance at 60. So when it crosses that, you've got a lot of room up. I do see that just based off the chart, earnings should be coming up soon, like in I guess a month or so from here. Yep. So we could hear some good news. And I think the biggest thing that's hurt them right now is just like most of the other companies is COVID. People don't want to get in someone else's car during everything that's going on. So I guess we have to wait for them to like get through that hurdle, just like the whole airline space. But I like the company. It's a smart company. They got a great team. They just need to do a little bit better in getting out there with the PR and getting away from all this craziness that happens, because they had a lot of bad PR scares in the past few years.
You know what's? I'm getting so much FOMO in this market. I got to be honest with you. Every stock that I've sold, except for like 3 that I've trimmed, they're up another 30%. Like everything. It's just like I shouldn't sell. No, like in the chat right now, they're showing POWW. Okay, so let me go to my buys and sells on that. I bought POWW. I saw, I didn't go up that much. It's fine, but I just oh,
those are the ammo guys, right?
Yeah, the ammo guys. And I like if I never sold any of my Upwork, I mean, I just retire on my Upwork. I could have retired. But you know, I didn't sell my Tesla, so that was good. I never sold that.
Yeah, that's
except
smart.
when I exercised my call. And then GAN now at 26.83. GAN. So I'm a big. If you want to know how I invest in the thing behind the thing. That's how I invest.
Me too.
And so
I call them shovel plays. Yeah, I call them shovel plays.
Because the gold, like why shovel plays?
So like during the gold rush, the people that made the most money weren't actually the gold miners. They were the people that sold the buckets and shovels. So I call these shovel plays. Like, for example,
so the people that made the most money in the gold rush, I say the jeans, like the jean vendors, that. So it's the same kind of thing. Same kind of thing. So yeah, I call it the thing behind the thing. And this GAN, who, in the chat, this guy, who was it? Matt J used to rip me on this GAN. It was like at 23, it was at like, I don't know, it was at like 18. Now it's at 26.83. It doesn't stop moving, And and then like in the beginning, XERI, it hit 50 cents again. There's just so many plays out there, but I like how you say shovel plays for sure.
Yeah, so I think a really good one. A lot of people are sleeping on the charts up. It's SPAC SSPK merging with Weedmaps. They're a really strong company.
Yep,
especially
that's another. You're right. That's another one of those.
Your audio just cut out.
So funny.
Oh.
Just walked in front of me and I handed it to him.
Oh, okay. So sorry, this guy Aaron, who's at my whatever. So it's long story, guys. So but we're good. We're good. I was trying to help this guy delivering something, so I was multitasking. So yeah. So you like the SPAC, the Weedmap SPAC.
Yeah, I like it a lot. I think especially when they pass this legalization, there's going to be a lot more stores that are opening up. And what Weedmaps has, they've got this business in a box. So essentially you can franchise through them. They give you everything you need. They jump through all the legal loopholes for you and with you. And then you're just ready to go. Essentially, it's like setting up like a 7-Eleven or a McDonald's. So you're right out the bat. It saves you a lot of time and automates you.
So
Plus, they get all the data too.
So wait, what's the symbol?
SSPK.
We put that on the screen, Internet Explorers. We put that on the screen, SSPK. So Weedmap. So this guy said, Weedmaps is stupid. It's just a fad stock. I don't know. I got to look at their numbers. But I don't know. I hear you. I mean, there's a few other companies in there. We're big in the cannabis space, like benzinga.com/cannabis. So, but SSPK, put it on the screen, Internet Explorer. He's not putting it on the screen right now, but it's okay. All right. So
I like them more for business in a box than their actual retailer selling the cannabis stuff. I think that's where their biggest power comes from, is that business in a box model that they have.
Got it. Okay, that's interesting. All right, right. We will talk to you later. I have another guest to come on, Ryan. So I will talk to you. I think Joe Tige is coming back. So thank you, and we look forward to figuring out the show name of your thing that we'll do in the evening. So we have a few shows. I guess I can announce one of the show names since we're over 1,000 likes. We have a CEO show coming up that will be starting in 10 days. In this show, it's 3 to 5 CEOs of companies it's just CEOs of companies. So that's one of the shows. We have a celebrity investing show. We kind of debuted that a little bit yesterday, but it's 2 celebrities and how they invest their money. It's another one. So we got like Tom Hanks committed, a few other people like that will be part of it. I'm trying to get other big names. So that's kind of the story. Those are the, new shows. So we'll see you later, Ryan, and see you.
Awesome.
All right.
Thank you so much.
All right. Yep. And now I guess we have Joe Tige back. Did you fix the audio?
How do I sound? How are we doing?
Good. How are you? Wait, Luke, what's wrong? Hey, hold on, Luke's. What? Okay, cool. So sorry. They're talking to me off the, off stream, and I know that's confusing. But how you doing? Where are you? Back in Michigan now?
I'm back in Michigan, back home. The prodigal son has returned. Here I am. 15 years in Chicago. It treated me really well. Had a great time there, but it's kind of expensive to raise a family there. It's kind of tight living quarters. I had to make the choice. I'm moving to the suburbs of Chicago, or I guess I could have gone anywhere. And I guess with my kids 1 and 3, I just decided to bring them back home, have built-in grandparents on the babysitters on the ready. So that was the choice for me. A little cheaper living conditions, and it's worked out great so far. I'm loving it back here.
Got it. And are you just working out of your house, basically?
Yep, this is the setup. Do I have enough charts? What do you think? Do I have enough screens? Do you like it?
I don't know. You got like 8 screens?
Just 6. So yeah.
6. Yeah, you should see we have an overhead camera, which I don't know how to turn on yet, but when I do, you'll see we have all our cameras. There'll be a couple more overheads. We have some cool things coming here. It's a full trading, data, news place. One day, I know you don't have your setup, but one day you'll have to just swing by.
Hopefully sometime soon, yeah.
Yeah, there's no reason not to. You can, so what are you up to? What are you trading? What were you guys talking about? Because I know you were already on. So
let me start over. My sound wasn't so good. Just giving you the history of who I am. I'm Joe Tige. I'm a former options market maker. I was an options market maker starting 2005, did some equity options. And when the VIX pit came to be, my group was one of the pioneers in that pit. So that turned me into an index trader. My group got big into the VIX options. We became the largest electronic market maker for VIX options, which is the second largest options pit in the world behind the S&P 500. So we obviously have true specialty in the VIX. I went into the S&P 500 pit on my lonesome, which was kind of a rare thing to do. Usually, this is the largest options pit in the world. There's 500 at the time, 500 traders in the pit. Those traders had groups. There were 8 and 9 large, maybe 10 groups in that pit. And I was by myself competing with all of them, and then having a blast, of course. And then going into the VIX pit throughout the Great Recession, the European debt crisis, the flash crash, having the time of my life there. And now my new career post options market making is I'm a portfolio manager. I'm the portfolio manager on 2 funds. I got the Rational Equity Armor Fund, and I have the EA Vol NASDAQ 100 Volatility Hedged Fund. So those are my 2 funds, and I use an option strategy, really a VIX strategy, the VIX future strategy. Helps me reduce the risk, but I also use the option to the volatility to my advantage. So it'll do 2 things. Number 1, reduce the drawdown, and also add some alpha to the upside, because I can harvest that volatility when it goes up, like, last Friday. It allows me to sell some volatility, buy some stocks back, which are lower, which is really the best way to trade long volatility.
Got it. How are you able to say, what's the size of the funds?
Yeah, I can say the funds, the under management, we have 130 million. The Rational Equity Armor Fund, that's at 62 million, and the EA Vol NASDAQ 100 Fund, of course, so we had a partnership with the NASDAQ in that fund. That's at 15 million, give or take, right now.
Got it. Okay, cool. And how often are you trading in the funds?
Yeah, so that's a really key advantage. So we are this hedged equity strategy, but we do a daily trade. Most people, I think this is a big mistake people make with the VIX. People know the VIX, it's costly. There's all these problems with it, we know. And people love the VIX for one reason, because it's negatively correlated with the market. The market goes down, the VIX goes up. People get that and they like that, but what they miss is that correlation goes away. So you have to actively trade the VIX, because if you look at the correlation over a course of a year, there's practically none with the market. In other words, if you give me 1 day move in the S&P 500, I have a pretty high degree of confidence. I'll know what the VIX did, right? But if you tell me what the market did for a year or 2 years, that doesn't tell me anything about the VIX. So the VIX actually, and this might be familiar to your viewers, the VIX actually is mean reverting, okay? And we all know it'll spike up, but it doesn't stay up. It'll come back down really hard. It'll get cheap, and when it's cheap, it'll want to go back up to its average. So that's what I do in this fund, daily rebalancing. I take advantage of those two things. Number one, of course, the negative correlation, that's a big advantage. But number two, the mean reversion, that kind of means when the VIX gets cheap, that's an accumulation spot for me. The VIX gets expensive. I like to let go of my VIX and allow myself to buy it, to monetize that volatility, put it back into equities, which are cheaper.
Got it. Okay, yeah. And so do you write about these things too when you're making trades, or is it just, making the trades? That's what you focus on?
Occasionally I'll have some blogs out there. I got a couple articles on Benzinga lately, the past month or so. I got 2 of them. I'm mostly doing trading. It's not a daily thing, but yeah, I enjoy writing.
Okay. Well, because you sometimes have a high conviction call, and I think it'd be cool if you came on a little bit more. And when you have a high conviction trade you're making, just come on for like 4 minutes. Say, guys, we're seeing this in the VIX, almost like a market update for like 4 minutes. You put your fund name. This is what we're seeing. Boom. Just like how Brian used to come on CNBC and do that. So I think that'd be cool if we just did that, and you just turn on the cam and we just put you on and you wire in something very simple.
Happy to do that. Some market activity. Oftentimes you get some big trades in there. Kind of gives you a key on what the customers are looking at doing. But as a market maker, I'm always playing, the chess match there. Like, what does this mean? If someone's buying an out of the money call, does this mean they think the VIX is going to go to 100? Right? Or maybe they're buying the call to cover their short. They can put more shorts on because they have that call on. So I like to play that chess match game too. So it's not always cut and dry, but yeah, I do like seeing the activity, seeing the flows, and it really guides me in my activity.
Yeah, I think so. I think there's something to learn there on the VIX. So maybe it's even a VIX show. So that's something to look at for sure. I don't know, as a market maker, telling it from your perspective, and it's more of a high end, what you actually do as a market maker. I mean, that's kind of cool, right?
Yeah, as a market maker, you're just trying to balance your risk. You're trying to make that little bit of edge every trade, make lots of trades, make a little bit of edge, and make it so that you're not exposed to any gap risks out there, or any vol risk, or any stock delta risk. So it's a different type of game. As an investor, it's more of I just want to increase my probability of success. I want to have some equity returns. I want a better path to get there.
Exactly. So, all right. So then we'll have you on a lot more on these little updates, and you ping us, and we'll ping you. Just come on more often, be a regular is what I'm saying.
Yeah, I'm all about it. I see some activity, I'll let you know.
That's what I'm saying. You don't even have to dress nice, whatever you're wearing. Come on, just come in with the Joe Tigay report where you're seeing, this and this thing. Boom, boom, boom. People will love it.
Absolutely. I love it.
All right. I know we could have talked about this over the phone, but I like this to do it out in the open. That's just the way I'm trying to do it. Some like it. Some people like it. Some people don't. It's okay. But all right. Good talking to you, man. And I'll see you soon.
Yeah, good to see you.
All right. Peace out. Bye-bye. Okay. All right, guys. So I have a special guest we're bringing on in 1 second. 1 second. Hold on. My phone is ringing. Here we go. All right. This is a guy. He's a fan, a friend, a foe. Not really a foe. That's his joke. But we're gonna bring him on, and here he goes. I don't know the soundboard because Rohan broke it. So hold on. Here we go. You're here. What's
up, Jason? It's great to be here.
How's life?
Life's pretty good, but honestly, today the whole story for me is that ever since the boot camp when I was on live with Anne Marie and Ricky over there with you guys, I started a 10K account just to trade publicly because normally I don't talk about dollar signs, just percentages, pretty much. And at nine steps forward, we were up to 960 yesterday. And then as for today, I told everybody in the pre-market, early on, I'm like, we got to expect if you got a 90% win rate that you're probably going to have to give some back. And that was today. I had to give a little bit back. So had a little loss, but well within, risk. So pretty amazing day all in all. But yeah, man, this is a beautiful place. You guys got this ice rink right behind us here. So pretty cool stuff.
Yeah, 90% win rate is pretty sweet. Yeah, the ice rink's behind us. Yeah, like over your right shoulder, it looks like, right? Or your left shoulder, technically. I don't know which way you're looking at. It's ice rink. Yeah, no, did you see the big digital ticker we have outside?
Oh yeah, I've seen that. I saw that last time I was here too. I came here for the meetup last time when you guys had that. It's been like a year at least.
I saw your email with like one of the guys. I think it was Mallard or something. How far away do you live?
Only about a half hour away, actually. So not that far at all.
Are you gonna go stop by and say hi to Portnoy?
I did not know that Portnoy was around. Honestly, I did not.
Oh yeah, we had dinner. He was at the restaurant that me and Luke were at, and it was cool. I mean, he's just a nice guy. He's a nice guy. I mean, he and you know what's cool about him? He doesn't suffer fools. Meaning, like, he says his opinion,
right,
and that's it. He doesn't he does his thing. He says his opinion, and that's it. Like, and it's a powerful group he has for sure. It's a powerful thing, and I'm protective over our Zinger Nation. So when someone comes in here and gets mad that I'm like talking to you about maybe not a stock, I don't care. Then leave our group. I believe in kindness, and yes, we're not going to appeal to everyone at all times. I could go through 25 stocks right this moment. I know I can, and I will put my stock portfolio against anyone, and so will you. I mean, 9% win rate. So what I think we should do, mighty soldiers, is you should tell who you are, how you got into trading, your relationship with Benzinga, and then what you what some stocks you're looking at. And I don't know if this screen, it says Mighty Soldiers Trades. I don't know if this is your screen or if this is Luke's screen. Do you know what I'm talking about here?
No, I really don't know, honestly. I'm just
okay, so you don't have a screen. So we just tell people about yourself, how you work with Benzinga, and what's that kind of thing. That would be helpful.
Well, basically,
I want to know that too. I'm in the comfy chair.
Basically, my name is Andy. I'm with Mighty Soldiers Trades. I'm streaming live over with Bullish Bears every single morning, starting at 8 a.m. And pretty much just like, okay, sorry guys. Anyways, when I started, I would say I was not a trader at all. It was back in 2008. I started paper trading Forex. I didn't know anything about it. Then all of a sudden I found the emails and I got specs across one that they talked about how, they bought it at like 90 cents and sold it at $1.80. And I'm like, look at all the money I could have made. And, for so long, I actually thought it was like that. I didn't actually, when I went in for I think I had 12 or 14 grand trying to open my first account at the bank, and I had to do a wire transfer. I had no idea what I was doing. And apparently the teller didn't either. So I walked out of there without even being able to fund my first account. So, and then my grandpa had got a paper certificate stock from him, and I didn't know what to do with that either. And I'm like, okay, so what do I do with this? How do I even find out how much, value this has? I took it down to the bank again. And they're like, sir, we're in the E-Trade era, and we can't help you with this. We don't really know what to do with this. So I went home with that. And basically several years later, for just about 4 years now, I've been trading thousands of trades per year. And the 90% win rate, I'd say that really doesn't matter. A high win rate is not the key to success in this. It's you're managing your risk overall, your risk to reward. But yeah, I mean, it's been a fun journey, and I'd say I'm getting pretty good at it finally. But once you say that, that's when you fall. The market has a way of humbling us.
It totally, man. And what I like most about your thing is your passion. You're passionate about this stuff. You're totally passionate, and you don't need everything perfect. You're totally passionate, and you're trading in the morning. You're seeing our stuff. You're at the boot camps. When was your first boot camp with us?
Well, I was on with Ryan first before the boot camp, and I've been in I think a few times now, but yeah, I couldn't tell you the exact date, Jason, but yeah, I've been on a few times with the boot camp. It's an honor to be on there, and anybody I can help. That's the whole thing. when I first started this, I was thinking, okay, I'm not really sure I want to be public or anything, and I could just like back out and go back to being private. But after meeting these amazing people and hearing all the results in their lives, like, hey man, you've changed my life, you've helped me, like I anything, like I didn't know how to trade with a full-time job as a police officer or something, retired military. We're all about helping veterans too, if we can. And I think it's really cool that so many companies have stepped up to the plate and they're actually, honoring those who've served.
Yep, absolutely. Well, we appreciate you coming to the office today and, and talking this stuff out. And, going from here, and we want you to come by, trade from here, what have you. I know going on the air when you come in, you're not expecting that. So don't worry about it. People are kind, and it's good that you came on because you've been a fan. We've been a fan of you. And although Spencer Israel gives you and I a hard time, we deal with it, and that's it. That's just have to go with it, Mighty Soldiers. This is Andy, and I do appreciate on Instagram you're always liking our stuff, you're posting it, and when I say our stuff, all of our stuff, because we're a team, we're family, we're affiliates, we're partners. That is it. And at the end of the day, we provide entertainment here, but what I want to do is make people money. And so I was getting tired of, like, I give my picks to these rich billionaires and they buy my picks. So why not open this up to the public and say, why do I have to give this to the rich billionaires? Why can't I give it to people that I know? And so that, like, are in the community. And that's what I'm doing. So Andy, I'm seeing a lot of nice comments about you, and keep doing what you're doing, and we'll be in touch again. So thanks for stopping by.
And thanks for having me, Jason. Appreciate it.
Yep, absolutely. All right, that is Mighty Soldiers Trades. You can watch him Bullish Bears in the morning. He's a good man. His name's Andy. And Fergus, my sound is bad. Let me know if my sound is bad, Fergus. I appreciate you letting me know. And so that's it. We try to make people money. And if you guys look at my record, if you go to benzinga.com/trade ideas, you guys have obviously seen some of the crazy wins I've made you guys. I mean, seriously, the one from like 14 3 weeks ago to 50, that was another one of those. But I just put the link in there. You could go see it. And I'll put all my picks in there because the site needs to be easier to use. Oh, Luke, the Greek town has been taken care of. They won't zoom out. Wait till I got that camera working, Luke. I'll be able to control the camera, and then life will be good.
Well, I mean, I got a comfy ass chair now.
Luke, your microphone is so bad. Luke, stop talking. Stop talking. Your microphone is like we can't hear you at all.
Damn.
Put it closer. Put it closer. You talk.
How's that? Is that any better?
Yeah.
Or should I go back to the OG setup? I sort of like it here.
I think it's fine there. I wish the camera would zoom out a tad, but whatever. It's fine. The mic's fine. It's not great, but it's fine. Hey, can someone, Aaron Bry, can you,
great.
Aaron Bry, Ray Gonzalez, he wants you to put the link for Matt Maley's and Gianni de Jose subscription product. Thanks. Can you do that? Aaron Bry, can you answer Ray Gonzalez? Yeah. Webcoin, I agree. Luke's mic is too low. It's not working. Lee, today's stream is disjointed. Yeah, I totally agree. Luke, what are you doing over there? Like, will you turn that off or turn off? Like, I don't know what's going on over here. All right, I just turned it off. That was super weird. Sorry about that, guys. So the trades that I made, and I've told you guys numerous times, are like POWW has not really moved, guys. It's at $7, $7.30. It's not doing anything special. So I don't know why you guys keep bringing up POWW. Let's go back to the chart. Let's trade it. What is the reason for this? It's at 746. Why are we still talking POWW? I mean, it's 746 up 11% today. Okay, great. It's up 11% today. But it was at $7 during the election right here around what date are we at? We're going to be looking at the January 15th. Yeah, so I don't know. It hasn't really moved. I mean, there's so many better plays in my book. My book, I'll show you. I mean, I like plays that move and make money. I don't care. It's guys, it's letters in the alphabet. Yes, they're companies. Long-term investments, big investments, think of the company, think of the story, the thesis, why I bought API Agora for a 75% gain. Why did I buy these stocks? Think about this thesis, think about the story. I'm going to share my screen for you guys real quick. Okay, and this may help you guys. Maybe it doesn't, and maybe it does. We'll see. All right. We're sharing my screen. All right. So, all right. This is what we got. So where is Raznik? Where is Raznik? There's Raznik. That's me. Click my page. We're on my page. I kicked Luke off because he was really annoying a minute ago. All right.
Wait. How am I the annoying one now?
You sat at a couch like you were like lounging. Like, what? Like, why was that even on?
It was like, I'm like, I sort of like this new chair setup. You know, I'm not going to bring the energy, but it's very comfortable.
I know, but like, it just looked weird. They didn't have the zoom far enough out, so people didn't know what the heck was going on. It looked weird. That's all. I mean, maybe no weirder than seeing my pelvic bone. You know, when I was down over there, you probably look better than seeing my pelvis area. But beyond that, I was like, what the hell are they doing? And Spencer Israel comes over, and is like, Jason, let me control the camera. I mean, I don't understand like how these things work. The reason we were on this other software, we switched to this one, so no producer has to touch the camera stuff. The idea is the producers bring the content to the show. They should be reaching out to 50 guests, not controlling cameras. We should control the cameras. And so then they've had you, and it looked weird. That's all. I'm just telling you. See, like,
so I'm funny looking, but that's fine. Keep going.
This is what it didn't look like this. See, it did not look like this, Luke.
Okay. Well, I'm sorry to Zinger Nation out there.
Yeah, I don't know. Okay, so Austin, I appreciate it. Can I go to my trades though, Luke?
Hit it, baby, hit it.
All right. Oh, my face is too big in that one, Luke. Sorry, you got to go to that one. There we go. We'll turn off the office. All right. So here are my trades. Not here is my trades, guys. We got the English correct. On 11:30, we're buying. So you guys, I'm gonna start putting all my trades in here. You can get alerts when I make trades. I've had very few losing trades. You guys know that. So I don't know why it doesn't say the stock price, but I bought immersion on November 30th. I'm still a big believer in immersion, so we bought it at 640. Big believer in it. That's a Chris Kaji. You can see my thing. Yatra. So I'm getting a lot of questions today on Yatra in the chat. So let's just take a look at Yatra. Yatra spoke at the Benzinga Small Cap Conference. If you're not familiar with the Benzinga Small Cap Conference, just go to Benzinga Small Cap and you'll see it, okay? Or bzsmallcap.com. All right? And Yatra is a travel site. You're in India and a couple other places, and the comps trade at a lot higher valuation. My Yatra right now, when I originally got in Yatra, it was on December 4th. So December 4th was, let's see the date, we're talking, it was at 195. Well, today Yatra is at 267. So in the chat, a person bought Yatra because they saw the technicals for me and they liked it. I don't know if the technicals are for me or what you guys think on Yatra, YTRA. I'm not a big player in it. Luke, do you want to comment on that or no?
On Yatra, I don't really have one big opinion either way.
Okay, that's fine. So, and I'm sorry, what's this guy's name? Asking what platform? That is benzinga.com/trade-ideas.
I'm going to get this in the chat. I'm
going to put it on the link. I'm going to put it there. I'm going to do it in the chat. I already wrote it up, Luke, on top.
All right.
Just show it. It says let Luke sit 2021, but that's not what we're looking to do here. Will you put it in the thing, Luke? You got it?
Yep.
Okay. All right, so that's Yatra. Let me go a couple more. I'm not going to go through everything else. NMDM, we bought it on 12/4. You guys may have heard of that. Kathy Wood is an NMDM. It's a nano company. I know those a little bit, but not enough. I just follow smart people. Kathy Wood, she was a big believer in it. Kathy Wood, speaking of, will be on our show March 3rd. And this was at 12/4. We bought it at 684. Today we're at $15 on NMDM. So we're up 140%. What do you think about that? Okay. So Ruel, Raz, can you get your trades hooked into Benzinga Pro as a chat room? Perhaps this already exists. It should be, this page should be hooked into the thing that you're seeing right here should be hooked into Benzinga Pro. I'm really talking to this guy, Bert David, today. He's in the office because he knows how important that is. So Ruel, you're on the same page. Maybe you can get on the phone with me and Bert because Bert doesn't think that you want to see my trades. That's what he told me. So ESTC, guys, I'm a big believer in this company. Big. I bought it December 4th, and we picked up at 143. It's at 160. I'm not selling. FUV, this will be the last stock that I'm going to go through from December, but this is where you need conviction. The stock didn't trade. Oh, I need to show you the chart, don't I? I'm sorry, I haven't shown you guys a chart. Well, FUV, yeah, I've not been a good hostess. I've not been a good host. Let me share a different screen. I apologize. Hold on. I apologize.
And Jason, after you do this one, do you mind if I hit the chat challenge real quick? Because I gotta get out of here in a little bit.
Do I mind? No, I'll let you take over the thing in 1 second. Sorry. Okay, so here's FUV in benzinga.com/trade-ideas. We all picked up FUV on December 10th, right? So we all picked it up at whoever listened that day. We all bought together at $14. It's at 33.80 today, up 9%. It was up 8% yesterday. We bought call options in stock. If you're not killing it in this one, $13 is at $33, and we bought calls and stock, right? And then we sold some at 24 and went back down to 18. And we bought more. I mean, that's it. You can go watch any other show. Go watch any other show you want. I am telling you, we give big winners. That's what we do. You know what the show should be freaking called? You know what it should be called, Luke?
Big winners.
That's it.
With BZ. Big winners with BZ.
I mean,
is that better than Power Hour?
I mean, literally, the show's called Big Winners. The other thing is, there's all these guys in the room. How do they sign up to get our email alerts of these things? Like, do we have an email field on the YouTube channel for them to sign up? Do you guys want to put your email address in so you get alerted to our shows and you get alerted to our trades? No? Okay.
All you need to do is fill out that survey. It's twofold. You can enter your email, you can start getting the alerts, and you can tell us what programming do we not have so we can build it for you guys.
Okay, one more chart, Luke. I got to show one more chart. Sorry, buddy. So BCRX, you could see on benzinga.com/trade-ideas. I bought it on December 17th because of my friend Viv, and it was at $7. So what's that, 9? So not Viv. You got to get some more. We got to get some more movement on that one. But that's it. And then EAF, and here are my latest picks. Oh, I also went long Max, IMR, and API. API was the best pick we've had in a long time. All right, that's it, Luke. That's it for me today, guys. Have a great day. I'll be back on, I think, helping Viv during the biotech session. She has the biotech show. She killed it. So Water Girl, you're writing this stuff, and you said yes, you'll do it. So can you email powerhour@benzinga.com? I couldn't find the application for the show. As you know, we had Ryan on today. He's going to host our 8 p.m. hour. It's for a half an hour show, and we have a whole schedule. Benzinga has a Discord, and I'll show you guys the schedule of the shows, although I don't like how the schedules look. They're not as easy to read like I want it. So you guys, at Benzinga, we have core values. Simplicity is genius, and nothing clarifies like clarity. Like, be simple, be easy to read. We're not there yet for you guys, so I apologize, and I own that. We'll get there, and we'll get the graphics and the stuff better. We have people in the office today working on the video, so I appreciate it. Tiny Pie Media, you said you're making an intro for me tomorrow. Intro? What are you making an intro for me for? He's making an intro, but I don't know to who. I don't want that. What if I don't want the intro? Luke, I'm gonna hang up. Tiny Pie's making an intro, but what if I don't want the intro?
Well, you can at least look at it, right? I mean, Jesus. You don't like me sitting. You don't like intros. I mean, come on now.
I just don't necessarily want that intro.
Okay.
I don't know.
Right, no intro.
Tiny Pie. I'm sorry. I read it wrong. Luke, egg on my face. Hold on. I got to put egg on my face, Luke. All right. I don't have egg, but this is what I'm going to do. That Tiny Pie, you are so right. I am so wrong. Hold on, man. Okay. Do you see what Internet Forces said, Luke?
Yep.
But he spelled my name wrong. I can't fucking stand when they spell my name wrong.
Yeah, but he's got a great point, which is, let's get the community going. I mean, Zinger Nation.
Internet Enforcers is so exacting. Like, he goes crazy on all the producers when they make a mistake. He's been with me for like months. He sees my name 100 times and he spells my name wrong. So I should give it back to him, even though he's just trying to make us better, you know? So, all right, here it is. So the Tiny Pie Media, he's making a sweet intro for our show, Luke. Yeah. He's referring to that. That's what he's going to send over. But I thought he's making an intro to some other person. I read it wrong, you know? Nothing clarifies the clarity. So for me reading it wrong, I'm going to pour water on my head because that was my egg on my face. It's so cold. That is so cold. Can you guys see? It's everywhere. It looks like I peed in my pants. This is not good. You see that?
Might have. They're not mutually exclusive.
You guys, you have no idea how cold this is because, oh my God, now I sat on it. Oh my, there's, I put so much ice in this thing today because I wanted to have the coldest water ever and I didn't drink any. So I am frozen. It's like I'm in an ice tank, Jesse Itzler style. I'm in Jesse Itzler style. All right. Thanks, guys. Have a nice day. I'll see you at 2:30. Dump the whole thing. Frank M., if someone offered me $1,000 to dump the whole thing, I don't think I could. It is the coldest thing ever.
If we're at 1,000 concurrents for Biotech at 2:30, 1,000 people on the stream, I'm gonna go over and dump it on Jason. All right. That's you better effing share this stream.
If we get to 1,100 concurrents for Biotech Hour, I'll dump the whole thing. You can dump the whole thing on me.
1,500, we're dumping it on Viv. So there we go. All right.
All right. Jorge, it's benzinga.com/trade-ideas. All right. Peace out, guys. Love you.
All right, guys. So I've got a couple things to go over. I'm going to go over some of the stock picks that we did on this show. I also am going to throw us an update on the chat challenge at Zinger Nation going head to head. And see who is the best one out there in the community. And then we're going to do a news update. Right? We're going to figure out what stocks are moving into the close. Right? What's going on today? We're going to do it with Spencer and Chris. You guys don't want to miss the hot news. So stick around with that. And of course, at 2:30, we're doing hot biotech picks. We had one that we came out yesterday, up 12% today. Let's go. So there's the move on that. But real quick, guys, recapping you on this one. We got Peloton earnings after the close. Jason likes it. I don't. I'm not shorting it into the close. If the stock pops after earnings, I'm going to hit that one tomorrow. Tomorrow on the show, that'll be my first thing. My opening monologue is I'm going after Peloton. I'm officially a bear on Upwork. PayPal. I've been in the PayPal trade for about a month now. I mean, I talked about the trade literally every day for a month. We got that nice earnings pop. We're up about 21% since we put it on. So we put a stop on that one. And then I gotta go stick up for all of my CLOV, my fellow Clover Health shareholders out there, Charlie, Lima, Oscar, Victor. I'm sticking up for you guys. The stock's getting hammered on the Carousel Capital short report on the name. 3 catalysts to drive it. 1, we've got a ton of fans of the company like myself. 2, the world hates short sellers right now. They're going to attack them and they will be vicious. And 3, the company told Benzinga that they're going to be coming up with a rebuke of the short report momentarily within the next few hours. So we will see that today. So that's why I like my CLOV. I'm sticking up for all you guys. If you guys are long CLOV, throw me the 1. If not, throw me the 2 in the chat. But come on, let's rally behind that one. But all right, it is time. Do I have my soundboard, producer Rohan? All right, drum roll. It is time for the chat challenge. We start this every single Monday. So if you guys missed this week, you better be here Monday at 12 o'clock next week, 12 o'clock Eastern. It's our chat challenge. Whoever gets the question right gets to pick whatever they want from swag.benzinga.com. Again, that's swag.benzinga.com. This week, we asked the question on Monday. We said, what is the price of GameStop going to be on Friday? Right? That was the question. We threw it out there to the community. You know, my discounted cash flow analysis led me to $420. I'm way off. Look at all these guesses, right? We've got the guesses here. Here's the percent that they are over or under. I mean, we got like pretty much everybody way over guessed the price of the stock, myself included. I mean, Spencer Israel had this thing at 1,000, where he put it. But guys, we do have a winner. We have somebody who's eerily close. And I'll stop there once I get through scrolling through them all. We've got a lot of 69 and 420 guesses. But Steve Delaney out there in the chat, shout out Steve Delaney. You put his $59 guess. We still have one more day on this thing. But Steve Delaney, he is in the lead with a $59 Friday price target on GME. That is, of course, our beloved GameStop. So Steve, if you're out there, you know you're in the lead. But we're coming after you. You know, a day is a long time. So you know, round of applause for now. Everybody at home, you know, you can do the round of applause for Steve, right? It's not weird to clap your hands and you know get some energy flowing. But all right, guys, I'm gonna kick it over to Spencer Israel. We got a wicked echo because he's not muted. But
I'm
Spencer,
here. Wait, yeah, can you all hear me? I'm here.
yeah, but I hear myself too. But all right, Spencer, take us through the news. Tell us what's moving. What do we need to watch into the close? And then, guys, 2:30. If we have 1,100 people on the stream, Jason is pouring the rest of the water on himself. I'm going to put more ice cubes in that water cup now. So share this thing, like this thing. Let's get Zinger Nation rolling. And Spencer, tell us what the afternoon movers are. I'm passing it off to you.
All right, appreciate that, Luke. By the way, before I go into that, if anyone has any thoughts on any other signs, fatheads, people who should get behind me, let me know. You can see that ladder. I don't know why there's a ladder in my guys. Why is there a ladder in my shot? Who cares? All right, yeah. So we've got other characters. Let me know who you want to see, and I'll try to wrangle in some more people behind me. But I've got Homer, Marge, Elon, Costanza, and that's actually Adam Sandler, but it does not look like him in my opinion. But Kathy Wood, that's a good one. All right, I'll work on getting Kathy Wood. Okay, so real fast news update for the day. You guys know, I mean, what the big news is. You've been keeping up with things. Clover Health short report is probably the top story of the day. One thing I always find interesting is that there really isn't ever on most days a lot of intraday news, right? We've got heavy news flow in the morning from like 6 a.m. Eastern to like 8:30 Eastern, and then heavy news flow from like 4 to like 5:30. Not a ton of intraday news. So when we do get it, like yesterday, for example, with Kodak, that's interesting, right? Because there isn't often a lot of intraday news. So that's always something that I'm mindful of throughout the day is if you see breaking news, probably broke hours ago. So what am I watching today? Well, Luke just discussed it. I'm watching the short squeeze stocks from that went crazy last week. So GameStop, KOSS, AMC, all down this morning or today, and that's working as sort of a contra indicator. They're saying my sound is messed up. Hold on, let me fix that. How about that? That's a lot better, isn't it? Yes, it is. I was on the wrong microphone. Sorry about that, everyone. I'm watching GameStop, KOSS, and AMC as a contra indicator. So as they go down, market goes up and vice versa, and it's working today, right? So you see GameStop, KOSS, AMC all down double-digit %. And what's the market doing? Market is up. S&Ps are up. Russell is up. NASDAQ, even the NASDAQ was up. So that was a laggard yesterday. But the Russell is the leader today, up 2%. So small caps leading, large caps lagging. Try to keep an eye on those themes. What's leading, what's lagging throughout the day. I keep an eye on the indices. I keep an eye on individual sectors, just so I have an overall view of what's going on. So that's basically what I look at. I look at the S&P, I look at the Dow Jones, look at the Russell, look at the NASDAQ, and I look at all the S&P sectors. Today they're all green, I think. Oh no, except for looks like materials. The XLB is flat. But everything else is green. So we got mostly green on the screen. That's good. I guess the end of Wall Street or so we thought last week. It was a bit premature because ever since we've been up all week pretty much, right? Did we open at the low of the week this week? Pretty sure we did, right? So somewhere around there. Anyway, what else is on my radar? Like Luke, I am keeping an eye on earnings. So we've got a big slate of earnings tonight. Pinterest, Snapchat, Peloton, Ford, Activision, Blizzard, Gilead, Unity, Fortinet, GoPro on my radar. Why is Al Pacino holding a lunchbox? What? I don't know what that is, but if I find out, I will answer it for you. That's not Al Pacino. That's Elon Musk. Next to in between Marge and Homer. Since I kind of have the stream to myself here for the next 20 or so minutes, I kind of wanted to do something that I never get the chance to do on pre-market prep, and I kind of wanted to share some ETFs. So I'm a big ETF guy. Stocks are fun, right? Stocks are great, but I much prefer ETFs. Why? Because diversification is the key thing, right? Like you can make a bet on a theme, and diversify your bet, right? Like, why bet on one company when you can bet on 30 is kind of the way I see it, right? It is a good point. Okay, Adam Sandler does look like Pacino. And why is he holding a lunchbox? I have absolutely no idea. This just showed up at our office one day, and I'm kind of rolling with it. So, I kind of want to share some ETFs because I love ETFs. I think they're great. They're just like stocks in that you can express a point of view, but you do it in a diversified fashion. You're not putting all your eggs in one basket. And I always feel bad when I talk about like a stock that I'm buying, for example, because every stock that I buy is such a small part of my portfolio. My portfolio is almost all ETFs, right? It's like 90. So like my taxable account, my Fidelity account, it's like 90% ETFs, right? It's 40% VOO, which is the Vanguard S&P fund, 20% VEU, which is the Vanguard International Fund, and then I just rotate other ETFs and yes, some stocks occasionally around those funds. So I just want to share what ETFs I own and sort of why I own them. I've mentioned this before, but I am long Cathie Wood, ARK Invest. I bought the ARKW. Maybe I should have some charts up so you can see what I'm talking about. All right, let me pull up some Benzinga Pro charting. You can see what I am looking at while I talk to you. So let's share my screen and do this for a second. 1 second. Where's Benzinga Pro? There's Benzinga Pro. All right, here we go. So this is my screen. This is the ARKW next generation internet ETF. And I just kind of want to walk through, why I buy certain things. This is a 15 minute, pull up a daily chart. You can get a bit of a better picture. So, obviously ARKW is following the theme of the overall ARK family. It's up big. I bought this, I think, last spring. I want to say last May. And so why? So why did I buy this? Right. So a couple reasons. One, it's a active technology focused fund. I knew I wanted some more tech exposure, but I didn't know how. Cathie Wood's funds are unique in that they're actively managed. There are other actively managed funds out there, but not many. And so her family of funds, the ARK family of funds, has gotten a lot of flows pretty much for that reason, right? Because she's actively adding and trimming stocks from her portfolios or from her funds every single day. And so I went through her, the ARK family. I looked at ARKW, looked at RQ, I looked at ARKK, and I settled on ARKW because that was the one that offered the exposure that I wanted. And also give you a tip here. I use a website called etfdatabase.com. I do pay for it. This is basically a free ad for them. But this is a site that I use for my ETF research, right? So it's got a great screener tool, but I use it for like fundamental information as well. You can go to the individual sites, or if you don't really know what you want, you can go here and try to figure out. So I looked at the holdings. Obviously she's heavy in Tesla. All her funds are in Tesla. It's not really, you can't really avoid that, right, when you're looking at an ARK fund. But what I didn't want was like a ton of biotech exposure, right? If I was going to get biotech, I would have bought the IBB. Actually, I do own the IBB. So it really was about what kind of allocation do I want. So this is a sector breakdown, obviously heavy in tech, but pretty diversified elsewhere. And again, it's really just a personal preference, right? There's an ETF for like literally everything. So it's a question of what do you want to own. So you look at the allocation, look at what the ETF actually holds. I also look at expense ratio. I don't let that make up my entire decision, but expense ratio is important. So how expensive is the fund, right? How large is the fee? Obviously, the ARK funds are actively managed, so they're a little bit more expensive. You're not going to get like a 0.05% expense ratio on an actively managed fund. It's just not going to happen. So know that they're going to be a little bit pricier, but I don't ever let that be the deciding factor. It's just something to be aware of when I'm buying an ETF, right? So obviously, if I'm gonna buy an S&P 500 fund and there's 5 or 10 and they all do the same thing, then maybe you look for the one that has the lowest expense ratio. But if you're looking for something unique, like ARKW, for example, or any of the ARK funds. I don't let that be my deciding factor. You obviously want to look at tracking error. In the case of ARK Invest, there really isn't any because they're not tracking an index. They're again being active, but if you are buying a passive fund, you want to pay attention to that tracking error. How well do they track the index? How well do they do what they say they do? That's super important. Okay, best weed ETF. Man, okay. So I liked MSOS when it came out. I talked about that on pre-market prep. I never bought MSOS, and here is why. I actually own a couple, I think 4 or 5 of the stocks in the MSOS ETF. I own them individually. So I kind of thought, well, if I already own the stocks by themselves, I don't necessarily know if I want to own them again via an ETF. But if I didn't, I would absolutely have bought MSOS when it came out. When was that? Like last fall, right? There's that September. So one thing to know about this fund is because cannabis is still illegal at the federal level, it is against the law for any plant touching company to be listed on the NASDAQ or the NYSE or on any exchange. So this fund, as I understand it, actually owns swaps. It owns swaps on this, doesn't own the stocks themselves. It owns swaps on them. But that will change when the laws change. If you think the law is going to change, then I wouldn't sweat that technical factor. The reason I like MSOS and the reason I own a couple of stocks in this fund in the first place is simple, right? It's about US operators, right? Canada was first in the door. You look at the stocks that make up the MJ, for example, CGC, Kronos, Afria, Aurora, Constellation Brands. I don't know. They all had huge run-ups 2017, 2018 when the first wave of cannabis kind of happened, right? And now they're paying for it. They're paying for those valuations because what do we always say on pre-market prep? Valuations eventually matter. They don't always matter, but they eventually matter. And so it matters now in CGC, in Tilray, in Aurora. There's all this overhead supply, right? And look at CGC. That's not CGC. That's Carlyle Group. There we go. We can zoom out. All right. So this is a 3-year chart, right? So if you bought Canopy Growth in late 2018, you're underwater, right? So you're paying now. You're being punished for the fact that it got way ahead of itself in 2018. A lot of the U.S. companies are not there. One, they don't trade on exchanges, so they're not as active. So they're all on OTC markets. But like for example, PCNNF is one that I bought, and it's in the MSOS ETF. And so I like these U.S. cannabis companies. One, because the U.S. cannabis market is larger. We all know that it's larger than Canada. And two, because they didn't get pumped up in 2018, 2019. There was no rally in U.S. cannabis stocks. It wasn't a thing. So their valuations are much more reasonable. And for that reason, I bought TrueLeaf. I bought GTBIF. Again, these are all in the MSOS ETF, which is why I would have bought that if I didn't own a couple of these individual stocks. And again, this is just how I approach things. I'm not saying this is the right way for you. This is just what works for me. And I could be wrong. I don't know everything. I only know what I know. So I'm sure there are people in the chat that are disagreeing with me, but that's fine. So that's why. So to answer that question, MSOS favorite cannabis ETF. I'm going to stop what I'm talking about for a second, and I want to bring on our guest. I spontaneously invited him. Marcus Heitkalder normally joins us on pre-market prep on Friday mornings, but he will not be able to join us tomorrow. So I was like, "Hey, Marcus, come on right now," and he's like, "Okay." So here he is, Marcus.
Hey, well, that was a surprise. Yeah, I just checked my email and said, "Hey, want to come on right now?"
Oh, come on! Right now. What the hell? Why not?
I'm looking anyhow at the markets right now, see what's happening here after the lunch break, going into the close. So let's see. It's pretty interesting. I mean, what can hold these markets down, right? I mean, up.
Nothing. Every sell is a mistake, right?
Right now, it seems so. Right now, it seems that it's buying the dip, buy the dip, buy the dip.
Yeah. Okay. So tell us what you bought or sold or made money on or didn't make money on today.
Sure, I'll be happy to share my screen and just show you what. Be happy to show you my account. Let's see. Sharing is easier with two monitors. That is so true.
Yeah,
trading
you know what? They try to tell you these tips. Screw the tips.
You know what? I mean, trading is easier with two monitors because right now, you see, I moved it over to one monitor. Usually, I have my charts on one monitor and then my trading platform on the other one.
Okay, so wait a sec. How many monitors do you usually have?
Oh my gosh, two. I used to have more. I used to work with 4 monitors, and here was the biggest problem. Where's the mouse? Where's the mouse? Which monitor? I mean, I get easily distracted, and so these were for me 2 monitors, and that's pretty much it. That's all I need for my kind of trading.
So I don't even really trade, and I've got 4. Well, 5 if you count the laptop, which I don't really use. But yeah, anyway, it's a lot. But I've also got to produce these shows, so it takes screen real estate. All right, let's get into the markets. What did you buy or not buy?
All right,
or sell or not sell today?
So what I'm doing right now is I am trading the wheel strategy, and this means that I'm selling puts. Now, when you're selling puts, you expect the stock to go sideways or slightly higher, right? Sideways or higher. That's good. So the idea here is to collect premium as long as the stock stays above a certain strike price. So here right now, we're looking at Apple, and this is a trade that I did yesterday, where yesterday I sold the 132 strike, and I just want to dissect this trade a little bit, and then I'll also show you a mistake that I did today. It was like, holy moly, really? I thought that I'm way beyond this. How can I make this easy to read? I think if I move it over there a little bit. Okay, there we go. So coordinates 132. Spencer, can you see my screen just fine?
Yep. I mean, you're gonna have to go full screen. You being the viewers will have to go full screen. It's easier.
Okay. So if I go full screen like this, is that better?
But I can see it. Yep, that's better.
Okay, good. Okay, thanks for letting me know. So I did this yesterday. So I sold the 132 strike. Let me just make this even bigger. Well, we probably don't need that big. Now I need to find my account. This is the problem when you're going full screen. Okay, so let me just see. And I traded 8 of them.
Marcus, I just want to say you're like the only person we've ever had, I think, besides Jason, our CEO, who's ever shared their account. So we appreciate that. Thank you.
Yeah, no, absolutely. I mean, why not?
Why not?
I mean, I'll show you the good, the bad, and the ugly. I'll show you a trade right now. I'll show you the 2 trades that I'm in. And as you can see, one is going well and the other one is not going very well. So there's a minus and there's a plus. So we'll talk about the 2 trades. But let's start with Apple, just because it starts with an A and therefore it's first. So here I sold the 130 put for 70 cents and I did 8 of these. Okay. See, this is the problem. When I'm making this full screen, now I don't know how to get back to this. Oh, hold on. Still getting used to StreamYard. I know that the software that you're using. So what I will do here is I need to make this a little bit smaller. Otherwise, I have a problem going back and forth.
That's all right. No, that still works.
Okay, there we go. So let's write down what I did yesterday and what I'm expecting to do. So I sold the 132 put at 70 cents. And the expiration is for tomorrow. So it's 2/5. And when I'm moving this out of the way, you can see it a little bit better. So what I did here is I sold 8 of those. So sold 8 contracts. And this means that I'm making 8 times $70. And you see, this is where I can't do math in my head. So I'm using a handy-dandy calculator. And that's literally the only calculator that I use. Plus, minus, divided by, and multiply. So how much is 8 times 70? That would be $560 on this position. So $560, and this would be in 3 days, right? So if Apple stays above the strike price of 132 by tomorrow, I would make $560 in 3 days, which I think is okay. It's just one of my positions that I have, and thus far it is looking Good. So looking at the account, sold it for 70 cents. Right now, it is trading at 10 cents. And you see, what I like to do here is I like to actually place a closing order where I can close it at 90% of my profit. So you see, if I can buy back this put that I sold for 7 cents, I sold it for 70 cents, right? So if I can buy it back for 7 cents, I'll close it out. And here's why. I mean, as long as I have this open, I have to put up capital requirements. So here it's $18,500. That's buying power that I can free up. And why would I hold it for the last $7? And again, $7 times 8 would be $56. No need to hold it until the very, very end. So, and it's going well right now. It's trading at 10 cents. So hopefully I can buy it back today. That would be just fine. Now let's talk about the other trade that I did. And I entered this trade also yesterday. And this is GDXJ. Now, GDXJ, it's kind of
you mentioned this last week too. You mentioned this.
I mean, GDXJ last week I already did the trade, and on GDXJ on Monday I was able to close it out. See, this is the trade that I mentioned last week, the GDXJ trade that I had on last week, and I closed it out on Monday with $11,000. I mean, yippee-yay, right? So this is where I thought, hey, it already worked once, so let's do this again. So GDXJ, first of all, what is it? It's an ETF. And it's an ETF of the gold miners. And if we zoom out a little bit and look at the larger picture, it kind of moves like gold prices. Let me just bring up gold here to compare it. I'll overlay it here on the chart. So you see the orange line here are the gold prices, right? And then you see this here is GDXJ, which are the gold miners. There's several ways how you can play gold if you wanted to. And you can play gold with either GDXJ or you can play it with GDX, which is another ETF mirroring of the gold miners. Or you could just go for Barrick Gold. So that's another company that you can trade. And they all move pretty much with gold prices. So this is kind of my insurance. Let's go back to GDXJ. So GDXJ really pops higher when the markets go lower. Let me actually overlay here maybe the S&P, the SPX. So this way we get a little bit better idea. And you see last week, this was on Friday, right? When the S&P drops, this is when these guys go higher. I mean, we know this. Inverse correlation between the stock indices and gold and blah, 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 right? I mean, this is nothing new. You all know this. You're smart viewers here. And Spencer, I'm pretty sure that you have covered it a million times, right?
We may have.
Good. So this is here where my plan is as following. And I'll just write down my plan of the trade that I entered yesterday. So I sold the 49 put. So here I'm thinking that we will stay, or I'm hoping for that we will stay above 49 by tomorrow, by the close. And you see, yesterday we were trading right here. We were trading at $50.50. And I said, oh my gosh, this is super, super easy money here. Yeah, well, little did you know, there's nothing easy in the markets. I mean, whenever you think that it's easy money, Spencer, has it ever happened to you that you think, oh my gosh, I grabbed some easy money and then the markets tell you, I'll show you.
Whenever I think I'm definitely right, I'm definitely not.
Right. So exactly. Whatever you think, oh my gosh, this is a foolproof trade. What can possibly go wrong? The market shows you the next day what can go wrong. Anyhow, so I believe that I did 54 contracts here. Let's just double check really quick what I did in GDXJ. Oh no, just 20 contracts, and I sold it at 29 cents. So 20 contracts. I sold it at 29 cents. Okay. And so this is, if this trade works out, can I do this in my head? No, I can't. I wish I could. So many people are right now probably sitting there at home and saying, oh my gosh, you can't even do this. No, I can't.
Hey, trade smarter, not harder.
Right, exactly. So this $580 also here in 3 days, if this works out, and we shall see. So you see, what I'm looking for is really that I can make around $500 in a day. And right now, this morning, I closed out quite a few positions because I hit my max profits here. So anyhow, since right now, if you're zooming in a little bit, you see that we are trading, let me bring it up here, right now at 49.11, so just barely above my strike price. The whole day today, I was pretty much underwater. I'm switching here to a 5-minute chart. And you see this morning, this is where we opened, GDXJ already down. Then we briefly peaked up, and you know how it is. Yay, we do this. And then went all the way down. Right now, we are above the strike price of 49. So this is why right now on this position, I'm slightly losing. So we shall see where we end tomorrow. Now, tomorrow, if we are above 49, I will be good, and I'll just keep the whole premium. Which would be the $580. However, if it is closing below 49 by tomorrow close, I will get assigned. And this is what happened last week. And then, of course, I got assigned here on Friday. And what happened on Monday? Boom, right? I mean, this is where we had the Reddit crowd driving up SLV, silver. And as SLV was going up, I mean, gold eventually was following and said, okay, I'm coming with you. And then the markets were correcting anyhow. So this is where it worked out pretty good thus far. So we shall see. And otherwise, I get assigned, and then I start selling calls. That's why it's called the wheel. So this is what's going on today. Just a few trades that I closed today. If you look at the transactions for today, so I closed out Hell today. Yes, and I did close out a Neo trade. Let me just show you the Neo trade.
Oh yeah, show us the Neo trade.
The Neo trade was pretty cool. So here I had a strike price of 49. And as long as Neo stays above 49 by tomorrow, I would be good. But you see, at this point, the 49 strike expiring tomorrow, I can just show you here. This is why I closed it out, because there's no more premium in there. There's no more premium in there. So the 49 that it is expiring tomorrow, you see, it has just 4 cents in there. So why would I hold it and try to squeeze out the last little bit here if I can close it out today and say, you know what, let's forget about the remaining $4, free up some capital, because you see, now I have my option buying power is back up to $217,000 so that I can look for some new trades. And this is where, is it okay if I show what I was looking at today?
Yeah.
Okay. So, and I showed you why I did not go for it. So I'm using a tool that helps me to just find the very best trades here and the best strike prices. So it's a tool called PowerX Optimizer. And one thing that popped up was Qualcomm. And I know that you did a live stream on Qualcomm earnings yesterday, right?
Yeah, they weren't good, right? I'm looking at so many that I can't even keep them all straight. They weren't good.
No, they weren't good. So today Qualcomm plummeted down, and this morning was below 140. No, it was at 145.
The low of the day is 145.20.
Right. And this is where I thought, you know what? This might actually be fun, selling a strike price of 140 and just see if Qualcomm stays above 140, because looking a little bit at the bigger picture. So, I mean,
tell me why you picked on 145.
The 140 strike, this is where I'm just looking over the last 6 to 8 weeks, what is natural support? Right.
Okay.
And natural support over the past, if you go back to the beginning of November, where we gapped up last earnings. Let's look at this. Last earnings, we gap up. This earnings, we gap down. But we have been really in a super nice range, pretty much between 140 and I want to say 165, if you just plot it right here. Maybe 160 if you don't want to count the outliers. And it looks like a stock that is nicely going sideways. So again, this is where my perspective comes in. For how long do I believe that it will stay below 140? And this is where I thought, probably don't get any money for this Friday. So this Friday's expiration, probably have to go out to next Friday's expiration. And this is where, just looking at the chart here, and I'm a pure technical analysis. I mean, I don't even know what they reported. I'm such a pure techie that I say, you know what? This to me looks like in a range, and range-bound stocks are perfect for this. So I want to make sure that I'm getting enough premium here for the 140. And we can actually run through this together. So I'm using here a calculator where I simply plug in Qualcomm. I'll look at what it is trading right now. It's 147.65. And the strike price that I'm interested in is the 140 expiring next week. So let's take a look at the current prices, and let's see where we are. Qualcomm 140 next week. So we would be bid ask is 80 over 85. So we probably get 83. Let's just say we would get 80 cents for this. Okay, so let's plug this in here. and we're getting 80 cents. And this is where you see the RI, the premium analyzed, tells me it's only 23%. Nothing that I'm interested in. I want to see at least 30% as the premium annualized. And here it tells me, okay, this means, let me make this a little bit bigger because I understand it's probably a little bit hard to read. So I'm zooming in here a little bit, going to Qualcomm. So I need to have at least $1.04. That would be the minimum. And so if I would get right now, if I would be able to get $1.10 in premium, you see this way I'm at 32% annualized. And the cool thing is I would trade, I'll probably trade here, what is it? 7 options. So this way I'm collecting $770 in premium. But right now I can't get it. I can't get it. So this is why I was looking at it and said, okay, maybe not. Here's another one that I thought was super interesting. Let me just remove this. X, US Steel. Did you see that? US Steel actually yesterday,
I did not see
they
this.
will issue more shares. And
They
this
did?
way they dropped.
Wait, US Steel did an offering? I missed it.
Yeah. So
Oh, yeah. Wow. Look at that. 40
Yeah.
million shares.
US Steel.
Yeah. I see a 40 million share offering.
Yeah.
Yeah.
So
wow.
they came out with it yesterday. Well, doesn't matter. Okay,
Yeah.
anyhow. So yeah, this is where I thought, okay, let's see maybe a strike price of 15. But then there's not enough premium in the strike price of 15. So I would probably have to go a little bit closer to 16. Let me just change it here to 16. And that's something where I at first thought, you know what? That looks quite interesting. So let me plug it in here and let me just clear out Qualcomm. And let's take a look at X of if I'm getting enough premium here. So X right now, the price is 16.45. And let's say that I would get for a 16 strike price, and maybe we can do a super short-term trade expiring tomorrow. Just see if we get enough premium here. So X, and we're looking for tomorrow, and we're looking at the 16 strike price, and it's trading at 9/12 bid ask. Theoretical price is 11, last 13. So we might be able to get 11 here. So let's just see if we are getting 11 cents, if this would be any fun at all. And oh, dear Lord. See, this is actually pretty fun. So we would make 125% annualized, because if we get 11 cents, and based on my account size, I would trade 63 contracts. So this means that I'm making $693 in 2 days, for today and tomorrow. So the question is here, if you look back at X and at the chart, will it drop below 16? And if so, I would get a sign. And the key question when you're selling premium is, do I want to own US Steel at $16? And this is where I'm going back and forth. And I said, you know what? Not quite sure, because if you're looking a little bit at the longer term chart, we see that US Steel is all over the place. It was trading as low here during the pandemic. Was trading as low as $4.60, $5. Pre-pandemic, we were maybe at around $13, and then we were soaring. No idea why. Again, I'm not a fundamentals guy.
Yeah.
I just look at the chart.
Definitely.
This is what I see, and so I'm not quite sure if I want to own X US Steel for $16. But it's a one-day trade.
Yeah.
$700 for a one-day trade.
That's a good deal. That's a good deal. Marcus Heidekar has been on with us. You can find out more about getting more knowledge from him at rockwelltrading.com/Benzinga. Actually, where's that? I was just typing up that. There, I put the link in the chat. rockwelltrading.com/Benzinga. Marcus, thanks a lot. We'll miss you tomorrow, but we'll get you back on pre-market prep next week.
Absolutely, but tomorrow is exciting. You have the unemployment numbers, and you're covering it live, right?
Jobs number. How could I forget?
Tomorrow is the jobs report. This will be a super fun show to watch tomorrow morning.
Thanks a lot, Marcus.
Thank you so much, Spencer.
All right, I'm going to bring on.
All right, Spencer.
Yes.
Thank you, Spencer. Thank you for handing it off to me. We want to thank Marcus and Spencer. We have the Biotec Trading Buzz now. Introducing Viv at Biotech_SD. Her picks of you guys, I have gotten probably 35 comments about her picks being right on. And so without further ado, please hit that like button for the Rockwell and Spencer as well, and share this with your friends. But without further ado, I'm introducing Vivi.
Hi, guys.
Hello, Vivi. How are you today?
Good. How are you? Can you hear me?
Yep, I can hear you. You got your headphones on today. Very nice.
I have a gamer
Yep.
headphones. I had to steal from my son.
And Viv, I was reading some of the comments. People loved the show yesterday. They wanted less of me and more of you. And I'm not lying. I know you wanted me to be on more today, but they don't want me on. They're saying, Jason, go away, let Viv talk. And then Viv tells me she wants me to be on with her. But I think we have a pretty good program. We'll be here. Aaron Bry, please join the Slack thing. And Viv, remember there's the private comments thing on the right side. So
Yes.
when you do the things, but so Viv, before you get started and take over, I want to make sure that people understand. Viv comes from a pharmaceutical biotech industry. She knows the industry. She does a lot of research on the space, and she has given me now 3 picks that have each gone anywhere from from 15% to up to 60%. So I trust her, and obviously, guys, before making trades, do your own due diligence. She's just giving you what she thinks, and we're never going to be 100% right. Okay,
no.
So that's it. So Viv, I'm going to go away for a minute, and we'll be here in the back end. So take it away.
Yeah, for sure. Hi, guys. Well, like Jason was saying, my name is Viviane. I'm originally from Brazil. Been working as a farm rep for the last 15 years. And my last job was with the Gilead. And now I've been kind of doing full trading. It's always been one of my passions, major economics. And I always trade under my IRA. But then I decided after the pandemic, things started to be a little slow. I decided to do this full time. So the reason I love biotech, obviously, I'm very comfortable reading clinical trials. But like Jason said, we can have an awesome pick today, and then tomorrow we have a bad phase 3 data. And it sinks. So a lot of you guys, for example, a lot of you guys were with me on ONTX, and I alerted at a 56 cents, and the data came out 3 weeks prior. So there's always risks of us betting on biotech. So you got to have your entry strategy, also exit strategy, I would say. So what we're going to cover here, I'm going to talk to you guys about my current positions. And also going to talk to you guys some of the positions that I just entered today. Then hope there's an opportunity for you guys at the end to ask me questions. So I wanted just to kind of pull my charts here. So let me just share my screen with you guys. Okay. So here we are. So screening. So I'm still watching SNDL. I'm in the street.
Viv,
yes.
You gotta stop sharing, and you just gotta hit share your Chrome browser. You instead pick share your screen. So this way, so just stop sharing, and then don't share your computer monitor. You can share your screen.
Okay, so I'll share here. Share video or screen?
Screen. Is there a browser like the Google Chrome? Is that what you're using? Share.
Yes.
So share your browser, and then
it doesn't say. It only says video file and share screen.
So if share screen, is there an option for your browser?
Yes.
So click the browser.
Okay. Application windows, entire screen. There's only option.
Yeah, that's right. So not entire screen. Application windows, and share the application window. Yep, and share the one that you have in there for whatever the thing is, what it's called, the top of the application. Share that.
Okay, the top of application. I'm sorry, you guys. I'm new to this. So what is everybody seeing? What do you guys see now?
Yep, perfect.
Okay, so I'm still on the straight here. So not the one. But I wanted to update you guys. So we can see here KMPH, we talked about yesterday. So it's up to date 10%. Very, very nice. I like to check the 1 minute chart if I'm trying to enter. But if you can see here on a 5 minute chart, it's kind of a consolidating. So PDUFA is March 2nd. and I feel very confident today. I added a little bit more because my average, I entered this position before the reverse split. So my average was a little higher, so I was able to bring my average down. So this is KMPH today. We're doing really well. And then we have PCRX. I wanted to update you guys. There's a little bit of a sell-off. Obviously, we're still waiting on Europe news. That's gonna come up with Europe approval, and then we have the update on our Factor D pipeline, and also we are going to have the launch of our sales. So we should be doing really well here when it's starting Q2. So I'm holding full position here, 9,000 shares. I'm not selling this thing until we have a buy. And then last position I talked to you guys about it was ATNX. So a little, I think we're down today. Oh, there's a little bit of a volume here. Look at this. Look at this chart. So there's some buying power right now going on. The PDUFA is gonna be on February 28th. So I expect us just to climb up. It's a couple of days before KMPH. And I'm very, very bullish here because they have this amazing product that are for precancerous little sores around your face and scalp, and 40 million patients suffer from that. And they got 55 million of upfront payments already on that matter. So I feel like it's very de-risk because we already have probably a blockbuster drug in the making, for that cream. And then we're gonna get the indication for breast cancer where we saw amazing efficacy, but also we're gonna have a Taxol. So somebody was asking me yesterday, what is an IV? IV is intravenous. So Taxol medication for breast cancer, but physicians don't like to use it because there's a lot of side effects. There's a lot of neuropathy with it. So they don't use this as much, but they like the efficacy. So this company came up with a pill, form of a pill, Taxol plus their molecule. So not only they have a really, really good data, but it's less than 10% of neuropathy, and patients can take on a comfort of the home. So there's no need to go to the hospital to do their chemo. So I'm very, very bullish. I'm definitely holding this through PDUFA, this one, because I feel it's de-risk.
Hey Viv, I don't know if you did in the beginning. I don't think you did. I just want to give a did you give an update on the short show format or no in the beginning?
Yes, I did. We talk about the 3 picks, the update on the show from yesterday.
Yep. So
yes.
guys, so I know I see a lot of the questions coming in. So just to reiterate, Viv is giving an update on her current positions for the first 7 to 10 minutes. We're at 2:44. I think we started like 3 minutes late. Spencer went long. And then the second segment, Viv is going to give about 3 to 10 minutes on potential new positions. And then the third segment is Viv's musings. So other picks she's found on Twitter or things she's in like CLSK, that's 3 to 6 minutes. And then finally, at the end, it's about 5 minutes of Q&A. And producer Aaron is collecting the questions. So I know someone's asking what FDUFA is. Someone's asking what, other things like CLVS. We're not going to see the questions until the end, or Viv's not going to. And Aaron Bry is the one gonna figure out which ones to go there. So, and that's it. So we're trying to keep it a little more organized. But I know you guys will love what she's saying. So now I'm going to go away. And yes, XII. We're going to post a schedule for each of these shows. It would be really helpful. Listen, we could have chosen to wait to do these shows for another month until we were all like I's dotted, T's crossed. But we also wanted to learn with you because we're Zinger Nation and we're all one and we're getting feedback. And so it's going to be, the first couple of weeks will be a lot of this kind of stuff. So you have a choice to like come back in a few weeks or be here with us and be on the same team as us. And that's what we're doing. All right, Viv, you're doing an amazing job. So I just want people to know, because I don't want them to think we are annoying them in the questions. She's doing an amazing job. So Viv's the best. Give her 20 million likes. Bye-bye.
Okay, PDUFA is the approval date. So a really good site that I love to check to do my own DD, and sometimes just to be able to trade just momentum is Biopharma Catalyst. So maybe it's Biopharma Catalyst. So let's just make sure here. I'll type for you guys. Biopharma Catalyst. So let me see if it goes. Oh, of course, bad getaway. So let me just see. Bio. I know a lot of people asking me, okay, here you go. You don't have to have a membership. I do because it gives me an opportunity to see further out. But if you can see here, for example, if you type KMPH, so here, it's gonna show here. See, it shows the chart, shows you the float, how many shares. That's why I told you guys, 11 million shares, guys, this can double from here. So that's why I'm holding all the way until before PDUFA, and then I'm just leaving some for PDUFA. But there's a huge opportunity here for us to trade this, because when you have a small float, the stock moves faster. See, I'm gonna explain this for the new people. So so here is it shows right here. See, it shows PDUFA, and then it says premium membership is required to view all the catalyst dates, but you can have an idea. And then if you go here to calendar, PDUFA calendar, you guys can see all the companies here coming up this month. See? So I am also holding TGTX over here and GTHX. Both have a PDUFA at the same date, so I'm hoping there's approval for both. I've been holding them for a while, so I can take a little bit more risk. So so that is the update. So when it comes to, let me just see how we're doing here. Look at ATNX. Let me go back to my sundial, you guys. I don't want to lose any money here. Just make sure my chart. Okay, so we're good. Jeez, still consolidating here. Okay, so going back. So a new company that I had shares before, but I decided to add today is Akebia. I used to own Curex, so it's Kerix, Curex, yeah. And they merged with this company, with Akebia. And they have this amazing medication that is for patients that go through dialysis. And when you have a patient going through dialysis, you can have two problems. You can have a deficiency in potassium, deficiency in phosphate, and iron deficiency. And this drug has both. It addresses not only phosphate deficiency, but also iron. So you kill two birds with one stone. And not only that, it reduces costs for patients, and patients only have to take one product versus 3 products, because you can have either, or you can have all 3, or you can have 2. So this is my pick for today. So I know there's a couple catalysts coming up here with Akebia. Let me see what we find here. So if you go here, company search, AKBA.
Can you zoom in a little bit?
Yeah, sure.
Thank you. And all the, when you're showing the charts, zoom in just a little bit.
Yeah. So how do I zoom this thing though?
You just hit Command plus. Are you on an Apple or PC?
I am. My son's changed the keyboard. Took my Apple keyboard out.
Can you control? Maybe it's Control plus. It makes it bigger. There should be a thing on the top that says View, and you could do Zoom.
Yeah.
But it's no big. If you can't, don't worry about it.
I have to learn this because I.
Yeah, they would really like you to zoom in. If you hit Command or Control plus, or on the top navigation, or just right click, and I don't know.
Okay.
There you go. You did a little bit, I think.
Did I? So yeah, but if I do,
okay.
If I do this, look. Oh.
Yep. Control plus and scroll up. They said it. Control plus and scroll up. I don't know. All right. Thank you.
Yeah, trying. No, it's not going to. So let me just, I think I'm signed in, but see, you can see here, they have a 2 NDA filings coming up for this.
Hey, Vivi.
And here, phase 3 initiation announced in July 2020. So you guys can find a lot of information about these companies, and then you can look at the background and see, you know, what interests you. But that's how I find all my biopics. So that is my other pick for today. And let me see what else I'm holding here. Let me just go to my Weibo. Okay, so AKBA.
Hey, Vivi, can you hear me?
Yes, yes.
So do you see your little profile picture at the top right, the little circle photo?
Uh-huh.
If you click the 3 dots to the right of that, it'll come up with an option to zoom.
Oh, okay, to zoom. Oh, my photo? Oh, over here, right?
Just to the right of your photo, there's a 3
gotcha.
dots. Yeah. If you click those.
Yeah, okay.
It popped up for a second, and then it'll have a zoom menu.
Is it better?
No. So click those 3 dots.
I did.
Oh, yeah. There we go. Boom. Yeah.
Zoom,
it's not showing
okay.
me, but yeah, it zoomed in. Perfect.
Yeah, so, okay. So now it's really, really zoomed in. But this is Kibia here. My entry, I entered at $4. It's a long-term hold for me. So if it goes down a little bit, I don't care. I'm not trading this one. So I just wanted to go back here and see how we're doing with Sundial. Okay, so let me just pull my chart here, you guys. And I love the Weibo chart for some reason. It's free, and I love it. And you don't have to even to be signed on. I like their live chart. So I'm going to put to my second screen here. Okay, I just need to watch this. I don't want to sit on the show and lose money. Okay, we're good. We're good. 117, you guys, we're good. Okay, so those are my latest updates. And then I wanted to talk to you guys before we even go into Q&A, which I have some really, really good questions here, you guys. I wanted to talk to you some of my other current holds, and I think the Twitter is a great avenue for us to find good picks. But one of my favorite guys here is definitely, I brought him over on the show, is Jack, because Jack finds the most amazing stocks and are really, really low. So I'm on a WWR right now with him. I'm in an ENG with him. I am on a CLSK, Clean Spark. And Clean Spark, he told me to buy at $2. And ENG, he told me to buy at $2.40. So that's how I usually, because my specialty is bio, so I rely on really good people around me. And so Jack has been my mentor for the last couple of months. And so he teaches me how to read a lot of these 10Ks and 10Qs. So I would definitely give this guy a follow if you're looking for a value investor, because he will find you the non-bio stocks for sure. I don't even know why he doesn't have more than 10,000 followers. He should have 20. So I guess we can go on and talk a little bit about Q&A. So let's see here. I got it. Okay. Okay, so you wanted to know here, what do you think about KMPH PDUFA drug and how we'll do in the ADHD market? I really like this product because I was trying to explain here yesterday on the show what is a pro-drug means. So a pro-drug is when a company takes a molecule, an existing molecule, and it tweak it and make it, more potent, less side effects. It can make the dose that can be different, the size of the pill. There's a lot of products out there that are pro-drugs. For example, I used to sell a drug called Zopanex. And the compound for Zopanex before it became pro-drug is albuterol. And albuterol was giving a lot of tachycardia to patients. So this company that I used to work for, Synovian, came up with the level of albuterol. So it was a molecule that had the same efficacy, but less side effects. So I feel like when you're looking at this prodrug for KMPH, is a prodrug of a Focalin. Focalin is being prescribed for the last 20 years with Novartis. And I used to sell that drug, I don't know, 5 or 6 years ago. It's a really, really good drug, has a really quick onset of action, but it kind of wears off. And when you have ADHD, you need that 24 on, 24 going on remedy to help you focus. And so what KMPH is doing with this drug is making it not only just short acting, but also more potent. And so it lasts in long lasting. So I feel, you know, a lot of the people are asking, you know, oh, the team needs to be a Vyvanse, but Vyvanse is a different class of drug. So I don't think it's going to be the next Vyvanse, but I do feel like there's a huge niche because it's the first ADHD that's been, it's going to be approved in many, many years. And the reason I feel like it's going to be very good and FDA probably is going to approve it because it's a prodrug of an existing molecule. So there's not a lot of risk when it comes to safety data. And so let me see here. How does PDUFA affect when you should sell the stock? Before, after? Okay. So I'll give you an example. I have a UPH, Arena Pharma. I had 100% of my position through PDUFA because I really, really believe, but I sold 60% of my position right away. And you saw, if you guys see it, when we lost it back to $16. So I don't, I usually sell my position and buy back. So now I'm about to build up my position again with the AUPH. Even though I do have some, I wanted to add to my existing position because I feel like AUPH is a real winner. And I feel like eventually we're just going to be a matter of time we're going to get bought out. So that would be my strategy. Unfortunately, people sell the news. So you wanted to lock some profit. So that would be my strategy. I always sell a good percentage of it right when we get approval and then, you know, let settle and then buy back. So that's my strategy. So what is more important to you? Clinical trials or PDUFA, and then which phase of the trial is most important for larger catalysts? Okay, so believe it or not, the most money usually you make at the beginning, because if you go in and do lotto tickets and a bunch of these bios, it's gonna be phase 2, because I don't know the percentage, only like 40% of these bio companies make it through PDUFA or even through phase 3. So I think the good strategy is for you guys to always trade in and out of this position. So, you know, if you, like I talked to you guys on the show yesterday. So for example, if you are betting on KMPH to, KMPH now I think it has almost an approved product, but if you have a drug that's still testing phase 2, I would go in a large position. So let's assume you want 500 shares. I would buy 1,000 shares. And then every time that we saw a news going up, I would sell half of it. And then I'll buy back when we don't have a news, or if there's a dilution, or if there's an offering, or the phase 2 didn't do well. So I think a perfect example you guys can see, I didn't look at it a lot, but VRXT just had a huge drop in the stock price. Is that the company, you guys? Let me see. VRXT or VXRT. Let me see. Okay. Because I get confused in those two. Okay, yeah. So it was at $24, did not have a good data, and it dropped. So for example, it's like the cat bounce, right? I would have buy if I have not studied this company, but I would definitely buy here if there's other products in the pipeline and if I do believe in a company. So it would be a great opportunity to add. I have not looking much into it. I never held, but it's a $90 right now. So if there's other things in a pipe, I think it is a great opportunity to add here at a 903. So let me see here. Okay. Okay, somebody said AKBA had a failure in August. How does that play into the current situation with them? They had a failure, I would assume, with the second product, right? I just had an interview with them a couple of months ago, and I really like their new strategy, how they're going on those dialysis centers for Auryxia. So I bought it exclusive today. I need to dig a little bit more. Tomorrow on the show, I can give you guys that answer. But I bought specifically today for that medication, the Auryxia medication, not for anything else. So what else? What do you mean? What do you think about? I have not known that symbol CRDF, you guys. Okay. If I have a PT for Sundial, yes, I would like to see at least 150, 160, but we needed those huge walls over here. We needed to definitely, let's go back. I'll show you guys, because everybody's always interested to know what I used for level 2. So let me just show you guys.
Hey, Viv, we're going to take 2 more questions, and the ones that we can't get to, I know there's like 30. If the show's tomorrow, we'll start with the questions in the beginning, because I see a lot of basic biotech questions, and then I see individual symbols, but we're running against our next show. I don't want them to get mad at me. So maybe you can show me your level 2s and then answer like 2 more questions, ideally, because I don't want these guys to get mad at me.
Sure. Okay.
Thank you. You're doing it. Show is awesome. Thank you.
You're welcome. Okay. Okay. Can you speak about the milestones for approval on label? Then KP. Okay, 482. Okay. So let me just go here. I don't have the notes in front of me, but it's the team from Shire that sold to Shire, the company. It's on this, and so is the chemist. So I do believe this is going to be totally a winner. I have to look at my notes. I don't have in front of me, and I'll get back to you guys tomorrow on that, because whatever we didn't cover today, we'll cover tomorrow. So I think that's it, guys. I hope I was able to help you, and this is it. I'll see you guys tomorrow.
Yep. Well, thank you, Viv. Thank you. You guys can follow her on Twitter. She knows her biotech, knows her pharmaceuticals. She'll be here tomorrow, and maybe we'll start tomorrow with the questions and just the format. Every day is going to be update on existing positions. Second part is any new biotech positions, because we want to know those. Then another one's Viv's musings. It may be things she saw on Twitter that were relevant that you should know about. It may fall out of biotech. It may be something else. Just Viv's musings. And then the last part is the Q&A, which we left for 5 minutes. But tomorrow we may make that longer or start it with a few minutes. So pretty formulaic show. We'll have a schedule out there very soon. And thank you again, Viv. We appreciate it. Slam the like for her, or give her a thumbs up. Let Viv know that you appreciate her guidance on this stuff. And then you'll be able to get I think a half-an-hour clip of this segment on YouTube in about an hour. Okay? So thank you guys. Yep.
Bye, you guys.
Bye-bye. Okay, bye, Viv. So next, I have the pleasure of bringing on the one and only, all the way from Israel. He came in. His name goes by Spencer, and it makes it easy because it is Spencer Israel. Spencer Israel, are you here today?
What's up? What's up? I'm here.
How is Israel today?
Same as yesterday, Raz. Same as every day that you ask me that question. How about that?
Well, no. Is it hot out there? Is it cold? Like, what's the weather like in Israel?
Desert, man. It's always hot. It's a desert.
Oh, okay. All right. So there's a lot of questions, a lot of engagements on Viv. Oh, ZOM's up 20% today, Spencer. What are you looking at today?
So I kind of wanted to squeeze in Marcus there, but prior to him, I was going on about ETFs and why I own what I own, talking my book a little bit and talking through my thought process. And I didn't get to finish that, so I kind of wanted to finish.
Okay, so I'm gonna disappear and let you take the floor because that's what they want. And we want to give them what they want. And then I think Spencer at 3:30, you have your one and only colleague, or is it 3:45, Joel Elkanen coming on? Is that correct?
Yep, we're gonna do 3:30 to 4 going forward. So
Okay.
we've been doing 3:40, but now we're gonna do 3:30.
Okay, and then I don't know, Spencer, but it may have been decided. We have a Benzinga Pro like cocktail hour, and it may be on this channel today. I'm not sure, but we'll find that out. So it can be a little bit of a mystery for everyone. So anyway, or maybe if you know, then you know, but if not, then all good. But thanks, guys. Talk to Spencer. Slam the like. Show Spencer your love. He's a good man. Charlie Brown. Peace.
All right. Thanks a lot, Russ. Okay, so I was going on about my ETF process, and I kind of got interrupted. But yeah, thank you, Blockchain Brian. I would love to have my own ETF show to just talk ETFs. I can do everything from like show you who I follow, who I read, to what tools I use, to my thought process. So let's go back to that. I did neglect to mention earlier, and I saw someone in the chat throw it in there. Yeah, dividends. I do pay attention to dividends. If the fund pays a divvy, that's great. Again, I don't make that my deciding factor, but dividend is one thing to consider. So dividend, expense ratio, tracking error, and allocation. Allocation is the big one, right? It's really the most important thing. You got to know what the hell you're owning. Okay, let's go back to. I'm gonna do some free advertising right now to this company. They should definitely be paying us money for the amount of screen time I'm about to give to them. But I use this tool. We have a great screener on Benzinga Pro. But the ETF data isn't quite there yet. So I'm going to share my screen and show you this thing that I use. I mentioned earlier ETF DB. There it is. So this is basically how I find my ideas for ETFs, right? And it starts with okay, what do I want to own? That's always what I start with. What do I want to own? So let's say I want to own something China related, China tech. I don't know what. I just know I want some exposure to China tech, right? So very simple. Go into equity. You could go region, and I'll go emerging markets, or I'll go China. Let's just go China. And I'll go sector, and I'll go technology, right? And this will be all the Chinese technology ETFs that are out there. And this is a tool, again, on ETFDB. You have to pay for this. So these are the four. These are the four Chinese technology ETFs: KWEB, CQQQ, CWEB, and CHIK. So you can see total assets. Obviously, KWEB and CQQQ are much larger than the other two. I do look at that. Assets under management isn't necessarily an indicator of whether a fund is good or bad. It's really not. But I do look at it. If a fund has like a large number of assets, it tells me at least that other people are in the boat. I don't want to be the only guy in the boat, right? So the larger the ETF, I guess it makes me feel like I'm not alone. So I will naturally show a bias, I think, to larger ETFs in terms of assets than smaller ones. So I do own KWEB, and I want to show you why I own KWEB. So let me just this is just an overall overview. I do look at returns. I try not to chase. We talk about a lot about how chasing is a recipe for disaster. But that being said, I do like to have an idea of what the performance has been. Like if a fund's down 10-20%, I don't know if I want to hop in there. But you have to look at returns within the lens of knowing that you don't necessarily want to chase performance. So you can see here KWEB up 20% in the last month, up 82% in the last year. So it's been outperformed by the CWEB, which is a leveraged fund. So it's not really a fair comparison. Let's take that off our screen here, because let's say I don't want to use leverage. Leverage is great for short term trading, but not longer term investing. So let's just get rid of the CWEB there, because I don't want any leverage in my portfolio right now. So you've got the three here. You can see KWeb is the best performer of the group. So over the last year, that's great, but it also makes me, mindful of the fact, again, I don't want to buy KWeb just because it's the top performer. That cannot be the only reason. Because when I'm buying something, I want to buy it for a while, right? If I'm buying an ETF, I want to buy it for 6 months or a year or 2 years, right? These aren't trades. If I want to do a trade, I'll buy a stock, right? And I want to make a call on earnings, I'll buy a stock. This is for a little bit longer term stuff, right? So I'm mindful of that. All right, KWeb, you see the performance there. Fund flows. Again, similar to assets under management, not necessarily an indicator of how good or bad the fund is, but more so how popular is the fund, right? How much money is flowing into and out of the fund. Why does this matter? Because the way ETFs are structured, they have the creation and redemption mechanism that essentially means you can have, it's not as if buyers drive the price up or sellers drive the price down. That's not how ETFs work. In a stock, if there are more buyers and sellers, it's going up, and vice versa, it's going down. But that's not how ETFs work, right? Because they have the creation and redemption mechanism with authorized participants, and the share count is always changing, right? And we can get more into that at a later date. So fund flow is basically how you determine, okay, is money pouring in? Is money pouring out? That's what fund flows do. So over the last week, you see $93 million of new money has flown into KWeb. That's pretty good, right? That means people are buying. Again, that's not going to translate to the performance of KWeb, because it's the performance of KWeb is dictated by the stocks in the basket, right? So fund flows won't affect the performance, but they do tell me, okay, there are some buyers here. People want in on this trade. People want in on this trade more so than the other two funds. That could be for a number of reasons, but at least I know, okay, that this fund is, compared to the other two, compared to CQQ and CHIK, KWeb is more popular over the last week among traders. Again, I mentioned expenses. I look at that. I don't make it my end all be all, but so it's a little bit mildly more expensive than CQQQ and CHIK. Whatever. 73%. 0.73%. Not that big a deal. Okay. Again, same thing. I'll look at dividends. Whatever. All right. So it pays a smaller dividend than CQQQ. I'm not going to make that necessarily my end all be all. Holdings. So let's go individually here. Let's go to the KWeb page and let's just see what KWeb owns, and let's go to the allocations. And we can, I swear, this site should pay me for the amount of information I'm sharing about them. So here we go. What do we got here? Let me see if I can find you something. Okay, so 44 holdings, so it doesn't own that many stocks. This is the top 15. You can just get a quick view. Tencent, Alibaba, JD, PDD, Bilibili, NetEase, Baidu, right? JD Health, Trip.com. Again, if I want to let's go back to why we're here in the first place. Let's say I want to own Chinese tech. I am not so cocky that I'm going to say, oh, I'm going to pick the winner. I'm going to pick Alibaba, and that's the best one. I'm going to pick Baidu, and that's the best one. Because I don't know. I could do a discount cash flow till I'm blue in the face, but I don't know. And I would much rather diversify my pick, my thesis. If I want to bet on Chinese tech, and I want to do it in a diversified way, I'm going with the ETF, and I'm going with a fund like KWeb that has diversified exposure across the sector. So what it means is I'm probably not going to hit a home run, right? If I go to pull up a chart of KWeb, and we can look at the performance here. Let's see if I can share my screen a little bit. We can get the chart up. So it's up a lot. It's not up as much as individual stocks in the fund, right? So this is going back to May. So in May it was at, let's go back to a 1 year. Let's do a 1 year situation. So, a year ago it was, in the mid 40s, and now it's at 93. So it's more than doubled. That's great, right? A lot of the funds in the stocks in the fund have grown a lot more in that time, and that's fine, right? That's fine by me, because I want to express a point of view on this sector, on the whole trade. I don't necessarily want to say I'm going to pick the winner. It's not about picking the winner. It's not about hitting a home run, really. It's about hitting singles. I just want to hit a single. I just want to hit a single every time. 20 singles. That's what I want. Okay, so that was K-Web. Let me see. Are there any funds in the chat that people are dropping in? I'll try to do some quick analysis. I spend a lot of my time looking at funds and ETFs. So let's see. People are asking about Chris got you the BETS ETF. Yeah, see, that's interesting. So there aren't many ETFs with the exposure of BETZ, right? And I'll bring up the chart on Benzinga Pro. You see, it's a very new fund, right? It's only been out since June of last year. Now, just like everything else in the market, it's up a lot, right? It opened at what, 15, and it's at 20. So it's doubled since it's been out. It's doubled in less than a year. So that's pretty damn good, right? Let's not pretend that doubling in 7 months. Let's not pretend that's not awesome. Okay, that's awesome. So let me go back into ETFDB for a second here, and let me see if we can do a let's search for BETZ and let's find out what exactly this fund holds. I do not own this fund. Okay. So what jumps out to me? Expense ratio, 75 basis points. Not cheap, but like not insane, right? Sort of in between. So that's fine. Index tracked, okay. I can see that it's a passive fund. It's tracking an index. That tells me it's not going to do what ARK is doing with buying and selling all the time. They probably rebalance every month or every quarter. So passive fund, fine. What else? This is some other data. No, let's look at dividend value. Nope, they don't have anything there. All right, what about expense ratio? We saw that already. Holdings. Let's go into holdings. All right, let's see what they own. Top 15 holdings here. All right, see some names that I like. Penn National, DraftKings, Flutter, William Hill. So we've got some diversification across markets because not all these are in the US. I believe a bunch of these are over in Europe. And again, there aren't many ETFs with this kind of exposure, right? That's sort of what makes ETFs like BETS exciting, is it gives you a way to basically go long sports betting. That's what you're doing. You're going long sports betting. If you believe that sports betting is going to go up in the future, then this is like one way to play that. You could buy all these stocks if you want. You could buy DraftKings, you could buy Penn National, you can express your point of view that way, or just let BETS do it for you. And this is at the core of why I love ETFs, for that reason alone. Performance, like I just said, it's doubled in the last year. Fund flows, let's see what they got. Let's go 6 months out. So, I mean, no real surprises here, right? Sports betting is an emerging industry, pretty hot. So not a surprise to see a ton of inflows. One thing I'll note on these random red days of outflows, those could be outflows, or they could be what's called a heartbeat trade, which is something that's technically it's illegal, and it's basically a way that the ETF manager avoids passing taxes on to us. So it's one of those things where it's like it's a heartbeat trade is a loophole in the system, but it's a loophole that benefits all of us. So I don't think anyone is really complaining about it. Bloomberg's ETF podcast Trillions did a whole episode about this last year, which Trillions is a great podcast. I recommend that. I listen to that. It comes out like once a month, and so they did a whole episode about heartbeat trades. It's one of the reasons that ETFs can have such low fees and such low expense ratios, is because they're doing things like that to sort of crawl through a tax loophole. So that big red day of outflows may be a heartbeat trade, where it may not be real outflows. That's my point in saying that is it could have been, or it could be a heartbeat trade where the money didn't actually, like, it went in, it went out, and then it went right back in as a way of avoiding taxes. So I don't know what that flow was. It could have been that heartbeat trade. So okay, what else am I seeing? Anything else in the chat? FNGU. Okay, that's interesting. FNGU. Is that leverage? Is that one of the leverage ones? Yeah. Okay. Let's talk about leverage. Let's talk about leverage ETFs. Actually, FNGU is not even an ETF; it's an ETN, right? So it's a different instrument entirely. Same idea as a leverage ETF, right? Use leverage to magnify your exposure over the short term, but again, ETN, exchange traded note, means it's not actually holding the stocks; it's holding debt related to the stocks, and that debt is backed by some bank. I happen to know that in the case of FNGU, the debt is backed by BMO, Bank of Montreal. But they're exchange traded notes, not exchange traded funds. That's a key difference. You always need to know what you own. So if you're buying a security like FNGU and you don't know what an ETN is, you shouldn't be doing that, right? There's plenty of information out there on Benzinga, on other websites, podcasts about the differences between ETFs and ETNs. You need to know if you're going to buy that, you need to know that, right? You need to know the difference in an ETN versus an ETF if you're going to buy something like FNG. So let me pull up the chart and we can see what I'm looking. So FNGU is a 3 times leveraged FANG ETN. So this has 3 times exposure to the New York Stock Exchange FANG Plus Index, which I happen to know is an equal weighted index of 10 large FANG stocks. So it's Microsoft. Let me see if I can get them all. Facebook, Amazon, Apple, Microsoft, Netflix, Alphabet, Twitter, Tesla, Baba, Baidu. That's the 10 in the NYSE FANG Plus index. And so they're all equal weighted. They all make up 10% of the index. And so what FNGU is doing is giving you 3 times exposure to that index. And like I was saying earlier, these are short-term. These are securities meant to express short-term points of view, right? You don't really want to be using FNGU as a buy and hold instrument. That's not what it's there for. It is there to give you short-term magnified exposure. You think in the next couple of days or couple hours, maybe a week, maybe you think it's going to go higher and you want to get on that trade. You could lever up using options, or you can lever up using a leveraged fund like FNGU. So that's what I have to say about that. There's a couple others. I believe there's a double levered and there's a regular non-levered ETN that gives you exposure to the index. So FNGU, I think FNGS is one of them, and FNGO is a 2 times, and FNGS is the non-leveraged one. So keep that in mind. Please use caution when buying and selling leveraged ETFs and ETNs. Please understand how they work, how they use the leverage. It's daily resetting, right? That's such an important concept, right? Just because a fund says it's going to give you 3 times exposure, that does not mean it's going to return 3 times the index for however long you hold it. That's not how leverage works. It resets daily. So understand that. Understand contango. Understand how these things can affect the performance over the fund long term. I would never ever recommend somebody. Well, I wouldn't recommend anything because I'm not an advisor, but I would never tell someone to buy and hold a leveraged fund. My dad told me a while ago that he had a leveraged fund for like a couple of weeks, and I freaked out. So please don't hold these things long term. That's not why they're there. They're there to be used as part of an active trading strategy. If you can't afford to be monitoring your position and looking at the screen, then you probably shouldn't be buying a leverage ETF. That's my take on that. Okay. What else? 3:25. So I'm going to be joined by Joel Elconin in a couple of minutes. And we're going to walk you into the close. What about JNUG? Same situation, right? So this is the leveraged junior gold miners ETF, right? It's the exact same story. You should not be owning these long term. Why? Let me just show you. me show you. This is JNUG. This is a long term. This is not even that long term. This is going back a year in JNUG. Okay, look at this. This is what happens. Now, granted, this was during the when COVID happened, so this is unusual even for a leverage ETF. This kind of drawdown, but you see my point, right? Look at this. 2015. Look at that. This is all because reverse splits, because they have to keep the price higher for you to trade it. But long term, this is basically this is the effect of leverage ETFs long term. This is a fund that says it's going to give you 2 times the exposure of junior gold miners, and yet it's down almost 100%. And that's kind of how these funds work. Again, not long-term investments, short-term trading instruments. That is what I want you to take away about leverage ETFs. Please, 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 if you remember nothing from today or anything, remember that, because that's super important. Do I still have KWeb? Yes, I still have KWeb. I do not intend to sell KWeb. My thesis is very simple. The Chinese population is continuing to grow, and it is, as we've seen with TikTok, which originated in China, it is much more how should I say this? It's much more of a maybe digital native. I think that's fair to say, digital native society than the US. That's my opinion, at least. So I believe that just activity on the internet in China is going to go up, and KWeb is a way to play that. It really is that simple. It's a demographics play. It's the fact that Chinese population is growing, and they're all going to be on the internet, right? I mean, TikTok came out of China, and then now it's huge here. So it's very simple thesis. That's pretty much all it is. I've got about, I want to say about 5% of my portfolio, my fidelity count in KWeb. I don't allocate more than 5% to any non-core holding. Again, my core is VOO and VEU. Everything else is sort of between 5 and 10% on as far as how I allocate capital, how I allocate to different positions. Are you saying don't hold an ETF long term? No. I'm saying don't hold a leveraged ETF long term. You can hold, ETFs are meant to be held long term. Leverage ETFs are not meant to be held long term. So any other ETF, right, from SPY to the QQQ to the IWM, those are all fine to hold long term. That's what ETFs are for. They basically replaced they are a more tax efficient instrument compared to mutual funds. They're the tax efficient equivalent of a mutual fund. Definitely buy and hold those, right? Do not buy and hold leveraged ETFs for the long term. And if you read any material from one of these providers, from a microsectors, from a direction, from a ProShares, if you go to their sites, they will tell you that too. They say that. They say these are not meant to be buy and hold instruments. They say these are meant to be used as part of an active trading strategy. And so listen to them, right? Listen to them, understand the effects of leverage in the long term. Do not buy and hold those securities. Sam L, VOO greater than SPY. Well, VOO is a little bit cheaper than SPY. That's why I bought it. I'll be honest. It's the only reason I bought VOO over SPY. They do the same thing. They give you the same exposure, right? The same underlying exposure as the S&P 500. Same exposure. It's cheaper, and it might be even cheaper by like a couple of pennies, but like, great, you know. So let me see if I can find the VOO expense ratio, because I know it's like dirt cheap, because it's Vanguard, and that's what Vanguard does. So yeah, expense ratio is 0.03% on VOO, and SPY is 0.09%. In the long term, does that really matter? No, it really doesn't. But if I'm going to own the same basket of funds, I'm just going to go for the cheaper one. That's just me, right? That's just it. It won't really make a difference, but that's kind of why I picked. That's the only reason I picked it, right? I knew I wanted to own the S&P 500, so you could own the SPY, you can own the VOO, and whatever. What's the iShares ticker? Anyone know that? Let me know, because I forget. But you can own any of these things. They all want to do the same thing. I just went with the cheaper option. That's pretty much the only reason, right? So again, What does it own? The cost. Pretty much what I look at. Okay. DIA, same thing. DIA is the Dow Jones, the diamonds, right? So IVV, thank you. Is that the S&P BlackRock one? IVV, I think it probably is, right? Yes, it is. Thank you very much, Zachary. Vanguard, BlackRock, and State Street are, of course, the three largest ETF providers in terms of assets under management. State Street's got SPY, iShares, which is owned by BlackRock, has the IVV, and Vanguard has the VOO. They're all competing with each other. They're all competing on fees. All those funds do the exact same thing. So that is that's all I have to say about that. Can I say something about dividend income ETFs? Ooh. So actually, the only ETF that I bought, in which I really bought it in part for the dividend, was I bought a REIT ETF, and it's actually the only thing in my portfolio that's down. It's pretty wild. We're in such a crazy bull market that I'm up in basically every position, except for this one ETF that I bought, and I bought SRVR, which is it's a REIT ETF, and it's from Pacer. And what SRVR does is it gives you exposure to REITs that own the land used or land or buildings for servers, for technology server rooms. That's where they got the name SRVR server, right? And I thought, if computers are going to take over, why wouldn't I want to own like server space, right? Essentially, or like server REITs. So I bought SRVR, and I'm down like 5% in that. That's like the one thing that I bought. I was like, oh, you get the REIT exposure, you get dividends, and I'm down in that. So I definitely think it's great to buy an ETF for the dividend, for the income. That's a great thing to do in any portfolio. Again, there's nothing like money into your account. It's a different psychological gain, right, than capital gains. It's money. It's dividends, it's cash into your account, which is great to see from a psychological perspective. But as we've seen in the last year or so, the market does not care if you pay a dividend. The market does not even care really if you make money. The market loves these high flying names, these emerging names like solar and EVs and everything else. So dividend stocks are not in favor right now, which is fine. But again, they pay divvy for a reason. It means they're stable. It means they're relatively safe for an equity. Where is Joel? I want to see if I can get Joel in right now. 1 second. Joel, you here? Miss you. All right, Joel is joining me right now. Yeah, REITs do suck right now. Blockchain Brian, that's the truth. REITs suck right now. They won't suck forever. I've got SRVR, and I saw someone mention one. 5G. Are you correct? I own 5G. Yeah, F5EG. I bought that last year as well. I did a lot of buying last year. 5G is one that I own. I thought, okay, what is an emerging industry that I want a piece of? 5G seems reasonable. That seems like it could go up. So I bought the 5G. I don't know of too many other 5G ETFs. There may be a few, but I did buy the F5EG last year, just so I could kind of get exposure to that trade. Again, that's what it's about. It's about getting exposure to a trade. All right, Joel. Yes, Joel is here.
Sound tired, Spencer?
Oh man, you are loud in my ear. Holy cow.
I'm sorry.
Oh my God. Let me see. Can we turn Joel down here a little bit? Damn, he's loud.
I'm loud anyway, Spencer. You know that.
Gee, maybe I'm quiet. I don't know. I mean, I don't really project too well. But Joel, how's your day?
My day. Another fine day waiting for this snowstorm to come. We're in a winter advisory, 2 to 4 inches.
Wait, are you being serious right now? Are we really?
Yeah, a winter advisory for 2 to 4 inches. I mean, come on. That's not even anything. But I guess there's supposed to be some ice and bad weather, Buzz. So you be safe driving home today, okay?
Yep. I just turned Joel lower, everyone. So
sorry about that, folks.
Let me know how that is. Okay, so Joel, is one of those days where the GameStop indicator is still in effect, right? GameStop is down, AMC is down, KOSS is down. What is up? Pretty much everything else, right?
Yeah, we
Pretty
did.
much.
Yeah, I mean, it was a round tripper here, and who knows where this is gonna end. I will say.
Oh wait,
just
Joel,
here,
Joel, show us your charts so we can see.
show us your charts.
If not, I'll pull up my Benzinga
No,
Pro.
I got it. I got it.
All
I
right,
got
all right,
it
all
here.
right, all right, all right.
Just not used to you holding my hand before this, you know.
I know. Hey, listen. You got to give the people what they want.
Yeah. You sound tired, my friend. But here, let's go to StreamYard, and I'm gonna share my screen, and I'm gonna share the one with the charts here, and just real quickly running down the S&Ps. Little shake and bake off the open. It looked for very little time that we wanted to try and do some work at 3830 handle. But once we cleared that pre-market high, there was really no looking back. I was hoping for 62 and a quarter today. That's the all-time high that was made on January 26th. Maybe I have to wait for the jobs number to get that tomorrow, but that was a target I had for today. We still have about 24 minutes to go to get that. Crude's going to get its first close in the $56 handle in quite some time. Gold taking it on the chin, down $39.80. Silver going in the same direction. Actually, for you silver traders here, we got back to the area right where the initial surge, well, you had the 1 day surge and then you had a low at 26 before the big bump. So you did get a bump off 26, maybe cleared out any stops that were there. See if we can head higher. Obviously, today's high is relevant, but tomorrow, let's see if we can clear 27, 28. Silver is a tricky thing to trade, so be careful in that. In Bitcoin, I thought this might be the day where we busted out into that 40,000 handle, but we were turned back at 39.2. But now 37,810. It's right there, so it's going to get a running start going into that 40K level tomorrow. GameStop, game over. It looks like, folks.
Oh, Joel, don't say that. Don't say that. You never know. You never know. You never know.
No, well, yeah, I do know. I do know.
Okay.
Just, I will say that the pace of the selling has declined a little bit, but that just may be, just day traders that are short or have some option positions on, just wanting to lighten up into the close. Based on the daily charts here, we are through the low of this day. Your next daily low, I looked on this thing, it doesn't even come into. I can't believe this is a daily chart. It doesn't even come 61.13. We've taken that out. Your next daily low was on January 22nd at 42.32. So I'm not saying we're going there tomorrow, but 5 big days of selling. AMC, I mean, it's holding up a little bit better on a relative basis. Of course, that didn't have the same kind of run that it had. $6, that was your low a couple days ago, trading 709. So for you AMC traders, sure like to see this hold $6. So that's what you're looking at in those stocks. And what else? BlackBerry was in that category. Boy, I bet your mom's glad she's still not in that one. That's coming down. That's found a little bit more support, though, at the $12 area. And then triple BY, that was one that got up to $53, $54. Couple low, 25. It's showing some love here at 25. There was a couple lows at near the end of January at 25, and we hit that yesterday. So from a technical standpoint here, triple BY looks like the best one of the crowd as far as these stocks that had the big runs.
All right, Joel, we just had a headline break a few moments ago while I was droning on about ETFs, but looks like California. There is a bill out in California
to open up the theme parks.
Yeah, theme parks, right? So I just looked at Fun, I looked at Six, and I looked at Seas, SEAS, SeaWorld, and they all popped on that headline.
Well, no bigger one popping than the House of
Oh,
Mouse,
and
right?
Disney. How did I look at Disney?
Yeah, how did you forget Disney?
I don't know.
They like that. You saw that happened on the last 15-minute bracket. You did get up. I think you didn't quite make an all-time high. But folks, I mean, this is just, it's resistance until it's resistance. And for a couple months here, this has been hanging out at, what's the all-time high? The all-time high was made at 183.40, and then it came down last month to 182.49, 181.31. So I think you really need for another breakout, another major leg higher, you need to get rid of that 183.40. Only got to 81.38 today on that headline, already $2 off the high. So peeling back some of those gains.
All right. What else caught my radar today? I've been watching our stream all day, but I've been, keeping an eye on charts and news. I was very keen to see what PayPal and eBay would do. I would have bet money yesterday that they would have both faded off the earnings report, and they did to an extent. Well, PayPal a little bit less so, but eBay definitely did. It's what we talked about.
Yeah, we've talked about that trend. I mean, chart doesn't look all that bad. I mean, you're still closing at a new all-time high. Didn't make it in that first bracket, though. First 15-minute bracket. Actually did it get to 275 exactly? I'm curious here. Because really when you get, 274.94. When you get in these kind of areas, really, there's nothing else to look for, right? Except for half and whole numbers where orders may be stacked up. People, hey, I want to get out at 275 for no other reason that they picked that round number. So that's where you see orders congregating. If there was a big seller at 275, someone could step ahead of that. eBay, I saw that had a big old move. That was actually, did that do it? That did it right off the open.
Yep.
And now it's pulling back near. So this is giving back a lot of those gains, but no one gave back more of their gains than Sava. Did you see this thing?
Yeah. Yep.
Wow.
I mean, I would have been wrong because that would have been chasing, but yeah, you just don't know when it's going to end. You don't know. And look, they even had that fake out, that dumb, what was that? That dumb first half hour. Look at that. The high of the day was hit at 10 o'clock. That's so dumb. Oh my God. Trading is hard, man. Trading is so hard.
138.20 is what you got to it in the pre-market trading. Higher open. They tried to run it. Did manage to open in triple digits. But the old uninitiated intraday 2-for-1 stock split. I haven't seen that one in a while. But bouncing off the low. The current low of the day is 65.01. Your next daily low comes in at 59.50. That was the low from yesterday. But folks, keep in mind on these things that there's still a lot of people sitting in a lot of profits. I mean, look where this stock ended the year.
True.
Right? Ended 2020 at 682. 1982 at the end of January. So on the upside, and I thought really the only number I can give you now, obviously today's close will be an important level on the mark. But I wonder how many people are thinking if this gets back to 87.95, that was an all-time closing high from yesterday, I won't mind trimming there. Problem is you got a lot of buyers stuck between that now and $20 above of intermediate buyers. So it's so hard. It's so hard to chase these things and not sell on the way up. But when it turns and it turns hard.
And this is why, you hear Dennis and Joel say this all the time. I don't trade this because it's not my cup of tea because I don't know how to trade this. And you have to know what you're good at, what you're not good at. These kinds of high flyers, these movers are really, really hard to trade. General rule, the more volatile a stock, the harder it is to trade. So
right.
That just this Sava thing is that would have if I was trading that, it would have eaten me alive.
if you are good with your risk parameters on things like this, by all means, go at it. Maybe if it's something that you can't, keep your eyes or your hands or your keyboard off, maybe trade with a little bit less size because you're probably still going to get a pretty good bang for your buck.
All right. We got earnings after the close. They're asking about Ford. This is one of the few stocks that I do own a small position in. And so it gave back those gains from the other week. It gave back those gains. It got above 12. It's not there anymore. They're going to report after the close tonight. Let me see if I can give you any estimates for Ford. Do we have them in Benzinga Pro? We should. We do. Estimate is a 7-cent EPS loss on a revenue of $33.89 billion. So they're estimated to lose money on an EPS basis last quarter.
Right. Who knows how the street's going to react to these earnings? Really got overdone with the JP Morgan 1-day, 2-day buy signal, right? And got it over $12. And
was that JP Morgan? I forget who that was. That was JP Morgan.
Was it JP or Deutsche Bank? I'm sorry.
I don't remember. I don't remember who it was.
I think it was
somebody added to the short-term list, right?
Yep.
Yeah.
And boy, you got the pop in that, and then it gave all those gains back, filled the gap from that day. You're probably more than halfway back of this move. Thick stock, like I said, who knows how it's going to react off earnings. It snuck through 12 that one day. But I wouldn't be surprised if sellers reload at that number just because of the big fall that you had added and then coming back. But who knows what's going to happen in the pre-market. But 1220 really is the only level I can give you. The next level on your monthly charts comes in at your January 2018 high of 1335. On a decline, I see these two lows. You have to respect these two lows. Just under $11. Let's split it. Let's call it like 1079, 1080.
When does GM report? We were asked about that. That is Wednesday morning. They report Wednesday morning. GM. Bringing it back to this afternoon, though, big day on the earnings front. We have Ford, like we mentioned. We got Pinterest, Peloton, Snapchat, Activision. We got some big ones here, Joel. Let's go through all of them.
Pre-earnings run here in a lot of these stocks.
Oh, yeah.
79.15. It actually almost hit $80 in the pre-market. So you do have some trimming, a little, not much though. 79.15. Just that could be a target on a quick pop. Definitely was a seller there at 80 in the pre-market. That's actually the after hours when it was kissing 80. 79.98 was your high, and that was just before the 8 p.m. close last night. Peloton, full disclosure, long shares of Peloton, long and strong. We'll see how they react to the report. Little short covering. Actually, I was looking at this one. I pulled it up because it had the report. And these are kind of formations that you like to see. You had 1, 2, 3, 4, 5, 6, 5 out of 6 highs. There was someone definitely working out a piece right there at 151. When they mopped that guy up, boom, it took off. And we got as high as 157.75. This high could come into play today, 58.67. Another high, 66.57. Wow, the all-time high here is 171.09.
ATVI.
Oh, Activision. Now, Take-Two, and just folks, some of these stocks. It wasn't Take-Two. It was EA, right? EA, there you go. You see what it's done since it's a report. So there is precedence here for selling the top, or selling the pop. I don't want to say the top. But for Activision, if it gets acting the right way, you had 3 out of 4 highs. This is called 96. So if you're making for another, looking for another breakout just above 96, the actual all-time high is 95.87. The next 2 days highs, or Yeah, next 2 days high is just under that, and then the fourth high at 95.76. That's $3 away on a good print. That might be a number you want to take a look at.
All right. Anyone have tickers? Drop them into the chat. Let's do some ticker time right now. Casey asks if he's still in jail. No, you're not in jail. I see your comment. Casey.
Who's in jail?
I don't know. What is this? Microvision, MVIS, Joel. This is a crypto, right?
So that's going to be moving with your Bitcoin.
Isn't MVIS crypto, or did I make that up?
I don't know.
Pretty sure
Chart
I
looks
made it
good
up.
though. Boom, 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 boom. New all-time high, and probably going to be a new all-time closing high here. It's for Microvision. You know, blue skies here. It's a blue sky chart. 1088. It did back off that high just a tad. So it's really the only number that you're going to have there. 1088, and then whatever today's close is, over. Perhaps it's going to settle for the first time ever in double digits, and not quite the same volume as yesterday. So a little bit caution there. 13 million traded 2 days ago, and then you had a 34 million yesterday. Only 23 million today. So not sure if you're running out of buyers yet here. Let's keep an eye on that 1118.
What about TTCF, Tattooed Chef? I wasn't sure if all of the SPACs were gonna, or the post SPACs, whatever you want to call those post merger SPACs, if they were all going to trade down on that Clover Health short report, because it was. I mean, it's pretty company specific, but you never know with these things, and if they're all going to move together. They did not. Clover Health traded down today, but Tattooed Chef is up.
3 pops, three. No such thing as a triple top, and that's what you had today. Congregating those highs just under $24. Pushed it through early in the session. Got rid of that seller. Not quite an all-time high here yet, but that is a nice breakout. Maybe get a little bit of an update yesterday. Not much. Today's the bigger up move. Targets on the upside, potential targets just under $26. A little bit early, 25.85, 25.88, $1.40 away. First things first, need to take out the current high, and we have backed off. Current high, 25.08.
All right, chat correcting me. MVIS is not crypto. They do LiDAR and lasers. So I stand corrected on that. I have one. What about Alibaba? I wanted to discuss this on the show this morning. We ran out of time. Didn't get to it. It has a very nice overnight gap. Looks like they're making nice now with the regulators over there in China. The daily chart looked really good. It's down from the open, but on the daily, I think I like this.
Boy, oh boy. I mean, we talked about that 265 area. That's halfway back, 265, 266. It's hanging there. It's going to close above there. So, yep, there's some other levels. I don't see a lot in there. Major resistance to 280. I'm just, if you sold it on the news where, the bad news, I don't know. Maybe selling on the good news too here. But it's holding up here. What was the high? You got almost a 270, 269.99. So that's your bogey. Kind of a tight range in it today. A little over $4. Volume down from yesterday. So good news all around. I just don't like it faded off the that 270 area.
What about WRAP? WRAP. This is one of those like law enforcement technology providers, right? Like similar to DGLY, I believe.
Yeah, they got a hold of this one and it juiced it. Just opened up right at yesterday's high, and boom, off it went. It's had a pretty good 3-day move here from 5 to 7. But what it is you are clearing this high from, or attempting to clear this high from October at 720. So above that, next monthly high comes in at 955. What it has going in its favor, looks like it's going to be settling near the high for the session. Interesting thing to me in this one, 25.5 million shares traded yesterday. And now the move is taking place here on 3.5 million. So I'd be more excited about it continuing if you had another big volume up day. But are you going to be able to find more buyers tomorrow? That 25 million, it's one of the biggest volume days it's had since July 31st.
Right.
And what's interesting, I'm sorry.
Finish your thought. Finish your thought. Sorry, I didn't mean to interrupt.
I'm sorry. I was looking at the monthlies, and 720 and the monthly. Go ahead. What do you got?
We have an early earnings alert, Joel. Again.
No.
We do. Microchip, MCHP, Mary Charlie Hotel Papa. Early earnings leaked. It is out. They gave earnings, they gave guidance, and they raised their dividend. It is out now. And they were good. That's what you want to know. You want to know what they were? They were good. Okay. They're raising their divvy. They gave good guidance, and their earnings were out. It was good, all good numbers. So wow. Second time in as many weeks, I feel like.
Well, it's a little thicker now in the regular session. So you're probably not getting, its bigger reaction right now. And they're not showing them a lot of love for this report. The fact that you already have a day of trading here on the day of the number, then you got some pretty good parameters to follow. That fact that it hasn't blown through that 145.84 yet makes me think there's some sellers in here. We'll see how it reacts on the close and later today. 146.68 if it manages to get through there. I'd urge some caution here on the downside. Two lows. Today's low 38.63 and 39.62. Let's just call that whole area 139.30 is the support in this one. So good report, raising the dividend, just not quite getting the love that you think it would get off that kind of report.
All right, let's wrap it because I want to give the Cannabis Hour plenty of time. Joel, give us some final thoughts.
60.25. We got within 2 points of that all-time high back from January 26th. So keep an eye on that overnight. Remember, we have the jobs number tomorrow.
Oh yeah,
at 8:30. So street leaning long into that. But another good day in the markets.
Is it important though? I mean, do we care about economic numbers though? I mean, It's 2021. It's short squeeze mania, baby. Come on. No, all right. I guess we do care about the economy still. But not as much. All right. I want to bring on a couple of familiar faces to Joel and I. You may not know them, but I want to bring on Elliot Lane and Tony Noto because they are going to host the Benzinga Cannabis Hour. About to start right now. Tony, you there? Elliot, you there?
What's up, yes. Spencer? How's it going, man?
Tony, you're on mute though. Let's unmute you, Tony. Tony, unmute yourself. Come on, bro. There we go.
Come on, we've been doing this for a while now.
We've been doing this. There we go.
Can you hear me? Am I on?
There you are.
Hey, we got him.
Spencer, what's up, man?
We've been live all day, all damn day.
Are you ready to take a break? This 8 hour.
I'm gonna take my Simpsons cutouts and my Costanza and my Adam Sandler and my Elon Musk, and I'm gonna get out of here and let you guys do your thing. A whole hour of cannabis content, is that right?
Yeah, here we go. This is not new, by the way. This is just us joining the popular kids of Benzinga.
Yeah. So these guys were always kept on a separate YouTube channel, and we thought that's stupid. Let's just bring them over to the main Benzinga YouTube channel.
So we've made it.
You've made it. This is where all the cool kids hang out. I'm gonna cede the floor and have fun, guys.
Awesome. Thanks, Spencer. See you soon, man. We are already getting sundial mentions in the chat. Will you all calm down?
Are we in trouble?
No, we're not in trouble.
On sundial.
Yeah, well, you can talk about it in a second. But first, we have an awesome show for you guys today. This show is all about the business of the cannabis industry. We're here to talk to 3 guests every Thursday about what they do in the industry, what they're doing to progress it, what their 2021 looks like, etc. But first, let's see who these guests are. Aaron, could you cue us up, my friend? I don't know how you keep that on in the corner on the other YouTube station.
That's a cool theme
I'm pumped up, man. This is Cannabis Hour again, where the points don't matter, pot is hot, and the guests are rad. That is about as MTV as I will get today. Tony, how you doing, my friend?
I'm doing good, Drew Carey. How you doing?
I got that reference. Trademarked. Yeah, I don't need any trademark infringement here. Anyway, this can be a fun day. I have a lot to talk about with these guests. I have some questions about franchising in cannabis.
Yeah, I have a few.
Seems like a boring topic, but at the same time, it could take over. It's taken over in other industries. So I'm excited to hear what these guests have to say. But first, we're starting with the real estate aspect of Zone Properties. They have been in the cannabis industry forever. OTCQP, they are ZDPY. Definitely one you want to take a look at. Then we're going to move to Open Door, and they have a unique partnership. We'll get to more of that. And then we're going to top it off with Sky Bioscience, who has, they've been around in different facets for a while, but they've really taken some growth lately that I'm excited to dive into.
Yes, they had some coverage recently about all of their synthetic cannabinoid drugs that they have in the pipeline. So I'm excited to chat with them.
Yeah, honestly, though, this year has been insane, Tony. Well over $1 billion placed into cannabis. And if you don't like cannabis in the chat, XXII is a great one. James Nolet 777. They're interesting. They're a unique play. We'll have to get them on the show for sure. Sundial, obviously huge room for growth. We'll get them on hopefully sooner rather than later.
Yeah, they're a must. Former unicorn, lost their fortunes, but now they've been making noise all week. I tracked it Monday. It spiked. Tuesday it dipped. Wednesday it rebounded again. And then today they closed a over $74 million offering.
You know what? And don't be afraid of past trauma. I know trauma is scary, but like in the cannabis industry, trauma is common.
Yeah.
You know,
pick yourself up, dust yourself off, and get back in the game.
Absolutely. It's really about resiliency in this game. I was reading a Viridian report today about some companies in the space, and I thought it was interesting to mention maturing debt isn't as scary because of that capital we're seeing come into the space. And it surprised me to see some of the companies that maybe were scary before because they've been doing pretty well recently, such as a Consortium, a Kushco, a Plus Products. Some definitely 3 companies right there you want to keep an eye on. And then they also mentioned Stem Holdings, Tilt Holdings as 2 that are probably a little undervalued, which honestly still surprised me again. I don't know if you have any thoughts there, Tony. I just thought it was super interesting to mention.
Well, it's interesting that certain industries are debt friendly and others are not. I read something recently that because I interviewed Anthony Scaramucci last week that posted on the Benzinga YouTube channel. And one thing that they said was do not use debt to invest in cryptocurrency. So maybe cannabis, where they zig, cannabis zags. And it's like, well, taking on a little bit of debt to boost your growth might be the wise choice to make.
Gherkin Sisman, that's going to be a long conversation, my friend. Can you also talk about which companies are mainly growing in kit suppliers, indoor, outdoor growing kits, systems, light systems? Agrify is an obvious one. Grow Generation, probably the stock in the industry right now. Any others that come to mind
this week?
Yeah.
Yeah, it's just been nonstop since 2021 began. I think that if you're looking for the coverage on the biggest movers and shakers, come to benzinga.com/cannabis. We got you covered.
Tony heads that up, y'all. He drops the mic on this knowledge daily with the stories you write, my friend. And you know what?
I'm learning just like everybody else.
You know what? 5 points to you for the hair. So you're going to start ahead of the game. 5
I
points.
got a little haircut. Did you notice?
I did. It's suave. It's wavy. I had no idea. So you know what? I'm excited. Today I would say we'd be remiss to not mention the GW Pharma Jazz Pharmaceutical news. Creating probably one of the leaders in just neuroscience, period.
Holy cow. I think that just started with the merger Monday, right? Was it Monday or Tuesday? The rumblings of this merger started
Tuesday.
It doesn't matter, but it was just it was a huge deal, and right at a time when people were like, "Is there going to be a lot of M&A in 2021? Is there not going to be?" We were a little bit shaky.
That question's been answered, my friend.
But then there's a bunch of like our M&A channel on benzinga.com with the cannabis space with respect to cannabis. There's been there's news flowing through that channel.
Yeah.
There are deals being announced in various forms. So that was just the big one, but there's going to be a bunch of little ones. And I think this is going to be a year where consolidation really sees an uptick.
And something I'll piggyback off that for everybody on this chat. Cannabis is not new to Benzinga. We are one of the leaders in cannabis financial news out there, in my biased and personal opinion. But before we move on to Brian, I do want to mention February 25th, Cannabis Capital Conference. We are going to be talking about the consolidation in the year ahead. We're going to be talking about CBD opportunities in Arizona, and New Jersey, and Massachusetts, and so much more.
Can't wait.
Yeah. All right, let's keep it moving. Brian McLaren, he is the chairman and CEO of Zoned Properties. Again, that is OTC QBZDPY. ZDPY is the ticker. Brian, how are you, my friend?
Hey, I'm great, Elliot. How are you guys doing?
We're good, man. We could rap all day about what's going on in the market right now.
I know the new platform here. You guys are well, you've always been at the big boys in the cannabis community, but now you're.
I mean, we're at the table with our colleagues. I'm happy to say we're not at the kids' table today.
I was the youngest in the family. I was always at the kids' table. I'm just happy to be at a table.
Well, Brian, we can send Tony back there. He can go to the kids. No, Brian, we're glad to have you, my friend. It's exciting. I've known about Zone Properties since I first dove into cannabis about 2.5 years ago. And I would love for you to tell our community here, who are you? What do you do? Where do you play in this space?
Yeah, thanks guys again for having us. It's over the years it's been an interesting timeline for us to consider coming on shows like this. We've been around as a company since 2014, and I've been around the industry since 2010. And we've been, I'll kind of give the overview, but we've been very focused building under the radar so that when time to come on these shows, we have real stuff to talk about. So again, thanks for having us, and excited to be here.
Of course.
So Zoned Properties, we are very simply a strategic real estate development firm that focuses on the regulated cannabis space in North America. I myself am originally from outside of Toronto, Ontario, so very familiar with the Canadian cannabis market. And my entire background is in real estate development, urban planning, sustainable development, and community work. So for years at the start of my career, we were building local codes around how to get solar land use renewables in place and wind turbines in communities that had never had them. So it was really interesting to see how that local regulatory structure worked. And then it was obvious to apply all of that knowledge and best practice to cannabis, which is just crazy hyper.
It is crazy hyper.
Yeah.
We lost you after hyper, Brian. I'm not sure.
Lose him. He was speaking to my heart too about sustainability.
I know. I was definitely going to dive into that further. We will hopefully have Brian back with us shortly. Hopefully coming right back over. But honestly, Zone Properties is a huge. Oh, there he is. Brian, we lost you at crazy hyper.
Yeah, crazy hyper.
Oh, we lost him at the smile.
It looks like the Joker victim. He just freezes with a smile. All right. We can kill some time. I mean, I could easily talk about how guys like Brian are very valued in the industry because...
Why don't you give us a little preamble to Brian, assuming he gets back over here, about the importance of real estate?
Right. Well, there's a cross-section between sustainability and cannabis. I think that because cannabis is such a young industry, has the chance to do it right. And some of our coverage recently on the site has been focused on what cannabis isn't doing. And it's not doing enough to be sustainable. So guys like Brian, and he's back, he's making cannabis sustainable.
All right. Well, I have so many questions about how that is happening. But Brian, can you hear us?
I can. Yeah, I got good signal here, guys. So hopefully that's the last of the disruption.
Yeah.
No worries, man. No worries. We are, I think we're good now. So we'll let you take it over back to Crazy Hyper.
Crazy Hyper Local is where we're going. And I think just that hyper local regulatory aspect is really intriguing for real estate and community planning nerds like myself. But for us, it's how the whole industry was born. Grassroots movement over a long period of time. It's just been amazing to watch these state-by-state regulatory case studies come online. So what we do at Zoned Properties as a strategic real estate developer, we're helping operators, landlords, local community zoning officials. I mean, everything that's related to getting these cannabis projects developed and delivered, we're focused on. So it's green zone mapping, site identification, everything down to architectural design. How do you build up these large scale utilities? And the only reason we know how to do that is we spent lots of our early years acquiring and developing and going through that unknown labyrinth ourselves with our own large scale portfolio out here in Arizona. So it's been a really exciting industry and lots of directions, however you guys want to take it for the discussion.
Yeah, I just want a really quick follow-up because I know Tony has a bunch of questions here. When you first started acquiring, what was because I mean, we're about to see a lot of acquisitions again. So where did you start and where did you potentially end?
Yeah, so Arizona has definitely been our home base. Where the company was founded, and obviously Arizona was one of the early states to get the medical regulatory program up and running as a limited license style state. And it's, in my belief, really where most of the country has then evolved its own regulatory structure at the local level. Mm-hmm. And so for our acquisition strategies and our development over the years and where we're moving forward, we can talk about some of the pivots we've made to kind of, I think a phrase I love in cannabis is go where others won't or can't. It was all about the real estate positioning on that strategy board. And for Arizona here and in many of the other states, if the general audience doesn't know, the way that these sometimes very limited and valuable marijuana operational licenses can be awarded is attached to real estate. So when operators are applying for their licenses, just about always the very first step in that process is to identify a piece of real estate, confirm local zoning and permitting, and then if you're lucky enough to be awarded sometimes some of these very coveted limited licenses, like in states like Arizona, Connecticut, Florida, West Virginia just recently occurred on the retail side, you really got to have that real estate process and a partner that knows what they're doing, or you can really trip and stumble in that.
Money. You need money.
Right. That's it. Real estate and money. Yep. And we can definitely talk about the capital too on the real estate side.
Yeah. Well, I just got to ask, I mean, how lucky are you to be based in Arizona at this time? I mean, Benzinga.com, just one of our recent headlines was Arizona heats up, and so many companies making moves there. Mint, Columbia Care, Curaleaf, Harvest Health. Like, it's just a hotbed now. I mean, Arizona's hot normally, but
yeah,
you know what I mean. I got it, like, figuratively speaking, like, how lucky are you to be based in Arizona? I mean,
Tony, extremely lucky and just grateful every morning, not just to be excited to hop out of bed and work in a really exciting emerging industry, but yeah, Arizona right now is very exciting times. A lot of the industry has been waiting for this point to really kick off this market.
Well, I gotta ask though, as a quick follow-up, what are they doing right? What's the state doing right? Because a lot of people look to Arizona as being like, hey, like, I think they broke the record for from legalization to market.
Yep.
I mean, I think I forgot. Yeah, and where they're looking at New Jersey and they're like looking at the watches, like what's the delay here? And
right.
So what's Arizona doing right? And is there anything that they're doing wrong or could improve on?
Yeah.
Yeah, great question. So some critical high-level pieces they're doing very right. Interactive, collaborative creation of a regulatory structure with operators and local officials that actually can execute, so that when that Proposition 207 was passed in November, real quick process to finalize regulatory structure. And then when the regulatory structure is finalized and approved, the regulators, they did their job, they get out of the way, and the operators can execute. So that was one of the kind of contemplated questions here on the ground when January 19th opened, which was the first day that licensed operators could submit for their adult use dual licenses. It's kind of how long was that going to take the state to turn those applications around? It was like 48 hours, and there were, almost 70 groups open for business the next day. So yeah, what they did right, Tony, just the way they approached the creation of the regulations, the way that the state does not try to be an overseer at the local level. So they defer down to local applicable processes. And rather than, send out a 100-page booklet to zoning directors across the state, which other places have done, it makes the process to go to market so much more challenging. And that was, we've come a long way too, though. It was, seemingly forever ago that, it's just been great to watch Harvest just crush it out here. But Steve White and I were like writing local codes in Tempe, Arizona back in the early days, and it seemed to take forever. So I think we learned from our mistakes, and they've done just a tremendous job rolling that program out.
I want to dive more into how you help companies sustainably. But first, when we look at the news that's come out this week, let's be a little bit topical here with Chuck Schumer and some of these other senators maybe planning legalization a little bit earlier than I think a lot of people expected. Does it really matter? Do you know what I mean? In the sense of with these states controlling their licenses and the, all these baggages, tied down to these licenses. What does that mean for somebody like you?
Yeah, short answer is I think it does really matter for an almost indirect reason, Elliot. I think it really matters the way it's happening right now at the federal level, more on ancillary adjacent traditional business. Just yesterday, we had a panel with one of the largest mortgage-backed service providers, the MBA. This was the first time they've ever talked to their association audience about how to service cannabis-based tenants, loans, and cash calls. So I think that federal level is signaling to everyone, not just our eco chamber of cannabis people, but it's time to get involved, big brokerage houses, big commercial real estate owners, and that's how it impacts us. We're having some really exciting conversations across the country, and we've worked now in about 15 states on projects directly over the years. But this is in the past four to 6 months, really the past 2 months, large scale commercial retail center owners are seriously trying to figure out how to get into this industry, but cautiously. So that's going to be a huge change.
Watch out for ZDPY once that happens.
We can be in the mix and be a partner to some of those big owners and developers.
Fantastic. So, Tony, one more question on my end. You being zoned, achieved carbon neutrality. Is that correct? Yep. And is that something that you focus on with your tenants?
Yeah, it's huge, and it's always tough for a real estate owner and leaser that's triple net to work with their tenants. A lot of times it's hands off, send me the check, or here's the capital on the lease back, and we collect the return. It's really important to us to have operating tenants that have those same values. And it's just good business sense because the local community gets impacted by this. Mm-hmm. We're starting to see really amazing data finally coming out that cannabis significantly increases prosperity metrics in local communities, which adds value to the real estate rather than the kind of fear propaganda we've heard for the past 75 years. So yeah, we there's groups across the world right now that are focused on sustainable development cannabis, resource efficiency, what we call the full cycle economy. Right now here in Scottsdale, Waste Management's, kicking off the Phoenix Open, which is the largest zero waste event in our country. I actually helped build that event before I was with Zone. I was part of the Waste Management sustainability team. So we're bringing all that to these cannabis sites when we can.
Tony, there's a good question in the chat. Do you mind if I ask?
Yeah, absolutely.
So do you ever buy land on speculation before having a deal in place, or are you financing the space that a client chooses?
Yeah, great question. So we have done that in the past. It creates definite higher risk challenges because the hyper local zoning regulations can shift very drastically. So we have not done that recently. I think our approach, and I know we're going to transition to this in the hour shortly, but we really love this concept rather than speculative land acquisition and development, which in some cases might be valuable. But we are much, much more bullish on this franchise concept with our new franchise partner, the Open Door, and how we can really unlock a lot of this existing retail brick and mortar that's just been hit very hard by the past year with the pandemic. And let's face it, I mean, we're multiple decades in this reimagination of brick and mortar retail. And existing best practices within a franchise, if you can unlock the formula for cannabis, is really critical.
Yeah. Tony, did you have a question that I interrupted you 3 times?
No, it's no problem. Just one quick question, because it reminded me of someone that I interviewed recently whose company helps, it's Solar Cal. They help companies become energy independent, self-sustaining, and by helping them find the folks who can get them set up with solar panels. And one thing that he talked about was there's this misconception that people think that it's it's messy and confusing, and 2, it's going to cost the business owner or the franchisee rather. So can you talk a little bit about that before we transition to the next portion of the show? Is if I'm a cannabis business person, what should I know? Should I be afraid of it hurting my balance sheet in terms of transitioning from to be self-sustaining and to use solar panels and renewable energy?
Yeah, and this is one of the most critical questions, I believe, for the next decade for cannabis operational sites, because more than ever, specifically for cannabis, the return on investment for these utility upgrades, especially the sustainability related ones, they pencil out very quickly. It's in the renewable energy industry 20 years ago, it was like a 40-year return on investment to invest in rooftop solar. That is definitely no longer the case today. New technology, new third-party financiers, it is possible more than ever to get a solar installation specifically on your commercial building without spending a dime. So yeah, I know Candescent was one of the first movers on this in California at their site to cover their operation with solar. I'm super jealous we weren't a part of that project, but I was cheering from the sidelines when they did it.
So there's almost zero excuse at this point.
Just finding the right partners to add to your brain trust to help you troubleshoot. I mean, we all know in cannabis, you're doing a million things 10 times faster than every other industry. So just bump it to the top of your list.
Yeah. Absolutely. So real estate, huge discussion within cannabis, and rightfully so. But I think we need to transition to a separate conversation or a related conversation. Let's bring Catherine Blackwell on. She is the co-founder and CEO of the Open Door, a strategic partner to Zoned Properties. And hi, Catherine, how are you?
Hi, how are you?
Oh, we're great. It is wonderful to have you. We are very excited to look into more on the cannabis franchising model. But first, I'd like for you to just go ahead and dive into the Open Door, maybe how you all formulated this, Zoned Properties play in it. And Brian, if you want to jump into there, we'd love to hear from both of you.
Right. So the Open Door is a franchise model for cannabis dispensaries. And while franchising may sound boring, it's pretty exciting for some of the license holders and the investors in these licenses, right? So I met Brian, and his interest in real estate, and obviously his expertise in the real estate space, and all the complexities in trying to find a franchise location for a dispensary. He's got all the zoning and permitting and all of that experience, believed in the project and believed in the franchise opportunity and the value that it could bring to the cannabis dispensary operators. And he's the Zoned Properties is supporting us.
Awesome. That's really cool. You know, maybe a little bit more education from me specifically, probably not the educated person out there. Who owns these dispensary licenses? Who are you helping?
Well, that varies state by state. I mean, sometimes they're entities, sometimes they're individuals with just one with the license to operate one dispensary. Sometimes licenses can allow somebody to operate up to like multiple locations, 35, 40 locations. And, you know, some of these license holders are not necessarily wanting to be in the retail industry or have the experience in the retail industry. So that's where we can come in and help. We've got the operating procedures, the design and the layout, all of the vendors spec'd out and vetted. So it really gives them a leg up on the competition in the new markets, especially these new markets for new licenses. And with so many states coming on recreationally, we can help them bypass not only the learning curve in the retail operations, but in the most complicated learning curve of operating a dispensary.
Yeah, I mean, I think you guys got to dive into Kathy's background too, and I won't stroke your ego too much, Catherine. But
yeah, well, I've read a lot about Catherine. Please, I mean, you're a global franchisor. Like, there's a lot of coverage on you, Catherine. Please delve in.
A lot of years in the franchising business and trying to bring that expertise and that experience, both good and bad, to these to the cannabis industry and these operators.
Well, what inspired you to get into cannabis in the first place?
Well, I was up in Washington State, and I was driving around, and it was a recreational state, so I thought maybe I'd go check out some of these dispensaries, and realized that didn't know what I was walking into. You had no idea what the brand was like, what the service was going to be like, what the products, how safe the products were going to be that I would potentially purchase. And that really clicked with me, with my history in franchising. And that's really what franchising is all about, is giving the customer something that a brand that they can rely on, and they know what to expect and know the quality, not only of the products and the service, but in the cannabis industry, the education that they're going to be able to get. They can walk in and they know that they're going to be able to get their question answered and get the products that they actually need, not just what happens to be on the shelf at the time. So yes, came back to Phoenix and happened to meet Brian at an event and tossed out my idea, and that's on it.
I like that a lot. So it's really the experience, though, right? It's the experience of the dispensary that you are creating that CPG mindset for. It's not really like you're engaging the entity itself and then making sure the products, but you are creating the overall flow of the company throughout its landscape, if you will.
Yes, and not only the customer experience from the time that they come in and the service that they're able to get, but the education that they're able to get, the knowledge base and being able to trust the person that the bud tender that they're talking to and getting the product that they need. But also, you mentioned the brands. We will be vetting all of the products that are in our locations for quality, where the brands came from, making sure that it's that they're safe and that they're of the highest quality that's available in that state. So that's truly a service that we're bringing to these operators.
That's really cool. I like that a lot.
How does one go about vetting all of those products? Y'all have to.
There's no shortage.
Well, it's
that job.
A position that we'll be hiring here in the next probably 5 to 6 months.
Is this a testing job? No, I'm done. Maybe our chat will be
Elliot, I'm just going to be honest. I might apply.
You'll never see Tony again. That's really cool. So have you started this yet, or is this a project that is not project? Is this, where are you right now in the stage of your business?
We've launched the franchise offering. It's out there. We have discussions underway with several different groups across the country in different states, not only for single operations, but for multiple operations. So we're really excited about the response that we've gotten so far. We just launched in December our franchise offering, so we're just a couple months in, but we've been working on this for the past year in just pulling the prototype floor plans together, really making sure we've got that backroom operations, especially the backroom operations under control, and the design of the dispensary all perfect, beautiful. Yeah, so we're ready to go.
And the sustainability, I would imagine, right?
Yes.
Expanding that.
Yes. With Brian's assistance and Zone Properties assistance, we've been able to work with our architect and where we can bring in sustainable products and other sustainable aspects of the operation.
That's really cool. So, Catherine, I'd love your thought process and your opinion on the recent news of Chuck Schumer. I asked Brian the same question and the other potential federal legalization, but what does that mean for you and your business moving, through the rest of the year if it potentially happens sooner rather than later?
Yeah. Well, it's great for us, right? I mean, that helps not only being able to operate more dispensaries and help more people open their retail operations, but really the banking regulations and around the dispensaries right now, so many of them are operating cash, too much cash on hand, in my opinion. So being able to get over those banking restrictions, I think, would be a huge opportunity if we can pass this federally.
And for job growth, I imagine. I think unemployment rose this past month. I could be wrong on that if somebody could fact check me, but I believe the Democrats are sort of looking to the cannabis industry as almost like a playbook. Like, how could we boost jobs in this space? And so let's get a move on this legislation before it's too late, before the next election day.
Yeah. So, I guess a little bit more, could you dive in a little bit more on the back end business side of this? We have a question in the chat. How long are the leases locked in for? But could you maybe expand further as to how you work specifically with, helping these franchisees succeed, the models that you take, and maybe if you have different ways of working with different owners. And obviously, again, I know you're going to point to different states mean different things.
Yeah, every state is so different. So, but in general, we are providing the franchisee with the floor plans and the security systems and these vetted out vendors for all the different aspects that they need for their space. We're giving them the standard operating procedures for how to handle hiring and firing and back office operations, cash management, employee management. It's a lot of those typical franchise and traditional franchise support features. But I think one of the largest things that we bring is somebody like Brian and Zone Properties, their support in being able to help these franchisees not only identify a location, but really vet it out and make sure that they have the proper zoning. In addition to that, we're staying on top of all of the individual state regulations to keep these dispensaries under compliance with their state. So we're going to be doing a lot of that back-end support for them and that back-end research for them. Coming in and doing some inspections, but primarily to keep them in compliance with the state, not so much to come in and try to run their business.
Quick follow-up. Do you have a favorite dispensary? Both of you. Like, do you all have a favorite one you've ever seen and that you would, if you could model every franchise location after that one, it'd be that?
Well, it's not open yet.
Ooh.
Open door.
All right.
The best is yet to come.
Yes.
Okay.
Brian's like, I got a lot of favorite dispensaries.
So many.
Awesome. So very cool. I'd love to kind of dive more into the banking side, but I know it is a little bit tedious. So I'm trying to figure out how to phrase this question. Right now in the states that are banked, what's the most value? Like, where do you find the most value for the franchise locations right now? Is it Arizona? Is it California? Is it Washington?
That's a great question. And do you get frustrated at places like Jersey for sort of being on delay?
Yeah, Brian, I mean, you've got a better grip on that.
Yeah, I mean, I think, guys, it's a critical question. We've got a kind of target list of 10 to 15 states that we've researched across all of the different case study markets, and there's several different variables that have gone into that. And Elliot, I think this is going to get to your question. Banking is definitely one, but frankly, there's banking challenges in all states. The regulatory side, Tony, like you were just mentioning, is high on the list, top 1 or 2. So like we talked about before Kathy hopped on, how does the state regulation and delivery of the new market interact at the local level? It's eventually going to govern how successful that franchisee can be and how well that franchise brand can serve local and state consumers. Other things that go into it is just inventory of real estate. So what are local, on the state level, local restrictions around insurance, around lines of credit for tenant improvements, on capitalizing these facilities, and reading the tea leaves. I mean, I think we all know in cannabis, you should never predict the market, but how well can you react to it when variables change? And that's the list of targets for that is also going to be pretty significantly paired on partners in each of these states that can be true partners to us on delivering that brand to that state market.
Right. That's awesome. So I would kind of bring us to a wrap here, but I want to understand what your ideal partner looks like. MSO, SSO. I mean, I think both have value, but maybe the larger the better. Is that me oversimplifying?
And maybe I'll step in first and let Kathy wrap us, because I want to tie back into someone's question earlier about the leases, which is also a critical component. I mean, to date, it's really you're on your own. You're navigating this labyrinth, these treacherous waters, dealing with compliance, regulations, raising capital, hiring employees. Sometimes you're in the middle of nowhere. And if you're lucky enough to find a property and get a lease, you want to make sure you're not held hostage by your landlord when it's time to renew that lease, or get stuck in a 25-year lease if the state regulatory market has a 3-year delay. So the lease lengths definitely can vary, but the franchise concept, especially in partnership with a real estate company like ours at Zone Properties, some of those strategies to unlock non-viable traditional real estate locations through this process can help stabilize and normalize lease lengths, terms, lease rates for franchisees and operators. And it's, to date, you kind of have two choices, right? You go it your own, or you try and team up with an MSO.
Yeah.
So we're hoping that this concept, as we deliver it to the marketplace, it's really a hybridized third option to kind of disrupt the space. It's a phrase I really love that Kathy uses all the time, and I'm going to just be a broken record on it. It's for yourself, but not by yourself. And it's a way for these dispensary owners, license awardees. They worked hard. They can keep going at it. They just don't have to go it alone.
I love that. Have you? And because you're not necessarily the only company looking to dive into franchising right now. Are you seeing, and you don't have to call it by name, but maybe incorrect ways that it's happening, maybe something that you've built upon, seeing competitors, or maybe just franchising models in other industries, something that you want to do better when it comes to franchising in cannabis?
Yeah.
Well, I think that the best thing that we've done is we're bringing the traditional franchise tools and tactics into an industry that's maturing, and having my partners like Brian and Chelsea Mulligan, who is our operations guru. She's been in the industry for over 8 years, bringing her experience. It's a perfect trifecta to bring into the cannabis, to these dispensaries. So some of the other franchise models that are out there, they may have one piece or two pieces of that, but being able to really round out our group to support these dispensary operators and these license holders and their investors is I think what is really going to set us apart from any other franchise option.
Awesome. And this may be a little early for this question, so feel free to be like, Elliot, shut up. But where do you expect to be at the end of the year? Like the end of 2021, you could say, I expect us to safely have achieved this.
Have multiple operations in multiple states, multiple franchise locations in multiple states.
I love it. Fantastic. So if we have entrepreneurs listening right now, or maybe potential investors that want more information on this, can they reach out to you all?
Yeah,
absolutely. Absolutely. And we do have resources while they're not part of the franchise model. We do have resources available to help a potential franchisee or somebody who's looking to get into the cannabis industry. They're applying for a license. We've got the resources that we can hook them up with. Again, another vetted vendor.
Fantastic. Awesome. We all know how licenses are the bane of all of our existence in the cannabis space. But Catherine, Brian, it sounds like you two are both valuable resources to those looking to enter this space in multiple facets. So it's something of value that I don't know many people can offer. So we are grateful to you both for coming on. And ideally, we'll hopefully be seeing you soon and hearing more about you all in some of our cannabis initiatives down the line here. But again, thank you all so much.
Sounds great. Thank you.
Awesome.
Thanks, guys.
All right. That was Catherine Blackwell with The Open Door and Brian McLaren with Zoned Properties. They are strategic partners. So I believe Brian McLaren also has a job title with The Open Door. Regardless, they are doing something disruptive, to say the least, Tony.
Yes, absolutely. And one thing really struck me that Catherine said, it's about education too. And I started noticing that more companies are weaving that into their news announcements about folks being on staff in the dispensaries to really walk customers through the best choices. There was one, Apothecare's recent in-house physician news. I thought that was pretty cool right in here, right where Benzinga is based in Michigan.
There you go.
Yeah, so I've been noticing that a lot because it is about education. You want to differentiate yourself from the competition.
Yeah. Well, differentiation may not be the name of the game when it comes to the franchising model, though.
That's true. That's true. But different franchises, different companies, different in-house specialists. You go where you feel comfortable.
Touche. Awesome. That I enjoyed that discussion. I think real estate is a very long discussion in this industry, and it is far from over. Franchising, I think, is just another aspect of it. So really cool to see them. Really cool to see them dive into that. So next is a little bit of change of pace, everybody. We are talking to Sky Bioscience. That is OTCQB SKYE. Now, they were once Emerald Bioscience. Yep. They have rebranded. We're going to ask Puneet why. But they have seen taken some interesting steps, I should say, recently that I think make them a competitor, especially in the therapeutic side. So I'm excited to talk to Puneet Dillon. How are you, sir? Good to have you. It looks like you're there. You got the mute button before I even finished my sentence, man. Making me look bad over here.
Oh, did it?
No.
I'm live now. Okay, great.
Yeah, you're live, man. How are you?
Hey, great to connect with you guys. Thanks for having me on Cannabis Hour.
Of course, the one and only Cannabis Hour. We're at the big kids table. Puneet, great to have you, my friend. So let's dive right in. Bioscience is something that I don't think is top of mind. When I think cannabis, I'm thinking two things. Marijuana, let's high, hemp CBD, which we don't even need to go into right now. A lot of conversations to be had there. But Puneet, tell us about yourself, your background, and then how you came to Sky, and then maybe just a little bit about the bioscience sector in cannabis. That's a lot.
Mm-hmm. Yeah, you're covering a lot of ground there. But yeah, sure. Look, first of all, it's a real privilege to be a part of this company. I've taken over as CEO in, I think, less than 180 days ago. Very excited about applying my experience. I come from the pharmaceutical biotech space. I spent the last 2 decades kind of working in different capacities. Most recently, I was the CEO and co-founder of Oncosec Medical, which is a cancer immunotherapy company. I led that company from a similar stage where we didn't have any clinical trials all the way to a registration trial in melanoma. That company has continued to report data and differentiation in terms of its immunotherapy approach for melanoma. And I pulled together a great team here with what we're doing at Sky Bioscience. They're a team that I've worked with in the past in different companies, both in my experience at Inovio and at Oncosec. And quite excited about what this application can offer. And you're right to point out that this is not your run-of-the-mill cannabis product that's derived from a plant and you can go purchase it at the local retail shop. We're purposefully modifying these molecules and really trying to validate the benefits of cannabinoids. And there's a lot of opportunity in that in terms of what the potential is, and there's we're kind of overcoming the limitations and some of the disadvantages of using just over the counter type of approach to remedying disease. So ours is obviously taking that FDA path, and happy to kind of go into the significance of that.
Well, to treat glaucoma, correct?
Yeah, that's right. So yeah,
go into that. I would love to know more about that because obviously it's a debilitating disease, and then people might not think that relate the two between that and the cannabis industry.
Yeah, so that's a really important point that you're bringing up. So like glaucoma is a large market, over 80 million patients worldwide, growing market, very limited treatment options. There is a lot of drugs out there, but they're not working very effectively, and they're more symptomatic kind of relief. And most of those drugs kind of tackle the kind of the cause around glaucoma, which is intraocular pressure. So we believe, this approach is completely differentiated. One being a new class of therapy for glaucoma. I think we can prove the applicability of cannabinoids in this class in glaucoma as well. So we're taking an engineered synthetic cannabinoid to treat this particular disease. If we're able to demonstrate that it can bring lower intraocular pressure as well as show some other mechanisms, then we believe that it's a big win for these patients. But it also creates a wedge for us in terms of the applicability of cannabinoids across other therapeutic applications. So there's a broader opportunity, and I do want to take a moment to just recognize that with the last speaker, you guys were talking about kind of creative value events. I think that it's important to acknowledge that in the cannabinoid space, we saw something significant happen this week in terms of a validating event that was the acquisition of GW Pharmaceuticals by Jazz Pharmaceuticals for approximately $7 billion. And it's a great example of Jazz being an established biotech or pharma company. It had multiple commercial drugs, and this is I think an acknowledgement of the therapeutic value of cannabinoid-based drugs in terms of their acquisition of GW. If for all your listeners, and you guys are well aware of this, I think GW set the bar in terms of being the global pioneer in terms of cannabinoid science, and they were the first to market Epidiolex. They're focused on epilepsy. They were the first plant-based CBD product to be approved by the FDA. That's right. And I think that's what is an interesting moment here in history, where we believe that over time, there's other companies that can replicate that. And clearly, we're focused on trying to replicate that ourselves with the type of validation that we're expecting with the achievement of our milestones and the confidence that we're expecting with the execution that we have this year in terms of development.
I'm curious, as a bioscience company, and maybe you could give me a little bit of education here. There are cannabinoid receptors, right? Like when it comes to our bodies, at least that's what I've been told by many people in the scientific realm. So would you be a neuroscience company as well when it comes to that? And I guess a follow-up question, and they don't have to necessarily relate whether you're neuroscience or not, but once we get past this stigma of cannabis and cannabinoids, do you become a different, we're not going to think of you as a cannabis bioceutical company. We're going to think of you as a neuroscience company.
Interesting. Yeah.
Yeah, that's interesting. So yeah, I think if you take a step back, we're focused on a new class of research altogether. And our first application is in glaucoma, but as you're well aware, the cannabinoid receptors they play a vital role in managing all of these different body functions, and there's different pathways that we're trying to link to with regards to THC or CBD being able to bind to these CB1 or CB2 receptors. So we've chosen glaucoma as an initial opportunity here because the eye is very rich in these cannabinoid receptors. The CB1 receptor labeling plays a vital kind of function based on several different parts of the eye, and there's specific evidence, at least literature that shows that it's that these parts of the eye are linked to fluid production or drainage that are responsible for vision. So we're basically in one regard taking kind of the low-hanging opportunity of an application of our molecule in this approach. But yes, you're right that it has a wider applicability, and the two of the most common cannabinoids are THC and CBD. So what's unique here with Sky is that we have intellectual property around both of those molecules. So we do expect that the pipeline will continue to grow as we get through this first inflection.
That's awesome. We have so many questions in the chat.
Yes, we do.
So let's start with the most recent one. Can you talk about THC VHS? I'll leave it at that.
Okay. Yeah, it's a pretty broad thing. So, so the important kind of component here of THC VHS is that we're working on an opportunity that is basically modifying a molecule that hasn't been effective in terms of being delivered traditionally. So the traditional ways we're taking THC or inhaling it, that there's studies that show this. You can look at our deck on our website, and we have a slide that kind of summarizes all of these studies that demonstrated that THC delivered systemically or in inhalation basically lowered intraocular pressure. Now, why that matters as a backdrop is that we basically, with that evidence, we've been able to say that, okay, well, then the next obvious thing is take THC and deliver it locally. But THC is lipophilic, which is oily, and the eye is aqueous, which it has a lot of watery kind of fluid and tissue. So we know that oil and water don't mix very well. So that basically opens the door for coming up with a formulation that improves the bioavailability and stickiness of your drug. So that's what we've done here, is that we've taken THC and modified it by adding this unique amino acid chain referred to as VHS, and we have basically developed a prodrug. And a prodrug is a medication that when you're administering it, it basically metabolizes into the active component. So our approach, the Sky approach, is that we're really unlocking the therapeutic potential of THC, or you can do the same thing for CBD by using this bioengineered approach to basically drop the active component. So when the molecule in the eye, for example, with THC VHS, once we apply the eye drop in the eye, it gets converted in the eye to THC, and the THC is what's known to be able to bind to those cannabinoid receptors that are located on different kind of ocular tissue. So I hope that answers the question. Yeah, basically, we've taken a proprietary engineered approach to these molecules, and we're able to do a very effective job of pinpointing exactly what kind of result we want.
Yeah, super interesting. Tony, we have another good question, I think, that I was actually curious on as well.
Sure.
Your choice to use synthetic cannabis versus natural.
Interesting.
Yeah, so yeah, you can take natural and modify that. I think that the important thing about molecular development or kind of proprietary molecules here is that the synthetic leaves little room for error because you have a very repeatable kind of formulation and an approach to that. So I think what we're trying to do is take out any variability, but achieve the same kind of action or reaction that you're expecting from the molecule. So we're still working with THC, even though it's bioengineered. So chemically, it's still doing what it's intended to do.
It's predictable.
Yeah. That's a good way to put it.
I have a question about this next chapter of Sky. I mean, previously it was called Emerald. I don't know if maybe our viewers know that. But you are a new CEO. Said you just passed 180 days. Tell us a little bit about this new chapter of Sky and why that rebranding was important.
Yeah, so I guess like a lot of people ask this question, and the short answer is that it eliminates a lot of confusion in the marketplace with other companies that are named Emerald that are public or going to be public. So the other side of this is that this company has had kind of a research or preclinical track record and has had kind of its hiccups along the way with lack of funding or delays. So we're really, when I took over, I really wanted to turn the page for this company, and that's you implied new chapter. So I guess the whole idea here is that we've rebuilt this company from the ground up, from board. Management team. It's an entire new team. I've worked with these individuals over the last 2 decades. They're very impressive. We've collectively done a lot of different deals together in terms of licensing, partnering with big pharma. So we believe that we have a unique track record in terms of really proving out what we've done, and you can see, based on our experience that we've done that in the past. So, I think the new name reflects that in terms of it better represents the company today in terms of it's really focused on execution, but much stricter operational controls. We can't deny that the COVID-19 pandemic has had impact on a lot of companies, and Sky was also affected there in terms of timelines. But I think we've done a really good job of overcoming some of that with our discipline and trying to improve the probability of success over the last 5 months. So that's what the new name is really a reflection that look, there's a limitless potential. There's a robust pipeline based on proprietary bioengineered cannabinoid technology, and we have a team that's really focused on that, that is committed to seeing it through. And we don't have a choice at this point.
It's very exciting, Puneet. Honestly, once you cure blindness, please do send me your drug because I will need it by that time. I wear pretty hefty, defty contacts.
Me too.
So, Puneet, again, we really appreciate you being here with us. Can you please give our audience some insight on where they can find you, if they can reach out to learn more about if they want to invest or learn more about the product line that you are making?
Yeah, and once again, thanks for really having us. You guys are really helping to increase the visibility of small emerging companies like ours. You can definitely contact us through our email, investors@skybioscience.com, or just find that information on our website, skybioscience.com. I think the company also has active social channels, so just reach out and we're going to be really responsive.
Awesome. You don't meet many CEOs who have as much scientific knowledge as Puneet.
Yeah.
I got a note flash up on my screen. It's actually ir@skybioscience.com.
I bet that was Lita. Hey, Lita. Puneet, again, pleasure having you, my friend. And we look forward to seeing you throughout the year. Puneet will be involved in a few of our industry-focused conferences this year. Very excited to have him and hear more about the progress of Sky. Again, thanks Puneet, and stay healthy.
You too, guys. Thanks.
Awesome. Tony, we have talked about real estate, about franchising, and about glaucoma, perhaps therapeutic drugs within cannabis. It's been a fun day. It's not over.
It's not
We have
over.
a Cannabis Hour special for you guys. This was pre-recorded, but there is another interview coming your way with myself and Patrick Lane, our SVP of partnerships here with the Valens Company. Very prolific cannabis company out of Canada. So you do want to stick around to that, to hear that. He really goes in depth on their acquisition. He goes in depth on what's ahead in 2021, talks about some recent fundraising. It's exciting. But Tony, I wouldn't do this with any other haircut, my friend.
Well, I wouldn't do this with any other talent. And those big blue eyes. How could I miss them every month?
I'm a Fremen. Dune is coming out. Nobody's gonna get that reference. I'm a nerd. It's fine. Awesome, Tony. This was fun, man. I appreciate you. Thank you to Rohan, Aaron, all of the people who help us produce. Thank you to all the people who stuck around and listened to us from Spencer and Joel's show. We are more specific, but we are bringing you the knowledge of cannabis, hopefully weekly. Send me your questions. Send me the people you want to see. Elliot Lane at benzinga.com, and we will do our best to bring you the content you want to see.
Yes.
We will see you next week at 4 p.m. Eastern Standard Time, baby, with sound.
Same Benzinga time, same Benzinga channel.
We'll be there.
All right.
All right, y'all. Have fun. Welcome to a special edition of Cannabis Hour. Y'all have been watching for an hour. We appreciate you staying with us. Honestly, though, this is a really cool addition to what we're already chatting about today, with a left turn with a really cool company. But Patrick, maybe a little insight as to who we're talking to today.
Yes, absolutely. And I also just want to give a shout out to your introduction of the show. That was very exciting. It sounded like it wasn't the Walter Cronkite version. It was kind of like the E-News version, like special edition, you know? So
breaking news. I'm Wolf Blitzer. That's always breaking news.
Yes, yes, Wolf Blitzer. You've got the little goatee going, I see,
I'm working
too. So
on
that's
it.
good.
I got to get the white hair going, though. But,
Yeah.
you know, we want to keep it exciting here. Cannabis is exciting, right?
Cannabis
we have
is
an exciting
exciting.
company. This is not Cannabis Hour, though, if you don't have the Lane brothers ragging on each other. So
true. So
it's
true.
just part of the introduction. I hope everybody's keeping an eye on the market still. I mean, always. I don't know how you couldn't right now, but I mean, the money's still moving, y'all. Planet 13, Sundial, High Tide, all out with some news that you should check into. Past that, though, you know, I'm ready for this cool interview. I think this is another cool, we'll say, corner of cannabis that is very popular, some very successful companies, and this is just one of them.
Absolutely. So let's get rolling. And as we bring him over, we've got Jeff Fallows, who's the president at the Valens Company. And I'll let Jeff correct me if I'm wrong, but I believe the ticker is VLNS on the TSX.
Correct.
Is that right, Jeff?
It is, correct.
Awesome. So Valens is a really cool company. They've been an OG in the space. Why don't we just get started there? So Jeff, we have a pretty diverse audience that listens to this show, a lot of retail investors, some industry professionals, but I'm certain that there are folks watching who may not know the Valens Company and everything that you guys have done and are doing in the space. So I wonder if you could give us just a quick overview of what you guys are up to.
Sure, and thanks for having me here today. The Valens Company, put quite simply, the objective of our company is to bring the benefits of cannabis to the world. We believe that the best way to do that is to focus on the areas of the value chain that start after the flower is grown. So the extraction, the distillation, isolation, formulation, and ultimate manufacturing of cannabinoids into end products. Basically the derivatives, oil and derivative products. We like this area of the value chain, number one, because it allows us to leverage our expertise and our in-house IP. And number two, because it allows us to customize a user experience. And in that customization of that user experience, we can really differentiate ourselves as a company with longer term competitive advantage. So basically everything after the flower is grown.
Very cool.
Can
Very
any
cool.
operator utilize your services? I'm assuming there's probably a mix of you helping those operators and maybe a white label aspect to it as well, correct?
Absolutely. So we work with licensed producers, those who are licensed to hold and carry and sell cannabis, but we also work with brand houses who just simply want to put a cannabis product on the market with their brand on it. We can leverage our sales license to do that as well. So we can cater to whether or not you have a license or don't have a license from your business plan perspective.
You've got some pretty cool background, Jeff. I just want to dive into that for a second. You know, you come from the capital markets world, right? From Alticorp and CIBC and some of these other institutions. What's it been like coming into the cannabis space? And also just a quick look ahead to 2021 and sort of where we are now as opposed to this industry, let's say in 2018 even, right? With those crazy high valuations and some really good things happening and some really bad things happening, right? What's it been like in your experience jumping into this market?
Sure. So you're right. I came from the investment banking world, but 10 years previous to coming into the cannabis sector, I was actually focused almost exclusively on the cannabis space. So I literally grew up in the cannabis sector as all the new companies were formed and raising them capital, knowing the management teams, interpreting the business plans. So I've been around the industry for quite some time. And I'd say the major difference between over the last several years and as I look into 2021, 2022, especially, is it moves from selling the idea and the dream of cannabis, which was the early days, this going to be this massive market. Finally, the general population gets access to cannabis and the benefits of cannabis. That was the first couple of years of the sector. And you saw lots of big valuations and big dreams and big goals. But as we round the corner here into 2021 and go into 2022, it's really about execution and it's really about business plans and it's really about driving shareholder value. So, the days of the dreams are gone and it's now about who can deliver a return for shareholders.
Yeah,
Absolutely.
Very well put.
You all have some very interesting news, Jeff. Made a recent acquisition. Can you tell us about that company you acquired, maybe your potential reasoning behind that?
Sure. So when we looked at our platform and we were looking at our rollout from a Valens perspective, we decided to focus on, in the near term, 2.0 products, which included tinctures, beverages, vape pens. That was our focus for the first rollout. But our view always was that we needed to have a full platform of capabilities, a full suite of technical capabilities to bring all the different form factors to market. So what that meant was we had our eye on edibles manufacturing. We weren't sure as we entered 2020 or last year whether we were going to build that in-house because we do have some team and experience in-house in doing so, or whether we were going to partner or use third party or even make an acquisition. But as the course of 2020 went on and we looked at how the market was evolving and we did a lot more work into what it actually takes to have a leading edibles platform, two concepts became very, very clear. The first was, number one, it's just as much of an art as it is a science. Much like we say about extraction, you can't just buy a machine, turn it on, and print out or pump out quality product. There is a real art about formulation and process and timing that goes into every product that they make. So the bottom line after our review of the marketplace was, it was going to be a highly specialized platform that we needed, and it wasn't going to be as simple as just putting together a couple of machines to start putting out product.
That's very interesting, Jeff. I have a quick kind of follow-up to that. I noticed you all have, in partnership, conducted a Canadian consumer report touching on the trends of consumption and what the popular products are. A, did that play a part into this acquisition, what you were looking for in a company? And B, does that affect any further the Valens company's, I would say, initiatives moving into 2021?
So I think the short answer to that is yes. We believe when we looked at the marketplace, the developing trend, and really the type of company that we wanted to be, and again, not just a company that had cannabis products that it was selling, but a company that had unique products that were giving unique experiences to the consumer. With that mindset, that's certainly one of the reasons that led us to LYF and the team there, because of their ability to do just that. We saw some, very, very unique formulas, very, very unique product ideas, and a very broad skill set that they bring to the table. So 100%, if we're going to be relevant and we're going to be able to provide the type of products that people become accustomed to Valens providing, we needed that in the platform.
That's really interesting to me. I mean, when you look at LYF, and again, that's the name of the company for those tuning in, LYF Foods, I believe. You've got the Cannabis 2.0 products, you've got the move into 3.0 products, and sort of the next part or wave, let's say, of what these consumers are going to be looking for. It definitely seems like a choice was made to continue expansion into what these consumers are looking for, right? I think that's what you just alluded to. So, that being said, Jeff, I know that you can't comment on stuff that's anything that's not public. But, are there other areas of the product portfolio that you guys would be looking to increase or gain more market share with?
So absolutely. So with our platform now and with the Life Food Technologies acquisition and our topicals platform, which we believe will also providing that unique user experience. Once that comes online later this year, we believe we'll have a full suite of capabilities to produce a number of different products that will fit into various categories, some of which were already talked about, whether it's, you're calling them 2.0 or the more customized experiences that, are deemed more 3.0 and into different market sets. I think you're going to see as the market has evolved, it's evolved from simply a cannabis market to now you're starting to see a whole lot more market segments developing. You're going to see health and wellness. You're going to see lifestyle. You're going to see, of course, the cannabis or the experienced cannabis user. You're going to see a number of those types of market develop, and each of those markets are going to require specialized products. So absolutely, you need a breadth of capabilities to be able to satisfy each of those market segments, and that we believe the life capabilities that it brings to us allows us to play in each of those market segments.
That's really cool.
Yeah.
I had another question, but regardless, let's move on as well to another aspect of some great news. You guys are full of news right now, Jeff. So you recently announced a bought deal. So we were talking about the money still flowing or back flowing for the past few weeks of this year, but it was a 40 million bought deal. Can you give us a little insight as to what that means for you all, and what is this for looking ahead?
Absolutely. So the course of 2020, in the midst of COVID and all the challenges that it brought, particularly to the cannabis market, was really a year for us about beefing up the infrastructure, improving your processes, bringing new products to market, getting that whole commercialization process down, which I think is, one of the most misunderstood areas of the sector right now in terms of doing that with precision, quality, and consistency. But as we got all that stuff in place, we as a management team sat down and said, we're ready to roll now. So let's look at how we can get more aggressive. Let's look at, as all this market's developing and the valuations are coming down and certain parties are starting to struggle, from a Valens perspective, what do we want? What is the ideal strategic scenario? What kind of company do we want to be? And how do we need to get there? So the first thing you saw is the Life acquisition. The second thing you'll see is us now going to the market and raising $40 million to give us the flexibility to start to pursue those opportunities that we are seeing and we're already seeing materialize in front of us. Now, admittedly, from a market perspective, there will be some people that would look at our share price and say, $40 million at that share price, why are you out raising money in that context? Well, in that context, I always have two comments to say. Firstly, as a management team and as the Valens company, our return on invested capital is among the top in the sector. So every time we bring in a shareholder dollar, we put it to good use and drive additional return. So that would be the first thing. So the market should feel comfortable that $40 million has a purpose and will be used well. And then secondly, as we're looking at, particularly the U.S. market and the change down there in terms of the, at the top of the house there, and sort of what that means from a cannabis sector overall, we're now starting to see some very interesting opportunities for Valens to move into that market where we, historically, or even at the early part of 2020, we didn't believe was an opportunity, and we were focusing on other international markets. So with that near-term opportunity and with other opportunities brewing, it made no sense from our shareholders' perspective to not have the capital on our balance sheet at our disposal, so we can start to bring in those opportunities. And it's our belief fundamentally, by the time we're done deploying that capital, our shareholders are going to be very happy and will not even be thinking about that the share price we issued at.
Yeah, go ahead, Elliot.
I just want a quick follow-up there. You mentioned, I think, probably outside of capitals and raisings, the next name of the game, which is consistency right now, and becoming that CPG mindset, whether the company's CPG or not. But and I don't just mean necessarily consistency in product, but I'm curious if you could give a little insight as to what Valens is doing, not only within the white labeling aspect, but for those companies you work with in helping consumers understand the quality of the products that come from you guys. Because obviously Valens is doing it the right way. So I'm curious if you all have taken steps or initiatives within Valens to help consumers understand that they are consuming a quality product, as opposed to maybe the 20,000 other products out there that maybe haven't been tested as rigorously?
Sure. So that's obviously our hope and our goal as a company, that people are not only willing to pay for that quality, but they're willing to pay for that quality on a consistent basis. So if you look at the consumer in the Canadian market over the last couple of years, it's really been a try everything market. There's so many LPs and there's so many products and there's so many things out there. It was a very challenging environment to build a brand, and it was a very challenging environment for consumers to understand what products they were trying. So what we've seen as we got through 2020, and as we started to have more products on the market, we've started to see our market share build and consumers coming back more and more and more to our products, which are giving them that better experience at market. That goes across our brand portfolio, that goes across our LPs and other partners that are using us. We're getting words from retailers that when the product listings come out from the provinces in the month, that they're scanning the books and scanning the lists for Valens products. So quality, while we can go out there and sing to the rooftops and say, Valens quality, trust us, we're the only ones with in-house testing, we're the only ones, that are working in partnership with Thermo Fisher, all those things, it's really going to be in the continual trial and usage by the consumer to earn that trust. And so that's what we're focused on. And we're seeing those efforts pay off, where people are taking two products, similar price, one done by Valens, one done by somebody else, and saying, wow, this Valens one is better. I'm going to buy again next time.
That's a cool point.
Yeah, no kidding. Well, and so that leads me to my next question for you, Jeff. And, I think this is such an exciting time, especially for you investors that are watching, right? Look at the wind up here, and you're seeing it across the market. You're seeing it in some of these other acquisitions, and the M&A activity is obviously through the roof in this industry. But you see a $40 million deal, as Jeff just alluded to, it's going to be put to good use, right? So let's dive into that, Jeff. When it comes to, this kind of obviously research-driven, I'm sure, decision to go and raise capital to actually use it, one might even say clandestine idea, right? What acquisitions are next in the near or short term? How will you look to expand that market share that you guys have clearly built very well so far, right? What's next for you guys?
Yep. So let's do that by market. So in the Canadian market, our infrastructure with our K2 facility coming online and ramping up very quickly, our infrastructure in Canada and with our beverage facility well underway and ready to be completed in the next couple of months here. Our Canadian infrastructure is largely set. We feel very comfortable about the market opportunity in Canada and the assets we have with which to achieve market share and realize on the opportunity there. So that means international. And as we looked internationally, there's a couple of opportunities that we and ongoing conversations. While I can't specifically give you feedback on what targets that we're looking at, what I can say is, interesting areas for us are in the US, where we see, a Valens platform, particularly as the FDA comes in and starts putting rules and procedures and standards in place for the quality production of cannabis, rules that don't currently exist, and things like labeling requirements, et cetera. As that comes out, who is better positioned than the Valens platform or the Valens opportunity in that context of that type of market? We believe there will be a transition to that type of quality and consistency of output from the participants in the US market. And we think that that's a real opportunity for us there. And also internationally, as we look at our expansion in Australia, we like a lot our partner down there. We like what they're doing. They're delivering on our relationship as we had hoped and better than we had hoped in our conversations. And there's potentially a couple of opportunities for us to deploy a little bit more capital there for maximum return in terms of increasing volumes and revenues and cash flows, all the typical financial metrics that, have thus far eluded the cannabis sector, but we see, coming to us in spades here in a relatively short period of time.
Yeah, so cool. So cool.
Yeah, I'd be remiss to not ask you about this, since we have kind of a prolific Canadian company with us. Has the illicit market changed any? I mean, we touched on it end of last year with another company and the competition it provides to, legal cannabis operations in Canada. But I'm curious, it seems like you guys are doing very well. Have you been able to sidestep the challenges that the illicit market has offered, if you will?
So no, I think it's an impact on everyone in the market. Look, I feel that from an infrastructure and a cost profile perspective, we as operators in the Canadian market needed to get, our ship in shape. We needed to get our cost structure down. We needed to get our efficiencies up, and we needed to be able to produce product at price points that consumers could appreciate relative to the sort of the black market options that are available. From a Valens perspective, we believe we have the lowest cost infrastructure out there for oil-based or derivative products, second to none in the Canadian market. And I'm sure you've seen our press release from several weeks ago related to us repositioning our inventory, where we now believe, based on our buying power and our access to the market, that we now have matched our low-cost physical infrastructure with an ability to bring in our biomass and other inputs at prices that are as competitive as anybody else in the industry. And we believe that combination will be incredibly hard to beat. So with that in place, we believe we're better positioned to offer competing products to the black market. We believe we're already out there launching several products with partners to lower the price point and to be out there at a competitive point where if you have to choose now between, a tested and a proven and a consistent and an innovative product, in a dispensary route versus on the black market, that we're going to be able to pull you into the dispensary because of those product forms and all the work that went into producing it.
No, that's awesome. So I have just one last question for you, Jeff, and it relates to timing, right? I would imagine anybody watching, especially the investors watching, can glean from this conversation that this is a company poised to jump. Right? There will be news coming. There will be activity coming. I don't think Jeff and the team at Valens would have raised that $40 million if they weren't going to do something with it. So Jeff, you mentioned briefly the US market and the opportunities that you guys are looking at here. Remind me and also the audience what precipitates that decision from becoming reality, right? Is it the FDA rules? Is it federal legalization? What are we waiting on before you guys can come and play in this market more?
Sure. So given our exchange listing, until there's a schedule change, any sort of access to THC product will not be on our radar. It will be a CBD oriented market play with the capability of providing us two things. Number one, an ability to leverage or backward integrate into our core capabilities as we've demonstrated in the Canadian market. So I think that's a key thing for us. And then secondly is to then expand or leverage that into, a broader product portfolio and larger market distribution. So those would be the two things that we're looking for, especially when THC comes online. So get in, establish our footprint, start to establish the Valens dominance. And then when the THC opportunity arises, expand into that with our product forms, which, by the way, if we think about the Life Food Technologies acquisition, that's transportable knowledge. That's one of the key reasons around why we like this team and why we like this model, because that is now our internal knowledge and we can bring that wherever we go.
Awesome. Well, Jeff Fallows, thank you very much for joining us. This has been phenomenal. I hope the audience has gotten a lot out of this, because obviously I think that there's some real interesting things happening in this market. I think Valens is definitely going to be leading the charge in more ways than one. So thanks again.
Yeah, thank you, Jeff.
Well, guys, and I appreciate it. And if I could leave with your audience sort of with one thought, from a Valens platform, as I said, the first two steps of our strategic plan for 2021 are now in the books. Expect to see us, as we leave 2021, a completely different company than when we enter 2021. We have aggressive plans, and we've only just begun.
I love hearing that.
That's a nice last thought there, Jeff.
I love that. And you can't say that to a media organization, Jeff. Come on. We want the full story. All right. Well, we'll wait with bated breath, my friend, to hear more from you. Thank you again.
Okay, I appreciate it, guys. Thanks so much.
Thanks.
All right. Take care, Jeff.
Thanks again, everybody. Honestly, I hope this was a very insightful day of cannabis discussions. Hopefully more cannabis content coming your way soon. Please be aware of that. And as always, you can catch your regular Lane Brother charades right here every Thursday at 4 when Patrick decides to join me.
Every once in a while, I got to come in and, mess stuff up a little bit. So thanks for having me.
All right, y'all. Be well. We'll see you next week.
Be well.